Stocks expected to be down a bit then, Guy.
Yep, looks like that could help London out. We'll see how Shell etc. trade this morning. What happened to the miners, I think, is interesting. Right, here we go. Let me show you some numbers. Tell you what's happening first thing this Monday morning. We are expecting European stocks to drift lower. We haven't got the full picture out of London yet. London's expected to be down around 0.4%. Could take a while to get the DAX open this morning. It certainly is going to take a fairly substantial hit. Let's call it north of 1% to the downside. FTSE 100, though, as you can see, it's certainly not taking it on the chin in the way that you would argue other markets could. I think it's going to be interesting to see how the oil sector trades this morning. It certainly is likely to see some positive trading on the back of this. Oil is up quite substantially. So the IBEX is probably a useful tell here. It is down 1.1%. We're expecting the CAC 40 to open somewhere similar. We're expecting the DAX to be a little bit more dismal, and we'll show you what the Hungarian markets are doing in a moment. We've already got early indications that actually the banking sector there certainly looks like it's going to be a positive. But at the moment, the Stock 600 is only down by 0.6%. Tom, what does the sector story look like?
Well, to your point about the DAX and the futures, or at least the picture, the prospects for Germany, autos amongst the biggest losers as a sector, down 1.4, almost 1.5%. Travel and leisure, of course, are not surprisingly, also amongst the biggest losers right now as a sector, down 1.5%. So that is a leading loss coming through. For travel and leisure, autos down now 1.6%. So autos, travel and leisure, banks also hit down 1.4%. On the upside, again, not surprisingly, energy is the top gainer across your sectors, gains of 1.1% in the energy space. Telecoms often gaining on risk-off days. That sector currently flat, Anna.
Yes, it's no surprise, as you say, to see energy stocks higher, some of them higher by more than 2%, as we've got UK natural gas prices up by 9%, the TTF benchmark over in the Netherlands up by 7.3%, oil prices up by more than 6%, so all of that adding up to a decent day for energy, but not for much else. So yes, airlines and autos, the worst performing sectors this morning.
It's interesting that so oil is up. Shell, BP, Total, Equinor, Eni, Repsol dominating the top side when it comes to this market. As you say, reasonably wide dispersion in terms of their various exposures to sort of different markets. What is interesting is that ASML is down pretty hard. So that's interesting going into a week of earnings. The banks certainly are under a little bit of pressure. And then it's a really kind of eclectic mix in terms of where we're seeing the losses. ABB is down, so the industrials are down. Rolls is trading a little softer. LVMH, we're going to learn a lot this week, I think, in terms of the luxury sector as well. There's some notes out already this morning. Other than oil being up, is there a clear theme this morning? It's the market's selling a lot of things, but it's not an obvious basket.
Let's get some further analysis on what we're seeing on these markets this morning and into a new week. Fiona Boll joins us, Global Head of Equities over at S&P Dow Jones Indices. Fiona, nice to have you with us. Thank you for joining us. I guess, do you think stocks were kind of vulnerable today to the kind of news flow we had at the weekend, obviously, around the failure of the peace talks? Stocks were vulnerable even more so because of some of the gains we saw on the ceasefire last week. So give us that kind of context around what we're seeing.
Yeah, I mean, certainly the S&P 500 had a very strong end of last week, and actually now it's pretty much flat year to date, which is impressive given the volatility and the moves that we saw, particularly during March. I think the news over the weekend was, it would appear, largely priced in. I'm not sure anyone particularly expected the best result from those negotiations. But the equity markets have proved really resilient.
For the moment. We'll see how long it lasts, won't we? But we're not seeing, you saying in your notes before our conversation this morning that you're not seeing signs of systemic stress. And there is a sort of, even when moves seem to be quite large, does this market not look panicked then? Certainly not this morning, but even in recent sessions.
I think above the water, it looks, surprisingly calm. I think underneath, we're doing this. We're seeing higher dispersion. We're seeing lots of rotation. We're seeing rotation, out of the darlings from last year, whether that's, largely tech and financials. And we're seeing return interest when we look at ETF flows in materials, energy, mining, even consumer staples.
Earnings are about to start. Quite excited. What do you think the earnings calls are going to look like? What you're a CEO right now, and you don't know. How do you communicate to the market? What do you tell the market?
I'm not sure first quarter results are really going to be what the analysts are asking about.
Yeah.
I think they're going to be, dissecting every word that the CEO and the CFO says about impacts of energy prices, impacts of consumer spending, look through into inflation. And so, I think it's definitely going to be those forward-looking statements.
Anna was making the point last week, and I think it's a really good one, that at the moment analysts aren't changing their calls because they don't know. They don't have the right inputs in order to make changes. Does that change after those earnings calls?
I think they start to read into that commentary that's coming from the C-suite. So you would expect that once they get some additional commentary, maybe they'll be in a position to change their calls.
Where is the resilience right now across the equity space? You're talking about that rotation, and then under the headline basis, you're seeing a bit of churn. Where are investors finding resilience in a higher inflation environment?
What's been really interesting in the first quarter of this year, we saw flows move from the S&P 500 into the S&P 500 equal weight. So, last year we saw lots of investors really lean into that high concentration, and we've seen that flip. So if you look at the performance of the S&P 500 equal weight, it's up a couple of % year to date. So it's outperformed the 500. That hasn't happened for sort of 5 or 6 years. And so we're seeing that rotation out of some of that sort of high concentration, high conviction into more broad-based equity exposure.
I want to touch on what's happening. A massive 24, 48 hours for Hungary and the ending of all bans rule after 16 years. Hungarian stocks are gaining a little over 3%. The foreign is on a tear. Is this broader-based, longer-term positive for European equities, the Hungarian story?
I think we've certainly seen, again, so far this year, the S&P Europe 350s had a relatively good start to the year. We've seen flows already. Again, as they've moved out of US equities, they've moved into European equities. So you would have to expect that you will continue to see that interest in the European markets.
I just want to go to a few comments we're getting through from the Iranian armed forces saying that there's no security for Persian Gulf ports if their own are threatened. So this is suggesting that other parts of the Persian Gulf, other countries within the Persian Gulf, shouldn't assume that their ports would be safe if the Iranian ports are not. They're saying enemy-affiliated vessels will not pass through Hormuz. So this goes to some of the complexity around the blockade and who exactly is blockading what. And the US restrictions on vessel movements are illegal and piracy. And so we've seen these suggestions from both sides, I guess, that extortion is taking place, and in the words of the Iranians here, piracy. We are vulnerable to a lot more headline risk, aren't we, around the specific dynamics of this blockade. We were talking earlier about what kind of sudden geopolitical tension might be thrown up by a particular vessel trying to leave and being intercepted by somebody. How should we think about that? We used to talk to you, Fiona, before we talked to you about stocks. We used to talk to you a lot about commodities. So how should we think about that kind of risk this morning?
I mean, it's definitely that transmission mechanism into equities is from geopolitics is the energy market. So I think, day to day, you've just got to continue to watch the price of oil. I would be looking also at the other energy markets, particularly European natural gas. We know that Europe is much more dependent on imported energy. It's also closer to where we're seeing the troubles. And so there's greater disruption risk there. But yes, we're definitely seeing that it's the energy market that's driving the other asset classes, and I would expect that to continue.
Are equities an inflation hedge at this point?
That's a great question. I certainly think there's probably pockets of the equity market that are better inflation hedges than others.
Okay. In aggregate... there are definitely pockets. You can look at the energy sector within the equity market, but broadly, with a consumer that already looks stressed, can companies raise prices? Can they pass this along? If this hits my balance sheet, can I pass it along to somebody else's balance sheet? That's the idea, and equity markets are always looking for the positive. And I'm already hearing this morning people talk, "Oh, it's an inflation hedge. It's an inflation hedge." Is that the new equity narrative here?
I think you're right. I mean, I certainly think, again, there are sectors in the economy where it will be very, very difficult to pass on price increases.
Right.
And you think about the consumer.
Yep.
You know, you think maybe about some of the materials. So I think whether it's an inflation hedge at a broad level is maybe less clear than others expect.
There's a line from Germany's Chancellor right now, just in the last couple of minutes. They're going to be cutting the gasoline tax, 17 cents cut per litre for 2 months. You'd imagine that Prime Minister Keir Starmer will be looking potentially over in envy, because Germany can do that. Ireland can do that. So I guess my question is, there's live pictures right now at the German Chancellor with these announcements to try and offset some of the pain that's coming through for consumers. Other countries don't have that scope. As investors, should investors start to price in additional fiscal stimulus, at least from some nations, to support the consumer?
As you said, there are many nations that can't afford any significant level of stimulus, but where they can, I think it seems likely. We've seen, you know, we go back to COVID. You know,
so how do you play that across equities?
I think you need to understand the country risks specifically, as opposed to taking a broad view, say, of a global equity. You probably need to be picking and choosing around those countries that have the ability to support.
We're going to hear a lot more about this week, aren't we? Because it is the IMF and World Bank spring meetings. They like talking about where there's fiscal space and, crucially, where there isn't any. And we've already heard from Georgieva going into this about the lack of fiscal space that a lot of countries have to respond here. So we're seeing response, as you say, from Ireland, from Germany. We are going to hear from the UK later on this week, but it's not expected, perhaps, to come with quite so much generosity. How do you think about that kind of development then, Fiona, from here, as bond market's not really responding very much this morning. There is a big link between the bond market narrative into stocks, but bond markets are quite calm in the face of everything.
They've been very calm. What's also been interesting is we've seen periods recently where the equity and the bond markets have moved together. So that usual correlation seems to have broken down. It's hard to know, you know, I'm not a bond expert, hard to know what to read into that. But again, I'd be looking at things like inflation expectations.
Fiona, great to see you. Thanks for stopping by to see us. We always appreciate it. Thank you very much. Fiona Ball, Global Head of Equities over at S&P Dow Jones Indices. Equities are down 1% across most of Europe. Hungary's a bit different. Eurostoxx 50 down by 1%. In terms of some of the big heavyweight stocks, let's just kind of look and see what is happening there. What you are seeing is a little bit of weakness maybe in some of the tech stocks. You can see that with ASML. It's certainly a heavyweight. Defence stocks are up, which is interesting as well. An expectation maybe actually the more spending is coming. They've been very choppy recently. But let's dive into the moves and get a little bit more detail, particularly on the energy front with Chloe.
Good morning, Guy. Indeed, we are seeing oil majors moving higher as expected this morning, because oil and natural gas prices are soaring after the US and Iran failed to reach a peace deal over the weekend. And Trump also is threatening to blockade the Strait of Hormuz, which would disrupt even further those global energy supplies. And so we are seeing that translate into quite a positive picture, a green across the screen for the oil sector this morning, with Equinor in particular moving higher. On the other hand, we have got airlines, of course, weaker in the wake of this, and we are seeing Lufthansa in particular down because not only those higher oil prices mean higher fuel prices, but also because Lufthansa is facing strike action with pilots walking out. So we've got a bit of a double blow there for the airline, but across the sector, very weak as well. Another sector that's usually not doing so well when peace is looking increasingly fragile is miners, and we have got gold and aluminium moving lower, and so we are seeing those miners with those exposures to those metals also moving lower. So Hochschild and Fresnillo on the gold side, and then Antofagasta more on the aluminium side as well. Moving on to Wise, and the London-listed company is moving higher today. It's got a positive trading update and also said that its dual listing in the US is on track for this quarter. So that's a positive development there, according to investors. And finally, Hungarian stocks are also in the green today after Peter Magyar defeated Viktor Orbán in elections over the weekend. This victory is seen as providing some economic upside for Hungary, and therefore we are seeing the BUX move about 2% higher this morning.
Chloe Melly with some of the individual stocks on the move. Thank you. So we heard about Chancellor Friedrich Merz in Germany cutting a tax on gasoline prices. We're hearing as well from the Chinese spokesperson talking about the conflict in Iran and saying and calling for all sides to exercise restraint in the Iran conflict as we count down to that blockade. In theory, starting at 3 p.m. UK time to 10 a.m. US time, that of course could impact China more than many others, given its consumption of 90% of Iranian crude.
It's quite a restrained response from the Chinese. It's certainly exercising restraint in terms of its commentary, considering how exposed it is.
And that's been consistent, that constraint.
Very exposed, and ahead of the visit of President Trump to China, plenty of opportunities for China to sort of grandstand around this theme and maybe not taken. But you wonder what messages are being delivered behind the scenes. We'll wait for that to become uncovered.
Yeah, and whether that meeting between the two presidents is in peril, there's no suggestion from China that it is at this point. Maybe that's why they are being relatively constrained. They want that meeting to happen for whatever reason in May, of course, between the two presidents. Well, coming up, we'll get more details, more analysis in terms of what's happening. We're seeing, of course, European gas prices, futures and oil all higher this morning. Gas surging as the US vows to implement that blockade of the Strait of Hormuz later today, as peace talks, of course, failed in Islamabad over the weekend. More details next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television. Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show, we've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible. Bloomberg Surveillance, we're talking about it.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Welcome back to the opening trade. 18 minutes into a session that is better than the futures picture had suggested, at least. We are down, but down by 0.7% on the Stock 600, which, given oil prices are up by 6.8% on Brent, maybe is quite muted, quite relaxed, call it complacent if you like, but that's where we are on European stocks. Only one sector in positive territory, as you might expect, or just two, energy. Is by far and away the best.
This is not good news, what we are seeing in the Gulf for global airlines. European airlines in some ways are hedged, but actually I think that's going to be an issue to see whether those hedges deliver. Airline stocks are certainly under pressure. It doesn't really matter who is blocking the Straits of Hormuz. We are going to see potentially a shortage of jet, another headwind for a sector that's already seeing significant disruptions as a result of the conflict in the Gulf. Benedict Campbell leads our aviation coverage. She's our managing editor. Benedict, let's kind of just talk about what happens next. We are getting awfully close to the point at which Europe is going to be running out of jet fuel. What happens next if this carries on? When do we start to see an impact? We've already seen maybe some of the Italians' airports starting to run out. Is that something we're about to see replicated elsewhere?
It might very well happen, Guy. So, as you said, Italy has already given us a bit of a taste of what might come. If you look across to Asia, again, we have seen pockets of shortage there. If this drags out, then it really will become a big issue across the region. Lufthansa this morning particularly is down. They're obviously impacted by the strike. That is sort of a double whammy for them. But again, I think there's a general sense of alarm in the industry. How much longer can airlines absorb this? Excuse me. How much can they deal with the lack of fuel that invariably will happen at some point? For now, it seems that they have enough and that there is enough to go around. Donald Trump has said, we'll just come over here and we'll fill you up. But it's not that easy. This is a very finely tuned global sort of network, and you can't just go elsewhere. And will we have some sort of what's called tankering, whereby you take some extra fuel, you fly somewhere where it's still available? We might see some of that happening. But again, fuel is a massive cost, and it's going to be a massive headache for the industry.
How do you expect, good morning, Benedict, how do you expect the airline industry to adapt and adjust to that then? Do we see routes cancelled? Do we see higher prices as energy moves higher? Do the consumers brace for higher ticket prices? Do routes start getting cancelled?
Well, we are already seeing all of what you just mentioned, and we'll probably see more of that. So if you look across the globe, what's happened in the last 5 weeks, you have had airlines take out routes. So United notably said, we're going to stop flying certain so-called red-eye routes that weren't really very profitable to begin with, and have now tipped into the unprofitable segment. So why would we fly those now? We will take a hard look at some of our slots and so on. So already airlines are pruning their networks, and you should expect more of that to happen. We've seen a massive increase in so-called fuel surcharge costs. Some airlines have done it once, twice, maybe even 3 times. You've seen airlines add costs on things like extra baggage. So this is happening across the industry, and as this crisis intensifies, you should expect this to get even more pronounced. And this is particularly going to hit consumers as we head into the busy travel season. You know, summer isn't that far away now. People are booking at the moment, and you can see the prices really go up for tickets, and that's probably not the end of it.
So management having to deal with that and all of the drama that is created there, and the need to find those fuel resources. But Lufthansa also facing a different challenge, a 2-day pilot strike, Benny, set to cancel hundreds of flights. Bring us up to speed.
Well, and this happens, a weekend after they just got over the last strike. So this is an airline that's slowly becoming unbookable and ungovernable. If you think of it as a consumer, or if you think of it as management, they are really struggling to get these strikes behind them. We've had cabin crew strike last week. We now have the pilots, and that causes massive disruptions for the airlines. You know, hundreds of flights in places like Frankfurt and Munich, and then that also means planes are out of position. Lufthansa says it's irresponsible. They say the demands are unacceptable. This is principally around pension costs. They will say, look, pilots are already very well paid, particularly those at the mainline Lufthansa airline. And what you will see over time is more business shifting to their sort of lower cost subsidiaries, be it the Eurowings business, be it the the Discovery line. So you will see more of those shifts happening as Lufthansa tries to sort of cut the costs at its mainline business. It's a really bad time for them. As I said, it's summer travel period, and they are celebrating their 100th birthday. So this is not how you want to celebrate your birthday. This is not the kind of sentiment you want to leave in consumers' sort of mouth, where you feel, well, this is an airline I really can't book anymore.
Yeah, Lufthansa stock down 3.8% so far in today's session. Bennett Campbell, our aviation managing editor in Berlin, thank you. Let's get more on the oil picture and what exactly is happening in terms of that blockade and how it could impact oil prices going forward. Anthony DePaola, our Middle East energy markets reporter, has some of the details. Anthony, what does the US hope to achieve ultimately with this planned blockade that could come into force as soon as 3 p.m. UK time today?
Good morning. Good morning. Yeah, there's multiple objectives that the U.S. wants to achieve. The immediate term one looks to be that Iran agrees to reopen the Strait of Hormuz. So in that sense, the U.S. is blocking it in order to reopen it, putting the pressure on Iran so that it's not able to get any of its oil or any of its ships or ships linked to it through the strait, so that it has to come to the table and agree to that opening. Of course, that was part of the talks that the U.S. and Iranian officials were holding in Pakistan over the weekend, with the main goal being there to get Iran away from its nuclear program. Those talks didn't work, and so that's why we're getting that this idea of the blockade in there, because we really need to have the free flow of oil, refined products, natural gas through the Gulf. Right now, everything is effectively cut off. Iran is exporting some of its own oil. It's letting some ships go through, apparently charging them as well. We've heard levels of about $1 a barrel, so that's $2 million for the largest tankers. When you're talking about prices over $100 a barrel, perhaps that's a doable cost for some people, but for others, it's just a bad precedent. We saw the CEO of the UAE's biggest producer, ADNOC, coming out this weekend saying that's a dangerous precedent to have anyone charging anything for going through the Strait of Hormuz, that the Persian Gulf needs to be open and freely traveled by everyone, and that's what's needed to get those barrels back to the market. That same ADNOC CEO is saying more than 200 oil tankers trapped in the Gulf, and that we're finally seeing the last of those barrels that left in February hitting customers. So we're really going to start seeing that physical shortage hitting the markets right now.
Okay. Anthony, thank you very much. Anthony DePaola, our Middle East energy markets reporter. Coming up on the programme, we'll return to European politics, where Peter Magyar has swept Viktor Orban from power in a landslide Hungarian election result. We will discuss the ramifications. We'll be live on the ground in Hungary for that conversation. This is Bloomberg.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
This is the opening trade. We are 30 minutes into today's session. You are seeing risk off across the equity markets, but you're not seeing panic, really. You're seeing stocks down across the European benchmarks by around 0.6%. The FTSE 100 is showing the most resilience. Energy is helping to offset some of the other losses. And so you're seeing the FTSE 100 down 0.4%, but that compares to losses of almost 1% over in Germany. The DAX is down 0.9, almost 1%. 0.9% drop over in France as well. The CAC 40 is lower. 0.7% is the move lower on the FTSE MIB. So yes, losses, but not capitulation at this stage. Guy.
Tom, 122 up, 121 up, 462 down. Basically 4 to 1 in terms of the ratio, in terms of the winners versus losers. Volume's not huge, though. In some ways, you can argue the market had position for this. You're not getting a big reaction. Certainly, that would be the message that you take away from the volume picture this morning. Quick look at what is happening in terms of the leaders and the laggards. Let me just show you a few names out there that are maybe worth paying attention to. As we've already indicated, oil stocks are doing relatively well. You have a market that is certainly rewarding those stocks. So BP is tracking a little bit higher. You've got Rheinmetall up on a missile defense deal. And you've got Wise, NASDAQ listing, is firmly on track. In terms of where the downside is, let me just show you. You've got EasyJet, representing the airlines, is softer. ASML is definitely softer this morning, and it's interesting to see that the banks are also edging off a little bit this morning too. This is we go into US bank reporting season. Anna, that's what we're seeing in terms of the market story.
Yeah, those are the individual, the market themes. Let's get to some of the broader news narrative this morning. US President Trump has vowed to begin a full naval blockade of the Strait of Hormuz and threatened to retaliate in the event of Iranian resistance. The blockade will begin at 3 p.m. UK time. The move set to halt nearly 2 million barrels a day of Iranian oil flowing through the critical waterway. The announcement comes hours after Washington and Tehran failed to reach a deal during talks in Pakistan. Spain's Prime Minister Pedro Sanchez has started his trip to China by calling on Beijing to leverage its influence internationally and help bring the wars in Iran and Ukraine to an end. Speaking at the start of his official visit, Sanchez also used stronger language than in the past on trade, calling the EU-China deficit unsustainable and saying trade relations must be balanced and reciprocal. And Hungary's forint, the currency, has surged to a 4-year high after Prime Minister Viktor Orban conceded defeat in Sunday's election, bringing to an end his 16-year rule. Incoming Prime Minister Peter Magyar has outlined sweeping changes that are expected to redefine the country's ties with the European Union, with Russia and with the United States. Tom.
Well, let's get more analysis on that story and bring in Bloomberg's chief European correspondent, Oliver Crook, joining us now from Budapest with a guest. Ollie.
Yeah, that's right, Tom. I mean, on the banks of the Danube at the party that Peter Magyar held yesterday, really a very emotional scene. I couldn't tell you how many people were there, but it certainly felt that it was within the tens of thousands, really a changing of the guard and a sort of new era for Hungary. And here to joining me now to comment on that is Shoshana Vek, who is an analyst over at the German Marshall Fund. Thanks so much for joining us this morning. I'd like to just begin by marking the moment and really sort of for you to designate for us sort of the significance of this day for Hungary.
This is truly a historical event. We had the highest turnout
of any election. TISA got really the highest number of votes of any party since the regime change. It's very significant domestically, but also for the European Union, as it had serious difficulties with dealing with the Orban government over the past several years. So this may mean a shift in policies, a shift in attitudes that can make the European relationship more viable.
And as difficult as it was to get elected in this context, to say with the sort of media control that Orban has, the sort of structural advantages that he had, of course the financial advantages he have, in some ways the hard part starts now, and that is governing the economy, governing the politics. He vowed to basically break the grip that Orban had over the government. Talk to us a little bit about how far that grip goes, whether it's within the sort of constitutional court, the Supreme Court, and how difficult that is going to be.
Yeah, essentially what characterized Orban's rule over the past 16 years was a complete state capture. And beyond that, also a domination of the public space, the media, and so on. So with the two-thirds majority that Péter Magyar now has received, it is possible to actually change the constitution, to adopt new reforms, and he has an easier way than expected to break this grip. But it extends to the Constitutional Court, the President, the National Bank, the state prosecution. He will also inherit a depleted budget, and the country has not seen any growth ever since the COVID pandemic. Inflation is still high, but if we look at the first reactions of the markets and the forint this morning, it is starting to actually get stronger. So there is an expression of anticipation and trust towards an incoming new government.
And in this sort of political change that we'll see, which is a closer relationship with Europe, I think he's also hoping to unlock some of the 20 or so billion euros that have been locked out of Hungary due to the rule of law concerns and a great many others that the EU has frozen. How quickly do you think that money can sort of be flowing into the economy, and where do you think that money will be allocated by this new government?
He will need to adopt very quickly anti-corruption reforms and also reforms concerning the judiciary. Some of it will be very fast. He will be joining the European Public Prosecutor's Office, and the idea is also to set up an anti-corruption agency. Now that he has the two-thirds majority, he will have a much easier time to actually adopt the reforms that can speed up the process. But actually, he has to work with very tight deadlines on the side of the European Union. For the recovery funds, it's only a couple months left to unlock that. So it's going to be probably a negotiation process to actually get this moving. And the key sectors to invest in will be probably infrastructure, probably energy, especially if there is an intention to diversify Hungary's energy dependence from Russia. Those would be key areas, but also the social sector will need massive injections.
And also thinking about other dimension of the economy, there's been a lot of statism, a lot of sort of state-driven activity, of course, some of it by, you know, the allegations of corruption and the friends of Orban. How much sort of, how optimistic do you think the market can be about a sort of more liberal economic policy going forward from this government?
Where I see a relatively expectable move towards liberalization is the anti-corruption reforms, which will open up competition for various actors and not limit the opportunity for like-minded and affiliated businesses. That will be a big shift.
And thinking about also the geopolitical sphere of this election, because I think you'd be very hard-pressed to find a nation of, you know, fewer than 10 million people that has had so much attention from the international stage, whether it's China, the United States, the EU, Russia. I'd like to go through that list with you right now. The impact and the relationship, starting first with the United States. J.D. Vance was here over the last couple of days campaigning pretty aggressively for Viktor Orban. How do you anticipate that relationship will change, or will it not really change at all?
I think it will develop into a two-track relationship. The ideological alignment that has been present between the MAGA movement and Fidesz can continue also on a party level, even if Fidesz remains in opposition, although maybe in that position Fidesz not going to be that appealing. But on the interstate level, I expect that Péter Magyar will seek a normalization of the relationship and diverting it back to the classic channels of diplomacy. And if we look at the geopolitical interests of his incoming government and the United States, as far as we can understand both, there can actually be strong alignment, particularly when it comes to Russia's presence in the region, that both Magyar wants to get rid of and the United States is not looking at it favorably.
And also thinking about the relationship with Russia and Ukraine, there is sort of a lot of hopes, I think, put into the figure of Péter Magyar. What the reality will be is what I'd like to get from you. How pro-Ukraine do you expect him to be? Will he allow for that 90 billion euro loan to get through? And how anti-Russian do you anticipate he will be?
I don't expect him to be pro-Ukrainian, but I also don't expect him to be anti-Ukrainian. What we have seen from the Hungarian government under Orbán was a representation not of Hungarian national interests, but those of Russia. And that sort of policy, which manifested in constant vetoes, will stop, I believe. We will see a shift more towards what are Hungary's interests, and in that regard, there will be conflictual things to resolve with Ukraine. But when it comes to support from the European Union to Ukraine, at least in the financial domain, as long as it's not something that directly puts extra burden on Hungary when the country's economic situation is quite bad, it could go forward.
But what about the proximity to Russia? I mean, you're struck when you go to Eastern Europe, even among the most right-wing politicians within Eastern Europe, the right wing within Western Europe is pretty pro-Russian. On the Eastern Europe, that is not the case, with the exception of Hungary.
Yeah.
Why is that the case? How effective was Orbán in sort of convincing the Hungarians that Russia is an ally, and is Péter Magyar going to change that perception?
Orbán didn't really manage to convince Hungarians of Russia being a friend, so there is no clear pro-Russian sentiment. It was rather an anti-European and anti-Ukrainian sentiment that Orbán managed to convey. That's somewhat picked up, at least in his electorate. But there is no deeply rooted pro-Russian sentiment in Hungary, so I think that will be relatively manageable to shift away from, and Péter Magyar is likely going to work on that. One of the key slogans of the last weeks of the election campaign on Magyar's side was to send Russians home, to reclaim Hungary's sovereignty from
And that's something I heard from a lot of the crowds that were speaking last night. So Shoshana Vek, thank you so much for your time there this morning with your analysis there from the German Marshall Fund about this new dawning age here for Hungary.
Ollie, thank you very much. Bloomberg's chief European correspondent, Oliver Crook, in Budapest. And we've mentioned a few times the wide political significance that this has in Europe and further afield. I wonder if this changes the relationship between MAGA and Europe at all. I wonder if those on the right of politics in Europe looking to be ascendant, whether they think carefully about the relationship they have with MAGA. That's one sort of political dimension.
Trump ducked all the questions when he was asked about this last night.
They've made it pretty clear that their strategy is to intervene in European politics, if to get the kind of governments that they would favour. And Orbán was a case study of that, and they failed. JD Vance was explicitly. It's not the first time the US has intervened, but explicitly is pretty unusual. Both Trump and both Putin intervening directly in this election and failing.
And it seems that the market is, we're risk on around Hungarian assets, aren't we? Yeah. And clearly that's the initial big response that we're seeing to this vote today. I am reading further down some of our stories about tax change plans, and you wonder then, as we go through the next few weeks, the early days of the new administration, whether they keep the markets on side. But for the moment, job done.
But in theory, Hungary's about to get a lot of money.
Yes,
out of the European Union.
20 billion euros.
So you just priced that into the economy. Was it priced before? Was there an expectation that was actually going to be delivered upon? It's certainly a not insignificant slug of cash.
It's much more certain this morning, isn't it?
Yeah.
Let us tell you what's coming up on the programme. 8:42 here in London. Coming up, the latest from the Gulf, with just hours to go before President Trump's deadline to blockade the Strait of Hormuz. We'll bring you some details next. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. We are 46 minutes into a session that looks negative, but maybe not by as much as the futures picture was suggesting. US futures also negative, but not, well, I was going to say not by as much as Europe, but actually they don't look all that dissimilar. E-minis down by 0.6%. NASDAQ futures down by 0.7%. So, guys, still only one sector in positive territory, and that is energy stocks.
Unsurprisingly, as Iran says the US is acting illegally after President Trump vowed to begin a full-scale naval blockade of the Straits of Hormuz, another full-scale naval blockade, I should point out. But this one is going to kick in at 3 p.m. UK time today. Let's figure out what's going on. Let's go to Dubai. Jumana Basechi standing by for us. Do we know how this is going to actually operate, what it encompasses, the Trump blockade? What details are going to be important here?
Yeah, well, we don't have a lot apart from the fact that it starts, as you said, at 3 p.m. UK time, 6 p.m. over here in Dubai. There was a notice put up by CENTCOM overnight, and they said that the forces will begin implementing a blockade on all maritime traffic, and this, to be clear, entering and exiting Iranian ports from April the 13th. So it does not apply to vessels that have not stopped by Iranian ports. But in reality, most of the vessels that have gone through the Strait since the inception of the war have somehow been linked to Iran. We estimate that around 80% of the vessels that have gone through are Iranian linked, either transporting Iranian oil or have picked up oil from one of the key terminal facilities, including Kharg Island. So this is what we understand is the objective of what the U.S. are trying to achieve. In terms of how they're going to execute it, I think there's still a lot of questions. Number one, in terms of other countries that are going to participate in this, in Trump's Truth Social post yesterday, he indicated that there would be a global effort or other countries would be joining in. We so far do not have any reporting of any countries that have officially decided to participate in this naval blockade. The second element is how other countries will reciprocate. I mean, if they're going after countries that have already agreed to pay a transit fee to the Iranians, in reality, what does that actually mean? If it happens to be, say, a Chinese oil tanker, how are they going to be stopped or even interdicted, which is the language that President Trump used? And then the final question is, how are the Iranians going to respond? And are you actually taking a front of this war to a new level, introducing a maritime front and exposing U.S. naval warships and all of the assets that they're deploying around the Strait to the real possibility of being targeted at this time by Iranian drones and the Iranian missiles that could be directed from land. So again, it could all torpedo the ceasefire, very fragile ceasefire that is still being upheld and in theory expires on April 21st.
Yeah, Jemana, it does seem as if there could still be plenty of opportunity for headline risk if we take the battle to the high seas as these blockades get into action. Let me ask you about peace talks then. Are we expecting another round? The Iranians seeming to suggest that there could be further talking. President Trump was not giving that kind of messaging.
Yeah, well, it's interesting because President Trump, in his many Truth Social posts yesterday, did actually describe at the end that by the end of the discussions, there had been a sort of friendly relationship developed between the Iranian representatives and the U.S. representatives. So interesting that he even put that down in one of his Truth Social comments. But he did suggest that there actually had been elements of agreement. And later on, we heard from the spokesperson for the Iranian Foreign Ministry, and he also said that there were 2 to 3 points that were not agreed on. But so far, it seems as though there actually was a good starting position for them to continue negotiations, that there's been no formal commitment from either side to continue those talks. There's been lots of media within Pakistan suggesting that there may be another round of talks held at some point in the future. That has not been corroborated either by Iran or US. But it goes back to a couple of sticking points. And we understand that one of them is the Strait of Hormuz, which prompted President Trump to announce this naval blockade. And the other is to do with, once again, Iran's nuclear ambitions. J.D. Vance explicitly saying that they did not get enough reassurances from the Iranian side that they will not go on to develop a nuclear weapon, that they have no ambition of doing so, and that they're willing to relinquish the tools that would allow them to develop a nuclear weapon. So nuclear is still front and center of the discussions here, alongside some of the other issues, including the funding of proxies in the region, and Iran really pressing hard on the U.S. to lift and unfreeze some of the sanctions that had been imposed.
Jemana, you're on the ground for us in Dubai. What has the response been from the UAE, from Qatar, from Doha, from the Saudis to this proposed blockade?
So nothing explicit, but I will say that we've spoken to many senior officials, industry leaders around here, and I would say that they're quietly supportive of this move because essentially we were in a situation where Iran was capable of using the Strait of Hormuz, but every other country in the Gulf was not capable of using it over the last 6 months. Clearly, a situation that they did not want to continue or to persist at some point in the future. Plus, questions about precedents. And with all of this talk and reporting of the last couple of weeks of Iran looking to impose a fee or a transit, they said it would set a very dangerous precedent for all maritime shipping routes around the world. Their point has been, and this has been very explicit by the UAE, for example, yesterday, ADNOC CEO Sultan Al-Jaber putting up a post on Twitter likening Iran's hold and grip hold over the Strait of Hormuz to economic terrorism, a precedent which, again, should not be one that the world accepts because it doesn't just affect shipping around the Persian Gulf or specifically to Gulf countries, but also globally as well. It has global economic ramifications. So I would say the reaction from the Gulf states is let's see how this all plays out. The worst case scenario of a downward spiral has been avoided militarily. Implementation is going to be a big question. But the other big one is, will they actually get involved as well in terms of providing naval escorts or surveillance or even some assistance to some of the seafarers who are trapped in the region as well?
Okay, Bloomberg Horizons anchor Jemana Besetchi. Jemana, thank you. Let's take a look at what else we are watching throughout the week. Today, we get the OPEC monthly oil report then, talking of oil and energy. The IMF World Bank full meetings, they start in Washington on Tuesday. We're going to get the IEA oil market report. ECB's Christine Lagarde, president, of course, will be speaking in Washington. And on Wednesday, the Fed is releasing its beige book. Thursday, UK GDP, US jobless claims as well. And this week, it is earnings, of course. US bank earnings in focus. Goldman Sachs reporting today. JP Morgan, Wells Fargo, Citi, Bank of America, Morgan Stanley, all later in the week.
Let us bring this hour of programming to a close with a conversation with Skylar Montgomery-Koning then from the Bloomberg Markets Live team. And in your thoughts as we watch European equity markets then, under pressure, Skylar, down 0.7%, but not not perhaps reflecting things being, well, it could have been worse for stocks. I mean, oil prices are up 7% this morning, so oil prices are responding, but stocks maybe less so.
Yeah, it's interesting. I knew it was going to be a negative day in equities when I came in this morning because you saw the headlines over the weekend and they were all very negative, but the reaction's been much more muted than I was expecting. And I think that there are two ways you can look at it overall in terms of there's not enough pessimism priced relative to the peak, certainly now, but also relative to the price of Brent. And so if you look at European equities, for example, from the bottom that we got to in March, we've retraced 70% of that. Do you think, conditions are 70% better than they were 2 weeks ago or 3 weeks ago? I definitely wouldn't say so. And for Brent, we've gone from $70 a barrel to $100 a barrel. And that's a stagflationary shock that will have to feed into earnings. And so my big question is just what makes markets realize that? Why are we still so optimistic and hesitant to price the pessimism?
Maybe because you keep getting notes out from guys like Mike Wilson, who's talking about the earnings story. Like the notes out, Mike sent this around, Mike Masika sent this around. S&P trailing earnings growth 15%, next 12 months earning up over 20%. Can I hang my hat on that 20%? Because Mike Wilson is.
Yeah, I mean, I think it's quite hard to hang your hat on that because you don't know exactly where energy prices are going. What I will also say is because you haven't had downgrades to those earnings forecasts, risks are definitely to the negative side, right? When you get to earnings season, you have negative misses punished a lot more than upside surprises are rewarded. And so that means the risk is definitely negative as you head there.
On a regional basis, is Asia still most exposed?
Asia is very, very exposed from a where's the oil actually going perspective. And I think particularly now I'm worried if the U.S. does actually block more of that transit through the Strait, you have to think about where was that Iranian oil going. Now, China had held up very well, partly because they had high reserve levels, but partly because they were still getting oil through Iran. Now, it's negative for the market because it means less oil overall, but it means that China could also get involved, and you could see some escalation, whether that be kind of returning to the tensions that we saw during the trade war. But China and the U.S. are your big mega powers in the world, and so if they start to have more of a conflict from an economic perspective, that's definitely negative for markets.
Yeah, absolutely. Skylar, thank you very much. Skylar Montgomery-Koenig from the Bloomberg Markets live team. So as it stands right now, European stocks on the back foot, US futures also a little bit weaker, but did you get a sense you're waiting for the next things to happen in the Persian Gulf?
3 p.m. UK time.
What do we wait for? There's now 2 blockades on in the Gulf. Barrels are not leaving. I don't know. Is that the key metric you just need to watch out for?
Yeah, perhaps. We will leave you with the next hour, Guy, on the Pulse.
Yeah, we can try and answer that question.
That is it for the opening trade. The Pulse is up next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic. And this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest
stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show, you've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
Oil's back above $100 a barrel. Global stocks are down, but not much. The US President Donald Trump threatens a full naval blockade of the Strait of Hormuz. At 3 p.m. UK time, the deadline looms for that blockade after peace talks in Pakistan collapsed over the weekend. President Trump says he doesn't care whether Iran returns to the negotiating table. Plus, the end of an era. Viktor Orban's era in Hungary comes to a close. Hungary's currency jumps to a 4-year high, and stocks hit records after Peter Magyar wins the landslide election, ending Orban's 16-year rule. Let's talk about markets. Brent's up, as you can see. We are at 101.96. Let's go at 102. We're up by around 7%. Equity markets are barely reacting. S&P futures are down by 0.6%. Where you are getting a reaction is in the Hungarian forint. Euro Huff is down by 2.51, i.e. that currency is having a fairly good day, the Hungarian forint, after that election victory for Magyar. Let's talk about what Europe looks like this morning. As you can see, generally a sea of red across the continent. London's faring a little bit better as a result of its exposure to oil stocks. The Hungarian market is having a much more positive day on the back of banks doing well there. We've got lots to talk about, so let's get going.
Newsmakers and market movers. This is The Pulse.
Good morning. Welcome to The Pulse. I'm Guy Johnson. I'm in London. Let's talk about what's happening in the energy story, because that's absolutely front and center right now. So oil prices are up. Gas prices are certainly up here in Europe. The American President, Donald Trump, vowing to begin a full naval blockade of the Strait of Hormuz later today, 3 p.m. UK time. He's threatening to basically retaliate in the event as well of Iranian resistance. The move would hit nearly 2 million barrels a day of Iranian crude, which has over the last few weeks actually been flowing out of the Gulf, while others have been limited. The announcement, of course, came hours after Washington and Tehran failed to reach a deal during those talks in Pakistan.
I don't care if they come back or not. If they don't come back, I'm fine. Their military is gone. Their missiles are largely depleted. The manufacturing capability for missiles and drones is largely defeated.
President Trump. Dana Kresh, Bloomberg's UAE bureau chief, joining us now. Dana, thank you very much indeed for joining us. So we've got not one but two blockades now of the Straits of Hormuz. What do we know about how the US blockade is actually going to, how it's going to operate?
Yes, good morning. So we saw the U.S. military saying that they will be implementing this blockade at 10 a.m. ET, that's around 6:30 p.m. Tehran time, and prevent all maritime traffic from exiting or entering Iranian ports. They said they will not impede such vessels if they are going to and from non-Iranian ports. Of course, that means Gulf ports. And this is in effect a blockade in selling Iranian oil. This is the lifeline of the Iranian regime. And this lifeline has been active and open since the start of the war. And to see an impact on the Iranian regime, an impact on their decisions on how to deal with the war, we're going to need this blockade to be about weeks, not just days. And all of this is yet not clear how this will play out. And now we see the head of the Iranian negotiating team, who was in Pakistan negotiating with J.D. Vance, the U.S. Vice President, writing on X that now addressing Americans and saying now we will see what the price of gas will be at the pumping station. So the reaction from the Iranians, they think this is going to be a swift reaction in the market, and we've seen that now with oil prices soaring. We've seen it in gas oil futures too. And so, but the thing is that president has made so many threats, and there was so many deadlines before, and sometimes we see changes in that. But what we need to watch out for is how the U.S. will be implementing this, how this will impact traffic through Hormuz. We've seen the Iranians making all threats today about if the security of their own ports is threatened, then no port on the Persian Gulf, and that's of course suggesting all of the Gulf ports, includes a lot of these Gulf countries, will be threatened as well, and that if there and Hormuz will be open to either all ships or no ships at all, saying that the blockade is illegal, saying that's piracy from the U.S. president. But the big question here, of course, is if there are any attacks on either side, that is a major violation, of course, of the 2-week ceasefire. And we will see this ceasefire collapse and maybe go back to how the status quo was about a month ago, attacks on Israel, attacks on Gulf countries, and of course, major attacks on Iran from the US and Israel.
Dan, I've heard a lot of people, and there was a lot of chat over the weekend about this, that this is just a pause in the talks, that we will be back, that this is just a negotiating time. What do we know about the status of the talks and whether or not we are going to be returning to a hot war again? Where are we in this process? What are you guys hearing?
This is a very good question, but I think it's interesting to bring up what the Iran foreign ministry spokesperson said over the weekend. He's saying that, we agreed on a few things and we shouldn't expect a deal immediately, and that diplomacy is a long way, or diplomacy is still open. And this is Iran leaving that door open for more negotiations. We haven't seen that from the U.S. side, though. But again, I think what the experts are saying is that the thought of 50 years of hostilities between the U.S. and Iran, and 2 wars in between, including this most recent one, that would just fade and they will sign a deal or any peace agreement in a matter of a day, was kind of wishful thinking. But I mean, what we know from Vice President J.D. Vance, and before he left Pakistan, he said that the talks broke down because they simply couldn't agree on what to do with Iranian nuclear activities. And what we have from our own reporting, citing an American official, is that saying it was clear that the U.S. team it was clear to the U.S. team that the Iranian delegation just simply didn't understand the main objective of this U.S. administration, and that is to guarantee that Tehran would never obtain a nuclear weapon. Now, while no one has said we're not going to continue with negotiations, no one has said firmly and solidly that there will be more rounds of talks, including Pakistan or other mediators like the Omanis, for example. We saw the Omanis over the weekend saying, this should continue, the ceasefire should hold, and more negotiations should continue. But we haven't seen from any side that this will happen or any date for that. So this is all still up in the air. But I think a lot of people are saying this is a pause in ceasefire negotiations. And until now, this is how it seems like.
Dana, thanks for the update. There's so much to think about for markets right now. Dana Kresh, Bloomberg's UAE Bureau Chief, updating us. At the moment, the the glass half full, things are going to get better, this is going to get fixed mentality seems to be holding. Equity markets are down, but the Stoxx 600 is only down by 0.7%. Yes, the DAX is down a little bit more. US futures actually not down by very much at this point in time. So you're getting a fairly benign reaction. Do people not expect the talks to go anywhere? There seems to be a lot of positivity at the back end of last week being priced in. That certainly hasn't been unwound. Well, much of it hasn't been unwound this Monday morning. So let's try and figure out where we go from here. Dan Scott, Chief Investment Officer and Head of Multi-Asset Strategy over at Vontobel, joining us now, Vontobel Asset Management. Dan, great to see you. What do you do now? It's Monday morning. You're an asset manager. You're a portfolio manager. You're looking at a situation in the Gulf that is really hard to understand. Do you de-risk, or do you just say, actually, I'm pretty certain this is going to get fixed. I can keep my portfolio where it is?
Well, Guy, first of all, thanks very much for having me on. And second of all, as a conversation you just had with the UAE bureau chief highlights there, the situation's very complex from a geopolitical perspective. And I think going into this weekend, of course, there are those hoping that there would be some sort of a resolution and you would have a relief in today's trading. That's obviously not the situation, but the risk off that you might have expected in today's trading session hasn't really transpired. We didn't really see a very sharp sell-off in Asia, and we're not really seeing a very strong sell-off in European markets. So it seems like markets are really focused not on the geopolitics, but more on the prospect of a slow reopening of the Strait of Hormuz. And so this Monday morning, it looks like it's going to be a bit slower than we had hoped for, but everyone is still fairly confident that at one point it does reopen. So I'd say that's one aspect, but the other complexity is that, you have reaction functions that are completely different this time round than in previous energy crises. I mean, first of all, I'd say that previously, historically, all energy crises have resulted in a recession. This time around, that's not part of the base case. No one really expects a recession anywhere. And the other part is that we no longer as oil intense in our economic growth as we have been in the past, in particular in Asia. So, I mean, that's where most of that oil is headed towards. You'd think that Asia would be in sell-off mode, and it's not, because you've seen that China has actually been quite resilient in the fact that they have other sources of power and no longer so oil dependent. Yeah. The U.S. also, not even that dependent on Saudi and Middle Eastern oil that's going through that Strait of Hormuz, and even itself less oil-intense economic growth. So I think those things all play into the analysis. And sure, as people who needs to do some sort of forecast on macro GDP, we've had to go and lower our expectations for global GDP growth, but we're still looking for a nice expansion this year in 2026.
Do you think that starts to change? It's really interesting. Dan, this year, it's expected that the S&P delivers 20% earnings growth. 20%. Do you think that number's a little too high?
Well, so now you're asking me about regional positioning on equities, and I'd agree with you, but I've been on that camp already before. I think the upsides for U.S. equities isn't so clear for me because of where valuations are. Generally speaking, what I like about U.S. equities is that there had already been a trend towards a broadening in returns, and that you've seen a multiple compression around the AI and the tech winners and more into the broader economy. Now, of course, if you're looking at a slower global economic growth, that also slowly gets put into question. So I would say U.S. equities are pretty fairly valued at this point. Whereas in the Eurozone and in emerging markets, actually, you have some pretty good valuations overall on a headline basis for the indices. So I'd say there's still pretty good risk upside for European and Asian equities.
But, okay, I hear what you're saying, but if I look at what's happening with inflation, I look at, say the ECB raises rates. Does that undermine the case for European equities, Dan?
Oh, absolutely. But here's the critical point. When the market started to price in ECB hikes, I mean, there was one of the cases where I thought, okay, now I have a strong conviction call because that's not going to happen. And in fact, if it does happen, it will be a huge policy mistake. Because how would hiking interest rates solve a supply shock for oil? It wouldn't. It would just throttle the economy at the same time as it's struggling to digest higher oil prices. It would be a massive policy mistake for the ECB to go forward and hike interest rates. And for the Fed to be on hold rather than cutting, we expect cuts in September, also makes no sense in this sort of a situation. There's a lot that's coming our way this week in terms of other dynamics, but I'd say in terms of central banks, don't necessarily believe this talk about being worried around inflation, especially short-term inflation, because keep in mind, one of the biggest debt crises we have is developed market debt, and the best way to fix that is by letting inflation run. If it runs around 3%, well, that's great. It's good for corporates. Yeah. Corporate earnings are totally in a sweet spot if you have around 3% inflation. The thing we want to avoid is that big, post-COVID inflation of, closer to 10%, and we're nowhere near that. Look at five-year forwards. Long-term inflation expectations are pretty well anchored.
Dan, the market's terrible at pricing inflation. That's one of the things we should also take away from that period. Are we being complacent on the inflation front?
I don't think so. I think there's so many disinflationary forces that are much more powerful. You know, the productivity gains through AI are big. And yeah, there's a lot of insecurity around how to invest in AI, and now multiples going down as CapEx gets, revised a bit lower, maybe less data center needs than we had been planning. I understand this is a very complex situation, but if you step back and look at just the broader impact for global GDP, the productivity gains, we're already witnessing them, and there's more to come. So from that perspective, that's hugely disinflationary, and we haven't really seen big inflation anywhere else. All you're seeing right now is a bit of energy cost inflation that's creeping through into other markets, but hiking interest rates is not going to solve that. That's not the way forward. And we have UMich this week, right? This historically it's been a great indicator of consumer spend, but for the past couple of years it's been pretty bad. And I'd say the reason is because it's only really the top cohort of the U.S. earnings, income earners, that are the ones driving U.S. consumer spending. And if oil is at above $100 a barrel or around $100 a barrel, it's not going to stop them from spending. It's the lower brackets that are being hurt. And if you increase interest rates, again, you're hurting exactly the wrong income cohort. So I'm pretty sure that the market's got it wrong if it's pricing in hikes from the ECB and holding from the Fed.
Yeah, we're going to get retail sales in the next few days. We'll find out what people are actually doing because, as you say, that may be a better tell. Dan, always nice to see you. Thank you. Dan Scott, CIO and head of multi-asset at Vontobel Asset Management. Let's turn our attention to some news out of Europe. A landslide election win for Peter Magyar, sweeping Viktor Orban from power. 16 years he's been in office. We'll discuss the implications, the ramifications next. This is Bloomberg.
Space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour, only on Bloomberg Television.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
What happened was you were up.
Monday morning, good morning. Let's talk about what's happening in Hungary. The foreign and local stocks certainly having a good morning after Prime Minister Viktor Orban conceded defeat to the opposition's Peter Magyar in Sunday's election, after Sunday's election. The pro-EU party's landslide victory ends Orban's 16 years in rule and is certainly expected to redefine relationships within the EU, also with the US, and also, you could argue, with Russia.
We won not small, but big, very, very big. Together, we changed the Orban regime. Together, we liberated Hungary. We took our homeland back.
The result for us is heartbreaking, but it's clear the role of governing was not given to us. I have congratulated the winning party.
Let's go to Budapest. Ollie Crook, our European correspondent, our chief Europe correspondent, is there for us. Talk to me about the scale of the victory. Talk about what it means and how quickly things could potentially change.
Absolutely, Guy. The victory is important. The scale of the victory is also very important. He managed to sweep a two-thirds majority within the Hungarian parliament of those 199 seats. That means he is not only a free hand to legislate very freely across Hungary, but also can change things in the constitution. That's something that Orban in his last term has enjoyed, has been able to benefit from, and it also sort of illustrates some of the challenge that is going to be ahead of him. This is sort of the best-case scenario for Peter Magyar. Of course, it would have been very difficult if he had won a very slim margin. Things could have got very, very woolly. Would have been very difficult for him to get his agenda through. That being said, with the power that Orban has had over the last 16 years, there is this sort of idea of trying to break the grip of Orban. He's appointed people to the Supreme Court, to the Constitutional Court, has huge control over the sort of private sector and all these sort of different dimensions of life. And that is going to be some of the difficulty for Peter Magyar, made a little bit easier by the fact that he had such a resounding victory. Absolutely, absolutely just crushed Viktor Orban there over the weekend. No one expected, everyone I spoke to going into this, a concession speech from Viktor Orban at 9:30 p.m. with only 55% of the vote counted. Absolutely spectacular campaign for Peter Magyar over the last 2 years in an environment that is very difficult to win and get ahead of time because of all those structural forces that support Viktor Orban, control of the media, financial firepower, and of course all the other sort of entrenched interests. And of course, Guy, I mean, we can't get into every single aspect here, but watch very closely from Brussels, from Moscow, from Washington, D.C., and of course from Kyiv, because Viktor Orban was the last man standing between that 90 billion euros and Ukraine.
Yeah, big implications for what is happening in Ukraine right now. Oliver, thank you very much indeed. Our chief Euro correspondent joining us from Budapest. Let's talk to Cheryl Stroshine, who is a politics professor at the University College London. Good morning.
Good morning.
I'm sure you've been up all night.
Yes, I didn't get much sleep. It's just too exciting, frankly.
Okay, so why are you excited? What changes now? How quickly do things change?
Well, within a month, the new parliament's supposed to hold what they call a founding meeting. So we know that by May 12th-ish, everyone's supposed to be in place.
Yep.
And the final seats will be determined. I know we probably can't go into the complicated electoral system, but even with this large victory, they still say that the list might not be final for a bit of time, and that's because of the Hungarians that live abroad and the Hungarians in the neighboring countries. But there's not much. There's only 1% left to count, it looks like. So
we have a big majority.
Yes.
Like the specifics.
2/3.
We'll leave that. So what are the priorities now?
To undo the old regime, basically.
How long does that take? Because 16 years is a long time.
You know, first of all, Magyar is very organized. It's incredible that he started a party 2 years ago and now holds the government in this kind of landslide victory. So, and what was really astounding to watch yesterday is, in spite of the fact that he's got less sleep than I have, he was so focused in his speech, in the victory speech, and outlining so many priorities that I think it won't take as long as people might think. I think it's been something like this victory that was so quick and Orban conceding so quickly.
Are you surprised by that?
I was absolutely surprised. In fact, I turned off after a day of watching the computer and sort of, refreshing and uploading things. I mean, I just had sort of turned away to deal with family issues, and then saw that he'd conceded, and it caught me completely off guard.
Why did he concede? It was just the scale of the victory?
Okay, so I was watching these remarkable Hungarian pollsters, and I have to say it was a complete privilege to watch their mood change over time, because they also didn't predict such a great victory. And, they were saying, well, look, Orban has his own pollsters, and they've probably told him the game is up. Yeah. And, that you can imagine the respect among professionals, so maybe they know some of these people. But from my perspective as a political scientist concerned about Russia, I really felt that this was so important, because there'd been rumors that Russia was going to try some kind of, to create some problems on the streets of Budapest. And by conceding when he did, Orban cut off that possibility. It's almost like you want to think he wanted to avoid that from happening. Now, that's speculation, right? But it did mean that we didn't have what I was concerned about, which would be skirmishes on the streets of Budapest, potentially blood.
There's some history there.
It was a relief.
Is this permanent? Is this change, if you're in Brussels, is this a permanent change in who you are dealing with in Hungary? Has Hungary changed for good, or could we reverse these gains?
Okay, so I don't predict the future.
Sure, but it's your sense that the Orban era is over for good?
Do you know, the Orban era might be over for good. However, Orban in his concession speech said, we're not going to give up. And nobody knows what that means exactly except him. And maybe it was just his way of dealing with this, defeat. What we can say is that Magyar has a supermajority. He can change a lot. And what I wasn't prepared for also, being a political scientist, you think about the election results, was the incredible movement behind him and the young people coming out to vote. There was a concert on Friday night, which really got my attention. That was the first time I realized this is a serious movement. It's not just one person who's managed to be very organized.
It's a generational shift.
It's a generational shift, yes.
Okay. What does it mean for the relationship with Brussels?
With Brussels, it's great. It's not perfect. So Magyar Péter, Hungarians use the last name first, and I've been watching Hungarian for a day, but he's not perfect. We don't exactly know his position on Ukraine. It will be better than Viktor Orban's position. It's not going to be perfect in terms of what the Ukrainians might want, but it's an improvement.
Will he green-light all the money that was meant to be going?
I think so.
Okay.
What was really interesting is he said his first priority is a trip to Warsaw or to Poland. And to build relations there. Poland obviously is a big ally of Ukraine and is not friendly to Russia at the moment. So I think that spoke volumes as well.
And the relationship with Moscow?
We're not sure because the Russians, I think it means a lot that the Russians couldn't pull any shenanigans yesterday. I think Moscow is careful and we'll see what they say. We just can't trust what's going to happen from Russia.
Okay, so if you're an investor, can you now deal with Hungary in a much more understandable, even way?
Yes and no. And the reasons are that Viktor Orban's party took up so many of the assets, and a lot of the private business, as was mentioned by your colleague, is controlled by people in his party and his network that was loyal to him. Now, I'm not an expert on that, but I would say that if I were to invest in Hungary, I'd want to know how that's going to go. Are those assets going to be stripped from them? Or that could also be very volatile, so you might not want to invest under you might want to wait and see.
I
mean, I'm sorry to Hungary, I want investors right away, but we don't know.
Some sort of nap sounds like a good idea. We'll see. Cheryl, great to see you. Thank you very much indeed for stopping by to see us. Cheryl Stroshine, I hopefully got that one right, joining us from UCL. Coming up, we'll turn back to what is happening in the Gulf. This is Bloomberg.
The Vivian Tom clientele.
Yeah, power women, Lady Dragon, Dragon woman. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, they feel that the power, the energy. So now they come back to the store and they buy more.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Monday the 13th, half past the hour. Welcome back. You're watching The Pulse. I'm Guy Johnson in London. Let's talk about your top stories. Oil back above $100 a barrel. Stocks are under a little bit of pressure, but actually not as much as you would expect. President Donald Trump threatening a full naval blockade of the Straits of Hormuz. That will kick in at 3 p.m. UK time, 10 a.m. Eastern. Peace talks in Pakistan collapsing over the weekend. President Trump says he doesn't really care whether Iran returns now to the negotiating table. Plus, we've also got the end of the Orban era in Hungary. The forint is up a 4-year high. Stocks certainly hitting highs as well. Peter Magyar winning a landslide, ending Orban's 16-year rule. Significant changes in Hungary. Okay, let's talk about the markets. Let's talk about what we're seeing in terms of the energy space right now. So over in the States, we're up by around 7%. Brent's up around 7%. TTF gas here in Europe's up around 10%. I think it was up 12% at one point, but has certainly moved sharply to the upside. It now trades a little earlier, so we'll get an earlier look at what is happening here. In terms of what comes next, well, this is the view of the former U.S. National Security Advisor, John Bolton. He says that actually what Trump is doing is a good idea.
I think that maybe, I haven't seen these tweets, but I think that may be what he's doing. And a blockade makes sense. You don't have to attack Karg Island. I don't think that was ever realistic. The point is, if no Gulf Arab oil gets out, no Iranian oil gets out. Let's see how they feel about that in Tehran.
Let's talk about how the market feels about that. We're joined by Will Kennedy, Bloomberg News Director for Europe, the Middle East and Africa. So we've got a blockade, and let's just say another blockade of the Straits of Hormuz. We now have two potentially coming into action. I'm assuming that therefore no crude, no gas, no anything else is going to be getting out of the Gulf. The energy market reaction this morning is higher prices, but not that much higher prices.
That's right. It's really interesting that by the standards of the last 6 weeks or so, the reaction has been relatively muted. And as you say, that may reflect an expectation that Trump will actually come back to the negotiating table sooner rather than later. If they were to really enforce this blockade, if the US Navy could actually do it, as you say, it would cut all oil coming out of the Persian Gulf through the Strait of Hormuz, including the Iranian oil, which has been flowing freely in the war so far. And that would be a disaster for the global energy market, and you would expect to see prices much, much higher than they are today. So the market seems to be saying, yes, this is a big deal, but it's part of a dance which will eventually lead to some kind of resolution to this conflict.
Yeah. It keeps carrying on. Barrels are not leaving the Gulf, and the longer that goes on, that's a really big problem. India had some of that crude out of Iran. China certainly had some of that crude. Kind of, what do we know about how they're going to react in this scenario?
It's a really important question. China had avoided being too badly hit by the war so far for two reasons. One, it was soaking up all this Iranian crude, as you say. Two, it put a lot of time, money and effort into building up a very large stockpile of crude oil over the last few years, and both of those things have brought it a certain amount of insulation. If that Iranian crude stops flowing, I think it's fair to say that the war becomes more of an acute problem for the Chinese economy.
Be interested to see whether the US would be prepared to stop Chinese-bound VLCCs full of oil. There's a lot of interesting things that could happen over the next few days and weeks. Will, I know you'll be on top of it. Thank you very much indeed. Bloomberg's Will Kennedy. Let's talk about another aspect to all of this, which is what is happening up in Lebanon. Lebanon's Minister for Industry says the ongoing conflict in the south of his country was imposed and triggered, of course, by Hezbollah. Speaking exclusively to Bloomberg, he was asked about whether it was right for Lebanon to be engaged in direct discussions with the Israelis amid this conflict.
It is hard to come and say, well, we're going to negotiate with Israelis while they're still bombarding and shelling. But unfortunately, it's not us who are calling the shots. The one who is calling the shots is Mr. Netanyahu. And post-October 7th, when Israel initiated its war against Gaza, Netanyahu set 4 objectives. One, the first one being the release of the hostages. It was done. The second one was the finishing with Hamas. Probably it's being done. Third, forbidding Iran from developing nuclear arms, and this is part of negotiation. And fourth, and most importantly, his fourth objective was to restructure the area in order to guarantee the security of Israel. And this is what's being done in the process. Unfortunately, they are the ones who are calling the shots. All we can do is try to limit this war on the Lebanese soil and try to contain what's going on in Lebanon.
The Lebanese industry minister speaking to Jumana Basetchi, getting a take from what is going on in Beirut, which is, as Iranians have indicated, is a critical part to what is happening here. Bloomberg understands that the UK will not take part in the proposed blockade of the Straits of Hormuz. This is Donald Trump's blockade. It sets up another point of contention between the President and the UK Prime Minister Keir Starmer. Nicholas Hopton, Director General of the Middle East Association and former UK Ambassador to Iran, told us the announcement is almost guaranteed to further raise tensions and threaten this fragile ceasefire.
I don't think that the blockade announcement will have necessarily been welcomed in most Gulf capitals because it doesn't move the conflict to a long-term sustainable resolution and the stability that those countries need for their economic model in the future, as in the past. In fact, it perhaps raises tensions again and certainly increases the risk of the ceasefire breaking down.
Okay, let's carry on the conversation. Elizabeth Braw, Senior Fellow at the Atlantic Council, joining me around the table. Good morning.
Good morning.
So we now have 2 blockades of the Gulf. Well, one is about to kick in a little bit later on. There are many in the financial markets this morning that just see this as being part of the process to get to a solution. Is that assumption correct? Is this taking us somewhere, or is this stalemate?
It seems to be a Hail Mary move, really, from Donald Trump, an effort he's trying to do something because he clearly hasn't managed to resolve the blockade so far and restore the oil market and the global economy to the level it was on the 27th of February. So I think for lack of other options, he's trying this.
Think it'll work?
I wonder how it's going to work logistically. So are we going to have, well, if we are going to have a U.S. blockade of the Strait of Hormuz, the way he says it's going to work is that the U.S. Navy will blockade Iranian ports. And that raises a question. When they detain those vessels, where are they going to put them? Because the Persian Gulf is a limited body of water, and within that body of water, the U.S. Navy doesn't get to decide what to do with the Persian Gulf. So where are those ships going to go? And then, secondly, what about the sanctions relief, or the sanctions, U.S. sanctions on Iranian oil that the U.S. had lifted precisely to try to get more oil onto the global markets? Is that no longer in place? We don't know.
Doesn't sound like it. Yeah, but is this going to? Is the idea? Is your assessment that this takes us back to the negotiating table, or does it take us back to war? Or does it just take us back to a long, drawn-out... I don't know where this takes us. The objective here is to clearly get the situation resolved from the US point of view, but where do you think ultimately this will take us? Is the US ready to go back into a hot war? Is the US ready to go back to the negotiating table and make some consent? That's the bit that I can't figure out at the moment.
And nor can anybody else. And I think from the US perspective, it is a way of pressuring the Iranians to come back to negotiations, even though there were negotiations just a few hours ago, and that would have been the opportunity to continue speaking with the Iranians. That didn't happen. So clearly this is intended to put pressure on them. But really what matters is what the Iranians make of it, and they seem in no mood to back down. In fact, they've almost poo-pooed this proposed blockade, which suggests they are not going to cave in and start, I shouldn't say cave in.
How much tolerance do you think the Iranians have for not being able to sell their crude onto the open market? They've done it for years, but they have been able to send tankers to places like China.
They have, so they have been able to use the shadow fleets, essentially ships sailing outside the official shipping system, to get their oil to global markets. I think what they've shown in this war is that they are much more resilient, much more resistant than the US had predicted, and so they have fought back even though the odds were against them, and that has been a massive surprise. And I think what that shows is they are more committed, more committed than the Americans had predicted, and they don't really care about destruction, and they may not, as a result, may not care that much about the oil revenues either. If their goal is the regime's goal is to remain in power, why would it be deterred by a bit of a...
And they have been selling some of their crude recently and have been able to do so reasonably freely, so presumably they've built up some buffers. Okay, so let's talk about kind of the distribution of outcomes. What is your base case right now? What is your sort of central thought as to how long this now lasts for? Is it days, weeks, months? How should markets be thinking about what comes next?
Markets should realize that what we are living through is not a string of temporary disruptions, but a global refashioning of the global system. What we have become used to is a rules-based international order, which is a term that politics professors like, but actually it governs our daily lives, because it's only with rules in place that business is able to operate. And if those rules are no longer adhered to, then that fundamentally affects the way businesses operate, because they face volatility. Has nothing to do with them. Nobody hates them. They are just at the front lines.
How does it affect the Gulf? How should I be thinking about how quickly this situation is resolved?
How it affects the Gulf is that not only is shipping not going through the Straits of Hormuz at the level it used to, it's also not going in. Well, that affects every single country in the Persian Gulf, both when it comes to commodities, things that people need for their daily lives, but also for goods that companies operating in the Gulf need.
But do you think we go back to where we were before? Or do we go into a new paradigm? And if so, what does that new paradigm look like? Once this has been resolved, A, how long does it take to resolve it? And B, what does the new paradigm look like after we've resolved it?
Without profound commitment on the part of the United States and Iran and Israel to a proper settlement and peace, we are going to face a new paradigm in the Gulf region, where these countries that have built their prosperity and their attractiveness on being safe havens and being attractive to business, where they can't promise that anymore. They can promise to be attractive to business, but it's not fully within their gift, within their agency to deliver that.
So you think oil prices are higher as a result of that permanently? Like, do we need to? The risk is now there. The risk is now visible. Do I need to put an extra $10 a barrel on the price of crude?
you need to figure in higher costs for everything,
right,
including because everything will be affected by this violence, and so companies will need to factor in a sort of a higher risk margin, really, which will affect all of us, not just the countries in the Gulf.
You're seeing it in aluminium this morning, you're seeing it in copper this morning, you're seeing it in lots of different things. Elizabeth, nice to see you. Thank you very much indeed for stopping by to see us. Elizabeth Braw, Atlantic Council Senior Fellow. How does this all impact the buck? The dollar's demise has been predicted many times, but the Iran wars put further strains on the global trading system and the US's current dominant position. Gold reserves recently eclipsed central bank holdings of value-adjusted dollar assets for the first time in decades. Joining us now to discuss all of this is Bloomberg's macro strategist Simon White. Good morning.
Good morning.
What do you think about the dollar right now?
Well, as you pointed out, its demise has been it's predicted many times. It's not going to be a point-in-time event.
No.
It's kind of like a puncture, and the air is going out the tire. But I think if you look at sterling's fading as a reserve currency, it was marked by many milestones. The end of the First World War, you had coming off the gold standard, you had the Suez Crisis, and I think this Iran situation with the US is just another milestone in this sort of gradual decline in the dollar. And I think really the quid pro quo that has been in place for many years is in the US ensures stability and security. In return, people recycle their dollars into dollar assets, and the US gets cheap funding. I mean, your question is why, if you're not getting that stability and security anymore, it questions why you would continue with that sort of dollar carousel.
Alternative. So what's the alternative?
Well, the alternative is obviously this is why it's not like a dramatic overnight event, but nature always finds a way. I mean, we're finding, of course, with the de facto dissolution of NATO, that really there's no way for European nations, for instance, that they're going to have to invest in defence. So there's going to be more assets to invest there. But already, like if you look at the dollar as a percentage of global reserves, I mean, it's 60%. 15 years ago, it's now like 45, 47%. So that's already in quite a rapid decline. And if you also look at the behaviour of reserve managers, now what they used to do, they used to opportunistically trade the dollars. So whenever the dollar was cheap, they'd buy some more. Whenever it's expensive, they'd trade down. Signally, they're not doing that anymore. So we've had this sell-off in the dollar over the last 6 months, a year, and they've not responded by buying dollars. So it's the dog that's not barking is really important to point out.
Our currency, your problem. Is that going to work after this? Does the exorbitant privilege, if that number keeps going down, at what point do you get to the point where actually it does become the Americans' problem, that the deficit, the debt become problems? At the moment, America is able to glide its way through many of the current problems that it faces because people are buying US assets. Is there a tipping point? Does it happen all at once? Is it gradual? Is it an avalanche? Is it when you get to that point, what does it look like?
Well, as you say, it's a tipping point, and like any tipping points, there's often no kind of forecast beforehand. There's no obvious sign. It's like sand on a dune, like which grain of sand causes the dune to collapse. So I can tell you in advance, but I think
what are the implications of that?
Well, the implications, of course, are the dollar standard is the thing that's the linchpin of the financial system, right? So. If we don't have an alternative in place, which we won't, it's going to be a fractured system, right? You're going to have a number of competing currencies, if you like, right? Or a number of competing alternatives. It won't be the case of like we've had the sterling standard, then we've had the dollar standard. It's not clear what would replace that afterwards.
Multipolar?
It's a multipolar kind of fractured kind of system. So I think that nobody's really pricing that in or expecting that, and obviously nobody really knows what that will look like.
I could keep going. For a long time. We could talk about this for a long time. Simon, I've read Simon's pieces, honestly, must-reads on the Bloomberg terminal. If you want to carry on the commentary around what is happening with the dollar and where it goes next, just find it, read it. Okay, coming up, the CEO of Shell, Wael Sawan, discussing the all majors controversial strategy around the energy transition. That coming up next. This is Bloomberg.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Another take on the oil market. The chief executive of Shell says that he believes his company has a big role to play in the energy transition, despite controversy over the oil major's recent strategy. Wael Sawan joins Bloomberg for the latest episode of Leaders with Lacroix, the podcast.
I think it's absolutely fair that we, along with the multiple other stakeholders, have a role to play in the energy transition. So customers have a big role to play, governments have a big role to play, energy producers like ourselves have a big role to play. And what we have found as a company is we have to play to our competitive strengths. So yes, we're very strong in oil, we're very strong in gas, we're very strong in trading, we're very strong in marketing. So how do we take that nexus of strengths that we have and actually contribute to an energy transition that we know is not going to be linear, that we know is going to be complex, and how do we become a stabilizing factor for our customers as they try to navigate it?
You were speaking very plainly 3 years ago, right, when you became chief executive, when some of your rivals or competitors were trying to say, like, look, we're going to be quite good. Actually, we're almost a renewables company. Like, were you just more honest than some of your competitors?
I think for quite some time what we had been trying to do is maybe speak to multiple stakeholders. And unfortunately, that can come across as almost being all things to all people. I felt it was really important to, one, build our own beliefs around the energy system, really get clear what our role was going to be, and then just say it for what it was, recognizing that not everyone was going to agree with it, that we're always going to have also a small group of avid supporters, and that what was important was for those 80%, 70% in the middle to hear our convictions, and then most importantly, to see us follow through on those convictions. And so what we wanted to do was to position ourselves as a player that is supporting the energy of today while looking forward. And it wasn't about choosing sides. It was about finding the role that we can uniquely play to be able to address energy security, energy affordability, and energy sustainability. And people, I think some would prefer it's either this or that. And we felt, no, we are building a company that we want to be the best performing, best returning company, not just today, but for decades to come. And therefore, it's incumbent upon us to be able to look at not just the energy system of today, but to help shape the energy system of the future as well.
Want to watch the full interview? You can do so. Leaders with Lacroix, the podcast on your terminal, on our video hub, at bloomberg.com/video. You can find it on YouTube as well. There's plenty of ways of catching up with that. It's on Bloomberg TV tonight at 10 p.m. UK time. Okay, so back to the markets. Let's talk about the rest of this week. It's a big week coming up. There's lots of things going on. One of the critical things will be what is happening with the reporting season, which very much gets underway. Wall Street's largest lenders kicking off Q1 a little later on. Recent market volatility, is that going to boost trading? Geopolitical uncertainty, how's that going to kind of affect the outlook? Let's try and answer some of these questions. Charlie Wells is here with a breakdown. Okay, let's first of all talk about kind of where we are. How have financial stocks been performing in this quarter going into this reporting season?
Yeah, Guy, it's been a choppy setup to this reporting season. If you take a look back at that KBW Bank Index of the major lenders in the United States, they had their worst first quarter since 2023. And remember, that was the regional banking crisis. And if you look at some of these lines here, you can see we started off the year with that SaaS-pocalypse, kind of eating into some of the market sentiment here, concerns about what AI could do to these banks, could do to asset management. You saw a little bit of a recovery, but then, of course, that Iran war just creating a big dip there, a lot of uncertainty, and we've seen some recovery, but there's questions, right? Questions coming from some of these negative news developments. And I think one of the key issues here is it fundamentals that the market starts to trade, or is it this geopolitical risk? Let's flip and take a look at what Mike Mayo of Wells Fargo has said. He puts it pretty bluntly, basically saying, as goes the conflict, so go bank stocks. But let's see, there could be blowout reports that kind of change the narrative here, but that's why we really need to pay attention this week.
So what am I paying attention to? What is going to come out of this reporting season?
So look, Guy, looking back, probably some pretty strong numbers. I think equities trading, we know that when there's periods of volatility, that bodes well, especially for these banks that have big trading desks. We're expecting an $18 billion stock trading haul at some of these major lenders. Again, though, there's questions about geopolitics, right? Because we know M&A has been boosting a lot of these banks, but deal makers don't like uncertainty. What do we have in the market right now? We've got uncertainty. And then don't forget these other two questions, right? Private credit. When you listen to some of these analyst calls, no doubt there are going to be questions about exposure to private credit. That's been a headline risk. Do bank executives try to say, you know, this is not a fundamental problem that we see for our institutions? Let's listen for that. And also AI. Remember, we had that SaaS-pocalypse, but also just last week, Scott Bessent and Jay Powell summoned the leaders of the largest banks on Wall Street to a meeting in Washington to talk about a new AI model from Anthropic and the threats to these systemically important banks. So again, these are really key issues that we need to pay attention to, and we're seeing a little bit of divergence. Let's flip and take a look at some of these banks, right? Because you get the Goldman Sachs's and the Morgan Stanleys. They've got those big trading desks, you know, doing well in the market so far. You see JP Morgan and Bank of America down. They've got those larger commercial banking presences. And so the question here is, to what degree is negativity around the U.S. consumer about inflation, does that drive more divergence, or do blowout earnings start to shift some of these stories, and do we see convergence there?
Okay, let's start off. Let's kind of get to the nitty-gritty, the right now nitty-gritty. Goldman Sachs. What are we looking for?
Guy, dropping in just a few hours, really. And basically, we were expecting strength in equities trading, really expected to come out very strong there. They've also got FICC, and you can see how this business breaks down. They're really suited for this environment, at least in the short term. Thinking about longer term, though, and this is what analysts really are likely going to be asking about, that investment banking slice that you see right there, 16% of their revenue. The question is, does that M&A boom continue? You know, looking like it's going to be strong in the quarter they're reporting for, but what about now? What about the current quarter? Can they give us any indication about how uncertainty is spilling into deal making now?
Charlie, great stuff. Thanks for the update. Looking forward to the numbers a little bit later on. Some great coverage coming up a little bit later. Certainly, Surveillance will be working you through all of those numbers with a great deal of detail and analysis. It was a nail-biting weekend, wasn't it? You had what was going on in Islamabad, but you also had what was happening in Augusta. Rory McIlroy has won the Masters for a second year in a row. The Northern Irishman posting a final round of 71, finished 12 under. Scheffler was one behind him. Scheffler's round, the last few days, the rounds he's delivered have been amazing. McIlroy obviously had that big playoff with Rose last year. Rose missing a few putts twice in a row. I think there's 4 people that have only ever done that. Anyway, it was a weekend for the ages once again. Rory never makes it easy, does he? Anyway, plenty more still coming up. We've got some great interviews tomorrow. This is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At any point in your tennis career, did you say, I've had enough and I'm just going to retire at the top? You ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly. And so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is, you can have results and they could, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show.
We've already talked this morning on your show. As you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
By the way, your show is incredible.
Bloomberg Surveillance, we're talking about it.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Good morning. It's 5 a.m. in New York City, 10 a.m. in London. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the trading day. Standoff in Hormuz. The U.S. set to block the strait from 10 a.m. Eastern. Iran threatens ports in the Persian Gulf will not be safe. Oil spikes back above $100 a barrel as tensions remount in the Middle East. Global stocks and bonds slide. Plus, it's earnings season. Goldman Sachs will be kicking off bank results this morning. Let's take a look at what's going on in futures after a slightly down day on Friday. We're off a little bit more on futures today. It's only at 0.6% on S&P and NASDAQ futures. Russell futures down a little bit more right now. In terms of the moves in treasuries, we are looking at yields rising. So price down, yield up on the 2-year at 382, with the 10-year at 433. And the 30-year at 493. Obviously, the all-important oil trade, we're back on the rise this morning. Brent crude at $102.76 a barrel. NYMEX up 8% at 104.47. And you also see aluminum right now gaining about 2%. For some of the individual stocks on the move this morning, let's get out to London and Chloe Melee. Good morning, Chloe.
Good morning, Matt. Oil is, of course, in focus today. Oil prices are surging after the U.S. and Iran failed to agree on a peace deal over the weekend. And Trump also threatened to blockade the Strait of Hormuz. And that is reflected in those oil company shares this morning moving higher. We are now in a very different position to what we were at just a few days ago. And we're expecting now even more disruption on the horizon for those global energy markets. And so that is good news for the energy sector, but potentially less so for other sectors. And one of those that is struggling today is the travel industry. We are seeing a lot of weakness, as we can see here on the board, from airlines and cruise lines. They're facing the prospect of those higher for longer fuel prices, but also a potential economic downturn that will maybe hit travel demand as well. And so we are seeing just a lot of weakness there. And finally, Wise over in London, the money transfer company, is moving higher after saying it is on track to shift its primary listing from London to the US, to the NASDAQ. It's a company that's really trying to focus on the U.S. market. That's, of course, a really important market for fintech companies. And we are seeing investors react very positively to that. And we are seeing shares up about 5% this morning.
All right, Chloe, thanks very much for that. We'll get back to you later this hour. Coming up, we're going to catch up as well with Ella Duday of BNY Investment Newton after... we'll get to that. But, of course, our top story after 21 hours of talks over the weekend, the U.S. and Iran walk away without a deal. President Trump has now threatened to blockade the Strait of Hormuz. He spoke to reporters yesterday.
as you know, at 10 o'clock tomorrow, we have a blockade going into effect. That'll be 10 o'clock tomorrow. Other nations are working so that Iran will not be able to sell oil, and that will be very effective.
Iran responding this morning, calling the restrictions, quote, illegal, and they say that they constitute an act of piracy as well. Let's get to our team coverage with Jumana Bersetchi in Dubai, Will Kennedy in London. Jumana, of course, a blockade often seen as an act of war. Does this mean the ceasefire is off?
Well, actually, the ceasefire is still holding up, so I've got to make that clear. The last 24 hours, there have been no reported incidents. Obviously, another thing to bear in mind is the blockade technically hasn't gone into effect. That's going to happen at 10 a.m. Eastern time, which translates to around 6 p.m. in Dubai, which is where I am. So a few more hours to go until the U.S. actually pursue that blockade. And as we understand from a notice that the Central Command put up overnight, they're specifically going to be looking at blockading any vessels that have stopped off at Iranian ports. And so the framing of this, I think, is quite important to understand. They are not describing it as a full blockade of the strait, just targeted at any vessels that would have stopped off at an Iranian port. Now, that is a relevant point, but at the same time, it's fair to say as well that 80% of the vessels and ships that have gone through the strait are somehow Iranian-linked and probably would have stopped off at an Iranian port anyway. So the question from here is really how the U.S. are going to be implementing it, what exactly they have in mind, the extent of the presence of some of these naval warships, submarines, perhaps surveillance aircraft as well to be deployed as well, alongside whether other nations are going to get involved as well. The UK, for example, Keir Starmer, one of the first international leaders to come out saying that they will not be a part of this blockade, and they're still calling for a full reopening of the Straits. And then the third point, of course, and this is the major one, which comes back to your question, is how are Iran going to react to this? And does this unnecessarily expose U.S. naval military assets to the risk of further military escalation from Iran? Could they become targets for some of that Iranian fire? Questions that we don't have the answer to right now.
Will Kennedy, you know, my main question when I hear about this blockade is what happens when a Chinese supertanker comes to fill up in Iran and leave? Would the U.S. Navy blow up a Chinese flagged ship?
Well, I don't think they would blow it up, but they might try and board it and seize it. That's what we've seen them do in other situations with Russian sanctioned vessels and in Venezuela. Now, whether they will do that is a truly excellent question. The logic of what Trump said he would do is that, yes, he would. He doesn't want to see any Iranian oil pass through the Straits of Hormuz, and most of that oil goes to China. It is, in fact, one of the reasons that China has been able to bear the economic pain of the war so far relatively easily compared to other oil importing nations. So that is the real crucial question. How will this be enforced? How fully will it be enforced? But if U.S. Navy follows through, and as Jumana says, all the other ships no longer passing through, they haven't been passing through, you effectively get a complete stop to Hormuz traffic, and that has enormous implications for global energy markets. And if that were to happen for any number of days or weeks, we would see energy prices go even higher from here. You might even argue that the fairly muted reaction we've seen so far, at least on the scale of what we've seen in recent weeks, suggests that markets don't think actually this can last long and that we may be at the negotiating table again before too long.
Are the implications also maybe less enormous now, Will? I heard a report yesterday that the Saudis are pumping 7 million barrels of oil through their east-west pipeline. So, you know, how much of the oil that would have come through the Strait is now being diverted and going elsewhere? Is it the majority of barrels?
There's no doubt that that east-west pipeline, what the Saudis are doing in the Red Sea, has been an enormous help to cushioning the blow to oil markets. But at the end of the day, you've probably got around 10 million barrels a day that's still not getting out of the Gulf of Hormuz. And if we blockade Iranian oil, that will get a little bit worse. So it's definitely helped blunt the impact, but it shouldn't make us too relaxed, and it definitely doesn't solve the whole problem. And the longer this goes on, the worse it will get. It might not feel like it right now, but if this continues for any length of time, the implications for global energy supplies will be severe.
Jumana, let me finally ask you about the nuclear question, because it seems that's been the real impasse here. On the other hand, President Trump assured Americans last year that we had obliterated completely and totally Iran's nuclear capabilities, and he continues to refer to the nuclear dust under the rubble of Fordo. Do they have access to their highly enriched uranium? Have they been enriching uranium since the 12-day war last year?
Well, you've got to imagine that that is what came up and during the course of those extensive negotiations over the course of the weekend. And it was always going to be a tall order for the two sides to come together and achieve some form of a breakthrough, given the extent of the topics on the portfolio, not just about the Strait of Hormuz, but of course, other issues pertaining to Iran's ballistic weapons arsenal, their desire to see sanctions lifted, their desire not to see another war being waged against Iran, and assurances that that won't happen. And then finally, the big one, of course, is the question of nuclear. And you have to go back to the comments that J.D. Vance delivered right before he left Islamabad. And he said that there are two elements that were concerning to the U.S. negotiators. Number one is that Iran had not fully committed to never move on to develop a nuclear weapon. And number two, they had not also fully committed to relinquish or give up the tools that would allow them to go on to develop a nuclear weapon. So there are two things here. One is the ambition to build a weapon, and number two is the tools that would allow them to do so, including, as you mentioned, that enriched stockpile and the centrifuges, which the U.S. maintain have to be dismantled in order for them to be sufficiently convinced that Iran are not going to go down that path. So still a lot of issues on the nuclear question.
I mean, it seems that we insisted those tools were dismantled last year, and the president continues to refer to the nuclear dust. In any case, it's something we're not going to get to the bottom of right now. Appreciate your time. Jumana Bersetchi and Will Kennedy, thanks very much. Turning to earnings, Goldman Sachs set to kick off bank earnings this morning. Bloomberg's Charlie Wells is with us for more. Charlie, what do we expect?
Good morning, Matt. So look, it's looking like we're going to have a strong quarter of reports for Goldman. This is a bank that's really sort of set up for this moment. Given that they have such a large equities trading desk, they've got a large FICC trading desk, when you look at the proportion of their revenue that comes from that, and we've been in this volatile environment where there's been a lot of uncertainty, and so trading is expected to come out strong. M&A activity has been very strong as well for the past few quarters, and I think the thing to really focus on as we start to get Goldman's earnings, but also others across the board, what does that M&A activity look like in the current quarter? What comments are we getting about deal volume, deal flow, and the temperature of clients? Because, you know, this, I think, given the Iran war, given the uncertainty, is one of those quarters where the prior numbers matter, but it's that forward guidance, those comments that come from executives on these calls that will matter even more to investors.
What about the, trading and deals don't seem to have slowed down due to the war in the Middle East. Everyone we've spoken with say, they're watching the situation closely, but they're still moving ahead with their business. Is that, you think, going to be the case with Goldman Sachs as well, and not only in the earnings that we see reported, but also in the outlook?
Well, Matt, I think that's one of the issues here, right? It's how long can this go on for? I think it's a question of duration, right? Where in the short term, you do get that benefit coming to the trading side. You get that volatility really boosting, those desks. But again, the longer this goes on for, the more concern that, deal makers get spooked. We, of course, have a backlog, and that could help as well, right? It's almost like that surplus in oil. There's been this surplus, not just at Goldman, but at a number of other banks of deals, a lot of demand for those. But I think it's really that duration question. How long does this go on for? And then how does that start to spill into the macroeconomic backdrop? If you start to get higher inflation, if you start to get higher rates, we know that that's also not good for deal making in addition to the uncertainty. So again, a lot to kind of parse through here, and I think that's the issue. It's that duration question.
All right, Charlie, look forward to covering these bank earnings with you. Thanks very much for joining us. Let's get to the other top stories trending on the terminal this morning. The EU is set to recommend lowering energy taxes and power grid charges to boost clean technologies and ease the impact of surging energy prices. The plan aims to ensure a coordinated approach that avoids boosting inflation and fiscal deficits. Good luck with that. EU dependence on Middle East energy supplies is very limited, but it's heavy reliance on fossil fuel imports makes it vulnerable to price shocks. President Trump attacks Pope Leo XIV. In a Truth Social post, Trump called the Pope weak on crime and said he should get his act together. The attack came after the Pope challenged the administration's argument that God is on the side of the U.S. in the conflict with Iran. Moments after the rant, Trump posted a picture of himself echoing images of Jesus healing the sick. After a cabin crew strike, Lufthansa is now facing a 2-day pilot strike. The union called for the strike after months of stalled negotiations over pensions. Lufthansa passengers and cargo flights will be affected, as well as departures by Eurowings from now until midnight on April 14th. And that's likely to be midnight Berlin time. Coming up, Hungary's Peter Mayer hands Viktor Orban a decisive defeat in the race for prime minister. More on that next. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
The result for us is heartbreaking, but it's clear the role of governing was not given to us. I have congratulated the winning party.
Hungary's Viktor Orban concedes defeat after Peter Mayer's TISA party pulls off a landslide victory in the race for prime minister. Hungarian assets surge with local stocks seeing record highs and the forint reaching a 4-year high. Bloomberg's Oliver Crook, our chief Europe correspondent, is live in Budapest. And what an amazing weekend, not only for Oliver, the result of the vote, but also for the concession from a Trump-like Viktor Orban.
Absolutely, Matt. I mean, it's really sort of when you were speaking to the experts here, to the pollsters, to the economists, to the people on the street, basically nobody wanted to give you a forecast with that much confidence, right? Despite the fact that we saw the polls stacked in the favor of the opposition leader, Péter Magyar, there was a real reluctance to call anything because, first of all, Orban has never lost an election in the last 16 years, so we don't even know what that looks like. There were a ton of ways in which this election was not necessarily fair going into it. We've cataloged some of them. It really bears mentioning, you know, it's hard to to overstate how difficult it is to mount a sort of effective election campaign against the incumbent Viktor Orban. And Peter Magyar has not only done that, he's got record turnout, he's won a majority, but he's also won a supermajority, Matt. That means he's got 2/3 of the parliament. He can legislate very freely across his own agenda. He can also make changes to the Constitution. So really a very sort of spectacular weekend in a campaign that was only really begun 2 years ago. No one really knew who he was before that. Managed to come and now be effectively Prime Minister of Hungary. And we should say, Matt, I have to say, being down by the banks of the Danube where he was speaking there, seeing the crowds down there, a very young crowd, you really get the sense, unlike some of the many other elections I've covered in Europe, that this is something that really matters to people. People were intensely emotional, and you could hear chants of things like, get out Russia, and it's time to get back to Europe, which is exactly the message that Peter Magyar made yesterday.
How did he do it with, you know, Viktor Orban controls the media in Hungary. We've seen studies that, 95% of the Orban mentions are positive, 96% of the Magyar mentions are negative. He's got, Russia on his side, Vladimir Putin reportedly willing to step in with a fake assassination, and he's got Donald Trump on his side. We sent our Vice President, J.D. Vance, there, essentially to campaign for Orban right before the vote. How did Magyar win such a landslide victory?
Yeah, I think there are a couple of dimensions here, Matt. So the first thing is something we can't ignore is that the economy has been stagnant for years, right? This has been a major issue from the Orban regime. He's been unable to turn around the economy. A lot of this is going to be dissatisfaction. Also, any political leader who's been around for 16 years is going to be very difficult. But also, Orban's style of government and his style of campaigning was creating a huge amount of fear, generating a lot of external fear. You walk around Budapest, most of the campaign posters actually have Zelensky's face on it. If you knew nothing about European politics and you just thought there was an election here, you'd think Zelensky was possibly a candidate in this election because he really wanted to gas up the fear. What Peter Magyar has done is tried to put a more optimistic, a more sort of creative sort of vision for the future, laying that out for Hungarians after all these sort of years of fear-mongering. But the other side of this map is the fact that Peter Magyar went from town to town. He walked across Hungary. He shook people's hands. This was a campaigner who was really very present in the minds and in the sort of palms, shaking hands across Hungary of all the people here in this nation.
All right, Oliver, thanks very much. Oliver Crook there in Budapest on an historic weekend. Thanks very much for your reporting. Take a look at what's going on here in the U.S. this morning in terms of markets. Brent crude and NYMEX crude, both up about 8%. So after President Trump and the U.S. Say that they will blockade Iran, that we will stop the flow of traffic through the Strait of Hormuz with any ships that have anything to do with Iran. We see the price of oil surging. In terms of futures, we see a little bit of weakness here after a weaker cash trade, but it's not too bad. Just about 0.5% are the losses on U.S. futures this morning. The dollar rising about 0.25%. The Bloomberg Dollar Index just over 1,200, and the 10-year up just over 433. Coming up, Congressman Eric Swalwell suspends his campaign for California governorship, and what else is making headlines in your front page news next? This is Bloomberg.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do
do feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Matt Miller here in New York City. Let's take a look at what's going on in your front pages across the papers this morning. First up on the New York Times, President Trump telling Fox News that gas and oil prices should be the same or a little higher around the midterm elections. The president previously downplayed the sharp spike in prices. Strategists, though, from both sides say that these comments pose a challenge to Republicans in the midterm elections. Next up on the Washington Post, Representative Eric Swalwell suspends his campaign for California governor. The announcement comes after reports that a former staffer and multiple others accused him of sexual assault. Several House members are calling for his expulsion from Congress. And finally, the Associated Press reporting on Rory McIlroy's back-to-back victory at the Masters. He joins Tiger Woods, Jack Nicklaus, and Nick Faldo as the only players to win 2 years in a row. It was a hard-fought win for McIlroy, who beat Scottie Scheffler by just one shot, and he now wears the green jacket. Well, continues to wear the green jacket. Take a look at markets here. We have Brent crude and NYMEX crude higher by about 8%. Gold right now down 0.6% at 47.20. In terms of futures, we're a little bit lower this morning after a slight drop in the cash trade. Only about 0.5% on S&P futures right now. Bloomberg Dollar Index gaining to 1202, and the U.S. 10-year yield gaining to 433. Coming up, Ella Dude of BNY Investments Newton says a commodity bull market is making bonds more vulnerable. She joins us next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market. Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. It's 5:30 a.m. in New York City, 10:30 in London. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The standoff in Hormuz. The U.S. set to block the strait from 10 a.m. Eastern. Iran threatens ports in the Persian Gulf will not be safe. Oil spiking back above $100 a barrel as tensions mount again in the Middle East. Global stocks and bonds slide, as we've been showing you this morning. And it is earnings season. Goldman Sachs will kick off bank results this morning. Let's get a look at what's going on in terms of the futures this morning. We're off by about 0.5% on the S&P, a little bit more on the NASDAQ, and the Russell looking like it is down 1% this morning. In terms of treasuries, we see yields rising just slightly across the curve, 382 on the 2-year, the most significant gain. The 30-year at 493, also up 2 basis points, but the 10-year yield gaining just a little bit less than 2 at 433.5. In terms of oil, we see 8% jumps on Brent, 102.77 your price. NYMEX crude trading for 104.67 a month earlier on that contract at the front, and aluminum up almost 2% at 35.57. For some of the individual stocks that we're watching, let's get out to London and Chloe Melee. Good morning, Chloe.
Good morning, Matt. Oil is, of course, in focus. The U.S. and Iran failed to agree on a peace deal over the weekend, and Trump has threatened to blockade the Strait of Hormuz. And so oil prices and natural gas prices have surged in reaction to this, and therefore we are seeing that translated in the shares of this across this oil sector moving higher this morning. We're now expecting heightened tensions and further disruption to those global energy supplies, and so that is reflected in that oil sector. It's also beneficial for the fertilizer sector. So we are seeing those names as well move higher, like Nutrien, moving higher, CF Industries, because of that expectation of those global disruption, supply disruption. But then on the flip side, a sector that's not doing so well and not responding so well is, of course, the travel industry. We are seeing airlines and cruise lines moving lower this morning. They face the prospect now of higher for longer fuel prices and also a travel downturn because of that economic uncertainty. And therefore, we are seeing red across the screen for the likes of Delta and United this morning.
All right, Chloe, thanks very much. Chloe Melee there walking us through the individual stock stories. Let's get out now to Ella Good, head of fixed income at BNY Investments Newton. And Ella, we've seen once again concerns mounting in the Middle East as the U.S. threatens to block the Strait of Hormuz itself. how does that impact yields this morning that we see rising across the curve?
Yes, I mean, obviously bonds don't like inflation. Higher energy and higher input costs lead to higher inflation. So ergo the simple conclusion that yields should move up. I mean, that's the sort of first port of call. Our view remains that this is still structural in nature, by the way, so irrelevant of what's happening today in the Middle East. Our view has been that we are in a more bullish structural environment for commodities, including oil. And so we believe the pressure for yields actually does remain on the upside.
So what's your forecast then? I mean, if you look a little bit further out, 6 months, 12 months, how high do you see the 10-year climbing?
I have the luxury of not being an economist and therefore avoiding forecasts at all costs. But look, for risk takers such as myself, we look at asymmetries where the asymmetries, and when you look at what break-evens are pricing, so 5-year and 10-year, I don't think they're reflecting the sort of risk that we're talking about. And what's happening in the Middle East probably highlights that kind of risk. And so for us, that pressure remains in play. And I think we will likely see that in the data. We saw it last Friday with inflation. But I think in the next 3 to 6 months, we will see more pressure build up to that effect. And I think that means for yields, the path is higher. We've broken technical terms in a lot of the major global markets in rates, possibly in the US. That could also ensue, although the US has been outperforming other markets.
Why do we see, we're pretty close to all-time highs on stocks here, even with the war in the Middle East and the doubling of crude prices. We heard earlier from Will Kennedy that it doesn't look like the futures market is reflecting in oil, the issues in the physical market. And you're saying also that the treasury yields that we're looking at don't reflect the realities of the situation. Why are these financial instruments underestimating the pain that we're seeing from this war?
I mean, I'll try to be humble with it because I'm not saying that we see or know more than the next man, I suppose. But look, the risks are the following. We are looking at a market that's over time become much more short-term in nature. So in the way it prices a lot of the asset vectors. And there's plenty of examples to give to that effect, particularly over the last 5 years. So it's perhaps point number one to make. Point number two is there is a hope embedded in market participants that this will be resolved. And we don't know, maybe it will, hopefully it will, it's possible, it's likely it will. But at the same time, every day that there's a closure, that means that the pressure for this input materials and costs is building up. And that means that we are probably building up risks in markets that we're not pricing those risks correctly. And so this is certainly the angle to take. So I would say perhaps you sell rallies in equities here. I think that probably remains the playbook, and ditto in core rates as well.
How much longer can this go on before it becomes a real concern for asset prices as well, Ella? Because I take your point about the shorter term pricing aspect of these markets, but we're nearing 2 months now of a blockage in the Strait of Hormuz, one of the most important waterways in the world when it comes to providing energy to economies that need it desperately.
Look, I think we are there in the sense that over the next fortnight, perhaps those risks start to become much more material. And once you take away a lot of the more technical elements in markets, such as, optionality, gamma, and so on and so forth, I won't go into those details. A lot of that is behind us now. So I think the next couple of weeks perhaps are a very important window whereby if we don't get anything much more constructive, you can start to reflect some of the fears that I'm talking about more clearly in probably all of the asset markets, as you're doing in spot oil, for example, as you flagged out.
Do you start to see also spreads really widening? Because for so long, not only were equity indexes at all-time highs, but spreads were incredibly tight, regardless of the problems that we saw from geopolitics or, domestic economies.
Yes, I mean, the more the macro risks go up and, input costs, as we're saying, for corporations will matter a great deal, but also they hurt consumers. So both of these factors matter for credit. I would actually argue that on the one hand, these are perhaps bigger risks to credit spreads than actually private credit has been in isolation. So we've been talking a lot about private credit and how that might affect sort of public credit markets. But I would actually say these macro risks we're talking about are a far bigger deal. And you're not getting enough premium in spreads. I don't think I'm saying anything innovative or new there. And certainly we've not been to this kind of levels of spreads. Perhaps there's 3 historical episodes where we've traded here, and the returns on credit for the following 12 to 18 months have been very, very poor indeed. And so there are risks. And for us, you're not getting paid. There is one positive backdrop, which is the flow of money that's coming out of private credit or that would have gone into private credit is now actually filtering through to public credit markets. So that's a supportive technical factor. But the macro backdrop, I would argue, is not as supportive for credit right now.
All right, fascinating moves there. Ella, thanks so much for joining us. Ella Good there of BNY Investments Newton, walking us through really the credit market reaction or lack thereof. Let's get to some of the other top stories trending on the terminal this morning. President Trump attacks Pope Leo XIV. In a Truth Social post, Trump called the Pope weak on crime and said he should get his act together. The attack came after the Pope challenged the administration's argument that God is on the side of the United States in the conflict with Iran. Moments after the rant, Trump posted a picture of himself echoing images of Jesus healing the sick. Japanese toilet maker Toto has suspended new orders for its prefab bathrooms due to a material shortage stemming from the Iran war. Toto's troubles underscore the far-reaching supply chain impact of the war, which is hitting Asian manufacturers especially hard due to the region's reliance on Gulf countries for oil products. And Bank of Japan Governor Katsuo Ueda signals a more cautious stance on raising rates. Ueda had previously hinted at hiking rates, but is now pointing to the Iran war, causing economic uncertainty. Nonetheless, the war is doing it for him. We saw yields on BOJs rise to levels that we haven't seen since the late 90s. This BOJ is set to decide on rates next April 28th. Coming up, the clock is ticking as President Trump threatens to blockade the Strait of Hormuz at 10 a.m. Eastern Time while oil continues to surge. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
As you know, at 10 o'clock tomorrow, we have a blockade going into effect. That'll be 10 o'clock tomorrow. Other nations are working so that Iran will not be able to sell oil, and that will be very effective.
That blockade coming in fewer than 5 hours. Iran calling the restrictions, quote, illegal and saying that they constitute an act of piracy. Joining us now is our Washington Deputy Bureau Chief, Laura Davison. So, Laura, it's interesting that we moved from wanting to open the Strait of Hormuz to closing it ourselves. What's the strategy here?
The strategy is this is Trump's latest pressure tactic to try to get Iran to give in to demands. You know, it's noteworthy that this latest strategy here came into effect just a couple hours after the talks fell apart in Pakistan. J.D. Vance, the vice president, was there meeting with Iranian officials. They had a marathon session of talks, and there was some acknowledgement that they had some agreement on a couple points, but the talks ultimately fell apart over the issue of nuclear and Iran's nuclear program. Both sides heading back home without any agreement to meet again. So that was largely seen as a sort of a failure of these talks, and Trump then followed up saying he'd do this blockade. But it is really a reversal of what we've seen, him calling to open up the strait, and even the U.S. government allowed Iran to sell some oil by removing some sanctions. So we're seeing, again, policy just whiplash back and forth from one end of the spectrum to the other.
Why is the nuclear program such a sticking point for most Republicans, for J.D. Vance and Democrats, when President Trump says that we completely and totally obliterated their nuclear program, and that was last year, but this year continues in the past days and weeks to say that their entire nuclear program is dust, it's buried under rubble, it's not accessible. You know, if they have no tools, why does it matter?
This is really where we're seeing sort of the delta between what Trump says is reality to what sort of the strategy and the actions would suggest is the reality on the ground. This is the same, military that Trump says has been completely obliterated, but yet was able to, days later after Trump said that, to shoot down a U.S. jet fighter. So this has been a sort of a tricky messaging issue for the U.S. to manage here, as you have Trump, who kind of will go out on TV, tell reporters sort of a maximalist version of what's happening, refusing to back down or concede to any facts here, whereas what's actually happening is that the U.S. hasn't obliterated Iran's military entirely. They were not available in the attacks last summer to obliterate the nuclear program. So it's kind of creating this dilemma where Trump has sold a vision of something that he then has to then go back and address, and that's really causing a lot of issues domestically on this war, because people didn't see Iran as a threat because they were told it was it was neutered a year ago.
Laura, thanks very much. Laura Davison will continue to try and understand what's going on here with you, our chief Washington correspondent. Now, oil back above $100 on the blockade threat, both on NYMEX and Brent. That blockade would halt the nearly 2 million barrels a day of Iranian oil passing through the waterway. Joining us now is Bloomberg's Alex Longley. And Alex, I saw also a story on the terminal that the Saudi deliveries to China will be cut in half for next month. Are the Saudis going to be able to get any ships through, or the Chinese going to be able to get any ships through, as long as they don't make any stops in Iran?
Well, I think that is one of many questions that are pretty much unclear at the moment. The exact details of what this blockade will look like are something that the market and traders and ship owners, even those with vessels in the region, are still waiting to hear about. That kind of reduction in Saudi flows that you referenced before is coming from the fact that, for the most part, since the conflict, the Saudis haven't been able to export their barrels through Hormuz, and so have had to do so through the port of Yanbu in the Red Sea instead. And again, as you referenced previously, the only country really since the conflict began that has been able to keep its oil flows going through Hormuz as normal has been Iran. And so that in part is likely why we see this shift in US posture towards Hormuz today.
Last week, we saw dated Brent climb to $144, a record high. That is to say, actual barrels of oil that refiners are buying in the moment to produce. How does that market look right now, Alex? Because it's the spread between futures and the physical market is, as far as I understand it, the widest that it's ever been. And a lot of times there are so many bids and very few offers that it's hard to even see pricing clearly.
No, exactly. And I think there's probably two things behind that. One is plain and simply a shortage of barrels. This is what the International Energy Agency is calling the biggest oil supply disruption on record. And when you get something like that, you get a market that prices extreme scarcity. And then the second thing is a timing issue. The dated Brent market is for barrels for more immediate delivery than futures prices, which are a month or two down the line. And so if you think about this kind of futures curve that's pricing extreme scarcity at the front and then that kind of downward sloping structure as things give away down the line, well, the physical market is even more in advance of the futures curve and trading even higher than that. So this is kind of one big long pattern that tells you sort of high prices for the barrels that are most immediately available and then slightly lower ones down the line to kind of price in that scarcity that we're seeing in the here and now. But clearly, particularly in the North Sea, as we saw last week, you had 40 bids for cargoes and only 4 offers. That's telling you something about the state of the global oil market right now.
All right, Alex, thanks very much for your reporting. Appreciate it on this ever-changing market. Alex Longley covers oil for us out of London. Turning to banks now, Goldman Sachs is set to kick off earnings. In just about 2 hours' time, we'll see those numbers come across the ticker. Let's bring in Bloomberg's Tom Metcalf for more. Tom, what do we expect to hear from Goldman, both on the quarter that was and in terms of the outlook?
Yeah, a lot of people are expecting them to basically post another record in equity trading, reflecting all the sort of market volatility. And obviously Goldman has a happy knack of making a lot of money even when others are sort of struggling. And then, the quarter forward, it's all going to be about the messaging. Obviously, it's very sort of febrile markets, really hard to judge, where the geopolitical situation goes. But it'll be that first time a big US bank has stood up this quarter and kind of laid out how they're doing, but more importantly, where they're going.
What are the most important question marks that you're looking to be answered? I mean, I imagine you'll want to hear commentary around the effects of the war in Iran, but I don't know how much it could change results at Goldman Sachs.
No, exactly, and I think there you've got the sort of private credit element and artificial intelligence will probably be, the two other big trends that people will be looking out for. And loads of really interesting stories recently about the rollout of Anthropic's new model and how it appears to be spooking at least some in the industry, or certainly Scott Besson. And so it'll be interesting to see if there is any kind of guidance or context on that beyond what we've already heard, which is broadly like we're welcoming the implementation of the technology and see it as being long-term good in terms of efficiencies and ultimately driving the bottom line.
Right. I mean, speaking of efficiencies, the bankers who work there are going to wonder about their jobs, about costs in those terms. What have we seen from Goldman Sachs along those lines?
Yeah, so far it's kind of yet to come truly out in the numbers. I mean, I think what you are seeing is, a sense that there's probably going to be a period of investment first where you don't really see, say, net headcount drop too much. But the sort of the speed of change at the moment suggests, all these timeframes, hey, maybe we start to see kind of more middle office, back office jobs removed. People are thinking that's in several years, but of course, if things are really going at pace, that could be shortened.
All right, Tom, looking forward to these numbers and more reporting from you on them. Tom Metcalf covers the banks for us out of London. Remember, Goldman Sachs is set to kick off banks earnings as earnings season gets into swing, really starting today, just about 2 hours from now at 8 o'clock this morning. Coming up, we're going to get you set up for your trading day. This is Bloomberg.
Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Brief. I'm Matt Miller in New York City. Let's get a look at what's coming up this week. Starting off today, obviously bank earnings are a big deal. Goldman Sachs kicks off those this morning. JP Morgan, Citi, and Wells Fargo coming out tomorrow. And then Morgan Stanley and Bank America reporting on Wednesday. We get Netflix reporting its results on Thursday, so watch for that if you're interested in media. Plus, we're going to get PPI, Producer Price Index, on Tuesday in terms of economic data points, and then jobless claims coming out on Thursday, those weekly jobless claims. In terms of individual stock stories, well, we can watch all of the oil producers this morning. ExxonMobil in futures, in the pre-market, I should say, up 2 2/3%. After Brent and NYMEX both rose back above $100 a barrel, you'll see a lot of movement for them. Fertilizer stocks as well will get a boost as the looming blockade of the Strait of Hormuz threatens those supplies as well. So that's why we see, for example, CF Industries rising 3% in the pre-market this morning, and Delta obviously going to be hit to the downside. Travel stocks across the board will be lower. Airlines and cruise lines have to pay a lot more money for these things, especially in the U.S., where our airliners do not hedge the price of oil. In terms of that price, you can see Brent and NYMEX both up 8% this morning. Brent at 102.78 for June, NYMEX at 104.63 for May, and gold continuing its odd relationship with risk, coming down now 0.7% as things get worse in the Middle East at 47.16. In terms of S&P futures, we're down still 0.6% at this hour. The Bloomberg Dollar Index gaining a little bit of strength here at 12.01, 12.02, and the U.S. 10-year yield rising just about 2 basis points to 433.5. That's it for the Bloomberg Brief. Surveillance is up next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing. My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg. Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
Markets and investors have been conditioned to look through volatility.
Markets can remain more buoyant.
On a fundamental basis, we are still in a very good place.
It's really not about hype anymore.
It's impossible to kind of figure out, pinpoint where it's going to go.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, talks breaking down. The White House planning to block the Strait of Hormuz following the collapse of peace talks over the weekend. The tension sending crude oil breaking back into triple digits. It's a weak start to a new trading week.
Welcome back, although I should have said welcome back on Sunday night because we all were on our terminals on Sunday night trying to understand what the ramifications in markets would be from the biggest escalation since the ceasefire began. And a real question here about the market reaction. It actually isn't as great as I would expect because right now we still have the potential to escalate into a full hot war that brings in the entire region. The market's looking past that, saying earnings begin. We're not necessarily going to see that because that just doesn't seem to be in anybody's interest.
Equity futures right now in the S&P 500 negative just 0.6%. A fragile truce still holds. That's the good news. Are we taking one step back to take two steps forward? That might be the view of the equity market so far this morning.
The problem is, how does a fragile truce hold when you have the president at 10 a.m. announcing this blockade? The Iranians will not only not see this as the ceasefire holding, they will see this as an escalation. Basically, what the Trump administration is saying, if we can't use the Strait of Hormuz, or our allies in Europe and Japan and Asia can't use the Strait of Hormuz, neither can you.
Brent crude, triple digits, 102. What is anchoring the outlook? Earnings. Goldman Sachs later this morning, kicking things off 7:30 Eastern Time. That is what we're pinning the hope on, that the outlook for earnings is still solid in America. The banks first to report.
Yeah, and this really is the reason why Morgan Stanley's Mike Wilson is still bullish, why Max Kettner of HSBC came out this morning saying he is still max bullish, max overweight, given the fact that earnings are likely to come in strong. Key question for me is, how strong does the outlook have to be, given the black box that people have of the outlook? How are they preparing for a world in which suddenly free shipping is not going to be the reality anymore? And that ultimately is the question that a lot of CEOs are going to have to answer.
Max is joining us later this week. One line in his research that he published just moments ago: less bad is good enough. Less bad is good enough. After the weekend, could you say things are getting less bad?
I'm not sure. I don't think so. I think that right now, potentially, we're just at a standstill. Nothing has moved forward or backwards. The talks are deadlocked. I don't see Iran or the United States moving on their very hardened red lines. And right now you have a blockade. So I actually view this as escalation because Iran says that they are going to respond to that blockade.
We've got a big week, a big hour coming up. Coming up this hour, Peter Chair of Academy Securities has failed peace talks drive stocks lower. Norman Rule of CSIS on blockading the Strait of Hormuz, and Andrew Holmhorst of Citi as inflationary pressures continue to build. We begin this hour with our top story. President Trump vowing to blockade the Strait of Hormuz for all vessels that stop in Iran beginning later this morning. Our team coverage starts right now with Jumana Basechi in Dubai and Tyler Kendall in Washington. Tyler, first to you, just what happens several hours from now?
Yeah, hey, John, good morning. Well, at this point, we did get confirmation from U.S. Central Command that this blockade starting at 10 a.m. Eastern will extend to all Iranian ports, though importantly, they say that the U.S. military will not impede any vessels going to and from non-Iranian ports. So technically not a full blockade, but of course one designed with some really big implications. President Trump here, of course, trying to limit Iran's leverage and financial lifeline after the talks this weekend concluded without any resolution. President Trump also says effective immediately, the U.S. is going to try to clear mines in the strait, may actually board and seize any vessels that have paid tolls to Iran, and is ready to attack in the event that Iran retaliates. Because as you guys were just discussing, we did get this statement overnight from the IRGC saying that if any military vessels approach the Strait of Hormuz, Iran is going to take that as a violation of the ceasefire. All of this happening because these talks did not yield successful results. And we should point out that a U.S. official familiar with the matter confirms to Bloomberg News that one of the biggest sticking points this weekend was that the U.S. delegation felt that Iran did not fully recognize that the U.S.'s main goal here when it comes to these talks is to limit Iran's nuclear ambitions and its program. Now, John, President Trump did say in an interview over the weekend he thinks that Iran will come to the table eventually when it comes to their nuclear program, yet we are also getting these statements from Iran saying that they're going to hold firm.
Jumana, we've seen the statements from Iran, the reaction from the U.S. Where are Gulf partners? Do they support the blockade that this president's looking to push forward through?
That's, the million-dollar question here. Nothing has been explicitly released, but I did spend a big chunk of yesterday speaking to many senior officials from the region, and they will tell you that this actually is an outcome that they would endorse, because we were in a situation the last couple of weeks where the only oil that was getting through the Strait of Hormuz was Iranian oil. Everything else, for every other producer in the region, it was essentially blocked off. And so now we find ourselves, at least, with the U.S. trying to do something about the right of sovereignty that Iran insists that they have over the Strait of Hormuz. Again, as Tyler was saying, there's a lot of questions about how exactly it's going to be implemented, how Iran are going to respond, if this is going to lead to another downward spiral, would it lead to more military escalation and potentially an ending of the ceasefire. But I would say, and this isn't getting a lot of attention, one part of President Trump's Truth Social post yesterday, he did describe the meetings as having gone well and that most of the points had actually been agreed to. And so some people in the region are saying, well, maybe this is the masterstroke out of the U.S. And this is, I'm not putting words in other people's mouths, but I'm just saying there is a feeling that maybe this could work out in the sense that the U.S. managed to extract one of Iran's key points of leverage ahead of the next round of discussions, and therefore, they could be more amenable to yielding to some of the other U.S. demands, namely on the nuclear file.
Jumana Basechi, out of Dubai, Tyler Kendall over in Washington, D.C. The talks continue. Is that enough for this market this morning? The front month of the futures curve trading higher by about 8% in the oil market. WTI 104, Brent crude at 102, and equities. If you just look at equities this morning, just slightly softer. Not seeing that big washout you might expect after the announcements over the weekend.
And part of the reason why is because the back end of the oil curve is still contained. You aren't seeing people really pricing the idea that this is going to be a material breach that will not get solved before December.
Futures this morning negative by 0.6%. Here is the view on Wall Street this morning. It comes from the team at Academy Securities, writing the following. This is a bold attempt to strip Iran of both leverage and revenue. This doesn't resolve the urgent transit problem. If anything, it complicates it. Pete joins us now from what? Pete, good morning.
Good morning, Jim.
Your reaction to that very subdued reaction in this equity market?
It seems about right. I was guessing we'd be down 1%, so we're not quite down that much. But again, I think people have to see how this plays out. To be honest, I think at 10 a.m. we will see what the military actions actually look like, right? It's a political action when the president talks about it. It will become a military action. We'll see what we're willing to do. And there's been talk about going into the strait and clearing mines. That would be awesome, right? That would set the stage for something really good. The flip side of that is we don't know what Iran will do, and we don't know what we'll do if, Chinese ships are coming through. So there's a lot of uncertainties. I think this could go either way still.
Militarily, and you and the team over at Academy in a position to help answer this question, how difficult is it to block the Strait of Hormuz?
I think that's well within our capability, right? Blockading it and keeping control, interdicting ships, that's something we can do. I think we can stay far enough away that we're not really in constant range of Iranian attacks. The flip side of that is, can we go into the strait and clear the mines? We supposedly would send 2 ships through. They did some mine sweeping. That could be more difficult. So I think it really comes down to the extent of how far we're willing to go and if Iran's going to try and disrupt us or not.
I spent the weekend worrying about China, and I wondered how much this was an effort to bring China into the play, because ultimately this would block some of their oil from coming to their shores. How much do you see this as an escalation in terms of international relations and trying to draw in other members more aggressively into this conflict?
Yeah, so one, I do think we're pushing on Iran and their economy. We'll see how long they can go with it. There is this risk of escalation, though, that you draw China in, or you do something to a ship that all of a sudden in international waters causes some degree of legal consternation. So there is a risk. And I think that's been the problem, this kind of, the maximalist leverage that we're trying to apply. And Iran seems to be applying. It's very easy to slip and make a mistake and go down a path you don't intend to, right? So I think that, to me, is the risk. And anytime you have navies out there, Air Force out there, there is a risk of accident or, Iran getting lucky, shooting down another F-50. So it's a risk, and I think it's nerve-wracking.
When I hear that, I think, why isn't the market down more, to John's point earlier? At the same time, earnings coming up are supposed to calm all, given the fact that the outlooks are probably going to be muted. That said, the actual results have been pretty aggressive and good. How much are you expecting them to comment on the tail risks and the potential scenario analysis of how they plan to face off with it?
So one, I do think all bets are off. If we really see the ceasefire broken, I think markets sell off 2 or 3%, right? So far, we have not seen the ceasefire broken. There's talk blockade. Away from that, yeah, I think people are talking about the tail risk, the uncertainty. And I think it's not even just going to be the U.S. economy. I think, what does global demand look like? Asia has been hit far worse than us by this. Europe's getting hit far worse than this. And finally, does the American brand sell as well globally? Are people seeing a willingness to buy American brands? Has that changed at all? So I think it's really going to be, what is the tail risk? What's the economic uncertainty look like? Again, just domestically, we actually, I don't really trust University of Michigan consumer confidence very much. But having said, an all-time low is still pretty, you've got to at least pay some attention. And uncertainty breeds conservatism in terms of spending and hiring. And that, I think, is the risk. So I think I really don't care that much what this quarter looks like. It's the sort of message you get out. And if Jamie Dimon's any hint, right, you are going to see more and more concern about geopolitics, what this means. I can certainly tell you at Academy Securities, we've been incredibly busy as people want to understand how we're seeing the military play out. And as much as we talk about Iran, I would still say at least 50% of our conversations about China, because that is the real long-term strategic risk.
With great respect for Jamie Dimon, much of the Dimon doom has been pretty off base over the past 5 years, particularly with regards to JP Morgan earnings themselves. So I'd park that story just for a moment, and I'd raise this question: regret and conditioning. April 20, April 25. We'd be conditioned to buy the dip quite aggressively, and we're filled with regret if we didn't get long quickly enough. Is there a big difference between this moment and those moments?
One, I think April 2020, to me, that just seems so overdone. The fear was, palpable. It was wrong. We kind of got very bullish there. On Liberation Day, we were a bit slow to turn around. But again, that was one where we pulled back on all our policies, right? So you still have to read today, everyone who said, tariffs were going to be awful weren't right. It's like, well, we pulled back so much. This one's harder, right? It's harder for us to walk back. I don't even know what happens if we just say, hey, we're done. We fixed enough of the regime. We've moved on. We can leave the area. I don't know that we rally again like this. I feel like there's been more permanent damage. Again, there is this real risk. Everyone's been quiet. Everyone seems to assume no one wants to be caught short or not long enough when we get the real peace deal. And I think that's a risk right now, that we don't get that we once again see some degree of escalation. It's not a huge risk, but I do think that's real.
Does the market at this moment even believe a blockade's happening at 10 a.m.?
I think we're viewing it as simple. We'll stop ships coming in. Again, there's only 3 or 4 ships passing through anyway, supposedly. So this doesn't seem like that big of a deal. To me, I'll get really excited if we are going through and sweeping mines, because that would seem, hey, this is really pushing to a much more clear signal that Iran has no control over it.
To that point, Pete, there was also a New York Times article going into the weekend suggesting that Iran wasn't in a position to reopen the Strait of Hormuz because they didn't know where the mines were and didn't have the capabilities to clear them themselves.
Right, so there's also this risk that they have about letting ships through to potentially damage that they don't even want to happen. They don't want, then there's no intention for them to damage. They just lost track of where they dropped all these mines.
Jemana lent on that line over the weekend that talks went well. Do you think we're in a position to sit here on Monday morning and say we're in a decent position for further talks here, further negotiations with the Iranians?
Mixed. I think it really comes down to the highly enriched uranium, right? Are they willing to give that up? I think militarily it's very difficult for us to get in, and the mines are an interesting story. It's, when we talk to our, generals and admirals in particular, mines are the one thing that really scare ships. Like drones, missile attacks, they're fine, even some torpedoes. The mines are designed, they basically hit you from up, lift the ship up, crack it, and you are done. So it is a bit scary if there are mines floating around that no one knows where. Again, the U.S. military can do this, and I've been, if we see, for once, Europe or someone else come together and help the U.S., that would also be pretty positive for markets, right? We have not seen any help from anyone really in the Gulf or the NATO allies.
Well, Emmanuel Macron says they're hosting a conference this week, so in conference on the Strait of Hormuz. But Jonathan led into you by talking about the fact that this is a bold attempt, to your words, to cut Iran off of their revenues. If that's what this administration cares about, why did 3 weeks ago they unsanction Iranian oil?
That's a big question. I'm not 100% sure, and I'm on the slightly skeptical side that this will work as effectively. Do they have weeks or months of runway for this? Yeah, and we talk a lot about this, right? We've clearly been wargaming. We've been trying to practice, what we would do. Iran's been thinking about this for a long time. So you would have to believe Iran has some contingency plans for being cut off economically. Do they have side deals with China to get product in, even if they're not paying? I really am skeptical that this will bring immediate, in the next week or 2 weeks, Iran to its knees from an economic standpoint. So if that's not the case, again, this is always still about this buildup. How long can we endure higher prices, and can Iran do anything to keep those prices high, which probably would have to include going back and targeting pipelines and alternative facilities. That's the risk of escalation.
It can get messy quickly. Final question. Pete, we're not going to have much time for this throughout this morning. Rory, back to back. Quick comment, if you can. What a weekend of golf.
It was pretty amazing. It was awesome how many people were in the hunt, and it felt like at any moment on Sunday anyone could have won. I'm glad Rory did. I really would have liked to see Cam Young win. We were at a watch party for him. It would have been awesome.
He's got a great future ahead of him, no doubt about that. Pete, it's good to see you, sir. Thank you. Peter Chair there of Academy Securities, and of course, congratulations to Rory McIlroy and his team. Up next on the program, a standoff at the Strait.
Well, as you know, at 10 o'clock tomorrow, we have a blockade going into effect. That'll be 10 o'clock tomorrow. Other nations are working so that Iran will not be able to sell oil, and that will be very effective.
Up next, we'll catch up with Norman Rall of CSIS, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got Got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Later this morning, earnings season begins for the big names on Wall Street. Goldman Sachs kicking things off in about an hour and 10 minutes. Look out for that. Your scores heading into it. Equity futures subdued. We're down by just 0.6% on the S&P 500 following the biggest weekly gain of the year so far. Laurie Cavacina of RBC Bramo saying this morning. It appears to us that the S&P 500 has established a fragile foggy bottom.
Yeah, and still reiterating her target for the end of the year. We're seeing a similar kind of, I don't want to call it optimism, but an understanding that maybe we've priced in the bad news from Mike Wilson of Morgan Stanley, from Max Kettner of HSBC. How much is this where the gains have come from? It is big tech. It is the big banks reclaiming leadership after a long cycle of them really falling behind.
Just slightly softer on equities, even with this move in crude. And check it out, Brent and WTI back into triple digits, higher by anywhere between 7 and 8% so far this morning. Out of surveillance this morning, it's a standoff at the Strait.
Remember, their promise was that they were going to open the Hormuz Strait. They didn't do it. They lied. As you know, at 10 o'clock tomorrow, we have a blockade going into effect. That'll be 10 o'clock tomorrow. Other nations are working so that Iran will not be able to sell oil, and that will be very effective.
So here's the latest this morning. Iran threatening to retaliate if the U.S. blocks the Strait of Hormuz to ships that stop at its ports, warning, quote, no port in the Persian Gulf and the Sea of Oman will be safe. Norman Rule of CSIS writing, it's the sharpest escalation since the ceasefire. This may not mark the formal end of the ceasefire, but it could represent the beginning of its unraveling. Norman joins us now for more. Norman, welcome back to the program, sir. Norm, in your mind, what happens several hours from now at 10 a.m. Eastern Time?
At 10 a.m., in essence, you will have the United States stop all shipping into Iranian ports. And for the Iranians, they will need to test U.S. fortitude. They will likely try to do several things. They may try to run several tankers through the Iranian side of the Strait of Hormuz into Iranian waters to see what will we do. If the tanker captors are instructed to continue, no matter what the U.S. says, the Iranians will just see what happens. At the same time, the Iranians will look to see what ships go in outside under the U.S. control, and then perhaps threaten to target those ships or the ports where these ships attempt to dock. And last, of course, if the Iranian position is that their economy will suffer because of an inability to produce and export oil, they could, in an extremes position, attack Gulf oil producers.
Norm, is the blockade the appetizer potentially for full U.S. naval escorts through the Strait?
It is, but it may not. But it just may be a broader step for U.S. policy to test Iran short of hostilities. We saw the two destroyers go through over the weekend, and that was interesting for several reasons. First, they faced no mines. Secondly, they faced no Iranian missiles, speedboats, or any other Iranian hostile activity, which could have happened. Next, you had the U.S. demonstrate freedom of navigation, which is a long-standing U.S. practice in the Strait of Hormuz and the Persian Gulf. So you've got a precedent beginning where the U.S. is beginning to test a process that could lead to convoy operations. But it could be that convoy operations are not necessary. The strait just naturally opens on its own at some point. But again, we're in early days, and hostilities could well break out again.
Well, in these early days, will Gulf partners help the United States in this blockade?
I don't see that as being necessary, and the best way they could help out would be to produce oil and energy through other routes that don't rely upon the Strait of Hormuz, and I think you're seeing Saudi Arabia and the Emirates do this. Also, you're seeing rhetoric by the Gulf leadership, such as Dr. Sultan al-Jaber and others, where they state that no Iranian control of the Strait of Hormuz can be tolerated, and I think you're going to continue to see that quite clearly.
Norm, what left is there to negotiate if Iran doesn't want to give up control of the Strait of Hormuz and they are not willing to give up their nuclear ambitions?
Constraints upon their missile program to ensure that they don't develop an intercontinental ballistic missile, and continued enhancements on their medium-range ballistic missile that make it impossible or difficult for regional countries to stop them, but also the activities of the Quds Force. I mean, recall that the Quds Force was proliferating missiles to the Houthis, which did shut down the Red Sea for a period of time, missiles and drones. And there's no question that the Quds Force will continue to provide technology to the Houthis and other proxies in the region that will enable them to do similar things in the future. So for the United States, nuclear issues, missiles, and regional adventurism have always been the three issues of importance. And those issues have been shared by Europe and Gulf partners, but how they're handled has been the difference in terms of an approach.
How concerned are you that in response to the full blockade by the United States, Iran will get some of the Houthi militants involved in the Red Sea, and we could see a broader blockage of all transport in the region?
It's possible. However, the United States will likely treat the Houthis very harshly militarily, and I think you're probably seeing a lot of diplomatic efforts by the Saudis to constrain Houthi action. The Houthis have on-the-ground issues dealing with Yemeni internal matters that have also focused their attention. And traditionally, the Houthis have focused on Israel issues regarding Palestine. And their role has been limited thus far. So it's a possibility, but thus far a limited one, but it remains a possibility.
No, just a final question, because it's on people's minds. How do you think the U.S. would respond if a Chinese-flagged vessel attempted to go through the Strait of Hormuz?
Intense diplomatic engagement with the Chinese to ask them why they are attempting to turn a regional conflict into an international conflict, and if someone in Beijing had actually lost their minds.
Norman Rowe, thank you, sir, of CSIS. Norm Blunt, and to the point with that final reaction.
Well, ultimately, though, how much is everyone dancing around this? There were reports over the weekend that China was providing Iran with new anti-missile capabilities with respect to their air systems, also ideas of potentially China providing intel. So at what point is this really all a buildup to that May meeting between Xi Jinping and President Trump? And how do you create enough of an uneasy peace to keep that meeting on the books?
Looking at the markets this morning, there is a real buy-the-dip type feel coming from the research departments across Wall Street at the moment. Lisa mentioned the likes of Mike Wilson over at Morgan Stanley. This from BlackRock. We'll catch up with Jean Bavin in the next hour, turning overweight U.S. equities on the AI theme. And perhaps more interestingly, with regards to what's taking place in the Middle East right now, upgrading EM equities to overweight as of today.
Yeah, I'm curious which ones, right? How much is this the energy exporters rather than the energy importers? Nonetheless, there is a feeling that a floor has been established and that people are overlooking the good news that we were focused on earlier this morning. And people point to multiples, the fact that multiples have gotten to the lowest levels that we've seen in a number of years, just simply based on the re-rating in a number of these names.
Equity futures negative just 0.6% to kick off a brand new trading week. Coming up on the program, we'll catch up with Rakaya Ibrahim of BCA Research, with crude trading back above $100 plus. Christina Kino drops by with your morning movers. Energy stocks rising on the Hormuz blockade threat. Those stocks up anywhere between 2 to 3%.
Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Equity futures this morning negative by just 0.6% on the S&P 500, following the biggest weekly gain of the year so far, and also following the first back-to-back weekly gains we've seen for 2026. Equity futures down across the board here. On the Russell, we're down by 1 full percentage point. Let's get some single names and some morning movers. Let's cross over to Christine Aquino for more. Good morning, Christine.
Good morning, John. Of course, energy stocks in the spotlight today, leading gains in the pre-market as oil climbs back above $100 per barrel, and as we await the U.S. blockade of the Strait of Hormuz starting at 10 a.m. Eastern time today. Now, higher oil prices, not just the only impact of the war in Iran. ExxonMobil last week flagged a 6% loss in its global production in the first quarter as the war paralyzed operations in the Gulf. We're going to hear more about those details as the company reports its earnings on May 1st. We're also watching a NASDAQ 100 battle this morning. Sandisk coming out on top. That is going to join the index on April 20th, and it's riding high. Its shares hit an all-time high since it went public in February of last year. Now, of course, one company enters, another company exits. That is unfortunately going to be Atlassian. Those shares hit an 8-year low last week as pain continues for the software sector. Another software stock that we're watching this morning, Palantir, of course, it received a high-profile endorsement from President Donald Trump. The president praised the company's, quote, war-fighting capabilities in a social media post. Of course, those shares also getting bogged down in a software downturn. They hit a 10-month low last week, John.
Christine, thank you. Thank you for the update. More from Christine in the next couple of hours right here on Bloomberg Surveillance. On a radar this morning, President Donald Trump planning to block the Strait of Hormuz. The threat coming after the U.S. and Iran failed to make progress in peace talks over the weekend. The blockade is set to take effect at 10 a.m. Eastern Time. Over in Hungary, Viktor Orban's 16-year rule coming to an end. The opposition party notching a landslide victory. Peter Magyar, the country's next prime minister, outlining sweeping changes to redefine Hungary's political ties. And finally, Goldman kicking off big bank earnings later on this morning. Analysts expecting the bank to benefit from a trading windfall fueled in part by volatility associated with the Iran war. We'll bring you those results in about an hour from now.
Yeah, key question is, how do they see the world going forward, right? How do they sort of hedge for increasing tail risks? And how much do they see companies still wanting to either go public, do mergers and acquisitions, issue bonds? How wide open are capital markets? Because right now, ultimately, the bulls on the street, what they're talking about is an inelastic demand from a lot of these companies to build out AI, to get bigger so they can be more resilient. How significant do geopolitical disruptions have to be to disrupt that? And I think increasingly, that's what we're going to be looking for in terms of commentary from the big banks.
So the geopolitics might help in terms of the trading windfall, but it might cause a pause of things like M&A activity. What I find fascinating is that we're going to have the CEO speaking around 9:30. That's when their earnings call is. And 30 minutes later, their blockade, according to CENTCOM and the president, will begin. So it's going to be two interesting dynamics for Wall Street.
The calls might be more interesting than the results themselves.
Definitely.
There's another aspect dimension to the earnings from the big banks this week. Certain stocks like Goldman and Morgan Stanley have started to trade with a private market flavour. over the last month or so. You read into that whatever you want, but ultimately they seem to be dragged down, held back by difficulties experienced by others over the past few months.
And they've come out and said that their private credit unit has been insulated because of their high institutional involvement. A real question here about how they try to differentiate their private credit units. But that's not the whole story, and I think you're pointing to that, which is essentially how much is their exposure to other private credit firms in the form of credit lines, et cetera, and then how much are they concerned about a broader credit cycle that private credit is just a node of, right? It's sort of emblematic of, and is the sort of canary in the coal mine that they're seeing percolate into other sectors of their portfolio, in particular having to do with software.
That will be the main story in about 60 minutes' time. The main story, as things stand so far this morning, is this move right here. WTI and Brent higher by around 8%, crude surging back into triple digits as markets await the president's threatened blockade of the Strait of Hormuz. Javier Blas of Bloomberg Opinion joins us now for more. Javier, welcome to the program. Let's just think this through, how this is going to work in practice several hours from now. What are you focused on?
Well, two things. I mean, how real the blockade is going to be. And particularly, I want to see if the U.S. Navy is really going to stop Chinese flag tankers getting out of Iranian ports and going into China. Is that going to happen? Because to me, this blockade is targeting not just Iran. 95% of the Iranian oil is bought by China. So this blockade has two targets. Iran, economic pressure on the regime. China, perhaps sharing a bit of the pain, put a skin on the game for China, perhaps in the hope that it's going to put pressure on Iran to negotiate further. That's to me the true indication, not just focus on Iran, but also focus on China.
Javier, let's go to the map. You know the geography better than most. Just outside of the Strait is an important Iranian export hub. How extensive is this blockade going to be?
I think it's extensive because the CENTCOM, the U.S. Navy, has said that it will include not just the ports in the Persian Gulf, that's probably meaning Kar Island, which is the largest one, but also ports in the Gulf of Oman or the Arabian Sea. So if that's the case, Jask, which is the port that you are referring, which is outside the Strait of Hormuz, will be also covered. That probably can export as much as 1 million barrels a day, but it seems that that's going to be covered. So on paper, the U.S. Navy could stop every Iranian oil tanker leaving the region, not just the Persian Gulf, but outside. And it will mean that just taking away between 1.6 and 1.8 million barrels a day of oil reaching the international market. So today we have less oil into the market than we have last week. Perhaps ironically, surprisingly, the price of oil today is still lower than it was a week ago, despite the rally that we have seen so far this morning and overnight.
Well, let's focus on the paper rally. The paper rally so far this morning. And Javier, the disconnect between the physical market and the paper market, which has been a feature of this war now for the last 5-6 weeks. You speak to the traders that trade the physical produce, Javier, the physical barrels. What are they telling to you about shortages emerging in places like Asia and perhaps across Europe as well?
There are certainly shortages of products, the refined products in Asia. There is also shortage of crude. And you need what we have called ASAP barrels. You need a barrel of oil for tomorrow for your refinery. You are going to have to pay a big premium over where the market is. That is more than a disconnect. It's the difference on timing. The paper market is reflecting barrels that they are needed in June. The physical market is reflecting the barrels that they are needed tomorrow in a refinery. Those barrels are very pricey, $125 a barrel and higher. We have seen oil changing hands at $150 a barrel for delivery almost immediately. The paper market is much lower, just above $100 a barrel. And to be honest, if you have asked me a few months ago where the oil market will be today, have all what has happened over the last 6.5 weeks happened, and going into a full blockade of the Iranian ports by the U.S. Navy, I would have said that prices much higher, not just much higher than where the paper market is. I would have said prices much higher than where the physical market is. Yeah. So all put, the price is not nearly as high as I thought it would be.
Javier, it's good to see you and appreciate your work as always. A clinic from one of the best there. Javier Blas out of London this morning. Rakai Ibrahim of BCA Research writing the following: if enforced, the blockade would raise the risk of a breakdown in the ceasefire, an escalation in the conflict, and strikes on regional energy infrastructure. Rakai joins us now for more. Rakai, welcome to the program. Let's take it from the very beginning. The flows that were going through the Strait of Hormuz before this war started and where we are now, given the offsets from places like Saudi Arabia and the East-West pipeline, just how dependent are we on the Strait of Hormuz?
Right. Good morning. So, I mean, I think that based on our calculations, there are still about 13 million barrels per day that are locked in the Persian Gulf. That's accounting for, the bypass routes through Saudi Arabia, the UAE, the Iraq-Sehan pipeline. So there's, still a big chunk of global supply that's still locked in the Persian Gulf. Of that, as Javier pointed out, about 2 million barrels a day are still coming out of Iran. And so the risk now is that if enforced, the blockade then, also locks those barrels into the Persian Gulf and it increases the amount of oil that is locked in the Persian Gulf from 13 million barrels per day to 15 million barrels per day.
Rukaya, how far are we from true shortages in Europe? I know we're talking about Southeast Asia is already experiencing that to some degree, but things like jet fuel, things like just basic natural gas, how far are we from that spreading more widely?
I mean, we're already starting to see a lot of that happen. There are already airports in Europe, for example, in Italy, that have announced that they will be rationing their supplies, their jet fuel supplies. So we're already starting to see that happen. And as this disruption prolongs, the risk then is that, these shortages are going to become much more pronounced.
Ruqayya, your line is a little bit shaky at the moment, so we'll re-establish that in the future and hopefully we can connect again. That was Ruqayya Ibrahim there of BCA Research. To Javier's point, if we told you all of this ahead of time, maybe back in late February, that this is how things would play out through spring. This is the situation we'd be in. This is the US. This is what they would do. This is how the Iranians would respond. Tell me where crude would price, where crude would trade. Not just the paper market, the physical market. I think a lot of people might have turned around and told you north of $200 a barrel. And that's certainly not where we are so far this morning.
And there are two reasons why. On one hand, people are taking a look at just how much there was a glut before this, right? A supply glut that was giving some sort of cushion to prices, and prices had been significantly lower as a result of the production. But the second thing is people do believe this to be short-lived, and they do believe this to get reopened, which is a reason why you're not seeing the oil curve really steepen out. It's actually deeply inverted, right? And this idea that down in December, we're going to be fine. That belief still holds, despite the idea that we could see potential escalation on a number of fronts.
Although Dr. Sultana Jabber, which runs ADNOC, was talking about the fact on Friday that the final ships that left Hormuz at the start of the war are now at their destinations, and there's not another fresh batch of ships going. This is also interesting. I know you're talking about Europe, but China, their imports from Saudi Arabia are going to be halved next month. So we might be on the precipice of the real physical crunch in the upcoming weeks.
I don't look at the futures curve as a great forecast, but I do see it as a source of comfort for a lot of people in equity markets, including the administration, because Kevin Hassett, the NEC director, keeps referencing it. If you look at where December is trading, it's still trading in the 70s. And I think that is a source of comfort for a lot of people in equities, which of course is an anticipatory asset class. And there is a belief that things won't be as bad deeper into the year. And for that reason, you can look through some of the physical stress. Now, the caveat to all of that is that that has been the story now for the last 6 weeks. And every week that goes by, you do real damage. And every week that goes by, it gets harder to ramp up production after this all ends, and if it ends anytime soon.
And it's not just oil, it's not just natural gas, right? I mean, if you talk about China, and it's not just a question of whether they're going to be able to power their factories because they have a lot of renewable energies, a lot of solar, a lot of nuclear. It's also the physical goods that go into plastics, that go into fertilizer, that go into all the material goods that people use. At what point do people start realizing that? I mean, I think to your point, there is a sense of comfort that this situation has been contained. What is the threshold to really cross that? And we'll keep gaming that out.
The EU Commission President is speaking right now, Ursula von der Leyen, this line here, on just how much the fossil fuel import costs have gone up for the European Union. This headline, this number, 22 billion. Is the number coming out of the EU so far this morning.
They're talking about potentially cutting taxes. They're talking about other types of fiscal measures. A really interesting point that Carmen Reinhardt of Harvard Kennedy School came out with over the weekend is we're reaching the limits to which developed markets can really cushion the blow for a lot of their consumers just based on how much debt has been issued since the pandemic. So again, these are the reasons why, if you really want to take a look and get very nervous, there are plenty of reasons to. The market seems to be getting very calm, and frankly, I'm trying to get more signals from that rather than just go full histrionic.
It's a terms of trade shock for the Europeans. It's why euro-dollar is trading at 116.88 and not north of 120, as many people thought it might at the start of the year. Up next on the program, a crude awakening.
This shock is large, it is global, everybody uses energy, everybody feels the pinch of prices going up.
Up next, we'll catch up with Andrew Honhorst of Citi, live from New York City. You're watching Bloomberg TV.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
If I told you overnight that crude would gap higher by 7 to 8% when you woke up Monday morning, is this what you'd expect to see in the equity market? Down just 0.6% on the S&P, likewise on the Nasdaq. This from BlackRock. We'll catch up with Jean Pavan in about 15 minutes' time. US-Iran negotiations collapsed for now, but we see talks as evidence of an economic incentive to end the conflict. We upgrade risk in the US and in EM stocks too.
Yeah, a number of Wall Street firms have come out and said that they're looking at multiples that have compressed substantially since the beginning of this conflict. And they're seeing an opportunity because, guess what? We didn't see extreme escalation into more missiles flying. And you know what? Who knows something that they don't know that's going to get announced before that 10 a.m. blockade? So you know what? Why try to get ahead of it? Ultimately, look at valuations and get in when it looks relatively cheap.
Crude this morning up by 7%, 102 on Brent, WTI at 104. Under surveillance this morning, a crude awakening.
This shock is large. 13% of oil, 20% of gas that would have flown in the world is now stuck for 5 weeks and counting. It is global. Everybody uses energy. everybody feels the pinch of prices going up.
So here's the latest this morning. Surging gas prices driving inflation to a 4-year high as the war with Iran upends global energy markets. Andrew Holmhorst of Citi calling for 75 basis points of Fed rate cuts this year, writing, "We expect limited pass-through of higher energy prices to core inflation." Andrew joins us now for more. Andrew, good morning.
Good morning.
What was the lesson from Friday's data?
I think the lesson from Friday's data was really about where we were coming into this oil price shock. Of course, we saw the effect on gasoline prices, on headline inflation. But if you look through to core inflation, and again, we really have to watch this over months as we see, does this energy price shock transmit through? But we were in a pretty good place on core inflation. You look at that core CPI reading, 0.20% month on month. That's the kind of reading that we would have had pre-pandemic. And then you look at the subcategories, and I think that's even more important. Shelter, the supercore, services ex shelter, and goods, all of those kind of in their usual pre-pandemic range. So I know it's not where we are. If we hadn't had these higher energy prices, I think we would have been looking at that inflation report and feeling pretty encouraged.
You're focused on the demand side of things. A lot of people are focused on the supply side and have been for the last 12 months. We've had negative supply shocks to labor, negative supply shocks to goods, and negative supply shocks to energy. And yet you're focused on demand. Why?
Well, I'm trying to be an economist here, and I'm trying to watch, do we see the effect on prices? You have a negative supply shock, but then how is that being balanced by demand? If we have strong demand, you're going to see prices moving higher. In the labor market, you'd see wages moving higher. But that's not what I'm seeing. If I look at the labor market, I'm seeing a loosening labor market with wages that are slowing. If I look at prices like we just talked about, it looked like those prices were slowing as well. When you think about that shock from energy prices, yes, it's a negative supply side shock that's going to raise prices for gasoline. But when you're paying more for gasoline, it means you have less money to spend on other goods. So I think it's actually going to be quite difficult for firms to raise prices on other goods.
Well, just to build on what John was talking about, you've gotten this issue. The Fed put out a paper last week or 2 weeks ago talking about how the big increase in core PCE over what it would have been has largely been due to tariffs. So tariffs drove inflation for a chunk of time. Now that seems to be waning. And now we've got this issue. I mean, at what point does shock upon shock upon shock create just a baseline inflation that has to be higher that consumers kind of have to accept?
Yeah, that's the issue that central banks are struggling with, and honestly, I think we'll be struggling with for years to come. You get this series of negative supply side shocks, and even if each one is in theory transitory, you start layering those one on the other, and you get a more persistent period of higher, more volatile inflation. I think we live in a world of higher, more volatile inflation. In terms of this specific shock, though, like you were saying, I think we're starting to get the early signs that tariff pass-through, that passing through of costs to consumers, that is playing out and will abate by the time we get to the second half of the year. On the energy price shock, still early days, but it goes back to what you were talking about earlier, what John was talking about earlier. If the market believes that oil prices will be back down to $70 a barrel by December, then firms are going to see this as temporary. And in a world of slowing incomes, where incomes are being hurt by higher gasoline prices, I think it's just really hard to come out and raise prices.
How difficult is it to talk about the U.S. economy as a monolith? I mean, it's increasingly bifurcated, and people say, well, it's an affordability issue. And it is for maybe 90, 95% of the population. But that 5%, 10% of the population is still spending. We're hearing that from Delta. We're hearing that from all of the airlines in terms of bookings and how much people are willing to pay. At what point can that keep inflation higher, even as a greater number of people struggle to afford everyday necessities?
Yeah, you look at the aggregate data on things like consumer spending, and they look fine. And then you look at things like credit card delinquencies. Credit card delinquencies are actually elevated. So how do you reconcile these things? I think it's exactly what you're saying. You have this bifurcation between those who own real estate, own equities. Those prices have run up so much that that's really helping to support consumption and spending for higher income, higher wealth. And lower wealth, lower income households are struggling in this economy. Again, you would think that if we have a large contingent of the U.S. population that is experiencing an affordability crisis, which we hear about, then it is going to be difficult to generate a lot of inflation in that type of an economy, and that does create downside risk to the economy as well. So we can say there's been this negative supply shock to the labor market. We have a slower growth of population and labor force, but when you have hiring that's close to zero, and that's where we've been in recent months, or relatively close to zero, really difficult for people who are out of a job, for younger people who are trying to get their first job. So there are cracks in this economy. It's just that, to your point, there's some other kinds of tailwinds that are holding things up.
And inflation expectations ticked up when you look at the Michigan Consumer Sentiment Survey. I know a lot of people talk about how it's very political, but even for Republicans, the outlook was very dire. So we're going to see consumers just completely pull back? Could it be a self-fulfilling prophecy?
I think you'll see some pullback there, and you did. You saw the sentiment numbers dive. You saw near-term inflation expectations rise. I think one thing that's going to keep central bankers, especially in the U.S. at the Fed, a lot more confident is the fact that those longer-term inflation expectations have stayed relatively contained. They did rise in the University of Michigan survey, but if you look at the market-based expectations, those have really stayed quite low. So another thing that's giving central bankers confidence here.
You won't get the demand destruction if they're cutting taxes. Another headline from the Europeans. We were talking about that address from the EU Commission President Ursula von der Leyen. Anne-Marie, looking at a proposal to lower energy taxes.
Because it's really hitting their consumers. And also when you look at energy in the European Union, it is very highly taxed, which is why it's always cheaper to get gasoline or petrol in the United States. They're doing this in May, though. We are in April right now, and individuals, and this is basically the presentation of the proposal, they need to maybe move a little bit quicker. And to your earlier point about what's going on in terms of the Strait of Hormuz, the reason why Europe right now is buying so much Russian LNG is because of this reason right here. It's just too expensive and they can't even get their hands on it.
That's the kind of move that could make things a little bit more complex for the European Central Bank and the ECB.
I would argue that for all central banks right now, how much are their hands tied by a fiscal response that's going to potentially increase inflation, because you're not going to let that part of the population just completely decline, because this is increasingly a political problem. So every lever that a lot of the developed markets have pulled on has been fiscal and fiscal spending, which is the reason why debt has increased to the degree that it has, and the reason why people are concerned about the response mechanism, both on the fiscal and the monetary side of things, if there is another economic downturn.
The Europeans have limited fiscal space, Andrew, that much is true. The US, though, we've been talking about the tax refunds now for quite a while in the US. Doesn't this shock meet a tax refund story that should lead to a cyclical bounce in its economy?
Yeah, you look at those tax refunds and it's about 30, 40 billion above where we were last year in terms of where we're coming in this year. And then you look at, well, 30% higher gasoline prices. How much is that going to cost the American consumer? About $30 billion over a few months. So it looks like those are roughly balancing out.
Andrew, good to see you.
Thank you.
Thank you, sir. Andrew Honhorst there of Citi. The flavour on Wall Street so far this morning increasingly is buy the dip in the equity market. And you see that in the price so far this Monday morning.
People don't believe the Sunday night shockers anymore. I think that maybe they're tired, maybe they're sick of it, maybe they've seen this movie before, but right now, increasingly, people are conditioned to say, something's gonna happen. Clearly, if no bombs are flying, there is a sense of ongoing negotiations, and we're gonna get caught on the right side of this.
I got so many messages about Trump's blockade saying, until what? There's a truth Sunday night or at 9:30 a.m. when the market opens, 30 minutes before the blockade is supposed to take place.
Futures this morning, negative just 0.6%. Coming up next, Jean Bavin of BlackRock, Henrietta Trays of Veda Partners, Chris Marinak of Green Capital, and Ed Al-Husseini of Columbia Threadneedle. The second hour of Bloomberg Surveillance is just around the corner.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
A cidade estava sitiada.
Isso é o começo, eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
nisho talaki kun ahmata chuara pango ahmalepa manchang leña ay kun mamanya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The president went into this thinking this would be a matter of weeks. It is turning out to be a much bigger military operation.
We are already living through the worst case scenario.
The U.S. is not going to allow Iran to continue to have this leverage over the Strait.
Now that we're in that nightmare scenario, folks want to believe it's going to end soon.
For Americans, there is no doubt that this spring is going to be a very different expectation than what they had before.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. It might be surprising to a few of you. Running down by 0.4% on the S&P 500. Likewise on the NASDAQ with this move in crude. WTI and Brent. Looks like this so far this morning. Both of those up this morning by more than 7%. 102 on Brent, 103 on WTI. Heading into this later on this morning, 30 minutes away. Bank earnings season begins on Wall Street with Goldman Sachs at 7:30 Eastern Time.
And it's going to kick off what people in markets right now are truly interested in, which is A, how companies have just done, and B, how they're going to navigate whatever is going to come up next. How much do they see companies still engaging in mergers and acquisitions? How much is this only emphasizing the need to existentially get into artificial intelligence, or get bigger so that you could withstand any potential shock? These are the reasons why people still have confidence that earnings and capital markets activity will continue with whatever happens over in the Middle East.
That's what's been anchoring the bull case now all year throughout this war. The outlook for earnings from corporate America, and just maybe it's too soon to really find out what this energy shock means for earnings in corporate America, and for that matter, anywhere else in the world. How much guidance can they provide later on this morning?
Well, it's challenging, especially when you get almost the administration talking out of both sides of their mouth. Just 3 weeks ago, they unsanctioned Iranian oil at sea, to then this weekend say there's going to be a blockade, so no Iranian oil can get through. Well, which do they want? And the Iranians are coming out, and they're saying that if the security of their ports are put in jeopardy, they're going to get after other ports. So this energy shock might get a lot more challenging starting at 10 a.m.
That blockade begins just 3 hours from now. Coming up this hour, we'll catch up with Jean Baval of BlackRock on why he's upgrading the outlook for equities. Henrietta Trey's of Veda Partners as the U.S. readies a Hormuz blockade. And Chris Marinac of Bring Capital as Goldman kicks off earnings season. We begin this out with stocks sliding as crude jumps on President Trump's plan for a U.S. blockade in the Strait of Hormuz. Bloomberg's Jemana Basechi joins us now from Dubai for more. Jemana, describe what's going to happen 3 hours from now.
I wish I could tell you, John, exactly what's going to happen 3 hours from now. But another deadline to anticipate, of course, for the region. Before I get to the naval blockade, I just want to reiterate something that Trump said himself in his Truth Social post yesterday, where he said that most points had actually been agreed to in these discussions over Islamabad, those marathon negotiations over the course of the weekend. But the one point that really mattered that was not agreed to was the nuclear point. And this was also echoed, I should say, by the Iranian Foreign Ministry spokesperson, who said that there were 2 to 3 outstanding issues. Now, obviously, one of them is the nuclear file, and we'll talk a lot more about that, I suspect, in coming weeks. The other one of them was the Strait of Hormuz, because the U.S. stance, and they went into these negotiations insisting on an unconditional opening of the strait. Iran reportedly said, we will only do that once these discussions are over, once, i.e., we've reached a peace agreement. Obviously, an outcome that is unacceptable for the U.S. and for many Gulf states as well. And so what the U.S. has announced yesterday, essentially, is their own naval blockade to block the blockaders, so to speak. And that goes into effect in a couple of hours' time. Lots of questions still about how it's going to be implemented, if they're going to follow the Venezuela model, if they're going to seize ships, if they're going to be monitoring, inspecting, how far along the lines of military action they're going to go. But then the other key question to that is how exactly Iran are going to respond. And already Iranian state TV are saying that the naval armed forces see this as a quote-unquote act of piracy, and that any attack on an Iranian port would then incentivize them to retaliate on other ports in the region as well. So we could see a further military escalation if that does indeed happen. But I should also remind everybody that the ceasefire is still being upheld. There have been no reported incidents in the last 24 hours, and both sides have come away from the weekend talking about some progress. So we'll see. The next 24, 48 hours are going to be crucial in terms of where this blockade goes. But I will just say that there is an element of cautious optimism in this part of the world that perhaps, this attempt by the U.S. to wrest back the strait may succeed in terms of furthering those discussions, because it would incentivize Iran to come to the table and provide more concessions away from their effective control of the Strait of Hormuz.
Escalate to de-escalate. We've heard that a few times with the President of the United States. Bloomberg's Jamal Basenji doing a tremendous job of leading our coverage out of Dubai and across the Middle East. This is a tense moment. We've got no idea what happens in the next 3 hours. You've got crude gapping up, gapping higher by 7% on Brent, 7% on WTI, and yet equities are down by just 0.4%. So what gives? This is the view on Wall Street this morning. Jean Bavin of BlackRock writing, US-Iran negotiations collapsed for now. But we see talks as evidence of an economic incentive to end the conflict. We upgrade risk in the US and EM stocks. Jean joined us now for more. Jean, good morning.
Good morning.
Let's just start from the very beginning. After the news over the weekend, many people were looking for a washout in risk, particularly given the weekly gain we just had last week. Just walk through why things are so much more stable than anticipated so far today.
Yeah, I mean, this is a very volatile environment, and there's a danger to be trading the headlines by the minute. We've turned neutral risk, downgraded risk, on March 23rd. At that point, we thought, oil prices were, reset at very high in the above 110 range. And in a world like this, if it's sustained, we don't see how equities and risk asset can perform. And so we downgraded risk. But since we've seen the ceasefire being put in place last week, we didn't expect that to be a smooth ride for 2 weeks. But the point is that the ability to at least have talks and reduce the tension for the time being, at least on the military side of things, to us shows that there are very powerful economic incentives at play that will shape the response of all the actors. I mean, it's not only about the U.S. or Iran, it's also about China. And we think that this is evidence of that being pretty powerful for now. So that's what is behind that upgrade for now.
You're not the only one who's come to that conclusion. I'll put that there. How you express risk, though, is interesting. US equities, you could say, is anchored to the AI tech story. We can spend some time on that. The EM piece of this is interesting. The risk-reward in EM, given we've got absolutely no idea what's going to happen in the Middle East anytime soon. Why the EM piece of the upgrade too?
Just to start on the U.S. piece of it, in this upgrade, we think it's risky not to take risk in this environment. If you sit out and you wait, I mean, it's going to be bad for our clients if we were to see some significant rally. There's a relative aspect to it, which is even if we are to see tension to continue, I think the U.S. perform relatively better than other places. So that's the upgrade to the U.S. and the AI story being very powerful still there. On the EM side of things, we think that there is we've been positive on EM more broadly, but I think the Europe is very, more directly affected by this, so that's not as attractive from a DM perspective. US, as I mentioned, is more attractive, so that leaves EM on a relatively more attractive basis, and we see tailwinds behind. We don't think the dollar will be necessarily, going on a very strong. It's been strengthening, but we think this is in the context where we see a softer dollar than we've seen over the last few years. That still is a constructive backdrop for EM. And then within the EM, there are places like India and other places where we think that they are better positioned to, at the middle, at the junction of our mega forces like AI, digital finance, and the geopolitical landscape that might be easier for them to navigate.
Why isn't it a concern that a lot of the emerging markets, you mentioned India, I would also mention a lot of Southeast Asia and China, are energy importers, right? I mean, there's going to be a higher premium on a lot of commodities, including energy. Is that a potential headwind to that call?
It definitely is a headwind. Again, I think we want to think about this on a relative basis. But if we were of the view that we're going to see oil prices that stay or continue to increase from here, and that's the basis for this year, that would not be consistent with this call. So I think we are expecting here some de-escalation eventually, and it's not going to be a straight line. And that's the world in which, we see some easing of the pressure that you would see in Southeast Asia and other places like this. But if, again, things will be in flux, we'll continue to monitor, but if we were to see, it boils down, the strait needs to reopen. And if it does start to show sign of reopening eventually, and we get visibility on this, I think that is consistent with the call. If it doesn't, then we'll need to reassess.
The nuances of the bullishness on Wall Street are really interesting to me, and it's not all the same. But for you and the team, it seems like a big part of the story is that valuations in big tech got really reduced over the past couple of months. You haven't seen it reclaim leadership. You haven't seen new highs for a number of months. And this is the main issue for you, that you're seeing the upside there because earnings are expected to increase by 46% in this quarter alone. How much is that really the driver of bullishness that has absolutely nothing to do with the Middle East and, frankly, absolutely nothing to do with the broader U.S. economy?
Well, I don't think we can avoid the Middle East, and the broad risk sentiment is definitely massively affected by this. But we think we need to look through the day-to-day noise. And again, I think in the context where there is potentially a path forward now for some talks eventually that lead to some de-escalation, then in that context, then I think the spotlight goes back to the earnings story and the derating we've seen. And I think we look at that as pretty attractive in a world where we would see the de-escalation. So I think it's not like you can forget about the Middle East, but if you think there's going to be a path over the next few months where we see more clarity of de-escalation, then that's exactly right. I think the earnings story becomes the main one.
But it's not just oil, as we've spoken about. What about the fact that helium, which is a key part of the hyperscaler trade, Taiwan right now has critical shortages of this?
It is a global supply chain shock, right? To your point, it's not about oil only. It's about LNG. It's about a bunch of helium and other kind of inputs that go into a lot of the global supply chain, which is why it boils down to the strait reopening. This is all it is about. And if we were, again, to expect this to continue and to see disruption, it's not only about oil. I mean, we would have it could be one of the biggest supply shock we've seen, even to the level we've seen in the 70s.
But your call insinuates then that the strait opens soon.
Yeah, so this is all predicated on eventually flow restarting, and we think there's going to be damage, right? Even with what's already in place, we see a hit to U.S. GDP that is of the order of 0.3. Global growth will be affected. In Europe, it's more between half and a full percentage point on growth. So there's damage that's going to persist. We think that if we see some de-escalation and the strait reopening, then in that case, the earnings story and so on becomes the key risk driver. But yes, there is a scenario where this is a real supply shock. And in that case, if it doesn't reopen, we'll need to reassess that bullishness for sure.
For now, this market's itching to move on. Goldman reporting in about 20 minutes' time. Tomorrow, JP Morgan, Wells Fargo, Citi. The day after that, we'll hear from Bank of America and Morgan Stanley. What are you and the team looking for from the C-suite on these earnings calls in the next few days?
Yeah, I think we need to see some continued resilience. There's going to be stories potentially about the increased cost that has been starting to fed through. It's going to be interesting to see how much of this we've seen, but I think we're going to be in a mindset of like looking through right now that story, because that should be eventually resolving itself. I think we're going to be interested to see on the AI piece how much of stories there is around the efficiency gains. I mean, that's the part that still needs to be documented and to kind of justify forward earnings that will come to that. So I think these will be the two things we'll be paying close attention to.
John, it's good to see you. Thank you, sir.
Great to see you.
Jean Bavin there of
you.
BlackRock, upgrading US equities and EM equities at a very tense moment. We talked about the conditioning and the regret of not getting long quickly enough back in April 2020, doing the same thing again in April 2025. And you can feel a lot of people looking to get long early in this crisis too.
How many times can you get stung before you start to respond? I mean, it's fool me once, shame on me, you, fool me twice, shame on me. And there is that feeling right now in Wall Street. It's all predicated, as John kept saying, on the idea that the Strait does get reopened, although people taking cues from the idea that, yes, it is hardline rhetoric, but it isn't coming with the idea that talks are dead. So ongoing talks, a good sign, green light for Wall Street.
You got one right, Bramo. I was happy with that.
Thanks.
I was impressed.
I very rarely happens.
People stumble on that one too.
Well, that's the reason why. That's the one expression I'll get right. I will completely bungle every other one that I do today.
No, I never get them right, so I don't even try.
Okay.
Up next on the program, choking the Strait of Hormuz.
Well, as you know, at 10 o'clock tomorrow, we have a blockade going into effect. That'll be 10 o'clock tomorrow. Other nations are working so that Iran will not be able to sell oil, and that will be very effective.
Up next, we'll catch up with Henrietta Trays of Vader Partners, live from New York City this morning. Good morning. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Earnings season upon us on Wall Street. Goldman Sachs kicking things off at 7:30 Eastern Time. Then a busy one through the week. Coming up tomorrow, JP Morgan, Wells Fargo, Citi on Wednesday, Bank of America and Morgan Stanley. The scores. Into it all, look okay so far this morning. Equity futures on the S&P negative just 0.5%. Anchored by the hope that we can move on in the Middle East quickly. I tell you what, we'll figure out that hope is misplaced or not, because at the moment that tension is still in the physical market, still in the paper market as well. Look at the oil market this morning. WTI and Brent so far trading higher by more than 7%. Brent back into triple digits. WTI likewise. Under surveillance this morning, choking the Strait of Hormuz.
Remember, their promise was that they were going to open the Hormuz Strait. They didn't do it. They lied. As you know, at 10 o'clock tomorrow, we have a blockade going into effect. That'll be 10 o'clock tomorrow. Other nations are working so that Iran will not be able to sell oil, and that will be very effective.
So here's the latest this morning. Iran threatening retaliation if the US follows through with a plan to blockade the Strait of Hormuz, warning, quote, no port in the Persian Gulf and the Sea of Oman will be safe. Bloomberg's Tyler Kendall joins us now for more. Morning, Tyler.
Hey, John, good morning. Well, U.S. Central Command has confirmed that this blockade that will start at 10 a.m. Eastern will extend to all Iranian ports, though importantly says the U.S. military will not impede any vessels going to and from non-Iranian ports. So technically not a full blockade, though still one with big implications if enforced. We still have questions on exactly how this will be enforced, though President Trump has previously threatened that the U.S. could board and seize any ships that have paid tolls to Iran, that the U.S. is also going to start to work on clearing mines in the Strait of Hormuz. Amid the major buildup of military assets in the region, it may be worth mentioning that the U.S. currently has more than 20 warships that could be deployed for this operation, including some amphibious assault teams. Now, as you've already mentioned, we are hearing that Iran will likely retaliate if the U.S. starts with this blockade at 10 a.m. Eastern. For example, we got a statement overnight from the IRGC saying that any military vessel that enters the Strait of Hormuz will be viewed as a violation of the ceasefire. Now, from President Trump's point of view, he's doing this in a bid to maintain leverage over Iran, try to crack down on its financial lifeline after we saw negotiations this weekend not yield any result. Now, we are getting some breaking headlines on the terminal. The Israeli Prime Minister Benjamin Netanyahu speaking right now, saying that he has spoken to Vice President J.D. Vance, who led these negotiations, and that one of the main points of contention is that Iran will not allow the removal of that enriched uranium. They're still trying to figure out where to go from there. As John, a U.S. official does tell Bloomberg News that the U.S. delegation felt that the Iranian delegation did not see the U.S.'s main objective as being trying to curb its ambitions when it comes to its nuclear program. We can point out that in an interview over the weekend, President Trump himself did say that he thinks Iran will come to the negotiating table, and Iran's foreign ministry spokesperson added that it makes sense that they weren't able to come to an agreement after just one single session, leaving open the door for more negotiations.
The hope is the talks will continue. Tyler, thank you, and the ceasefire will hold. But that's not just a sticking point, Anne-Marie. That is the sticking point.
Yeah, when it comes to having a nuclear weapon, that has been the sticking point for Trump 1. That was also a sticking point for even the Biden administration that had talks for the entire 4 years with the Iranians. And then this administration came in, and they've had multiple discussions with the Iranian regime. Now there's different players, but it's the same regime. They have the same goals as well. And at the moment, both of these red lines are hardened.
Here's the view this morning from Henrietta Trays of Veda Partners. She writes the following: the blockade escalates everything. There's no acceptable outcome that maintains the Iranian tax or Iranian control of the Strait. Henrietta joins us now for more. Henrietta, welcome. The market mood, I have to tell you, is pretty subdued. Tense, but pretty subdued. Equities only down by 0.4%, 0.5%. How tense do you think things will be in the next 24 hours through the Strait of Hormuz?
I mean, as the Strait perpetuates and stays closed, I mean, how do you get non-Iranian ships through, but the other ones can go through? You hear directly from the insurers. They just don't have comfort that you can physically traverse safely. There's 230 ships that are trying to get through, and some of them are turned around. There's one trying to navigate right now, from my latest understanding. As long as the Strait is closed and we're no longer getting flow as of this week from pre-war, you're going to start to see the economic effects compound. The Strait is optimistic, I think, in large part because they don't have guidance from earnings yet. We're going to get banks, this week, but that's not really the hard hitters. We need industrials. And the worst case scenario is sort of unfathomable. So we're sort of jumping right over it. But the insurers have the best points per usual.
Henrietta, it's not just the blockade. On Friday, after 12:01, I didn't see an extension from OFAC on the general license for individuals' ability to purchase Russian crude. So how tight is this market going to be? And do you think because of that reason, Treasury will have to give certain waivers to certain countries?
I am in a fight with somebody that I've been in for decades about what is more important, tax policy or energy policy, and tax policy wins again. So here we are. We have this situation where they want to have a toll that gets collected through the Strait of Hormuz, and the Strait, the tax itself is illegal. And if you pay the toll, which is obviously a willing development, and you allow the ship to go through, then now not only the insurer, but the tanker itself is violating U.S. sanctions laws that J.D. Vance was not able to negotiate for obvious reasons in Pakistan this last weekend. So you have a situation where the tax itself is the core problem. You cannot allow the tax to be collected and also continue to have a sanction in effect and declare
But Henry, how does that even make sense? Because OFAC right now, technically, and until another week or two, is allowing the purchase of Iranian crude if it was at sea.
If it's at sea, and that's the key distinction, and they're purposely being murky about this. But if you pay the toll, which is different, that's trying to go through, then you are violating the sanction. And it carries a double fine of whatever it is that you paid. So if you're paying $2 million to get through, you owe Uncle Sam $4 million. And it carries with it a potential lifetime imprisonment should anyone die on the route. So there's two different things. There's allowing it to go through under the GMU from March 20th, and then there's paying the toll, which is a different animal.
In the meantime, there's a real question about the fiscal levers that the U.S. can pull. We've gotten headlines from the Europeans this morning saying that they're thinking of removing some of the taxes or lowering the taxes tied to energy. What kind of fiscal response could there be from the U.S. side of things?
Yeah, really great question. So Republicans are working on a reconciliation bill, and because the scale of this bill could escalate dramatically and end up in the $700 billion range or above, that's what history suggests. They're purposely telegraphing that it's going to be tiny, and it's only going to be associated with like ICE and DHS and those kinds of components. But we know that there is an 18.4% gas tax paid at the federal level and a 24.4% diesel tax paid at the federal level that they could suspend via reconciliation. That is a perfect bird rule applicable component that could get their reconciliation package, but it's very expensive. And we have a perfect case study in Georgia, which just approved this since the start of the war. And guess what? Prices in Georgia are right back to where they were before they did the gas tax. And that's because prices continue to go up. So it's a temporary stopgap. It doesn't solve the problem, as all of your guests have suggested.
Henrietta, always good to see you, to get your thoughts. Thank you. Henrietta Trace there of Vader Partners. The mix right now, the data has not been great, particularly on Friday, heading into the weekend. Had CPI come in at the hottest level we've seen in several years. At the same time, you, Mitch, whatever you think about you, Mitch, I think direction is probably correct. Consumer sentiment, record lows. Consumer sentiment is clearly softer after this war and the higher energy prices we've seen over the last month.
Clearly, they're concerned about inflation. They're also concerned about jobs. I mean, to Andrew Honhorst's point, to that point, you're not seeing the same kind of heat coming from people's perception of whether they can get a job and whether they can continue to get paid, certainly not at the level that would compensate them for inflation. So what's the fiscal response? And how much is the U.S. limited by how much debt it has incurred over the past couple of years?
Earnings season begins on Wall Street.
Yes.
You happy with that? Green light's just gone off. Goldman Sachs.
Yeah, they're ultimately beating, and that's the issue, right? How much are we going to keep on seeing this across the board going forward? We'll break down all the numbers, but beating almost across the board. FIC, maybe not, but the rest looking really good.
We'll spend some more time on Goldman in just a moment. Danny's going to break down the numbers with us. Plus, we'll catch up with Chris Marinac of Bring Capital as Goldman kicks off earnings season, a week full of earnings from the financials. From New York City, you're watching Bloomberg TV.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Snapped a 7-day winning streak on Friday in the equity market. Just a touch of negative follow-through this morning. We're down by 0.6% following the events over the weekend in the Middle East. On the Nasdaq, we're down by 0.6 also. On the Russell, we're negative by 0.9. First out of the gate on Wall Street, it's Goldman Sachs. Earnings season begins. Danny Berger has the results. Morning, Danny.
Good morning, John. It's the headline number that's going to catch everybody's attention. A huge beat for equity trading, $5.3 billion. To be clear, this is a record in a quarter, not only for Goldman, but for any bank ever on Wall Street. It beats its prior high water mark by $1 billion. You can see, though, shares are off nearly 0.6, or now more than 1%. This might be the reason, because even though they have a huge beat when it comes to equity tradings, a huge miss when it comes to their FICC expectations. $4 billion as revenue is what comes in for FICC trading. The estimate was closer to $5 billion. So they're off by about $0.8 billion, which is a disappointment for this market because many had expected equities trading revenue to be strong. Elsewhere, M&A results, advisory fees 89% higher than this time last year. We knew it was a record quarter for M&A for the entirety of this market, so Goldman Sachs earnings reflecting that too. Their global banking and markets net revenue comes in just below $13 billion at $12.7 billion. That is a beat. Just looking for anywhere in these results, you might see some credit fears. Provisions for credit losses did go up about 10% over year at $315 million, but we have certainly seen it higher in prior quarters. In their asset management, you did see AUM beat expectations, $3.7 trillion. Goldman Sachs had said that they were immune from most of the fears of private credit selling that you've seen in some retail funds, though net revenues did fall compared to the same period last year. Also, a note of caution when it comes to the geopolitics in this earnings as well. The geopolitical landscape remains very complex, so disciplined risk management must remain core to how we operate. Shares, though, continue to fall, John. It seems to be that FICC miss, a dark spot on an otherwise solid earnings result.
Stock is down by more than 2% of the pre-market. Danny, stay close. I'll come back to you in just a moment. Just to break this down very quickly, stock trading comes in much firmer than anticipated. Another record. Danny went through the numbers. Just think about this. The record in the previous quarter was $4.31 billion. The record now is $5.33 billion. So that's the good news for Goldman. The miss is on FICC, and we can talk about that extensively throughout this morning. Where there is also some strength, and Danny talked about it too, that 89%, and let's call it surge, in deal-making advisory fees speaks to a theme that a lot of people were jumping on board for coming into this year and why this part of the market was a consensus overweight.
It's mergers and acquisitions, it's corporate bond issuance, it's IPOs, and when you take a look at equity underwriting, debt underwriting, both beating by a significant margin. If you look at equity underwriting, it's up 45% year over year in terms of the fees that they're receiving. So capital markets wide open, the banks profiting off of this. The concern going forward really speaks to what David Solomon is talking about. Their conditions are uncertain. Key questions in the call. How is that affecting the forward pipeline of M&A? Is it falling away or is it continuing to be strong? And how high is the bar to close capital markets? Because right now it seems like they're wide open. So yes, they might be missing on the actual transactions in FIC, but they're certainly not missing in equity. And there still is this pipeline that a lot of people say continues to build.
And Danny, just quickly, I want to bring you back in. You mentioned the credit story, and this is important for a lot of people outside of this stock, just trying to understand what's happening here. Because this stock, in the minds of many, has been held back by what's been happening elsewhere in private markets. And we started to see that in Morgan Stanley and the way it traded as well. What have we learned so far this morning?
Well, again, it seems like strength. The asset management division, where maybe you would see some of the credit fears play in, they did indeed beat an AUM. If you did have people pulling back because there's a fear over private credit, that's where it would show up with less fundraising and less assets managed. Now, again, we've heard from Goldman Sachs recently, just last week, saying that GSAM's BDCs, they're more private, retail-oriented private credit funds, have fared better than others. And again, loan loss provisions, those were higher than last year, but nothing out of the norm. And again, it's notable that in David Solomon's comments, he talks about geopolitical risk. If you were to get anything from the CEO of Goldman Sachs concerned about private credit, you might expect it to show up there. We'll see what he says on an earnings call, but it doesn't seem to be bubbling anywhere near the surface as concerns for this big bank.
Danny, appreciate the update. Danny, thank you. Goldman down by, let's call it 2.7% in early trading. Chris Marinak of Bring Capital joins us now for more. Chris, welcome to the program. How difficult is it to anchor the outlook in a moment like this?
Well, John, I think that you may have trading losses in FIC, and that might be part of the problem. So I think as you move forward, this may not be as big of an issue. I think the pipeline being very strong on the banking side is very important. So I do think that is a win in the quarter. I still think that seasonally the second quarter is also very strong. So I think the market can look past this disappointment initially.
Do you have a sense of what David Solomon could be talking about when he said that he had seen some concerns, he's worried about geopolitics? What are you looking for in how he speaks about that to get some guide on when it could hamper some of this capital markets activity?
Well, I think it's things that are not announced that are in the works, and I think that there tends to be an attitude to go on hold when you have this geopolitical uncertainty, and that's the part that you can't account for. So I think as May and June come into greater focus, I think there is a high uncertainty, and I think he is trying to give a signal that that indeed may be the case.
High uncertainty is part of what he might be pointing to when you take a look at the 10% build in provisions for credit loan losses, which is something that we heard Danny talking about. Now it's $315 million. Is that number significant to you, or does that signify still a pretty benign credit backdrop?
Well, I think the credit has its own uncertainties, particularly in the private credit world. I think you have to build reserves now just to be safe. So I think the attitude about having higher provision is smart. To some extent, I think the market would be disappointed if you had not built reserves at this juncture.
At this point, though, is that a significant build, right? I mean, I guess I'm trying to get some perspective on this. Does that indicate that they're really concerned about stress? Because right now you're not seeing it in any of the preliminary comments. But this is the fear. Aside from private credit, it's the broader sense of re-rating in specific wholesale industries in the credit area, particularly tied to software, disruption trade, et cetera. I mean, how much would you expect loan losses to have to increase to truly offset some of that potential risk?
So I think it's a moderate build to your first question, Lisa, and I think going forward, I think you have to have a significant change in credit losses to really warrant much greater concern. I think right now it's a preliminary move to be conservative, to placate, I think, investor concerns that perhaps the companies aren't doing enough. So I expected to see some provision increase this quarter, so I'm not that surprised by it.
Chris, this year we were meant to see a boom in economic activity, particularly the kind of boom that some of these names would take advantage of. We still might see 2 or 3 of the biggest IPOs we have ever seen in the history of capital markets, Chris. Which banks are in a position to take advantage of that?
Well, clearly the national leaders from the JP Morgan and B of A and Goldman should have that. I think those big IPOs are still out there. I agree with you, John. It's a long year, so I would not give up hope at all. I think this uncertainty can pass just like it did last year. So I still think there's a very good road ahead.
Are you willing to look through some of the gloom that might take place on some of these calls, Chris? No executive wants to be dismissive of risks that might be brewing. Not a single executive on Wall Street wants to be the person that does that on these earnings calls. Do you think they might really understate the potential for gains in the year ahead? And I'm not just thinking of Solomon later, I'm thinking of maybe Diamond tomorrow.
Oh, sure. I think they're going to be very careful and cautious, no different than they were in April of 2025. You know, we had Liberation Day, and then markets were very uneasy for several days, as you remember, and most calls were very sort of quasi-negative and cautious in April of 25. It turned out to be a much better year as the second quarter played out. So I think this could be a repeat, just totally different circumstances.
Chris, is it basically a quarter where numbers could be pretty solid, but the rhetoric is concerning given what's going on in the world, so that shares ultimately just are depressed?
Well, I think investors always hit the sidelines when you have uncertainty, and I think we have that moment. They acted better last Thursday, Friday than I would have thought, quite honestly. I do think the rhetoric could keep the incremental buyer holding back in the short run.
So the stock right now is trading in pre-market on this FIC miss, and I'd love to get your sense of why you saw such a big miss when it comes to FIC sales and trading. A real concern here is that interest rates are going to be higher and then potentially incredibly volatile, making it really difficult for big banks. How much of a headwind is that? I mean, are we skipping over that too quickly?
Well, I think people had thought that the Fed would be easing once or twice as we got into the second quarter. That obviously is off the table. So that is part of the headwind. I think to some extent the uncertainty about whether the war is going to go away or still be lingering for the next 4 to 6 weeks also is a concern. I think to some extent there was a lot of optimism built into this quarter from a trading perspective. So now that you have a slight miss, that pushes everybody now to be negative. I think that's a short-run thing. I think we still have a lot of positivity happening in the business. You know, on the ordinary bank side, the deposits are growing really well, and that's ultimately going to have many players buying securities as this next 2 quarters play out.
You know, volatility is a funny thing. On one hand, volatility can be really good for the banks, and they'll say, well, we benefited from the volatility. You see this in equity trading. On the other hand, it can be bad when it is just an unpredictable macro environment. Are we entering bad volatility or good volatility? I mean, what do you expect the commentary to be from the big banks?
Well, most of the volatility, I think, is positive. I think the companies understand how to make a dollar when you have these topsy-turvy markets. They've been here before. We've seen many examples of volatility the past several years. So I think it's just a different circumstance, but the same volatility. To some extent, I think volatility is your friend. But you may have had a loss in the Goldman quarter, and I think as we see the other players come out the next couple of days, it may look and feel a lot different.
Chris, it's always good to hear from you. Chris Marinac there of Bring Capital, just setting the tone for earnings season ahead of us. We just heard from Goldman. Tomorrow you'll hear from JP Morgan, Wells Fargo and Citi. The day after, on Wednesday, you'll hear from Bank of America and from Morgan Stanley. It's not a tremendous start for the financials. It's mixed, which isn't great, particularly given that so far this month, Goldman was higher by something like 7%. It's trading lower this morning by 3 to 4. The good side of things, equity trading, deal making, advisory fees, fantastic. The soft spot seems to be fixed so far this morning.
Yeah, they still beat, though, on the EPS. They still beat pretty much across the board, as you're saying. So does this indicate how high the bar is right now for earnings, in a way, given the fact that the entirety of the resilience in the equity market is predicated on this idea that there's going to be a really strong feel, and the beats are going to be much better than people had previously expected? The fact that people are so nitpicking, again, that tells you maybe where we are and the expectations that are baked in to the stock market.
To Chris's point, we played this game 12 months ago. You're in a position where a lot of people are looking for earnings to anchor the outlook, for guidance from the C-suite to give you some visibility. And no one in the C-suite wants to really express any real confidence about the next 12 months, given the real risks they're seeing take place on the ground in the Middle East. And that was the story of April last year, and that wasn't a good guide for the direction of equities. And the argument you'll get from the bulls, misplaced or otherwise, that's your judgment call, but the argument you'll get from the bulls this morning is they can't provide any optimism in a moment like this, so why would you listen to them?
It would be incredibly tone-deaf for them to come out and say, this is incredible, volatility is absolutely rocking us, and we're doing a really good job, we're going to have record earnings, we're seeing incredible mergers and acquisitions, although likely we will hear more of that. So yes, you can expect some dampened enthusiasm. That said, if they give a sense of the pipeline being strong, of deals still going through, of some of those mega IPOs that we're expecting later this year to still come to market, does that assuage some of the concern? I don't know. I mean, really, this is going to be scenario analysis. And I keep going back to that. What's the potential bear case for you? What's the potential bull case? How big of a delta is there between that?
I also think, though, the C-suite needs to expand upon how they feel right now and where we are in the world. The geopolitical landscape remains very complex, so discipline, risk management must remain core to how we operate. You could print that on every single...
Of course.
Every single statement.
I've never enjoyed that phrase, geopolitical risk. never really enjoyed it. Tell me about the flow of money, the flow of capital. The Middle East is a source of capital, a destination for capital, and how that's changed and what you're seeing, what kind of visibility you have on those things. No doubt the analysts will ask those questions on the call a little bit later.
And no doubt the answer will be, so far, so good. There are major clients. I mean, who are you talking to at that point, too, right? You're talking to the U.S. authorities, but you're also talking to all of your big Middle Eastern investors, and you have to keep them happy. This is going to be a fraught moment, a lot of noise. Really look at the numbers, and I think that that is the key question. How much are we going to be watching money flows to really get the answers?
Goldman in the pre-market down by a little more than 3%. Up next on the program, an inflationary shock.
For the Fed, you can look through a particular month, particularly driven by gas prices. Our baseline is that we will get a cut in the back half of the year, but kind of confidence in that has waned.
Up next, we'll catch up with Ed Al-Husseini of Columbia Threadneedle, live from New York City. This is Bloomberg Surveillance.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving someday.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Earnings season begins on Wall Street. Goldman, the first name out of the gate. Goldman Sachs down by 3.5%. A bit of a stumble out of the gate. On the good side of things, equity trading, deal-making advisory fees. On the bad side of things, FICC just softer than expected.
Yeah, and this really highlights the high bar for a number of names, especially those that are still trading at a relatively high book-to-value ratio, book-to-loan ratio, which is the reason why people are looking not only at what the earnings are, but what the expectations are, which for some companies have gone way down and others not so much.
As Goldman trades a little bit softer, lower this morning. The broader equity market does as well. S&P 500 futures down by 0.7%. The Nasdaq down by 0.7%. Also a chorus on Wall Street, though. From bank to bank, Morgan Stanley, JP Morgan, BlackRock, HSBC, take your pick. So many people lining up to say, buy the dip, get long this equity market. It's time to look through the risk in the Middle East.
And part of the reason why is because you haven't seen an escalation that really does shatter the ceasefire entirely, and talks are ongoing. Also because they've been fooled many times, and also because earnings season is expected to be really good. Earnings are expected to increase by more than 12%. You're expected to see a huge bump up, specifically in tech earnings as well as the banking earnings. They see capital markets wide open, so they feel like, you know what, we're going to miss out more on the upside than we are on the down.
We hear it every single week, then every single week. Speak to someone in the commodity space who gives you a reality check about what's happening in physical markets.
Well, it's even worse today than it was, say, on Friday. At one point, you have OFAC basically not reissuing this license for countries, especially in Asia, to buy Russian crude. That's one. Two, there's now another blockade on the blockade. So any 1 or 2 or 3 vessels that were getting out, even if they're Iranian, maybe even going to a place like India, that will no longer happen now starting at 10 a.m. So today is much worse. And the final ships that left their destination have gotten there, and there's not another inflow coming in. China is halving the amount of crude they buy from Saudi Arabia.
Brent and WTI so far this morning back into triple digits and higher by more than 7%. Under surveillance this morning, an inflationary shock.
For the Fed, you can look through a particular month, particularly driven by gas prices. I think more important for the Fed would be core PCE. That is running at 3% year over year. It's a percentage point above their own target. The starting point is just not good when you're overlaying another energy price shock on top of that. Our baseline is that we will get a cut in the back half of the year, but kind of confidence in that has waned.
So here's the latest this morning. Surging inflation eroding bets that the Fed will cut interest rates this year. Ed Al-Hosseini of Columbia Threadneedle writing, the data overall leaves the Fed with a live option to execute an insurance hike later this year. Ed joins us now for more. Ed, good morning.
Good morning.
Enjoyed the note, so I'll share a bit more of it with our audience. We've had some early color on the impact of the Iran war on inflation. Today's CPI print, Friday, is immediately relegated to the EFL. That's a different league in English football. Anyway, the Premier League is for data that can tell us whether some of the excess inflation we had at the end of last year is starting to broaden out and become entrenched. What are you seeing on that front?
I think the good news is so far, both inflation and inflation expectations have been pretty well behaved. Consumers have updated their short-term inflation expectations. They're expecting this gas spike to pass through into inflation over the next year. But longer term, things have been quite stable. And that's exactly what the Fed would want to see at this stage.
What do you think is going to anchor the Fed? Consumer expectations or market-based inflation expectations? Which is more important?
A little bit of both. The market-based expectations are a live tracker. They're the most immediate feedback that the Fed can get. The consumer expectations carry a little bit more weight because they're a little bit more connected to the real economy. So they need some mix of both to validate just staying on hold at this stage.
What components are you looking for that broadening out? Because we're seeing a number of different shocks layered on top of each other, and you could say any one of them are temporary or going to pass. At the same time, it starts to feel a little bit like, what are we doing if we're just excluding absolutely everything that comes down the pike?
I think the lesson of the COVID-era inflation shock is not to be too narrow in the inflation analysis. Look at momentum in the overall basket. Look at breadth of the overall basket. What share of the basket is growing at 3, 4, 5% on a quarter-over-quarter basis, for example? That's a much better indicator than a narrow view of what's going on in energy or what's going on in airline fares and so on. And again, I think the good news is at the start of the year, the inflation basket, the inflation process had narrowed a lot, really, over the last 2 or 3 years.
You say an insurance hike could be on the table. This is the bear case for all the bulls on Wall Street. If you take a look at their notes, if you look under the hood, the one thing that could torpedo their optimism would be something of a more hawkish take from central banks, particularly the United States. Why do you think that that's increasingly likely, given the rhetoric that we've heard from Fed Chair Jay Powell?
I think from the Fed's perspective, you want to keep that door open. It demonstrates credibility to the market. It anchors expectations further out on the curve. And it essentially tells the market, like, look, we have gone through this process just 2 or 3 years ago. We've reestablished our credibility by bringing inflation down. We're going to keep it in place by keeping our policy options open. You don't want to narrow those policy options at this stage.
Well, Jay Powell's term ends in 1 month and 2 days. Do we have insurance hikes baked in for Kevin Warsh?
The answer is no. And I'm not sure if his term is going to end in a month and a half. But look, at this stage... Technically. At this stage, markets are finding it really hard to price those hikes in the U.S. That door is much wider and open in the U.K., in Europe, in emerging markets. In the U.S., we've had a debate between how many cuts and staying on hold. That debate could shift, again, if the inflation process accelerates. But if you're sitting at the Fed, you want to make sure that that door is slightly open.
I'm half joking, but I don't even know if Warsh's term is going to start anytime soon. We're meant to have a hearing.
Yeah, it's been delayed.
Why is that?
Punchbowl News says because of paperwork, which I find interesting because shouldn't he be doing his paperwork since Trump won when he wanted the job?
For 10 years. Yes. And you're telling me he doesn't have the paperwork ready?
According to Punchbowl, yeah.
That just sounds absolutely stunning, doesn't it?
Especially given all the other potential delays. I guess he thought that this would never end. He never expected to be at the top of the Fed.
Here we are. Ed, how do things change when Kevin Warsh gets into the seat?
I think things change on a couple of fronts. One, in the background, there's been a live conversation about the Fed's balance sheet. I think that gets reanimated in the course of his hearings. If we move forward with shrinking the Fed's balance sheet, what does that look like? What is the philosophy behind it? And what does that mean for the future of Fed policymaking with that balance sheet tool? The second, of course, is the short-term issue of take the productivity mix, the tariff shock, the energy shock at the moment. How do you make a case for cuts if you are Kevin Warsh? I think it's an extraordinarily difficult case.
Have you got an idea of how they'd present that case after a series of negative supply shocks across goods, labor, and now energy? How you'd present that case this summer?
So one way to frame it up is to say, look, the inflation process, again, going into this shock was really well behaved. We brought down wages. If our theory of the case when it comes to inflation is that it's some interplay of expectations, wages, and productivity, on all three of those fronts, the news is quite good. Expectations are well behaved. Wages have come down. Productivity has gone up. That's a great case for easing policy on the margin. Now, that's keeping a lot of other things constant. It's not, I think, a complete case, but I think you have the makings of a case there.
Ed, good to see you. Enjoy the work as always. Thank you, sir. Thank you. Ed Al-Husseini there of Columbia Threadneedle on some of the economic gymnastics that might be taking place later this summer when we finally get those hearings.
Yeah, if we get those economic gymnastics, I expect the Treasury to play a part in it because there will be some sort of Treasury-Fed accord to try to keep the long end of the yield curve lower. I mean, ultimately, how do you get any of this without leading to inflation expectations not becoming a bit unanchored? And I keep going back to what Cameron Dawson said, find someone to believe in you the way the market believes in the Fed's 2% target, because we have not been there for more than 5 years.
Pretty impressive, isn't it?
And pretty much everyone still believes we will get there one day.
I just can't believe his paperwork's not ready.
Who's he going to blame? The dog ate my paperwork.
He's been planning this for 10 years.
The baby.
And the paperwork's not ready.
And also,
crazy.
he was interviewed for the Treasury Secretary, so he should have had, he should have had the paperwork done in December.
Okay.
Medical form?
Right? I've got no idea. I'd love some details.
Haven't gone to the doctor.
From the guys at Punchbowl News. Just, what are they talking about? What paperwork? Coming up, Jason Draha of UBS, Oksana Aronoff of JP Morgan, Stephen Rasciuto of Mizuho, Bob Elliott of Unlimited Funds. The third hour of Bloomberg Surveillance, up next.
People would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard you know, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later on over 5,000. So, you know, these things can go on for a long time, but ultimately, you know, there are adjustments, there will be drawdowns, there'll be rebalancing, and just it's hard to call it because the trend, the technology trend and the investment is real.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Markets and investors have been conditioned to look through volatility.
Markets can remain more buoyant.
On a fundamental basis, we are still in a very good place.
It's really not about hype anymore.
It's impossible to kind of figure out, like, pinpoint where it's going to go.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your price action looks like this. Following the biggest weekly gain of the year so far, the S&P 500. Here's the pullback. We're down by 0.75% on the S&P. On the NASDAQ, we're down by 0.8%. And following the worst week for crude for the year so far, here's the bounce. WTI and Brent crude higher by more than 7% so far this morning. Anchoring the outlook for many, an equity bull, is the outlook for earnings. And the start of earnings season on Wall Street, not fantastic. Goldman Sachs stumbling out of the gate. That stock is down by close to 4%.
Yeah, and the real key miss here was in the FIC trading and sales unit. You saw that come in lighter than expected by almost 800 billion, by a significant margin, which led people to be concerned about what they might be missing. That said, on a broader level, the earnings beat expectations pretty much across the board with a record quarter when it came to equity trading and sales. So at a certain point, does this indicate the bar is incredibly high, given that this is the linchpin? The earnings is what is keeping this market from falling much more. If earnings do not beat expectations to the degree that people expect, how much does that remove one of the pillars that's been upholding this market?
JP Morgan tomorrow. The day after that, we'll hear from Bank of America and from Morgan Stanley as well. How much guidance can they provide in a moment like this one? How much guidance do you have, visibility, never mind in the next 9 months? How about the next 2 hours? 1 hour and 58 minutes. A blockade of the Strait of Hormuz begins at 10 a.m. Eastern Time.
That's according to the president. It's according to CENTCOM. I got a lot of messages over the weekend saying how serious is the president about this blockade? Is just as escalate to de-escalate in terms of rhetoric, and he doesn't follow through, and he, does the taco thing before the markets open. But then CENTCOM put out a statement explaining the blockade. So I do truly believe that there will be a blockade at 10 a.m., but I don't know what we look like this evening, especially given the fact that the Iranians say that they cannot access other ports, then they are going to go after Gulf ports in the region. So we could see a serious escalation in the next 24, 48 hours.
Is this the escalation we need to see to eventually de-escalate further down the road?
Most people seem to think that de-escalation is the logical consequence, whether it's because of the blockade or whether it's because of talks or whatever it is. Ultimately, increasingly, it feels like people are sort of tuning it out. They're listening to it in the background, but saying, okay, what's going to be in my next Sunday night evening? But people, when they take a look at the longer term, they say, whatever happens, prices will come down, and ultimately, we will resolve this issue by June, by July, by August. That faith is not held by commodity strategists. At the same time, I want to understand what the scenario analyses are from companies, from banks, from advisors in terms of how bad things could get versus how good things could get, and then figure out what the sort of intermediate could look like.
You sound like someone whose Monday morning started Sunday evening for the last 6 weeks.
Oh, you don't say. How about try a couple years? I mean, it's sort of at a certain point, people get tired and they get whipped around and they see other people making money with information that they seem to have been getting from some other people. And there's a sense of like, well, why should I try to get ahead of that?
What's interesting, though, it's not just commodity analysts and experts that are saying prices are going to rise. The president did have this moment over the weekend in an interview saying that maybe gasoline prices will be a bit more elevated before the midterm elections. So he is acknowledging that gas prices might be a little bit higher for a little bit longer.
Equity futures this morning slightly lower off the back of this move in crude, higher by more than 7%. Coming up this hour, we'll catch up with Jason Draho of UBS. With markets retreating as earnings season kicks off, Steve Rasciuto of Mizuho as hopes of a Fed rate cut this year are fading, and Bob Elliott of Unlimited Funds with crude surging back above $100 a barrel. We begin this hour with stocks adding to losses as Goldman Sachs fails to lift markets. Jason Draho of UBS Global Wealth Management writing, the start of first quarter earnings season should support our forecast for 11% EPS growth in the S&P 500 this year, with a price target of 7,500 in December. Jason joins us now for more. Jason, good morning.
Good morning.
How shaky is that outlook for earnings now?
Well, the guidance going into Q1 earnings season has been good. We've actually seen, kind of in terms of revisions upwards or downwards, it's actually been relatively optimistic versus other quarters. We've seen some good results from tech companies, some semiconductor companies. So the setup going in is good. I mean, like we talked about, the high bar, perhaps for the market performance. The bar is high, but in terms of actually achieving that 11%, nothing so far we've seen going into the season will suggest that's at real sort of jeopardy. Again, we're making the caveat in terms of the whole Middle East situation, but, abstracting that, the earnings story still looks very much on track.
This is anchoring pretty much everyone on Wall Street so far this morning. And I say pretty much loosely, forgive me, but the likes of Morgan Stanley, JP Morgan, HSBC, BlackRock, all saying something similar. It's an opportunity to buy. This from Morgan Stanley. Countries will find ways to solve a problem that is intolerable for the global economy, much like they did in 2022. Is this so bad it's got to get better and then you should look through it? Is it that simple? Because it feels much more complicated.
Well, in terms of kind of solving the problems, I think some lesson we learned from the pandemic era is that the supply chains, create, problems, but they also create opportunities. Like companies, the ability, the economy, especially the U.S. economy, to kind of solve the problems, have the price system sort of equilibrate again. I think it does it very well. And so the lesson from my takeaway from that experience is that don't underestimate the economy's resiliency. Now, the economic conditions today aren't as strong. The health of consumers not kind of strong. The fiscal support is not there. So a lot of reasons to obviously be more concerned. At the same time, I don't want to sort of doubt the ability of the U.S. economy to be somewhat resilient, through this whole situation. Resilient enough that, our forecast, I think we still feel pretty comfortable about ultimately by the end of the year, equities being up, about 10%.
One of the reasons that people seem somewhat optimistic, when I speak to a number of investors, they say ultimately all of these supply shocks will create the greater need to invest in artificial intelligence, the greater need to get bigger, to engage in deals, to create a critical mass and economies of scale. How much do you see the uncertainty and the ongoing supply shocks as only accelerating some of the capex that we've seen that have really driven some of the gains that we see not only in equities, but more broadly in the overall economy?
Well, the capex for AI, we're seeing strong numbers there. If you abstract from that, if you look at residential, non-residential, other investment, it's actually relatively weak. So we're not seeing companies saying we need to invest more necessarily in AI specifically. So from a near-term growth perspective, that's sort of not driving it. In terms ultimately of creating supply chain resiliency, I mean, this is now a story almost kind of going back a decade with, first with tariffs, with the pandemic. So I think you're going to see companies move in that direction. But it's hard to invest when there's a lot of uncertainty at this point in time. So I wouldn't view that as a key driver for the next, say, quarter or two to really lift U.S. growth.
One of the difficulties is people look to a potential upside, significant upside, 7,500. Other people completely agree with you, is that there isn't an obvious hedge. We used to talk about bonds. We used to talk about gold. Nothing's really performed consistently. I mean, how do you think about a possible hedge to optimism that seems to be pervasive right now?
Well, it ultimately depends, like, what are you trying to hedge against? If it's ultimately oil prices going higher, commodity prices, that's an inflation shock. It's really difficult to hedge that. So you can look at things like oil or having exposure to commodities. That worked, earlier this year, like in March, we go back to 22, that would have worked in that time period. You can also need to sort of de-risk and have sort of less exposure overall. You can have less risk exposure in interest rates markets. We're saying stay in the front of the curve. We've no more than about the 5-year point. You don't want that interest rate exposure. So you can make changes at the margin, but ultimately an inflation shock is really, really hard to hedge. I mean, other than sort of de-risking significantly.
Are there any parts of the market that are prepared for serious escalation?
I mean, I think it depends. If you think of serious escalation, I think the front of the curve, pricing in, like now this is a couple weeks ago, actually hikes seemed optimistic to me in terms of optimistic in the sense of the markets that are pricing the Fed to hike. Because ultimately, if you really get significant escalation, I think the markets transition from we treat this as an inflation shock and therefore the Fed has to hike to we treat this as a growth shock.
What is an escalation? From my standpoint, the status quo is bad enough. I really need an escalation from here. Physical markets really tight. Shortages are beginning to emerge across Asia. Europe is bracing for them to confront the same thing in the next month or so. I'm not sure, do we need an escalation? What kind of escalation do we need? Just the status quo to persist. Where things are right now, for that to persist, week on week on week on week on week, you're going to see more damage to the global economy every single week.
That's logical. Yes, that's correct. Although Max Kettner over at HSBC is saying that actually it's the pace of bad news getting worse. And so if it's not getting worse as quickly as it was before, that's enough to keep people optimistic in the markets. I mean, just giving you a sense of what the register is right now on Wall Street.
Less bad.
Less bad.
Is good enough.
Good enough.
The line from Max Kettner of HSBC. Your conclusion too?
Well, in terms of escalation, really the key is, do we get oil flowing through the Strait of Hormuz? So status quo means whether military escalation or not, if you don't get that improvement, that's a problem. Because I think what the markets are assuming, what we're assuming is ultimately, as we go forward the next month or two, you get improvements. If that doesn't happen, yes, prices go higher, economic growth has to be sort of marked down. The markets are not pricing for that.
But then they're not pricing in what's going to happen in less than 2 hours today. There is an escalation. There's a blockade of the blockade. So even the little bit of oil that was getting out will be stopped.
Well, if you're talking about an oil tanker or two versus the 30 that we normally go through, I'm not sure that marginally makes a change. Like, this is a question you have to believe, will the administration do a blockade? There's also reports over the weekend that they're going to prepare to try and do sort of like sweeping of mines. Could there be also...
That's good news.
A week or so from now that, all right, we'll do this, but we're trying to actually improve the flow of oil? I mean, so that's not something the market is talking about, but like, what is the ultimate plan for the administration? Ultimately, I don't think you want to have oil not flowing through. What the call is for is we want oil to flow through. And so you talk about a blockade, but ultimately, if you're working to prepare to increase military security so oil can flow through, that to me is a positive for the markets, which is not being discussed this morning from what I can see.
Jason, it's good to see you. Thank you, sir. Thanks for dropping by. Lots to think about. Jason Draha there of UBS Global Wealth Management. Jason's right, there's always some tension with this. Financial markets will look at better versus worse, and for the rest of us, many other people will focus on good versus bad, and things are overwhelmingly bad right now in the Middle East, particularly for the people who live there. As for the better versus worse, can you make the argument this morning that things are getting better? I think that's hard. Can you make the argument that things are getting close to getting better? Maybe you've got some wiggle room on that front over the last week.
Or that the pace of news is less bad and that's enough to really get people excited that potentially there could be a resolution. And it goes to kind of Mike Wilson's point. If you have a rational look at the idea that economic destruction for everybody is probably not in anyone's interest, that things will work out.
We're not dealing with a rational actor in the Middle East.
This is something that people are looking at, and they say that the talks are evidence of some rationality prevailing. Look, either way, people are saying, if I miss out, that's a problem. I think the bigger point here is, if you have an inflationary shock, there's no hedge against it. Stocks might end up being the best hedge for it, because ultimately it might not be the bond market, especially if there's a fiscal offset. So people are hamstrung right now through a lot of different potential competing factors.
I also think the market is just happy that they met. there's no trust in this relationship, but there hasn't been trust in this relationship for decades. And the fact that they met, I think a lot of people view as a very good sign. Even though at home, those individuals that went over to Islamabad and met with the United States, members of the IRGC are saying, how dare you meet with the United States when they just killed Khamenei, the Ayatollah, and other prominent leaders in their country.
And the ceasefire, albeit fragile, the ceasefire is just about holding. Up next on the programme, we'll get you some morning calls, plus we'll catch up with Oksana Aronoff of JP Morgan Asset Management as stress continues to build in private credit. That conversation just around the corner. From New York City this morning, equity futures recovering a touch. We're down by 0.6% from New York. This is Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
I think we live in a world of higher, more volatile inflation. If the market believes that oil prices will be back down to $70 a barrel by December, then firms are going to see this as temporary. There are cracks in this economy. There's some other kinds of tailwinds that are holding things up.
That was Andrew Honhorst of Citi weighing in on the economic situation, focused on the demand side of the equation following a series of supply-side shocks, 3 of them over the last year, on trade, on labour, and now on energy. Equity futures this morning pulling back by just 0.6% on the S&P 500 in the face of this move in crude. A rally of more than 7% on WTI and Brent. WTI this morning 104, Brent crude Bremo at 102 so far this morning.
Yeah, so not necessarily at the absolute highs since the conflict began in the Middle East, but still rising significantly. And right now, it's sort of this uncomfortable numbness that we're seeing in markets. Or maybe people are getting increasingly comfortable that they can just look past this and say, there will be brighter moments.
Stocks unchanged on the year. Basically, right? I think we're down by 0.4%, something like that on the S&P 500 in the face of a major shock in the Middle East.
Some people could call this complacency. Other people would call this resilience. When you take a look at the composition of stocks that have changed significantly, you've seen a lot of volatility under the surface, the whole paddling duck that Amy Wu Silverman talks about. Ultimately, though, it does lie with the earnings. And do you see the earnings come in at the level that people expected? Right now, Goldman Sachs in pre-market trading down significantly at 1 point more than 4% in commentary from the bank, saying that the backlog of investment banking has decreased slightly. So a question of how much this really disrupts some of the pillars of this economic backdrop.
Let's play If You Told Me. If you told me at the start of the year all this stuff would happen. Javier Blas was on with us earlier. Fantastic on the commodity market, based out of London. He said, if you told me all these things would take place, I would have thought even in the physical market, where crude has been trading in the 140s, that you'd expect, and in some places much higher than that, you'd expect crude to be trading north of 200 maybe. My guess, based on what's happened over the last 6 weeks.
I agree. It actually is shocking that Brent crude is just actually at 102 when it comes to, I know that's the paper market, but still, it is shocking because this administration has been jawboning. There's been verbal intervention. I do think the market does think that at some point, if it gets too painful for Trump, the idea of a Trump put, he will make sure that he could somehow get out of this. The thing is, this isn't like Liberation Day. There are multiple parties involved, and it's not just the Iranians in the United States, it's Gulf partners, and of course it's Israel.
The offsets have been pretty incredible as well. Unlocked a lot of inventories all around the world. The East-West pipeline, impressive from the Saudis. 7 million barrels.
Yes.
Is that the number now?
And they're at capacity.
7 million barrels a day through that East-West pipeline has been pretty impressive too.
Yeah, I think that if we want to get a forecast, I would like to suggest some decorating in the surveillance studio. I think that we could get a big dartboard. We need to have a number of different...
I thought you were going to park barrels of crude or something like that.
Well, actually, that's at home.
Okay.
It's good exercise for the kids. But ultimately, I mean, I think that we should just start throwing darts. And it's really the question of what gets on the dartboard that really is...
Blindfolds and darts, Bramo.
I think it might be actually more effective. I think that's the way to go.
Let's get you some morning calls. First up, Steve Ford, lowering his price target on Meta, hedging for any potential impact from the war in Iran. Your second call from Roth Capital, raising its target on CoreWeave, calling it a pure-play AI cloud platform. And finally, Goldman, double downgrading Best Buy to sell, warning higher memory costs could impact computer sales. That stock is down, and down hard so far this morning. Let's turn to private credit. The Federal Reserve asking major U.S. banks about their exposure to the industry. The request following a recent surge in redemptions. Oksana Aronoff of JP Morgan Asset Management writing private credit headlines have been able to hide behind war headlines. But this remains the epicenter of what we expect to be the next significant dislocation that will impact public markets. Oksana joins us now for more. Oksana, good morning.
Good morning.
Set the stage for us. How are the dominoes falling and how will they fall in your mind?
First of all, let's start with the fact that this is the longest credit cycle we've had, I'm going to say in memory, because collectively here, no one has been through a longer one. It has lasted, you could argue, really since the end of the great financial crisis. We would have had one in 2020, but of course the Fed came in and kind of blunted that. And so there are a number of operators out there that probably should have gone under even back in 2020 that are still around. And today we have this entire ecosystem of private credit that has made it possible, has financed companies that probably would have struggled otherwise. We see that through the bad PIK activity. We see it through the rising defaults in the private credit sector, which hit a record last year. This year, the expectation was that they were going to ease because of lower rates, and that is not materializing, and so that's going to make that financing route more difficult. But at the end of the day, on the public side, what we're also seeing are downgrades outpacing upgrades. We are seeing, as a result of that, the CCC part of the market expanding, both sides of late credit cycle kind of dynamics. And the way this plays out is the way it always plays out. People want liquidity. And when they, obviously the theoretical concerns around valuations and liquidity in the private credit market are becoming real concerns, and remains to be seen whether they're justified or not. But people do want to get their money back. They cannot, right? The queues for redemptions have been met at best at a 50% level, in some cases only at a 10% level, meaning of the total redemptions that are in the queue of that particular operator. And when people can't get their money out of illiquid investments, they go where they can, which are the liquid public markets. And you start to see kind of selling begets selling as concerns mount. And you have a dislocation, which can be a very dramatic recession pricing type dislocation, even without a recession. And that, I think, is probably the playbook.
Let's build on this just a little bit more. Yeah. Where have we been building leverage? Because we've heard so much over the last 5 years that consumer balance sheets, household balance sheets are strong. We've heard so many times that corporate balance sheets are strong. Coming out of the pandemic, there was a massive transfer from the sovereign to those balance sheets, and that's why they're resilient. Where's the leverage been building? Where's the weakness?
So certainly some of these lower credit rated companies absolutely have more leverage, and remains to be seen, right? There's not a lot of transparency there. So, in the private credit portfolios particularly, so it remains to be seen. They are absolutely more levered, and this is how investors and managers and operators and companies get into trouble time and time again, certainly through leverage and liquidity concerns. There's also, the question I frequently get, which I think is related to what you're asking, is how does this become systemic? because that's really what we're concerned about. And the reality is that we don't know that a risk is systemic until it becomes that, because if we did, we would put guardrails around it, right? That's kind of the nature of what allows it to become systemic. And one avenue possibly for it becoming a systemic risk, not a huge base case for us, but certainly a possibility, are the insurers. Because the insurers have taken on a significant amount of private credit exposure. It is something like 18% of their overall bond exposure today. They are also, some of them are owned by alternative asset managers. And by the way, some unintended consequences of that, to the extent that these insurers provide guarantees in the muni bond market, we're seeing energy prepaid munis being impacted by that, because the third party in that transaction sometimes is that insurance company. So there are many kind of avenues for transitioning that risk from one epicenter of the market to a different part of the market. And the insurance could be that, because they're in a little bit of uncharted territory with more illiquidity and more high yield exposure, which has been the other headline over a number of years, right? As they operate in an ultra low environment, and in effect, to kind of match their liabilities, they've been taking on higher yield exposure.
Is this a private credit issue, or is this an AI disruption issue that is being masked as private credit?
You bring up a really important point, because by some estimates, as much as 40% of the private credit ecosystem is linked to software, AI, technology. And of course, to the extent that AI is coming for the lunch of some of these companies, their business models are we're not just talking about cyclical turnover, we're talking about, a business model that becomes obsolete structurally. That's one risk. And then, of course, there are questions around AI specifically, how much of that is really going to pan out in terms of, the investment resulting in the sorts of things that are being priced in. So absolutely, those things are interconnected.
The reason why I ask, and this is sort of the systemic node that some people who I'm speaking with are talking about, right now, the reason why markets are feeling good is because capital markets are wide open. People want to invest. They want to finance the AI revolution. What could cause people to pull back? Because that would be the ultimate lever that would create a real problem. Do you see any sign of that whatsoever?
There could be certainly a massive miss on the part of one of the hyperscalers. I think the thing to watch, and the reason this tremendous expansion in the hyperscalers and their CapEx expenditure hasn't really been an issue, is because it's been cash financed pretty much entirely. We're just now starting to see them resort and lean into the credit markets for financing and issue bonds and debt to finance it, but it's still such a tiny portion of their capital structure overall. And where it's growing, like Oracle, for example, we're seeing the effects of that in their CDS, et cetera. And so I think that's really the thing to watch, is how much debt and at what pace will they start accumulating it to kind of say, okay, maybe there's a red flag here, maybe not.
2 weeks away, Microsoft, April 29th. I think Meta's April 30th, and we'll look out for Alphabet as well, of course. Are we going to see that discipline kick in? Are they going to have to pull back on CapEx? They've said 1 million times in several different ways that the biggest risk for them is underinvesting and not over-investing. But it was easier to say that when the equity market was ripping and stocks were at all-time highs, and they were a big part of that story, particularly the likes of Microsoft. I wonder how hard it is to make that statement now, this morning.
And I think that the lead up to it is going to be all the companies reporting earnings ahead of it. How do they express the efficiencies? How much are they getting disrupted? And if they're not getting disrupted, then how does big tech justify all the investment that's only accelerating year after year in some of this technology?
NASDAQ futures down by 0.6% this morning. Oksana, good to see you.
Thank you.
Thank you for being here. Jim Zouter of Baholo might say, take a walk, or something like that.
Well,
Did you hear him say that? He say, take a walk, to get some fresh air.
I'm
Relax.
all for it. I'll do Pilates.
Bring it down, just a touch. We'll start the show later. We can all go and work out. We'll do Pilates and we'll come in much more relaxed.
I think it's great.
That's outside.
Right,
They're allowed for it.
There we go.
Window.
Oksana, thank you. Oksana Aronoff there of JP Morgan. Coming up on the programme, Steve Rashuta of Mizuho as hopes of a Fed rate cut this year are fading. Plus, we'll catch up with Christina Kino. She's got your morning movers. Shares of Goldman Sachs falling as earnings failed to impress. That name is down by more than 4% this morning. That kicks off earnings season on Wall Street tomorrow. We'll hear from JP Morgan and others from New York. You're watching Bloomberg TV.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative. Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Snapping a 7-day winning streak on Friday, but still posting the biggest weekly gain of the year so far on the S&P 500. Moves of 3.5 to 4% across the S&P, the Nasdaq, and the Russell just last week. This morning, a slight pullback. We're down by 0.6% on the S&P. On the Nasdaq, we're down by 0.6% also. If you check out the commodity market, this is the gap higher we experienced overnight and into this morning as the blockade of the Strait of Hormuz begins. The U.S. pushing this blockade in 90 minutes' time. Brent crude up by 7%, 102. WTI up by 8%, 104. And in the bond market, things are pretty quiet, stable. Yields higher by 2 or 3 basis points. This is not a big move. We're up by 3 basis points at the front end of the curve to 382.
I do think that the direction is interesting, and what you're seeing increasingly is bonds selling off in tandem with stocks because it is an inflationary move. And this really is maybe one reason why people see perhaps more upside in stocks than bonds. Where is your hedge at this moment if the risk truly is inflation, as Jason Draho is talking about? And ultimately, how much is that anxiety hanging over some of the calls that we hear on Wall Street?
That positive correlation between stocks and bonds spooks people. And you're seeing it repeatedly, and it reminds them of 2022. And 22 was not a good year for stocks.
And we're seeing, again, inflation increase at the fastest pace going back since, guess when? 2022. That was the CPI that we got on Friday. And that was the increase that we saw. When we take a look at people's expectations for inflation, in the near term, it's creeping higher. Longer term, still well anchored. At what point does that change, and how much does that increase the spookiness of this correlation?
The good news, the Fed probably won't be hiking 500 basis points. And that's the good news. I say probably because you never know what's going to happen in the future, but that's the base case.
And it's the pace of news that we're getting, and less bad is that the Fed is not going to hike by 500 basis points.
Less
so
bad
well done.
is good news from Max Kettner of HSBC. The opening bell about 60 minutes away. Let's get you some single names of morning movers. Christina Aquino has more. Hey, Christine.
Hey, John. All right, let's take a look at Goldman shares this morning as that seems to be on the back foot. Goldman, of course, beating its own revenue, trading revenue for equities, coming in at $5.33 billion for the first quarter. But of course, investors focusing on the disappointment from the fixed income revenue side of things. That came at just over $4 billion. Definitely what's dragging on the shares this morning. CEO David Solomon, though, calling the bank's performance, quote, very strong, but also warning of increased market volatility. Goldman, of course, kicks off Wall Street earnings this week. We have JP Morgan up next, due on Tuesday. Let's also take a look at some airline stocks, definitely in focus today as oil climbs back above $100 per barrel. You're already seeing the impact there right across the screen for the major U.S. carriers. Of course, some airlines potentially starting to feel the bite now. American Airlines raising its check bag fees again, and so it's charging now $50 for the first bag, $60 for the second, $200 for the third. So make sure you pack light. Now, let's round this off, taking a look at energy stocks this morning as well. Still very much in the green as we await the beginning of the U.S. blockade in the Strait of Hormuz, starting at 10 a.m. Eastern time today. Again, higher oil prices, just one part of the equation here. There's also the potential disruption to these companies' operations in the Gulf. ExxonMobil already warning of a 6% loss to its global production in the first quarter. Given those disruptions, we'll get more details on that when it reports earnings on the 1st of May. John.
Christine, thank you. Great work this morning. Appreciate it. Find more from Christine Aquino on the MLive blog on the Bloomberg terminal. Inevitable after a move like that in the commodity market that we'd see energy names up and travel names down. Charging for baggage. Do you want to do it?
Yes, I think so.
It's miserable boarding the plane because everyone is struggling to find overhead space to put their bags. And what's going to happen now? And then what do they do at the gate? You want to check in your bag for free.
Yeah, exactly.
I mean,
so
come on.
Everyone's going to do that. And then, of course, the enforcement of gate lights is going to be a really key issue because everyone's going to try to sneak on, to try to get their bag on first.
Well, the amount that American Airlines wants to charge, you're better off just buying some new items when you land. I'd rather buy a new outfit instead of packing a second or third suitcase.
You should charge for the basic fee, start with the basic fee, and then charge a supplementary fee if you want to bring in hand luggage. And you'll see what will happen. People want to take the hand luggage because of the convenience factor. No one actually wants to check in the bag. I'm not sure the disconnect here between the airlines and the people that travel on the airlines.
What it indicates to me is they're looking at every lever to potentially raise cash. So at what point do you start saying, well, if you want the nicely scented seats, then you can pay an extra $20 and it will smell like roses.
If you could guarantee me overhead space to put my bag, how much would I pay for that convenience?
Please do go on. How much would you be willing to pay?
Because I would be so annoyed if you took that away from me and I had to wait for the bag at the other end.
Okay, so how much would you be willing to pay? $200?
I think you could get business travelers to spend serious money.
All right, so maybe.
But that's why they sit in
you
business.
You heard it here first if you're an executive.
That's why they sit in business, because when you sit in business, you are guaranteed the overhead bin.
And they've already paid the money.
Yes.
Which tells you that they're willing to spend. Anyway, I've done this round before. I've done this round before. American Airlines needs to sort it out. You know, that's a separate conversation. Let's turn to the economy. Inflation data and Fed speak on deck this week as hopes of a rate cut this year continue to fade. Bloomberg's Mike McKee is looking ahead to all of that. He joins us now. Good morning, Mike.
Good morning, John. Listening to you guys, I think we need a new CPI category for airline baggage fees, and we'll keep track on how much they go up and how annoying it is. In the meantime, I'm sure you are, as I am, tired of saying we don't know what's going to happen next. The question with the economy numbers coming out this week is what's going to matter at this point, because we sort of know what they're going to tell us, and we also sort of know the Fed's not going to do much. Tomorrow we get PPI, and we kind of know where that's going to go. We know it's going to go up. It's just a question of how much. Wednesday import prices will be interesting because we haven't talked about tariffs very much in a long time, and it's always kind of a question of if you look at ex-petroleum, what is the impact on the exporters? Are they eating any of the tariffs? So far, they have not been. Other than that, not a whole lot that's going to matter to the Fed, but before the weekends and the blackout begins, then the Fed is going to be on the board. A lot of them talking this week, Myron. Today, Tuesday, Goolsbee, Paulson, Collins, and Barkin. We haven't really heard a lot from Paulson and Collins lately, so that'll be interesting. Mickey Bowman generally talking about regulation, and Michael Barr might be as well on Wednesday since he used to do that. But the one I'd point to is Friday. Chris Waller talking about the economic outlook, and of course he's one of the swing votes in terms of whether you cut or whether you hold. I don't think Chris is going to come out and say we are going to be ready to raise rates. But I wanted to leave you with, since I don't have the airline baggage one, the chart to watch perhaps in terms of future inflation. And it's not gasoline. We all know gas prices are going up, and that's a pain. But diesel prices, this is the part that's going to get into the core of CPI, because it's going to get into shipping prices. It's going to get into trucking prices, railroad prices. And that's going to raise prices for everybody for package delivery, among other things. So that's one to keep an eye on as we go forward. Down a little bit last week, but probably going to rise again this week significantly.
Mike, thank you. Thanks for indulging us. Appreciate it. There's two things I hate about flag, and neither of them are flag. It's security, 1, and boarding, 2. And if they could experience 1 and 2, it would vastly improve the whole experience. And why they're doing nothing about either confuses me.
Well, the one thing that they're doing is increasingly saying, if you pay this much more, we can help you on both of these fronts. and that is the premium offering, and that is increasing the amount of their revenues and their profits. And how much do you see this in an increasing level as you see that K get wider and wider?
Yeah, but how many people line up when they say Group A or 1? Everyone, and then sometimes they
everyone has status now.
Yes,
you see that in the lounges
everyone
too.
says. The other thing that really bothers me with airlines, when you wear a very tiny purse to keep just your cell phone and your passport in, they tell you to put it in your bigger duffel bag. They obviously know it fits. Why are you arguing with me to put it in this bag?
These are first world problems, so let's talk about real issues. Steve Raschuta of Mizuho writes the following: a robust macro environment suggests the Fed will not be in a position to cut rates this year. Therefore, long-term rates are likely to steepen the curve over the balance of the year. Steve joins us now for more. Steve, good morning. Good to see you.
Good morning.
You are the guy we call to ask the following question: what is everyone getting wrong? What is everyone getting wrong?
I think what everyone's getting wrong is the fact that this inflation is probably going to be stickier. I think it's been an ongoing and building problem in the system, and that's why I think the curve has the potential to steepen. The market's already basically taken out Fed rate cuts. I mean, there's a little probability of it in there. I don't think the market's really going to put in rate hikes. So the curve from here is probably going to move more dramatically from the long end of the curve than from the front end of the curve, and I think the steepener is really the big story. And if you're looking to get some evidence as to where you could have an inflation problem, look in the import price numbers this week, in particular the non-petroleum import prices. Tariffs are not included in import prices. However, last month through was the first month we saw a decided uptick in non-petroleum import prices. I think it went up by 1.2%. And I think there's a risk we get another upward adjustment here. So where we've been looking at the environment and saying, well, the economy is going to be softer, this will lead to lower inflation, I think the reality is the economy is proving it's not softer. Demand is still there. And you're going to start seeing that reflected in import prices.
I'm so pleased you've brought this up, because that's the biggest contradiction of the year so far for me. The consensus view at the start of the year was we get this cyclical rebound fueled by tax refunds and a bunch of other tailwinds. Then the consensus view is totally shifted. And the idea is now that you won't get any second-order effects on inflation because the economy's not strong enough to generate them. I'm struggling to put those two things together, and we've had that debate around this table several times. What do you think it's actually going to look like through the summer?
Well, I think what you're going to see is you're going to see 3% growth in the first quarter. You're probably going to see 2.5% growth in the second quarter, and probably something close to 2.5% growth in the third quarter as well. So you're looking at an economy that should be running around 2%, and you're running at least 0.5% to a full percentage point higher than that. So for the full year, you're probably going to be up about 2.6, 2.7% relative to a 2% trend. That gives you an idea of where the demand is. It's still there in the economy. And you look at refund check issuance, I mean, it's strong. We're up about $28 billion over the same week last year. And we're still at the point where we're starting to accelerate those refund check distributions. And that money is going to get spent. And that's what's adding to the demand side of the equation. Now, some people could say it's just going to wind up in the inflation components. That's fine. But that's why we're telling you the curve's going to steepen from the long end.
How much are people misunderstanding the average as being sort of the status quo versus a bigger divide? It can be true. Two things can be true at once. A great percent of the population can feel pretty terrible about the situation, both the labor market as well as inflation and just what it's doing to their paychecks. And there still can be a very big cohort of people that can still spend money to be able to get on the plane first and put their bags on so they don't have to worry about anything else. But I mean, this is ultimately what we're talking about. And that's the reason why Delta and American and United have good outlooks for the year, even though people are really frustrated about not getting on and getting their bag on the thing. I mean, this is essentially what we're looking at.
Well, go beyond the airline industry. You know, at bottom-up analyst expectations for 2027 are for north of 19% growth in earnings. We're at basically 15 to 16% for this year. So they're looking at it and saying, even as they've gone through this entire period of rising oil prices, they've been raising their 27 earnings expectations. Now, again, a little bit of inflation adds a lot more to the bottom line in earnings than people think. And that's a little bit of what's happening here. And that's how it gets embedded in the system. And that's why you have to be careful. And that's, again, why these inflation numbers are indices. They're indices of lots of different components because we see them moving in different directions. And you're right, different people will spend on different products based on their income level, and that will drive the index. And that's why we look at the overall index.
Could you see a credit cycle transpire even with otherwise pretty positive earnings and positive overall averages in the equity space, given the fact that you have a number of sectors where the consumer is more pressured, where potentially rates remaining higher is going to challenge them, and you have disruption?
Well, I think people are overplaying the K-shaped economy because you're not seeing it in demand. So I think that's a big part of the problem. Everyone wants to look for the recession call. Okay, that's what, because everyone wants to make the lower interest rate call because that makes everyone trades more profitable on the street. The reality is this is not a lower interest rate call. And therefore, you can magnify things like private credit to make them look like they could become a systemic issue. But in reality, if you just look at private credit, that's fine. But the reality is the financial markets are much bigger. So we're looking at an environment where IG issuance is expected to be up anywhere from $37 to $45 billion this week, I should say. That's a very, very strong performance for issuance. Nothing really sick on the calendar for today, but it looks like there's going to be some good calendar issuance. There's still a demand to buy yield in this environment. In addition to that, people are ignoring the fact that regional banks now are very, very healthy and looking to put themselves back into the loan market. So private credit grew so much because regional banks shrunk. Now you're in an environment where private credit's shrinking, and everyone's forgetting that regional banks are ready and primed to go out and make loans to a lot of these people and put them in perhaps a better financial position than they would have been before.
It's a crisis every spring at the moment, isn't it, Steve?
It's a continuous crisis. We've gone through 6 or 7 of these since SVB. And, you know, we keep on having these recession calls that pan out to be nothing. Private credit is just the latest.
Steve, it's good to see you. Thanks for being here.
Pleasure.
Steve Risciuto of Mizuho, the guy we called to ask, what is everyone getting wrong?
I love this, or tell me how you really feel. I think that we should just have a segment. Tell me how you really feel with Steve Risciuto.
We'll do a roundtable with Oksana next time.
I think that would be good.
You know,
keep them together.
Ask them about airlines and get them to really fight. Up next, we'll set you up for the day ahead. Plus, Bob Elliott of Unlimited Funds joined us with crude surging back above $100 a barrel. Equities this morning down by 0.6%. The opening bell about 45 minutes away.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
That's well within our capability, right? Blockading it and keeping control, interdicting ships, that's something we can do. I think we can stay far enough away that we're not really in constant range of Iranian attacks. It really comes down to the extent of how far we're willing to go and if Iran's going to try and disrupt us or not. I do think all bets are off. If we really see the ceasefire broken, I think markets sell off 2 or 3%.
I wanted to find time to have a serious conversation at some point this morning about the golf, and Grandma in the commercial break, do they get to keep the jacket? It's like the level of the golf discourse around this table.
You know,
The kids were
have
cute.
that on air, so there you go.
Their kids were cute. I saw their children doing interviews. I don't even know who any of these people
That's
are,
the
but they're
par
children.
3 day. Yeah, ahead of the main
Very
tournament.
cute. I'm sorry, your problem was having hope.
It's a great disappointment. Anyway, let's talk about
Lower your
financial
expectations,
markets.
man.
They were never high. They were already low.
All right.
This is the market this morning. We're up by 7% on Brent and WTI. It's a gap higher. This blockade begins, according to the president, in 1 hour and 11 minutes time. That's the move at the front end of the futures curve for crude, Brent and WTI. And you have to imagine, if you take away those 2 million barrels of Iranian crude, that the physical market gets that little bit tighter as well.
Absolutely. And on top of that, it is not just the fact that this is a blockade and a blockade. As we've been talking about, there are countries right now who are going into really like existential moments because the final ships that they receive, no more is coming. On top of that, you have still the fog of what happened. You've been talking about the East-West pipeline in Saudi Arabia. What happens if the Houthis decide to get involved? There's tons of geopolitical risk. And is it being baked right in right now? Not sure all of it.
To equities at the moment, we turn equity futures at the moment negative just 0.5% on the S&P 500. Let's get to the trading diary for the week ahead at 10 a.m. Eastern Time. That's the time for the blockade to begin of the Strait of Hormuz. Coming up later this week, results from JP Morgan, Wells Fargo and Citi. That's tomorrow. We'll get PPI as well. On Wednesday, results from Bank of America and Morgan Stanley, plus the Fed's beige book. On Thursday, get a sprinkle of media/tech. We'll get Netflix earnings as well this coming Thursday. Let's turn back to our top story. Oil prices surging with President Trump's Hormuz blockade just over an hour away. Bob Elliott of Unlimited Funds writing, the longer gas prices are elevated, the more households must start to cut back elsewhere and prices rise more broadly. Bob joins us now for more. Bob, good morning. Good to see you.
Good morning.
What's the risk here of inflation becoming embedded, stickier, and broader price pressure emerging in the months to come?
Well, I think the main issue here is that there's the immediate effect of gas prices at the pump go up. And for a short period of time, everyone kind of looks through that. You're like, it'll get resolved. I won't worry too much about it. But we're already starting to see, particularly in some Bank of America data, the lower income cohorts, lower income third, starting to pull back on discretionary spending. And that, this has only been around for a few weeks in terms of the price effect. That's going to start to permeate more broadly across the economy, not only because there's going to be a lot of spending on gas, but then we also have, the embedded prices through diesel fuel prices that are going to start to, go well beyond just the price at the pump.
So you see that stress migrating up to other income groups as well?
For sure. And I think one of the key issues here is we're sort of at an optimal point for an oil shock because we're also getting at the same time a bunch of these rebate checks, right? Tax refund checks. And those are two things that are offsetting each other. In terms of the economy, particularly for the lower income. But that's only going to last for on the order of weeks in terms of hitting people's paychecks and bank accounts. Once that wraps up, and then we have basically the roll-off of the Iranian crude that was sanctioned that's allowed to be sold, some of the Russian crude that was sanctioned that's allowed to be sold, and we've got another 2 million barrels off the market. Like we're really coming to a stress point that's going to sit basically May 1st, it's going to be a lot of stress on the market with both higher prices and less spending power for households.
How does this translate in terms of market performance, given the fact that we've already seen a downgrading of a number of consumer discretionary sites, and a lot of people are expecting that any kind of growth is going to come from technology, from financials, which are a bit removed from some of those factors?
Well, when you look at overall growth expectations, I think it's a total consensus that we're going to have 2.5% to 3%. The previous guest was basically saying the same thing on a real basis. But then you look at household consumption numbers even before coming into this oil shock, we saw household consumption over a 6-month time frame at 1.2% real. Add in 1 to 2 to maybe 3% inflation pass-through. How are households, which are just the backbone of the whole economy, how are they going to deliver enough real spending growth to meet those extremely high expectations? And remember, while a lot of the profits are going to come from, from AI and other sort of tech-related endeavors, ultimately, the people who spend in the economy are households and the government. That's it, right? Otherwise, it's just trying to take money, who gets what share of the pie. And so if households aren't spending, it doesn't matter how good AI looks, it's not going to deliver the type of profits and revenues expected.
From an investment perspective, does that lead you to go into bonds, or is that not the answer anymore because the reaction function cannot come from monetary policy, given the fact that this is also has an inflationary tinge to it?
Yeah, I think one of the challenges is, it's probably not a time to go long bonds sort of in a traditional recessionary environment because so much of the effect is through the inflation side of things. So instead, looking at maybe being long bonds relative to stocks, right? The point being that the growth dynamic is going to be hit stocks harder than it is going to be hitting bonds. And so that's the sort of way to neutralize yourself to that inflation pressure and still make that bet on the very high expectations of growth that's in the market.
Bob, May 1, does the physical paper market catch up to the physical market?
Well, I think so. I mean, look, the true barrels being traded right now are trading at $140 a barrel, right, in terms of at the end of last week. And we're talking about bringing possibly up to another 4, 5, or 6 million barrels off the market by May 1st as those various elements roll off and if this blockade continues. That's probably, the old rule of thumb is $5 to $7 a barrel per million. We're talking about incredibly high spot prices that are facing this economy if this doesn't get resolved quickly.
Bob, it's good to see you. Thanks for breaking this down. Bob Elliott there of Unlimited Funds. At the end there, just this ongoing 1-month rolling disconnect between the front end of the futures curve and a physical market. And the closer you get to expiration, it's like the wake-up call. Hello, physical world, you've got a clear demand and supply, and that number is a whole lot higher.
That gap has never been wider. I mean, when that spot price reached $144 a barrel, it had never been wider versus the paper market. So at some point, you have to imagine it reconciles. At the same time, they're talking about talks, the pace of bad news isn't getting that much more significant, so people are getting a little bit excited.
And this blockade is real, according to U.S. Central Command. They're issuing notices this morning saying that a vessel going in and out, you are subject to interception, diversion, and capture.
Things could get tense over the next 24 hours, that's for sure. That blockade set to begin in 1 hour and 5 minutes time. Tomorrow, we'll have numbers from JP Morgan and a whole host of other banks as well. Wells Fargo and Citi. The day after, you'll hear from Bank of America and Morgan Stanley. We'll break it down with the following guests: Brian Levitt of Invesco, Gerard Cassidy of RBC, Alicia Levine of BNY, and the Port of LA Executive Director Gene Soroka joining the program as well. Equity futures going into the opening bell negative by just 0.5% on the S&P 500. A lot of banks on Wall Street lining up with the same call. Buy the dip. Look through the tension in the Middle East. We'll see if that's the right call in the weeks to come. From New York City this morning, good morning. This was Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm
Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time
We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
A little bit of a drop on this Monday morning, but we have 30 minutes until the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now. Oil surges back above $100 a barrel as that blockade threat deepens the global energy supply shock.
And Goldman Sachs kicks off earnings season under the shadow of the Iran war. Private credit stress and AI disruption. Still, we're all focused on FICC trading.
Yes, we are. And to be fair, David Solomon did talk about coming volatility and the need to be more prudent with geopolitical concerns. All of that leading to a very big drop from Goldman Sachs, Matt. 4.1% more than that in the pre-market. It's a painful, even though they had a blockbuster equity trading revenue. Matt, it came in above $5 billion, the most any bank has ever posted, but still shares down pretty significantly this morning.
$5.33 billion,
yes.
A world record for equity trading. Travel stocks are falling this morning as they face dual headwinds, no pun intended, from rising fuel prices and inflation concerns. You could say those are one and the same. Carnival off 4%, and Royal Caribbean, American, and United all falling about 3% in the pre-market.
Let's get more on those Goldman Sachs earnings, Matt. Bloomberg finance reporter Catherine Doherty joins us now. Catherine, just looking through it, it's like bright spot, huge trading revenues. Everything looks great. Yes, FICC misses, but down 4%?
Yep.
Feels pretty painful for them this morning.
I do think, though, that you have to look at the macro backdrop. The market overall, we're entering Monday this week. There's all the geopolitical concerns that are floating. You have the announcements that are being made about whether or not we're going to come to a truce or how the negotiations are going with the administration and what's progressing in Iran. So I think that is playing into how the stock's performance is dropping off this morning. But you're right. We kicked it off with very, very strong for equities. They beat by almost $1 billion or more than $1 billion their previous record for a 3-month period. FICC did come in slightly lower than expected, but that equity beat presumably makes up for it, at least in the numbers.
I thought it was an $800 million miss and a 10% drop from the same quarter last year. That seems like a lot lower.
But equities outperformed far more than expected. So you could see that bright spot is ultimately, when you look at trading overall, it was a great quarter, despite the miss from FICC.
Sorry, I saw investment banking advisory fees were up like 89%, right? So basically double.
Yeah, but they also said that their backlog slightly decreased increased with the end. Is that where we're going? Okay, yes.
Yep, so you have some bright spots, as you mentioned, specifically with advisory, up 89% compared to a year ago. Overall, investment banking was up 48%, so these are big jumps. However, looking ahead, they are pointing to some tepid or a pullback slightly from at least the pipeline that they've been talking about for a few quarters now as being robust, very strong. And that's what we're seeing here in the numbers. You've actually started to see that come through. Now, in future quarters, if that starts to either slow down or pull back, that could be what they're signaling here in terms of the pipeline not being as strong as they have seen in the previous quarters.
So what does this mean for JP Morgan, Citi, Wells that we get tomorrow, and then Morgan Stanley later down the line?
I think that the first metrics that will be looked at is trading. Will the equity desks at these other banks, especially JP Morgan, Citi, they're expected to come in strong. I think that that is something that has been well telegraphed and probably baked into the earnings, the metrics that analysts are at least projecting. Investment banking, we're going to listen for more signals about the future ahead. I think that right now, yes, the numbers are important, but it's what the pipeline looks like, and that's why this detail that they're giving today from Goldman is very important to listen out for. Is that the same case for other banks that report tomorrow? And then we'll finish the week with Bank of America, Morgan Stanley, especially for Morgan Stanley. Will their trading desk perhaps even surpass Goldman's record right now that they're kicking it off with a pretty strong start?
All right, Catherine Doherty, thanks very much for that. Cato covers Goldman Sachs and the banks for us. On the other side, I say that all the time, but I mean on the other side of the office. Bloomberg News is over there. Bloomberg TV and radio is over here.
Still the same side of like our universe.
We're all together.
I get what you're saying.
We're all together.
Yes, I got you.
You can follow her coverage, our coverage of Goldman earnings by typing up TLIV Go on your Bloomberg terminal. T-Live is the way to get the live blog.
Now, back to the geopolitics of the moment. Oil is back above $100 a barrel. The U.S. military is preparing to implement a blockade on maritime traffic through the Strait of Hormuz. President Trump speaking yesterday after talks with Iran broke down.
I don't care if they come back or not. If they don't come back, I'm fine. Their military is gone. Their missiles are largely depleted. The manufacturing capability for missiles and drones is largely defeated.
All right, so it doesn't make a difference to President Trump, but Iran has said it is willing to continue with discussions, with talks after just 21 hours of talks so far. Joining us now is Alex Longley, Bloomberg reporter covering oil and shipping markets. Alex, I just mentioned that headline because we saw a little bit of a blip in futures, a little bit of a drop in crude. We're still up 7% on Brent right now and a similar figure on WTI. What do we know about this blockade? Which ships will be able to get through the Strait of Hormuz and which will be stopped?
Yeah, so we've just started to get some of the details on the blockade. The US has kind of put out a message to shipping in the region, and it doesn't necessarily say a whole lot. It says that all Iranian ports will be blocked, that it will include ports outside of the Strait of Hormuz, on the eastern side of the Strait of Hormuz, and it gave a deadline for neutral ships to leave those waters. How this will work in practice, I think, is still hugely unknown. There are definitely uncertainties about kind of exactly what the mechanism will look like, but the US has talked about diverting, capturing, and taking other measures around ships, and I think that's what we're going to be looking for in the coming hours and coming days as to the kind of the first moves towards doing those kinds of things, what they look like, and where that starts to happen.
Alex, in thinking about who this is likely to be most painful for, perhaps Iranians if they don't get extra revenue coming in from selling barrels of oil, but is this really aimed at the Chinese, perhaps? Who suffers as a consequence of having even less barrels of oil come through the Strait of Hormuz?
Well, there's a whole host of people. Again, if you take President Trump at his word, and if you assume that this is a fully effective blockade of Iranian oil and that Iranian oil exports somehow went to zero, then obviously that would be extremely painful for the Iranian economy, which relies on its kind of commodity revenues and has done in the years prior to this war. I think one very important thing to keep in mind here is that the primary flow of oil in the Middle East that has been untouched from this conflict is Iranian oil. And that has kept the market well supplied. We even saw the US just a few weeks ago waiving sanctions on Iranian oil to try and keep the market well supplied on parts of the Iranian oil sector at least. And so once you start removing those barrels from the market as well as all the other ones that we've lost so far, pretty much everyone is going to suffer, because it's going to mean, if you do lose Iranian supplies, it's almost certainly going to mean higher oil prices for everyone in the world.
Alex, thank you very much. That's Bloomberg's Alex Longley. Now, Wall Street strategists are saying that today is an opportunity to buy the dip, if we even really get a dip. Morgan Stanley's Mike Wilson says earnings growth will shield the S&P from Iran war risk, and now is a good time to buy any drop. JP Morgan also says buy the dip, noting that stocks are historically resilient to oil shocks. Let's discuss with Bloomberg macro strategist Michael Ball. And Michael, is that why less energy flows through? As Alex was saying, it hurts everyone. The price of Brent back above $100 a barrel, and stocks are down, let's see, a mere 0.4%.
Yeah, it's like sort of the Madonna song, Living on a Prayer here. It does seem a little unrealistic. Earnings haven't been affected yet. Guidance is still improving. We know that back last week we saw momentum factor outperforming. Everyone was going back into AI-adjacent trades, so the secular kind of CapEx story reasserted itself, even though now this will be more costly. There's more logistical implementation problems because of higher diesel costs and higher energy costs. So all of that now is more questioned about the profitability of getting AI to the next level of this cycle. So I hear you guys. I'm a little doubtful. I think we have now lost 2 million barrels, Alex just said. That's actually even tighter now for Asia. Now, we saw exports out of basically Taiwan and Singapore all going through the roof in Q1, so this has yet to really hit the real data. But looking forward, we're going to have to think about this a little differently, and that's where we are now.
I just want to point out that Madonna did not write that song. Okay. You're referencing John Bon Jovi from 1986.
She has a prayer-related song, but it's not that one.
Sorry.
Like a prayer.
Like a prayer, that's what it is.
Yes, yeah.
My bad. Yeah, it's been one of these mornings where my head's a little scrambled still, and the weekend was busy, as you guys know.
Yes. Well, I totally understand that. But why do we see, markets not reacting to any of this negative news? In terms of stocks, we're still near all-time highs. In terms of oil, we're off all-time highs, at least for non-dated contracts. And then in terms of yields, we're floating up, but still at 433 on the 10-year. We're still stuck in ranges here.
Yeah, I mean, again, the price part came down, the earnings part has gone up, so the valuations now look more attractive, and that's what Morgan Stanley and JP Morgan are telling us. And the U.S. is more insulated. That story is really gaining traction, right? So now all the rotation we saw into Europe and EM potentially slows or comes back out into the more insulated American stock market that has a better AI secular story to latch onto, now at better entry levels.
All right, insulated in terms of the AI is a big, CapEx is a big driver here. But we're not really insulated on the oil part, right? Because if they can't get oil out of the Strait, they're coming here to buy it from us and bidding the price up.
Yes, and that's exactly what's happening. So you've seen the sort of logistics of the oil markets completely changing underneath. And that's why actually on delivery now is at about $140 a barrel, not this 110 or 100 level that we're seeing in the front month. So what's actually happening in spot is much tighter. And when you think about products, that's got even crazier because getting jet fuel, getting diesel, getting propane, all these things are becoming much worse. And Asia's had to shut in. So actual activity now, whether it's people turning ferries and buses off or the factories starting to close, is really occurring. And as we know, that will affect global earnings. And we are not insulated from that with about 40% of the U.S. earnings coming from abroad.
Are we also only just now starting to face the reality of higher oil? Because it takes time for these tankers to get out. And everything that's been delivered to this point has been the pre-war oil price. Presumably, just right now is when you're starting to get oil come out that is actually priced at these levels.
And by the way, everyone's been pulling levers to blunt the surge of costs, right? So you've had, as Alex was just saying, we took sanctions off of Iranian oil, which is insane. We took sanctions off of Russian oil, which makes a lot more sense. You have the Europeans who are lowering taxes on energy. Everyone's trying to blunt that surge in costs, and so it's going to hit maybe harder like a coiled spring when it actually happens.
Absolutely, and finally some of the last shipments that got out before the Strait really closed are hitting the ports now. So to your point, that's absolutely happening. Also, inventories now are changing. If you're a government, you are okay drawing down inventories, but now because of defensive needs or national security concerns, you have to be a little bit more concerned if this lasts longer. So this is no longer sort of this temporary shock positioning. Now we have to take longer term plans, which means much more curtailment, which means less real economic activity.
All right, Michael, great to have you here on the desk with us. Really appreciate your contributions. Michael Ball from the MLive team. He writes about stocks and bonds and less. about 80s rock and roll. Check on the markets right now. You do see a light drop in futures, only 0.4% on the benchmark index and on the NASDAQ, and you continue to see these gains in crude, but I will say only 6 or 7 or 8% here, because you may have expected much bigger jumps when you saw the tweets from the president that we would block the Strait of Hormuz that we were trying to get open. Let's take a look at some of the other movers on our radar. Next week, SanDisk will join the NASDAQ 100 with shares up so far this year a mere 250%.
That's good for them. Okay, ConAgra named former JM Smucker president and COO John Brace as its new CEO, and Hexagon agreeing to buy Baker Hughes Waygate Technologies unit. That's going to be for just under $1.5 billion in cash.
Coming up, KBW's Chris McGrady joins us on Goldman's bond trading miss, and he'll tell us where his firm suggests investors put their money going into the second quarter. All that and more coming up on Open Interest. At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Let's get to high interest now. Look what's making headlines around the world. Hungary's new leader, Peter Magyar, is moving quickly after a landslide win over Prime Minister Viktor Orban, who had backing from both President Trump and Russian President Vladimir Putin. Magyar now pledges to restore the rule of law, unlock frozen EU funds, improve ties with Ukraine, and bring Hungary back into the European mainstream. Pope Leo XIV is doubling down on condemnation of the Iran war, urging peace and dialogue despite sharp attacks from President Trump. The clash began on Friday when the Pope posted, "God does not bless conflict," slamming the U.S. war with Iran and Defense Secretary Pete Hegseth. Trump fired back, saying he doesn't want a pope okay with Iran getting nuclear weapons, then escalated further, posting an image of himself as a Christ-like figure healing a sick man. That's not Jeffrey Epstein, although a lot of people have said, is that Jeffrey Epstein? Wall Street's biggest banks are set to post a record $18 billion in stock trading revenue for the first quarter, driven by the Iran war and rising anxiety over AI's economic impacts. As earnings season begins, investors are watching for executive commentary on tensions in the Middle East, as well as private credit and AI.
And we got the early look this morning after Goldman Sachs reported at 7:30 a.m. It was a record quarter for equity trading, but fixed income, that disappointed. Joining us now for more on these results is KBW Head of U.S. Bank Research, Chris McGrady. Chris, shares down somewhat sharply this morning. What did you make of the results from Goldman?
Hey, good morning. Thanks for having me back. The results were good, right? The top line beat. Revenues were stronger. M&A was up sharply year on year. Trading results were a little mixed. And so with the stock at 15 times earnings and 2.7 times tangible book, it does come down to expectations. So I think some of the weakness this morning is related to the quarter, and some of it is the macro.
So we teased you would tell investors where to put their money. In banks, Chris, what are your best bets right now, even knowing that we still have a lot of earnings to come out?
We still think the bigger banks are the place to be. We've been big on Citigroup. We like Citigroup not only for the quarter. We think the May 7 Investor Day is a really pivotal moment for the company's evolution, right? We think this year the ROE of 10 to 11% is going to be achieved, and we think how they lay that out next month and that path towards the medium to longer term return on equity is going to be really important. And that stock trades at a little over tangible book today and below forward tangible. So Citi's one of our top picks.
I do just wonder, Chris, we're going to hear from David Solomon and the rest of Goldman Sachs in just over 10 minutes' time when they have their earnings call. But from the commentary we got so far in their earnings release, Solomon said the geopolitical landscape remains very complex, so disciplined risk management must remain core to how we operate. Some have tied this to a slightly decreased investment banking fee backlog. Chris, do you think that there's an expectation that after a banner Q1 for M&A, that can't sustain itself given the volatility that has arrived and is likely to continue?
Right. The commentary in the release was the backlog's down slightly from last quarter. Again, off a very, very strong number. But if you go back into the beginning of the year, as we've been talking about with investors, the M&A outlook for the financial sector, for the broader S&P, for the globe, is very, very strong. There's been pent-up demand. We think, volatility will, lead to some timing discussions. But overall, expectations are investment banking is going to have a very, very strong year.
On credit, things still look pretty stable as well. Where would the stress show up first, I guess, if this macro backdrop starts to really deteriorate? I can't imagine that it's not bad already, but we still have a strong consumer. We still have strong CRE, strong corporate. Where do you see weakness coming if it gets worse?
I would agree, Matt. The consumer is very, bifurcated, but overall resilient. We look for employment being a really important gauge to dictate the outlook for credit. We expect overall broader credit quality, not just the largest banks, but for the 4,000 banks in the country. We think results over the next couple of weeks will be very good. We are watching private credit closely. We are watching the consumer closely. The conflict in Iran is certainly important. The duration of $100 oil is really important as you get into the summer. But the consumer and the economy has proved resilient over many episodes of volatility in the past few years.
Private credit is part of the reason that some of the banking shares sold off only a few months ago, or a month or so ago, Chris. If that does show up anywhere in banking results, where would that show up? Is it in asset management with less flows? Do you expect CEO commentary on it? What are the things you're looking out for?
We're definitely looking for more disclosures, and the banks have given disclosures when appropriate. If you go back in time, commercial real estate, office, when that period of those assets were under stress, the banks responded and gave good color. The industry got through that. I think from private credit's perspective, it's obviously the direct credit costs, but also the source of growth. It's been a really important asset class of growth for the banks over the past several years. Could that slow as haircuts increase? Absolutely. So we're looking for a combination of growth and direct credit costs.
All right, Chris. I just want to ask quickly about the multiples. I'm looking at 17 for Citi. I'm looking at much lower numbers for other banks, but you like Citi. Where do you see cheap shares to pick up here?
So Citi, I think, is still a tangible book value story, right? The company's under earning relative to its potential. It's delivering a 10 to 11% ROTCE, which therefore they're just around their cost of capital. But if you fast forward over the next couple of years, that multiple should improve as the ROE goes into the low to mid-teens. Beyond Citi, big picture, we think the biggest banks over time should get the largest multiples. And that's the opposite of what happened at the start of my career when the largest banks traded at the cheapest multiples and the smaller banks traded at the higher multiples. We think the resiliency, the diversification of these large bank business models and the resiliency of the ROEs in the mid to upper teens, that is warranting of a higher multiple relative to history.
Hey, Chris, if I can jump in, literally 30 seconds here, but a viewer wants to know, what banks have the most exposure to private credit?
Well, there's a direct correlation in size. So the largest banks have more private credit. The smaller banks, the community banks, the majority of those 4,000 banks in the country do not have meaningful exposure. But I think it's important to disaggregate private credit. Private credit doesn't mean necessarily higher risk. There's a lot of assets in private credit, capital call lending, mortgage warehouse. These are historically zero or no loss assets, but there are pieces of the private credit spectrum that warrant monitoring.
All right, Chris, great to get your take. Chris McGrady there, KBW head of U.S. Bank Research. Coming up, RBC's Lori Calvasina says the S&P looks to have reached a fragile and foggy bottom, but we'll ask her about the multiples under the surface. This is Open Interest.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Minutes until your opening bell. Stocks only lower by 1/3 as the price of oil surges after a blockade that will begin in about 30 minutes time in the Strait of Hormuz. Coming up, it's your opening bell. world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We are moments away from the start of trading on Wall Street. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at futures that are still down, but even less so now. Only 0.3% on the S&P. NASDAQ futures down about 0.25%. This after it looked like talks failed in Islamabad. President Trump said he doesn't care if the Iranians come back to the table. He's going to block the Strait of Hormuz anyway, although the Iranians now have said they are willing to come back for talks. You hear the opening bell down on the NASDAQ market site. Live On New York is like an organ donor foundation. They're celebrating like legends of the organ donor cause. And Phil Lesh, the bassist, former bassist for the Grateful Dead, rest in peace, was a huge organ donor dude, which you'd know if you went to any Dead shows, Danny. Everybody's looking at this big D with what looks like a marijuana leaf in the center, but it's not. At least I assume it's not, because recreational marijuana is still illegal in Texas. This is a business group of people with the mayor of Dallas right there in the center, Eric Johnson, ringing the bell at the New York Stock Exchange, celebrating Y'all Street, but on Wall Street. So I think it's kind of interesting. And I didn't realize they opened it up like that.
Swift exit.
It's pretty cool.
They should probably wait till the cameras aren't rolling.
They're
to
all
do that.
splitting.
There you go. Maybe it was like a green torch or something. I'm not sure what that was. Anyway, Matt, here at the Open, I'm looking at shares of Goldman Sachs. They're down nearly 4%, despite the fact it had a huge blockbuster quarter for equity trading, $5.3 billion, blowing out the previous high water mark, which was themselves last quarter. FIC missed. Maybe that's why there's some concerns. And David Solomon also talking about geopolitical concerns and leading to them allowing them to be a little bit more cautious. The earnings call kicks off right as we speak, so we'll also bring you any headlines coming from that, Matt.
All right, we look forward to, and we'll bring you, headlines from the Goldman Sachs call. I'm just looking here at travel stocks. They are falling as they face headwinds from rising fuel prices and a pullback on consumer spending due to rising fuel prices. So inflation may be hurting them. You can see Carnival, Royal Caribbean, American, and United all down, but really across the board, travel stocks getting hit today. RBC head of U.S. equity strategy, Lori Calvasina, says earnings will give crucial insights into how the war in the Middle East will ultimately impact the U.S. economy. She writes that if the fundamental narrative around the war or its impacts changes, there is room room from a valuation perspective for stocks to fall again, perhaps even more than they did before. RBC maintains its price target, though, on the S&P of 77.50, which is pretty punchy considering a war in the Middle East and a doubling of crude prices in a couple of months. Lori Calvasina joins us on set now. It's pretty crazy that we can still, go back to and you think even beat all-time highs as we look at what appears to be a quagmire in Iran.
Yeah, so, I would say our 77.50 target, we do our price target a little bit differently than most people. It's not a December 31st number, it's a 12-month forward look, and we update it monthly. And we're very strict with the numbers. Even that, I took my valuation model, which produces a fair value estimate of 77.59, and, put in some pretty onerous assumptions. I cut the bottom-up consensus for earnings over that time period by 5%, just a haircut, just kind of an arbitrary haircut. I also, for the PE assumption, baked in 3.3% inflation, a Fed that does nothing, and 10-year yields of 4.5%. So I can still make the math work. Even within that assumption, though, we are looking for a market that, if it is going to climb higher, has to be on the backs of a solid economy and a solid earnings backdrop that can take some damage from what's going on in the Middle East, but not too much. Obviously, we are kind of walking along a razor's edge, but that is what the math is telling us right now.
It's also a market that really has not, at least for equities, experienced much stress. We didn't get anything close to a 10% drop, maybe around 7%, which I guess you could round up to 10, but still, we didn't get a correction. I was reading through Mike Wilson and Morgan Stanley's call, basically saying, buy any dip, and I was looking, what was the dip? And his sort of thesis is that there was one. You had more than half of Russell 3000 stocks that were down at least 20%. Earnings multiples fell 18% from the October peak. So, Lori, was that us pricing it into the market?
So on our calculations, if you look from the late January high on the S&P to the low we had in March, it was a 9.1% drop. That's within what we call a tier 1 garden variety pullback. We characterize a growth scare as 14 to 20%. We've had 5 of those since the financial crisis, 2010, 2011, 15, 16, 18, and 2025. While my target, I think, is pretty similar to Mike's, I would respectfully disagree with him on the idea that we hit a hold your nose and buy moment from either a valuation or a sentiment perspective. Now, we do think that the froth came out of the market on both of those, which permitted, when the narrative changed on the war, to allow stocks to move higher. That is very different, though, from saying things were washed out. Russell 2000 is my old stomping ground. I spent 7 years, I think it was, maybe more, I've lost count at this point, where that was all I did on a day-to-day basis. So we watch the Russell 2000 valuations very, very closely because they are a good washout barometer. And what we have seen since the financial crisis is that you hit 11 to 13 times, even last year, even if you go back to 2023, even if you go back to 2022. In fact, each of those last 3, we hit, I think, like 12.2, 12.5, 12.6 times on the Russell PE. That is recession territory. What we did this time around was not a washout. It was 14.7. And while if you look at a similar analysis on the S&P 500, we hit the tariff lows, we did not hit the lows of COVID. We did not hit the lows of 2018, and we did not hit the lows of 2022. So we disagree.
By the way, why is that, Lori? I get your disagreement, and you make a strong argument.
Yeah.
Maybe Mike will come on here and push back. But why is it that we're increasingly sanguine when it comes to geopolitical problems? I mean, I get that COVID maybe was a much bigger, but this is still a war in the Middle East, the closure of the Straits of Hormuz. At least some arguing that we're angering a nuclear-capable, eventually, power. So, it sounds very, very bad, and yet, to Danny's point, we didn't even come down 10%. Oil doubled, but it didn't get back to its highs of the great financial crisis. It doesn't feel that rough.
So we did a survey of our analysts a couple days after the war started, and we asked them to assess the earnings impact from higher oil, the Middle East revenue exposure directly, and then the knock-on effects from the crisis. And what we found was that risk was identified in consumer staples, to some extent in consumer discretionary, and then the materials sector. And what we saw for most of the other sectors was our analysts were saying, if this was a relatively short duration conflict, and we don't know exactly what short duration is, right? We're hearing companies saying the same thing, but we don't know, is that another month, is that another week? We're going to get color on that in this reporting season, but generally...
It's important to note on this program especially that we don't know what that means. There's no Webster's definition for short duration.
Well, look, analysts have to go out and ask these questions on earnings call. The financial journalism community has to ask CEOs these questions. Are we talking about a month? Are we talking about 3 months? I have seen some companies in the commentary we've read refer to the idea of of 1 to 2 quarters, 3 to 6 months. I can count them on 2 hands. So it's certainly not everybody, but those are the breadcrumbs I've been able to pick up. But what we did see from our survey work, and we've been hearing from the company commentary, that there's a certain window this thing can get done within, and it's not going to really damage earnings all that much. Now, we don't know exactly what that window is, and to be fair, a lot of companies have not really been hit with direct impacts yet. So that tune may change once they actually start to get into the soup.
We did ask Danny, a congressman once, remember?
Yes.
Yeah.
So
What's
Matt is referring
to,
I asked what short-term actually means, and he told me to look it up in the dictionary.
Oh my gosh. Okay.
But short-term can have a different meaning. And to your point, what it means for companies is so different. But Lori, I mean, companies have to know. I was having this discussion with someone over the weekend, this idea that the oil that's been shipped out, that is now reaching shores, has until this point, had been pre-crisis levels. Now we're finally getting barrels of oil on the market that are priced at, the $140 coming through the Strait of Hormuz. So when companies report earnings, will they actually have any of the evidence of energy stress? And if they don't, will they hint towards more to come, or do they want to kind of reserve that for when they see actual impact?
So what we know is that companies have also been referring to the idea that just like the analyst community, they're running their stress tests, they're doing their scenarios, they're looking into their supply chain. So hopefully they will be able to give us better answers. I do look back to the tariff episode of last year when it felt like people were a little too conservative out of the gate, and then had to kind of go and walk back some of those downgrades to forecast later on. Perhaps that's going to make companies a little more reticent to kitchen sink things this time around. I think that's fair. I do think that we are in a little bit of a discovery process with where you have to go. But the key thing, going back to the commentary on are you washed out, what evaluations look like, the difference between what we just went through with that 9.1% drop and some of these other places where we've gone deeper in the past to deeper valuation levels, people have genuinely been concerned and scared, I would say, about a recession coming around the bend. And we never got that, right, in this 9% drawdown that we have. We could still get it, and then I would argue markets do have another step function down. But right now, it's an elevated risk. It's uncomfortably high. It's not really the base case at this point. So we do think stocks can stay on that path. Is our confidence super high? Not as high as we would like.
Hey, Lori, just a quick question. Matt and I have continued to be fascinated by market positioning in all of this, and it feels like whenever we get risk on and there's more stress in the market, software stocks go up. And then whenever we get some sort of resolution, or it looks like a little bit more peace to come, software stocks go down. How much of this is just jockeying back and forth between hedge funds shorting and covering those shorts? I'm looking at IGV. It's up 1% this morning.
I feel like I don't really know any big bulls fundamentally on the software space. When I look at my valuation work, we tend to look at it both on an absolute basis, just the Russell 3000 group. And it's hit some interesting lows. And if you look at it relative to semis, it hit some interesting lows where I get a little
bottom feeders.
Yeah, I think you can say some people are making that argument, but where I push back just a little bit on it is that software has seen just the evaporation of its upward revisions, but hasn't really had a downward revision cycle. So if you want to kind of hold your nose and buy an industry, we like to see them washed out on earnings revisions and valuation. You're getting one, but not the other. So I'm not going to fight with people on this one, but it's not quite where I would want to be to kind of make that call. I do think generally, though, when we're in this tier 1 pullback kind of drawdown, that people are playing safety through tech, through longer-term secular growth. And obviously that thesis has been challenged here, but a lot of people do also do this stuff through ETFs, right? Or the broad market does have a decent amount of exposure here as well.
Yeah. Again, up 1% this morning in a market that's overall down. Lori, thank you so much for joining. We're just out of time. Lori Calvasina, RBC Head of U.S. Equity Strategy. And let's get a check on your equity market. You'll see that in some of the biggest gainers, that there are a lot of software stocks that are at the top of the pile. Intel, by the way, if we go over there, has been on a 9-day winning streak. Make this number 10. It's already added $100 billion in market cap. Again, what is it? Is it short covering? Is it good news? Is it just momentum? Either way, again, you see a lot of chip makers doing well. Lam Research, for example, Broadcom, Marvell. So a really good day for a lot of tech-related companies in the chip-making space. Not good for the mega cap tech. NVIDIA is down. I guess some other semis are down too. I don't know. It's a strange market today. Micron down. NXP is down. Analog is also down. Okay, so the semis are down, and then some of the other software companies are up. If you look at the breakdown of the overall index, no surprise, energy is up alongside the price of oil, which is surging more than 7% this morning. At the bottom of the pile, consumer discretionary financials, that's being dragged down by Goldman Sachs earnings. That sector down by 0.6%, Matt.
You know what? We're going to continue to talk about Goldman Sachs earnings because, as you mentioned, the conference call kicking off, fixed income trading suffers as equity trading soars. Our Bloomberg Intelligence senior bank analyst joins us next on that. This is Bloomberg Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Up in our zone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
$15 minutes into your trading day. Let's get some top calls, the analyst action we're watching. First up, Bank of America. They've cut NXP Semiconductors. They say growth looks limited, no real AI angle, weak EV exposure, and over-reliance on phones. Those shares down 2%. Next up, Goldman Sachs is turning bearish on Best Buy, giving it a double downgrade. It's now to sell. The firm says that higher memory costs are about to make laptops and computers pricier after the first quarter. That could squeeze margins as shoppers opt for less expensive models. Shares down 2.8%. Finally, Oppenheimer, they've upgraded Blackstone, saying that the firm is a high-quality company, now trading at a relatively cheap level, and sees current dislocation in shares as an opportunity for investors. Shares up 1 1/3%, Matt.
All right, now Goldman Sachs equity traders, as we've been telling you, beat their own quarterly revenue record by more than $1 billion and made a new Guinness Book of World Records record for equity revenue at $5.33 billion in the quarter. But shares are down as bond traders missed expectations. Let's bring in Bloomberg Intelligence senior U.S. bank analyst Herman Chang here with us at the desk. So Herman, you know, fixed income trading revenue, as well as currencies and commodities. missed by, I feel like, a lot. $800 million, the street's estimate, and down 10% on the same quarter last year. Why?
Right. So heading into the quarter, the increased volatility that we saw in March was expected to lift results for trading, especially in FICC across the group. So you can point to the fact that JP Morgan and Citi were expecting trading revenue to be up 15% this quarter, year over year. And then Goldman comes out and misses. So that's the reason why I think a lot of folks got caught off guard because of the large miss.
A big miss like that, do you and Allison Williams and Neil Sipes, do you all redo your estimates for the banks coming out tomorrow and Wednesday and Thursday?
It does put a bit more of a damper on expectations going forward. We'll see tomorrow if Goldman was more of an outlier or this was more of something more systemic across the group for the quarter. But right now we're just in a wait and see mode because, again, this was such a surprise for the entire group.
I mean, everything else looked very strong. I wonder if, in terms of trying to decide or decipher why the stock is down 3.5%, if it has to do anything from also Solomon's comments about stress and concern around geopolitical activity and investment banking pipeline that's a little bit weaker than it was at this time last year. Can such a strong quarter continue, especially given macro stresses?
Right. So I would say the FICC miss was something, and also the smaller pipeline as well, because we're heading into the year expecting strong M&A activity, and the comments today sort of put a damper on that. That being said, the banks typically can wade through the volatility as long as it's good volatility. We saw some bad volatility from Goldman this past quarter, though, so it really remains to be seen how things flesh out going forward.
All right, Herman, thanks so much for joining us. Bloomberg Intelligence Senior U.S. Banks Analyst, Herman Chan. And you can follow our coverage of Goldman Sachs earnings on your Bloomberg terminal. Just type TLIV GO. You can follow Herman's work and the work of his colleagues by typing BIGO on your terminal. Or if you're in an individual equity, I type BICO, to see who's covering that stock. Coming up, the blockade deadline at 10 a.m. Eastern, just 11 minutes from now.
As you know, at 10 o'clock tomorrow, we have a blockade going into effect. That'll be 10 o'clock tomorrow. Other nations are working so that Iran will not be able to sell oil, and that will be very effective.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi in Beirut, and this is Bloomberg.
President Trump's blockade deadline approaches in just 7 minutes' time, 10 a.m. Eastern. Bloomberg opinion columnist Mark Champion warning that the strategy could backfire. Quote, the blockade itself is a throwdown the U.S. can't win. He joins us now. Mark, why is this perhaps a losing strategy from the United States?
Well, obviously we'll see what happens, but I am skeptical that this can really work. It is extraordinary that, during this war, we've got almost 7 weeks of it now, Iran has been able to close the strait to other countries' tankers and exports, but has been able to get its own out. That has resulted, between that and the U.S. easing of sanctions in order to try and keep a cap on crude oil prices, that has resulted in a really large windfall for the Iranian state in the midst of the war. So this obviously is designed to kind of close that loophole and to put pressure on the Iranians so that they'll come back to the negotiating table and make more concessions. The reason I'm skeptical is simply that the Iranians have shown from the very start that they have a much higher pain threshold than either President Trump, the U.S., or the global economy. And so, the bottom line is we're simply, we're actually, furthering the closure of the strait. There will be less oil on the market. Prices presumably will go up, and then it's a waiting game, and it's just a question of who can wait longer.
Right. Nouriel Roubini says it's a game of chicken that Iran will win. I got to ask about the nuclear side of things, Mark, because I hear conflicting messages out of, Mike Turner, for example, was on Face the Nation with Margaret Brennan yesterday, and she was asking about the Strait of Hormuz, and he was deflecting and saying, look, we just can't have a nuclear Iran. They can't have a nuclear weapon. But President Trump told us last year he'd obliterated completely and totally their nuclear capabilities, which is believable when you look at the B-2 bomber strikes on Fordo, where that highly enriched uranium was supposed to be. And he continues, the president, in the last month to say it's only nuclear dust. He continues to say it's buried under rubble that you just can't get to. Like, if they don't have the uranium or the tools to enrich it, why are we so worried about them getting a nuclear weapon?
That's a good question. I think there's several parts to it. The most simple is that in order to get, make sense of the war and the costs that it has incurred, we had nuclear negotiations going on just before the war, and they were making some kind of progress. But what the U.S. said was, we need a complete ceasing of all uranium enrichment and end to the program. So really what the U.S. needs in order to say that this war made any sense is for the Iranians to say, okay, we will back down now and we will have no program. The Iranians haven't done that. As to why we're afraid of of a weapon itself, a lot of the stuff that has been said about, just 2 weeks away, we have to hit, and it is nonsense. They are, their last attacks in June, they set back any program that the Iranians had by a long way, but they still have heavily enriched uranium in some quantities somewhere buried, and they have the knowledge to rebuild what was destroyed. So in time, they can do it.
Mark, great to get your take. Thanks so much for joining us. Mark Champion writes for Bloomberg Opinion. If you've got a terminal in front of you, you can type OPIN GO to see all of Bloomberg Opinion's stories. Coming up in the next hour, Ethan Devitt tells us if she would buy the dip, what little dip there is. Plus, the CEO of Slate Auto talks about a $20,000 pickup truck. This is Bloomberg.
tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Danny Berger, and despite oil spiking, a blockade just starting on the Strait of Hormuz, we have turned around, and we are now in the green for equity markets.
Yeah, it's pretty shocking to see a green. It's only 0.04% on the S&P, but it's up. This hour, President Trump moves to block the Strait of Hormuz after peace talks reportedly collapsed over the weekend.
And oil surges back above $100 per barrel as Trump's blockade threat deepens the global energy supply shock.
Plus, Goldman Sachs kicks off earnings season under the shadow of the Iran war, private credit stress, and AI disruption. Everyone's worried about a drop in FICC trading, or at least that's what seems to be dragging on the shares.
And David Solomon warning about geopolitical angst, and that's our top story this morning. Iran warning it would target ports across the Persian Gulf if its shipping hubs are threatened as President Trump moves ahead with a blockade of Tehran-linked vessels. Trump spoke yesterday after talks with Iran broke down.
I don't care if they come back or not. If they don't come back, I'm fine.
Safe.
Oil prices are back above $100 a barrel. Gas prices here holding steady at an average $4.13 a gallon. The blockade begins without the help of a key overseas ally.
I'm Vicky Barker in London, just in case Donald Trump was wondering.
We're not supporting the blockade.
British Prime Minister Keir Starmer telling BBC Radio he opposes any measures which keep the Strait of Hormuz closed to navigation.
That means that oil and gas is not getting to market. That means the price is going up. That means everybody listening to this is facing higher energy bills.
Pope Leo says he has no fear after President Trump attacked his anti-war stance.
I know how difficult it is to forgive. However, as conflicts continue to multiply throughout the world, we cannot add resentment upon resentment, generation after generation.
The American-born Pope speaking in Algeria. The president has posted images apparently generated by AI depicting him as a Jesus-like figure in a long white robe. In one, he places a hand on the forehead of a sick man. Democrat Eric Swalwell has suspended his bid for California governor amid sex assault allegations, one from a former staffer. CBS's Caitlin Huey-Burns is on Capitol Hill.
The congressman is insisting that he'll fight what he calls false allegations, even as some of his own colleagues are calling on him to leave Congress.
Only 6 House members have ever been expelled, the most recent, George Santos. Roblox says it's introducing new age-based accounts for kids in June as part of an effort to step up safety measures on its online gaming platform. Users between 5 and 8 will be automatically assigned to a Roblox Kids account. The 9 to 15-year-old set an account called Roblox Select. Tech contributor Insure.
This is coming at a time when many governments around the world are increasingly considering laws and rules that outright ban young people from using social media and online services until they are closer to adulthood.
This is CBS News.
Go to the ends of the earth, half a world away. Reach for the stars.
If I take time to think, they might go get Brad.
On CBS, Sunday morning.
You know that Big Bargain detergent jug is 80% water, right? It doesn't clean as well.
80% water? I thought I was getting a better deal because it's so big.
If you want a better clean, Tide Pods are only 12% water. The rest is pure, concentrated cleaning ingredients.
Oh, let me make an announcement.
Attention shoppers, if you want a real deal, try Tide Pods.
Stop paying for watered-down detergents. Pay for clean. If it's got to be clean, it's got to be Tide Pods. Water content based on the leading bargain liquid detergent.
Pump up the volume. Business moves fast. Orders roll in, deadlines close in. When you ship with USPS Ground Advantage, you can keep up with confidence. Every package stays in our secure network from dock to door. And with nationwide reach, dependable tracking, and upfront affordable pricing, you get built-in peace of mind. You run the business. We run the routes. Visit USPS.com/groundadvantage to learn more.
Now to Augusta.
For the second straight year, Rory McIlroy wore the green jacket at the Masters on CBS.
Rory is a rare repeat winner at Augusta.
He's the first to go back-to-back at golf's biggest event since Tiger Woods in 2002.
I can't believe I waited 17 years to get one green jacket, and I get two in a row.
McIlroy, who gave up a 6-shot lead during the tournament, edged Scotty Scheffler by 1 stroke. Steve Kathan, CBS News.
A rap star is on the mend. Offset returned to the stage just days after he was shot outside a casino in Florida. He was wheeled into the University of Arkansas's Row Fest over the weekend. Video posted to his Instagram account shows the rapper being unstrapped and standing up and performing a set list that included Bad and Bougie with his band Migos. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
All right, good Monday morning. We are broadcasting live from the New Jersey Institute of Technology in Newark, New Jersey. It's Scarlett Fu, Paul Sweeney. We are here with you. We're going to get a lot of great guests here from NJIT. A lot of professors will be here on site with us, some startup entrepreneurs as well here. I'm a big fan of NJIT. Two of the smartest engineers I've ever met are both graduates of NJIT way back in the day when it was a Newark School of Engineering.
This is a crown jewel for New Jersey, and I think we're trying to make sure that the talent here gets the shout out they deserve.
Absolutely. Some smart people here, probably talking about things I'm not going to really understand, but we'll try to hang with them. Busy day today. Obviously, geopolitics back on the front burner with the Strait of Hormuz. Presumably the blockade started several minutes ago.
Yes.
10 a.m. Wall Street time. We'll stay on top of that news. We'll do that with Dan Williams. He's a reporter for Bloomberg News. He's based in Jerusalem. He'll give us the latest reporting there. Bailey Lipschultz, Bloomberg News senior equities reporter. Mr. Ackman, Pershing Square, they're going to do an IPO. That's going to be
This is not his first go
No,
round.
it's
He's
not.
tried this before.
He has tried this
better luck
before.
this time.
Yeah, we're starting to get some earnings as well from the big banks. Goldman Sachs was today, so we'll talk to Neil Sipes, Bloomberg Intelligence. He's the smart guy on that. And then Rob Barnett is going to join us here. We'll talk about the commodity space, particularly oil here. We do have oil up a little bit here, about 5% here in trading today, but the stocks are mixed. So go figure on what is going to be a big news day. Right now, let's kick everything off with Charlie Pellet and Bloomberg News.
Hi, thank you very much. And here's what's going on. We do have the Dow lower, the S&P, NASDAQ 100 index, Russell 2000, all advancing. This Bloomberg Business Flash brought to you by Eisner Amper. Eisner Amper provides assurance, tax, outsourcing, and advisory services to businesses that need more than a generalist. Whatever the challenge, we have a team for it. EisnerAmper.com. So the Dow is remaining lower, down now by 0.5%, but the S&P is up now by 2 points, a little changed, up by under 0.1%. NASDAQ up 56, and advance there of 0.2%. The VIX just above 20 with a 10-year at 4.31%. The 2-year is currently yielding 3.79%. Gold, meanwhile, down 0.5%, 47.24 the ounce. Oil, the big story. West Texas Intermediate crude holding above $100 a barrel, up 4.4%. Brent crude, 99.83, up by 4.9%. This is President Trump's deadline hits for the U.S. to begin a blockade of the Strait of Hormuz, testing the durability of a fragile ceasefire with Iran and intensifying a global energy crisis. In the meantime, Lori Calvasina, the head of U.S. equity strategy at RBC Capital Markets, was on surveillance this morning. She told us she does see the S&P 500 continuing to power higher.
Look, we reiterated our 77.50 12-month S&P 500 price target this morning. I know it seems odd timing. We do this monthly. It was time to do it. I was a little bit behind because of spring break last week. But the reality is, when we worked through the math, what we saw was that sentiment has been incredibly bearish. That's an often good springboard when you're in periods like these. I would stress, not at hold your nose and buy levels, but for a more contained crisis and market correction, we did the damage we needed to do.
Lori Calvasina of RBC, so she says 77.50, putting that in context, 68.17 where the S&P stands right now. This morning we did hear from Goldman Sachs. Shares trading lower after earnings, down now by 4.4%. Tomorrow, JP Morgan Chase down now by 0.7%. Recapping, S&P 500 index up by just about half a point. I'm Charlie Pellet. Paul and Scarlett back now to NJIT.
All right, Charlie Pellet, thank you so much. We appreciate that. It's Scarlett Fu, Paul Sweeney. We are broadcasting live from the New Jersey Institute of Technology, NJIT, for those of us that are Jersey natives. Here in Newark, New Jersey, some good stuff here, Scarlett. So I thought I'd see more volatility in the markets this morning. So
yeah, it feels pretty quiet given all the news flow. We had this peace talk that went on for more than 20 hours over the weekend that yielded nothing, at least for now. And the U.S. has now begun this blockade that the president threatened in the Strait of Hormuz, and we'll see how that all shakes out. But for now, oil prices are higher, but they're not elevated to the extent that we've seen during other periods of this war.
Right, and they are off the highs here of the day. All right, let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at?
Well, we can go ahead and start off with Goldman Sachs. That's ticker GS. It's falling about 4% today for its biggest intraday drop in a month. That's after the investment bank reported fixed sales and trading for the first quarter that fell pretty short of expectations. And for those unfamiliar, fixed stands for fixed income, currencies, and commodities. Evercore said that while this was an all-in strong quarter for Goldman, it feels like a semi-typical sell the news as expectations were very high going into the print. Also worth noting that many analysts mentioned that the updates on the Iran war from last night are also contributing to broader volatility and maybe making some people less confident about the sustainability of those investment fees.
All right, good stuff. What do you have as your second mover?
Southwest, that's ticker LUV, falling now about 2%. That's after President Trump ordered a blockade of the Strait of Hormuz that presumably is set to begin a little bit earlier today, around 10 a.m. The move prompted oil prices to again rise above $100 per barrel, and obviously worth noting that jet fuel is responsible for as much as 30% of an airline's costs. Airline carriers have really been taking a beating this year as investors continue to question how airlines will be able to keep cost and margins in check amid broader volatility. And Jeffrey's writing that these oil prices will continue to weigh on aerospace names as higher fuel prices impact demand.
Revolution Medicines, what do you got for us?
Yes, that's ticker RVMD, have to bring a healthcare stock, surging about 39% to hit a record high. That's after the drug developer said a late-stage study of its pancreatic cancer treatment met several key goals. The drug nearly doubled the typical survival compared to chemo, which is the current standard of care. And I will say excitement over this drug and the company's status as a potential takeover target has caused the stock to soar by more than 275% over the last year. RBC also writing that they consider the results a major win and highlight that they'd be buyers into strength as there's likely still some upside on the commercial execution piece if this drug ends up getting approved by the FDA.
All right, Avalon, thank you so much. Avalon Purnell is one of our Bloomberg Equities reporters, and for more conversations like this, be sure to subscribe to our Stock Movers reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Paul, we're 12 minutes into this blockade imposed by the U.S. on the Strait of Hormuz.
Let's get the latest reporting on that. Dan Williams joins us. He's a reporter for Bloomberg News. He's based in Jerusalem. Dan, what are the expectations for this blockade here? At the very least, it seems to be ratcheting tensions up even more. What's the latest?
High drama on the high seas, indeed. This was expected. Obviously, it didn't happen spontaneously. The U.S. president announced what could effectively be called a counter-blockade blockade. Basically, the Iranians had established their own control in a response to the war launched on them by the U.S. and Israel on February 28th over that strategic waterway. It became a chokehold in the international economy, given how important it is for petroleum product exports, and really a thorn in the side of the Trump administration as it appeared in recent days and weeks to be seeking an exit ramp here. Now, whatever military gains were achieved in Iran, it would have been very hard for the U.S. president and indeed Israel to walk away, leaving Iran, having effectively ceded to Iran control of that. So what Trump appears to have done now is turn the tables, basically announcing that it's free traffic for all or free traffic for none. He doesn't quite mean that, to judge by the advisories that have followed. This American blockade would apply to ships that call in Iranian ports. Other ships would not be stopped, presumably. Also, ships carrying aid, humanitarian goods, would be allowed through after inspections, it would appear. So it's not a full closure. It is indeed imposing U.S. military control, U.S. military might over that waterway. The question is, will the Iranians rise to this challenge by perhaps trying to run that blockade or encouraging ships that they deal with to run that blockade, which could actually draw American fire on the high seas, or will they see this as posturing by the Americans intended to bring them back to those talks that appear to have stalled in Islamabad on terms more agreeable to the Americans, on terms that might actually bring about a deal?
Right. So you answered the question I was going to go to, which is that talks held this past weekend for a longer-term deal collapsed. Is that it for diplomacy, or are there back-channeling efforts underway?
It doesn't appear to be it for diplomacy. The 2-week ceasefire that was announced last week by the U.S. president, by Iran, still has several days to run on the clock. It's about halfway through now. I don't think anyone is in a rush to call it off. Arguably imposing a blockade, a naval blockade, is an act of war. But given the acts of war that the U.S. president has at his disposal, arguably this is a fairly passive one, a bloodless one, and one that could serve to pressure, and one that the Americans have argued, I think quite convincingly, establishes a new symmetry there given Iranian actions in the Hormuz Strait. So it would appear that they're still open to more talks. We had an American official providing guidance that there may have been a misunderstanding at that first round of talks in Pakistan, that, for example, the Iranian delegation, according to the Americans, had trouble understanding the core American demand, which is for a verifiable end to Iranian nuclear ambitions. Perhaps a bit hard to understand, given that there were 21 hours of negotiations, marathon negotiations held there. But nonetheless, the Iranians are old hands when it comes to extended, protracted negotiations. They may have been seeing this as an opportunity to set a different pace than that set by the U.S. Vice President Vance, who was leading the American delegation.
Dan, do we know whether the U.S. Navy has the assets in place to actually effectuate a blockade? If not, over what time frame are we talking here?
Oh, I think it certainly does. I mean, we've had at least one carrier group based there. This is a floating city, a mini empire in naval terms. The number of ships, the number of weaponry, weapons aboard, even the number of Marines available to perform landings. It's worth remembering that only a couple of weeks ago, there was speculation that the Americans might land those Marines on Karg Island, where some 90% of Iran's oil exports are loaded onto ships. That would have been a kinetic, a violent, and aggressive takeover of those oil exports, a crippling of those oil exports. It appears that Trump has opted for a less violent, less bloody alternative in the form of this blockade. So yes, it has the assets in place. It's certainly something that a major blue water navy, such as that fielded by the Americans, has trained for and is prepared for. And naval blockades really are an institution of naval warfare going back centuries.
Absolutely. Dan Williams, thank you so much. We appreciate that. Dan Williams, he's a reporter for Bloomberg News. He's based in Jerusalem, giving us the latest reporting there on the blockade, which presumably began at 10 a.m. Eastern time right now.
Yeah, but it's still unclear how this blockade actually would work in practice, whether Washington is prepared to do everything it can in terms of enforcing it as well.
Yep.
These are all open-ended questions, and we'll be getting the reporting as it comes through. This is Bloomberg Intelligence. We're reporting live from the New Jersey Institute of Technology campus in beautiful Newark, New Jersey. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:20 on Wall Street. We do check markets all day long here at Bloomberg. We've got NASDAQ higher. The Dow, the S&P, they are both in the red. We've got the S&P swinging between gains and losses. Right now it's 68.14. That is a drop of under 0.1%. The S&P down by half a point. Dow Industrials down 218. Drop there of just about 0.5%. And the Bloomberg Mag 7 index down by 0.1%. 10-year 4.31%. The VIX, by the way, below 20 now. We've got the 2-year 3.78%. Gold is down 0.6%, 47.20 the ounce. And West Texas Intermediate crude up 4.7%, 101 a barrel right now. Among some of the oil majors, they're all higher. ExxonMobil, case in point, up by just about 0.2%. Chevron up by 1%. ConocoPhillips up by about 0.8%. Bottom line here, S&P swinging between gains and losses, up now by 1 point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet, reporting live from our Bloomberg Midtown Manhattan headquarters. Paul Sweeney and Scarlet Fu. This is Bloomberg Intelligence, and we are broadcasting live from NJIT, New Jersey Institute of Technology. We want to first talk a little bit about an IPO that's coming up later this month. Bill Ackman, the billionaire investor, has kicked off formal marketing for the IPO of his closed-end fund and his hedge fund. And this is something Bailey Lipschultz has been covering for us here as our initial public offering reporter. Bailey, this is not Bill Ackman's first go-round with an IPO for his hedge fund and his closed-end fund, is it?
No, it's not. And really, when you look at how this has been playing out and kind of the mission that they've been attempting to kind of achieve, you go back to 2024 when he set out to raise $25 billion, then cut it to $2 billion and ultimately pulled the plug on that. This is now a kind of reinvigorated, rethought out strategy where he will raise money between $5 and $10 billion for the closed-end fund. And if you participate in that, you get a stake in Pershing Square proper. So trying to incentivize to get this deal across the finish line, something that they were not successful doing, call it 2 years ago.
Why is he doing it, and why is he doing it now, Bailey?
He's doing it to bolster assets under management. So he has a fund listed in Europe. You generate fees no matter what off a closed-end fund. It's not like an ETF where you can face some of the redemption issues. So bolstering their AUM, bolstering the fees that they're going to generate from this product, among others. Reason to go public. This has been something they've talked about for quite some time. So it kind of is a litmus test, if you will. There's obviously been a lot of debate. Why do people go public? What do they want to achieve? At least from the pitch for Pershing Square is to try to bring potential wealth to retail investors, but certainly a bit of the skeptics see this kind of similar to some of the other strategies we've seen the likes of a Carlyle or KKR take over the last decade or so.
And Bailey, just remind us of how Bill Ackman's strategy has shifted over the years, because once upon a time he was a big activist investor, and he's kind of morphed into more trying to be like a Warren Buffett, you know, taking these big stakes in other companies for long-term investments. Walk us through what that has looked like.
Yeah, it's been a big shift. To your point, we all remember Herbalife and the back and forth between Ackman and Icahn, yes. And now if you look at the holdings, whether it's in his fund or in the European listed closed-end fund, we're talking about some positions in some pretty big companies. You've got Amazon.com, Howard Hughes, Google, Uber, Meta, some of the bigger names. Obviously, he's been very vocal about Fannie and Freddie and trying to bring them both public, and obviously would benefit from that. So when you look at kind of the development of his career, he very much has leaned into trying to be able to turn Pershing Square into a modern version of Berkshire Hathaway. And interestingly enough, obviously, Buffett has stepped away from Berkshire. Maybe is this a perfect time, at least from the Ackman camp, to step into that spotlight and be kind of a person who can be an investor that folks look at as a North Star? Obviously, it remains to be seen, and this will be a key test of that. But to your point, we've seen a big shift.
Red headline crossing the Bloomberg terminal as we speak. President Trump vows to eliminate Iranian ships close to the U.S. blockade. That's according to Bloomberg News. And we'll have more reporting on that. So, Bailey, what's the expectation here for this offering? Is this going to be a retail-led type of offering, or does this have a lot of institutional demand? What do we know?
It'll be retail-led. They've laid out that they have a good chunk, a few $1 billion kind of earmarked for institutional investors, family offices, and kind of that like. But the big pitch really is for this to be raised predominantly, again, maybe not predominantly, $2.8 billion secured from qualified investors according to Pershing Square, but it is catering to retail investors. And that's why you're seeing it take such a long roadshow. Launching today, expected to price on April 28th. You typically would see in a normal roadshow about 7 to 8 days. This is more than 2 weeks, and the big pitch is being able to interact with the retail investing crowd, much like they tried to do a few years ago, and trying to get people to agree that this is a good investment for them. But if you've paid attention to Bill Ackman and kind of his ventures and adventures, if you will, on X and Twitter, very much trying to lean into the average investor. And that was something they pitched again back in 2024, trying to build Pershing into something similar to Berkshire Hathaway, where they would have, a carnival-esque event every year where people who are investing in the fund could actually be able to meet and interact with management.
And Bailey, so far, no indication that the uncertainty, the geopolitics of it is going to put them off in terms of pursuing this IPO.
No, and they marched forward, and I think that was one of the things, I can't remember if Ackman put it on X or said it in a podcast or something, was kind of pitching that, well, the time to deploy assets is when markets are pulling back, and this actually fits into the strategy in the kind of broader scheme of what they want to do. And again, just trying to simplify the fact that, at least from the Pershing Square corner and the Pershing Square camp, if you launch this deal and do have a longer roadshow, that there is uncertainty and there is a lot of kind of issues with the geopolitical backdrop, but they're continuing to push forward on that. Ultimately, what does this look like? We'll continue to keep an eye on that over the next 2 weeks. But again, it'll be key to see how this prices and what they actually bring in-house on April 28th, because just a few weeks ago, in March, Robinhood Ventures tried to raise $1 billion for a closed-end fund and fell about 30% short of their target. So certainly not the layup that many people might have thought.
Bailey Lipschultz, thanks so much. Appreciate it. As always, Bailey Lipschultz covers all the equity stuff for Bloomberg News. We're back here on site at the New Jersey Institute of Technology in Newark, New Jersey. Our first guest on site, which is very cool, Cassie Hallberg joins us. She's the CEO of NJIT-backed startup Pure Trace Labs. Cassie, thanks so much for being with us. I'm looking at the backgrounds and the reading material that Scarlett and I have for all of our guests today, and one theme runs through it, and I don't know what that theme is, but that theme is PFAS. Can you tell us what PFAS is or are?
Absolutely. So PFAS is sometimes referred to as forever chemicals. They were crazy useful chemicals that were developed after World War II because they are water resistant and heat resistant. So you may know them from your nonstick cookware or from your rainproof rainwear. The problem that we've got with PFAS is that they have gotten out into the environment and they've gotten into the Americans' bloodstream. So 98% of Americans have it in our bloodstream. And unfortunately, it is associated with health conditions such as cancer, birth defects, infertility, even high cholesterol. And one of the things that we're trying to understand is how do we do a better job of locating it? And other companies are also working on how do you do a better job of destroying this, because the chemical bonds are very strong and they've proven very, very persistent in our environment.
Okay, so talk us through what Pure Trace Labs, that you are CEO of, does when it comes to PFAS.
Absolutely. So one of the challenges with PFAS has been testing for them. Our current methodology for testing takes 2 to 3 weeks, is very labor intensive, so it's very expensive. It costs anywhere from $500 to $800. And that means that for the average homeowner, you can't test your own water. Even though the EPA believes that up to half of Americans have PFAS in our water. And so that's basically created a problem. So what Pure Trace Labs has been able to do through a wonderful invention by Dr. Hao Chen is use mass spectrometry and paper spray mass spectrometry, to be precise, in order to test for PFAS. And he can do it in under 3 minutes and with very little labor. And so we can do it at a fraction of the cost. So we like to say we can do it in minutes versus weeks, and we can do it at a third of the cost of what the current methodologies are.
So what is the market here for any type of PFAS detection treatment? Is it something that would be done at the consumer level or the industrial level? Is this like just doing a radon test that I have to do for when I buy my home in New Jersey?
I love the analogy with radon because it's one we use often. So yes, the answer is yes. Industry needs it because they need to be checking that it's not in our consumer packaging. The municipalities need to be doing it to make sure it's not in our water. Our farmers need to be doing it to make sure it's not in their soil, because if it's in the soil, it's going to get into the food supply. So, you know, what we're doing and focusing in on is taking a first little bite, which is, can we bring this to the homeowner market? We know that just under half of all households in America have PFAS in their water. In New Jersey, we believe that that's up to actually about 84%. So we've got the ability to give homeowners the ability to actually test at a very reasonable price. And then more importantly, to your point about radon, we've got the ability to give it to home inspectors. Traditionally, home inspectors can't wait 2 to 3 weeks for a test result. But if we can get them a test result within 1 to 2 days, they can put this into the real estate transaction. It doesn't mean you're going to blow up your real estate transaction, because there are solutions. So you can, if let's say you've got PFAS in your water, there is a solution for all different budgets. You could potentially get a carbon-activated water pitcher. You could use a carbon-activated water from your refrigerator. You can also go all out with reverse osmosis or even a home filtration system, depending on what your budget is and what you personally can do. But you can do things to remove these from your environment.
Okay, but first things first, you got to figure out how much is in there. Talk a little bit about the role that NJIT played in helping Dr. Chen, whose technology this is based on, really figure out this technology.
Yeah, they were amazing, because Dr. Chen walked in and said, I've got this great invention. What do I do? He yelled, Eureka. And what NJIT was able to do through their partner NJII was they actually walked out and started doing some business plans and cases, right? Is there a big enough market out there that it warrants being able to commercialize this? And if you are going to commercialize it, who are you going to target? Who are you going to target first? And what does that look like? So they basically were able to take the business aspect and marry that with the science. And so many universities, we've got brilliant ideas, but we don't necessarily have professors trained in business. And so what NJIT is doing that's incredibly unique is they're bringing business and they're bringing technology together so that we can get those best ideas out into the marketplace.
30 seconds left. How hard is it to raise money these days?
We've been very lucky so far. So we've been able to, we're funded via NJII's investment fund, and we will let you know as we find out if we need more money.
Cassie, thank you so much for joining us. Really appreciate it. Cassie Hallberg, CEO of Pure Trace Labs, which is an NJIT-backed company here looking at PFAS. And being a lifelong resident of the state of New Jersey, I thought I knew everything I had to know about contaminants because, again, I live in New Jersey. So, I mean, I know about this stuff. So I'll have to see.
I've seen Aaron Brockovich. I've seen the movies.
Yep, exactly.
I know about it.
Exactly. Looking at the markets here, it's pretty benign here. Got the S&P kind of flattish. The same for the Dow. NASDAQ's up a little bit. The Dow's down about 170 points, but kind of steady out there. We've got oil up about 5% here. So we'll keep an eye on all of that stuff as well. We'll have more coming up in just a moment. We are broadcasting live from New Jersey Institute of Technology in Newark, New Jersey.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. A U.S. naval blockade of the Strait of Hormuz is now in effect. We've got West Texas Intermediate crude oil up 5.1%, 101.50 a barrel. The Dow lower. Right now, the Dow is down 190, a drop there of 0.4%. S&P 500 index after earlier losses higher, little changed, up 3 points now, up by under 0.1%. NASDAQ up 42, up by about 0.2%. All of this with the VIX now below 20. The 10-year 4.31%, the 2-year 3.79%. Gold is down 0.6%, 47.20 the ounce. West Texas Intermediate crude 101.64 a barrel. Brent just above 100 now, $100.43 barrel of Brent, up by 5.5%. So what about the war in the Middle East and the broader implications for a stock market recovery, a full recovery? David Katz is Chief Investment Officer at Matrix Asset Advisors. He was a guest this morning on Surveillance.
We looked at conflicts since 1950, and since 1950, there have been 25 significant military conflicts or geopolitical events. Typically, the markets will bottom in the first 4 to 8 weeks, and they'll bottom at about down 7 to 10%. And this is the interesting point. They recover almost as quickly, typically about 8 to 12 weeks, they get back to the highs, and then 12, 24, and 36 months later, stocks are generally higher.
David Katz of Matrix Asset Advisors. Revolution Medicine shares are surging after its treatment for an aggressive form of pancreatic cancer boosted patient survival in a late-stage trial, further validating the company that is considered an attractive takeover target. Revolution shares up by 35.7%. Again, recapping, S&P 500 index up 3 points right now at 68.20. Little changed, up under 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet from our Bloomberg newsroom in Midtown Manhattan. Paul Sweeney and Scarlet Food, this is Bloomberg Intelligence, and we are live reporting from the New Jersey Institute of Technology, where we're talking with academic stars here at the university. And Paul, we were just speaking with Cassie Hallberg about PFAS and the startup that she is CEO of that detects these forever chemicals. Right. Let's take that conversation forward and speak with Arjun Venkatesan. He is Associate Professor of Civil and Environmental Engineering here at NJIT, and he has a startup. He's part of the NJIT startup PFAS Solve. Arjun, great to speak with you. Thanks for joining us today.
Yeah, definitely. Thanks for having me.
Cassie was telling us about detecting PFAS, these forever chemicals. What is your lab's research as it relates to these forever chemicals?
Yeah, so our lab does diverse research on PFAS. So I've been involved in research, PFAS research for more than 12 years now. So we have covered detection of PFAS in various environmental matrices. We also develop technologies to capture them and also develop technologies to destroy them. So the reason we need to capture PFAS first before destroying them is like they occur in very low levels in the environment. So you can't really use a technology to go destroy them directly in the environment. It won't be energy efficient and it doesn't scale up easily. So you need to concentrate them to a level, then it's more makes sense to energy intensive technologies to destroy them. I'm born and raised in New Jersey. I thought I've been exposed to every contaminant in the world here. PFAS, that's a new one for me. Tell us why it's a problem, and is it a problem? Oh, it's a huge problem. And PFAS is not a new chemical. It's been used since the 1940s. Only now we've been discovering that PFAS is present pretty much everywhere in this world. It even occurs in the most remotest part of the world where there's no human activity, like the Arctic. They find PFAS in polar bears, which is crazy that how PFAS is like, migrating to all these remote regions in the world. It's a problem because it's not one or two chemicals. Like if it's just one or two chemicals, it's easy to target them and remove them. This is a family of chemicals. We're dealing about more than 15,000 different PFAS, and each PFAS behave differently in the environment. So you don't have one technology that can solve all the problem of PFAS. You need a combination of technologies, and first we need to understand how widespread this contamination is.
The other part is the PFAS are tough chemicals. They are actually designed to withstand high heat, temperature, like resist water and grease. So they don't naturally degrade in the environment. So once released, it's going to stay there forever. That's why they get the name forever chemicals.
And walk us through why this is such an issue in New Jersey in particular.
So New Jersey, unfortunately, has a lot of Superfund sites, like heavily contaminated sites, and PFAS are used in many of these sites as well. So they are concentrated in many regions, and they have distributed and contaminated water sources in New Jersey as well. Another important is PFAS also occurs in biosolids. It's a solid byproduct of wastewater treatment plant, and it's typically used as a land fertilizer. And PFAS gets concentrated in biosolids, and when you reapply on land, they get back into the environment. And there are many sites in New Jersey that has applied the sludge on land that has contaminated the groundwater sources as well.
So what's the biggest challenge here? Is it detecting PFAS in a sample? Is it isolating it? Is it destroying it? Is it purifying it? Where are we in this whole process?
Yeah, so if you ask that question to different people, you're going to get a different answer. So you're going to be biased with what you think. So it all boils down, again, it's a family of chemicals that behave very different. So there's no one technology to solve this issue. So, but if you ask me the question, I think detection is definitely a problem, because we want to detect PFAS at nanograms per liter. You know, that's like one drop in a very large lake. So you really need very sensitive and precise technology to detect them. And the second challenge is to also destroy them, because they are designed to be very tough. So there are no more energy efficient technologies that can destroy them efficiently. And even if you destroy them, you have to make sure you completely mineralize them into substances that are not toxic. Because just because PFAS is disappearing, it doesn't mean that it's like completely destroying. You need to keep track of that it's like mineralized into fluoride and carbon dioxide.
Okay, so for the PFAS solve into all of this, what is the role of PFAS solve as it relates to these forever chemicals?
Sure, so PFAS solve, we have a tagline from trace to erase. So we are developing technology for detection, capturing, and destruction. And we are focused on more practical and scalable technology as well, so that can save cost and time in both capture, destruction, and detection.
What are we doing as a society, if anything, to deal with what I would just call contaminated water? You guys probably have PFAS and other terms for it, but what most lay people would say, oh, that's a contaminated, that's a Superfund site, that's contaminated water, don't drink it.
Sure.
Where are we now in terms of trying to deal with this on I guess, a more deeper way?
So I think US EPA has a regulation for like drinking water supply. So they are like doing nationwide survey to understand what are new chemicals that's popping up in our drinking water supply and whether these levels are in concerning levels. And if they are concerning level, they come up with regulations so that all municipal water treatment facilities need to maintain that regulation for safe drinking water access. So I think it's just by looking at the water, it might look clean. We can't really say that it's contaminated or not, but we rely on these research and guidance from the US EPA for us to move forward in that direction.
How did you get started in this field? How did you get interested in forever chemicals?
Sure. It all started with my PhD degree, where I did my research to identify new chemicals that we are in the environment. So my role was to develop new methods to detect contaminants, whether they're present in environment or not. And that's how I got into the field. And that time, we didn't have any standard methods for PFAS, so we had to develop our own detection methods. And when we saw it, it was pretty much everywhere. And that's how I got into this field.
And so what are the next steps, do you think? Maybe you have 30 seconds left here. What are the next steps for you and your group?
So we have like narrowed down on two technologies that we are currently focusing on PFAS now. One is the capture technology and one is the detection technology. And right now we are doing R&D and we are scaling up these technologies and we are doing validation and demonstration in the field so that it's commercially available for all.
All right, Aaron, thank you so much. We appreciate it. Professor Aaron Venkatesan, Associate Professor of Civil and Environmental Engineering here at NJIT. PFAS, again, a new way to think about some of these complex chemicals, contaminated water, that type of thing.
Yeah, and as you mentioned, something that those who live in New Jersey or from New Jersey are very familiar with. This is something that we have seen throughout popular culture, and we've definitely been talking about ways to tackle the detection and the capture of these contaminants. We're keeping an eye on the markets as well, Paul, because there's not a whole lot going on, despite the escalation of tensions in the Strait of Hormuz. Crude oil is definitely higher right now, with Brent and WTI both trading above $100 $100 a barrel. We're looking at gains of at least 5% for WTI and Brent at the moment. Equities kind of just muddling along. From New York, from New Jersey, I should say, this is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney. We are broadcasting live from the New Jersey Institute of Technology in Newark, New Jersey. A lot of geopolitics on the front burner, of course, but it is still earnings season. Right now, we got the big banks kicking off earnings today. Goldman Sachs put out some numbers here. I thought the numbers, I'm an equities guy, so I looked at their equity line first, and they just crushed it. A little bit light relative to expectations on the fixed side, the fixed income side, but those are bond people. Who really cares? But anyway, it's a big business. It's a big business. But let's check in with Neil Sipes. He covers his stuff for Bloomberg Intelligence. Talk to us about Goldman Sachs and the quarter they just released.
Yeah, so I think the general broad strokes is that the core capital markets business is firing, right? As we sort of entered this quarter's results, we obviously saw markets in flux, right? And obviously plenty of uncertainty down the pike here. But ultimately, a lot of volatility in the quarter, particularly in equities and fixed income products, mostly geared towards the later quarter. And so there was sort of a high bar coming into these results in expectations for a trading-led sort of beat. And frankly, we saw that really come through in the equities business, now on fixed income. That's where the bigger miss has sort of overshadowed strength in other categories for Goldman. And so, a lot of that relates to specific products. Obviously, when you have volatility, it's not always perfectly positive volatility for the trading business. So a little bit of mix within that. And then when you look at the investment banking business,
I mean, M&A, ECM, debt fees, all of those beat expectations. That was a big story heading into 2026, was the expectation for capital markets, for debt issuance, equity issuance, particularly IPOs and M&A to come back firing. The first quarter was solid. The backlog has dipped a little bit from a 4-year high in the prior quarter, so coming off a little bit. Part of that is due to when you have such strong results, things come out of the backlog. But I think the bigger question as we move forward is, with the elevated volatility that's positive to trading, that tends to be not so helpful for the investment banking side. So how are clients transacting early in the second quarter is a key question, and Goldman says they remain engaged.
So when it comes to that surprise drop in fixed income trading, do we think that that's Goldman specific, or is that something that could have a read-through to the other big banks?
Yeah, I think that's what we're sort of going to be looking very closely at. It feels that it could be a little bit unique to Goldman. Again, it depends on the actual positioning within this business. When you look at some of the other large peers in the space, JP Morgan, Bank of America, Citigroup, they all sort of guided to mid-teens growth across the trading business for the first quarter, and that guidance came in early mid-March. So the expectation is, this could be a Goldman unique scenario where fixed income trading revenue was particularly weak, but we'll have to watch, right? I mean, again, volatility tends to be positive for the trading business, but it's not a perfect relationship, and so we'll have to be watching, particularly given the sort of high bar and the expectations coming in that trading was going to be so strong.
Hey, Neil, I'm thinking about 2026 could be just a monster year for IPOs here. I'm thinking SpaceX, maybe some of these AI names like Anthropic. What are some of the big investment banks saying about that opportunity?
Yeah, and I think that is a big opportunity in the offing, right? I think a lot of it now relates to, okay, these IPOs are coming. At what pace will they come, right? And so are these 2026 stories, are they first half, second half, or do things get kicked into 2027 if, the uncertainty that we're living through today prolongs and it sort of causes sponsors and strategics to sort of put pencils down and sort of reassess that opportunity. Goldman noted IPOs a little bit softer in March. I don't think that surprises anyone, right? Just given the volatility. I think they remain bullish moving forward on that business. So I think it's just going to be a timing question of rather when, not necessarily if. But of course, plenty of uncertainty is still out there. So that remains the big question.
Has David Solomon, the CEO, said anything about the geopolitical uncertainty, the war in Iran, and what that means for business prospects overall?
Yeah, I think he has hinted at that same sentiment, right, where the volatility keeps clients engaged. So it's again positive to the trading as you think about how you have to have institutional clients have to reposition or allocate for a much wider range of outcomes and scenarios when we're sort of going through what we've had with AI scare trades, software concerns, now war. That all sort of creates a pretty good backdrop for the intermediation type business. When we have markets that, frankly, are still only a handful of percent off of all-time highs, that's really strong for the financing business that Goldman's been growing in. That was a really bright spot for the equities business in the first quarter. They're continuing to deploy balance sheet into that business. So they see an opportunity to sort of lean into client needs and client demands in this environment, albeit cautioning that, there's a big uncertainty piece out there.
Neil, thanks so much. Really appreciate it. Neil Seitz, he covers all the big banks for and investment banks for Bloomberg Intelligence. We appreciate getting some of his time there. Again, some of these IPOs in 2026 could just be massive, and the fees are going to be just a windfall.
And it feels like every single bulge bracket bank is there listed as part of the, helping to take them public.
Absolutely. So it's going to be interesting to see how that plays out. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment. S&P up 6 points. The Dow minus 180. The NASDAQ up 100 points. The VIX below 20. 10-year Treasury yields steady. This is Bloomberg Good Morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Monday morning from the Bloomberg Intelligence team, a special edition of BI because Paul Sweeney and Scarlett Fu, we are on the road today. We are broadcasting live from the New Jersey Institute of Technology, the campus here in Newark, New Jersey. We'll be featuring conversations with some of the school's academic stars. We're going to talk a lot about forever chemicals and the work that is being done at this institute to address that and to resolve that. But of course, we're going to check in with Rob Barnett, our senior energy and commodities analyst, on what's going on with oil. This blockade that the U.S. has imposed on the Strait of Hormuz has begun. We're about an hour into it, and oil prices are on the rise once again. WTI and Brent up by more than 6%, well above $100 a barrel at the moment. Here at NJIT, we're going to check in with Jay Magoda. He's a distinguished professor of civil and environmental engineering here at NJIT. We'll also check in with Runmi Sadiq, distinguished professor of chemistry and environmental science at NJIT on developing nanomaterials. William Pennock and Michael Bufado, the distinguished professor of civil and environmental engineering here, will also be joining us. So a lot to get to this hour. But first, let's bring in our own Charlie Pellet for a glimpse at what's happening across markets. Charlie?
Hi, thank you very much, Scarlett. You mentioned oil. Got to begin there. West Texas Intermediate Crude with a 102 handle, 102.34 right now, up by 6%. Barrel of Brent also higher by 6%, $100.93 the barrel. The Dow lower, S&P, NASDAQ, they're both higher. 8-point advance right now on the S&P to 68.24, up by about 0.1%. The Dow Industrials down 199 now, down 0.4%. NASDAQ up 76, up by 0.3%. All of this against the backdrop of the VIX under 20. The 10-year 4.32% with the 2-year currently yielding 3.80%. Spot gold down $36 the ounce, down by about 0.8%, 47.12 on the precious metal. And West Texas Intermediate Crude bears repeating now, up now by 6.2%, 102.53 a barrel on WTI. Bitcoin, 72,290 now on Bitcoin, up by 1.3%. After earnings, Goldman Sachs shares tumbling 2.9% right now. We do have Goldman moving lower. This after earnings this morning, their equity traders did beat their own previous all-time quarterly high by more than $1 billion as the war in Iran fueled market volatility, offsetting a disappointing haul by their fixed income colleagues. Today we saw Goldman again trading lower. Goldman Sachs down by just about 3%. So again, recapping here, S&P 500 index holding on to a gain of 5 points. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we are broadcasting live from New Jersey Institute of Technology in Newark, New Jersey. All right, here's a weather thing for you, Scarlett. I've noticed this since I was a kid. Whenever they give the weather for the Metro New York area, temperatures in Central Park, Long Island, Connecticut, Jersey, the hottest is always Newark, New Jersey.
No
by
way.
like 2 or 3 degrees. So when a heat wave, as bad as it is in Manhattan, it's 2 or 3 degrees hot. And I don't know why that is. Maybe one of these engineering scientist folks in the audience can explain that to me, but it's always
That seems unfair.
It's crazy. All right, Scarlett Fu and Paul Sweeney, we're live here at NJIT. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Natalia Kinney-Javik. Natalia, what are you looking at today?
Hi, Paul. So as Charlie mentioned, we are watching shares of Goldman Sachs. The ticker is GS. The stock is down by almost 3% today. Equity trading revenue came above expectations, beat previous all-time high by more than $1 billion. But at the same time, investors got a little bit disappointed on the fixed income side, where revenue came below expectations. Again, on the positive side, asset management division, the company said that assets under supervision rose to $3.7 trillion. Net income also came above expectations. It keeps growing. Then another highlight is in the deal making. Investment banking fees are up by 48% from a year ago. David Solomon, CEO, was still a little bit cautious. He said geopolitical landscape is becoming, quote, more complex. So it is a nice start. We will see how peers report in the coming days.
All right, good stuff. Natalia, what's number 2 on your list?
So number 2 is consumer sector. So we were watching shares of Nike recently, and today we got another downgrade from HSBC. The ticker is NKE. Shares are down by less than 1% today, but it is a negative trend because on a year-to-date basis, the stock is down by 33%. So HSBC analysts are saying that the Nike's turnaround thesis has gone from not if but when to, quote, show me story. They don't see any near-term catalysts, and they also said that on the cost side, U.S. tariffs impact margins. Companies are unable to pass costs increases to consumers, and they continue to pay tariffs despite lack of clarity. Price target is now at $48 per barrel. Oh, sorry, I'm thinking about oil all the time. $48
Exactly.
per share. The stock is now trading at 42, so there is still some kind of an upside.
CoreWeave, that's the last one. What do you got for us?
Yeah, so the stock is up by 10%, almost 11%. The ticker is CRWV. We got another upgrade today. Macquarie upgraded the stock to outperform from neutral based on recent announcements. Last week, we spoke about it a lot. So the company got an agreement with Anthropic, which will rent its data centers to train its models. Then they got another deal with Meta Platforms. So all of that is very positive for the stock, for the company. And analysts are saying that, yes, AI infrastructure is still resilient. They see a lot of upside. Price target is now at $125 from $19 per share. So that's a pretty big upgrade. The stock is currently trading at $112.
All right, thank you so much, Natalia. Natalia Knežević is our Bloomberg Equities reporter in our Bloomberg Midtown Manhattan headquarters. And of course, for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer you 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All eyes right now on oil prices, and they are higher. Brent, which is the global benchmark, and WTI, the NYMEX traded oil, is above $100 a barrel at the moment. We know that the U.S. has begun this blockade of the Strait of Hormuz. It began at about 10 a.m. Eastern time. So we want to bring in Rob Barnett, Bloomberg Intelligence Senior Energy and Commodities Analyst, to walk us through what that means for oil prices. It is pushing oil higher, Rob, but maybe surprisingly not to the extent that we've seen oil prices go in the past. Am I correct in feeling like this is a somewhat muted reaction?
Yeah, I think you got to be thinking about the oil market in terms of how you envision a resolution to the conflict. And so if you think that the conflict is going to continue and that this fragile ceasefire is not going to hold, well, that's certainly a bullish indicator for oil prices. If you think that we're just in a phase where there's back channel negotiations going on and we're going to get some kind of resolution in the near term, then that would potentially be a bearish indicator for the market. And right now, you've just got this cognitive dissonance. Is the conflict going to be over, or is it going to extend for the foreseeable future? And either outcome is really potentially extremely bearish or extremely bullish for the price.
So what are the futures markets telling you they're up?
Yeah, well, it's a good question, Paul, because for anyone who's been following, there has been generally a pretty big disconnect between the futures market and the spot market here today. So if you have a tanker of oil and you're trying to physically get it delivered today, you're probably paying a premium relative to what the futures market price is. And effectively, the way to read it is that the folks who are active in the futures market maybe perhaps sees some kind of easing, some kind of resolution to the conflict, and that things will start to normalize. If you look out through time, the price for contracts further out is lower than where the spot is today or where the near futures contracts are.
We're also seeing that Intercontinental Exchange has boosted the margins that traders have to post for its Brent crude and European diesel futures contracts since the start of the war. How does that play out in terms of the price action?
Yeah, it's a good question. I think probably there's a lot of folks who are active and thinking about energy markets that aren't normally there. We've seen a lot of interest flow into the space, and perhaps the exchanges are observing all of the increased volatility and perhaps new entrants and have modified their requirements for margin. But we haven't thought through deeply what's that sort of like technical factor may have on the market. But I think that, again, the real thing to be thinking about is the geopolitical risk premium. When we entered the start of this year, generally folks viewed the market as well supplied or even oversupplied. And if you get rid of the geopolitical risk premium and you get flows resuming through the Strait of Hormuz, then there's plenty of oil. If the strait remains closed and you have this very large risk premium in the market, then there's just simply not enough oil to make the market clear until the strait reopens. And so I think the two very sort of discrete outcomes. If you get the strait open, plenty of oil. Strait remains closed, not nearly enough.
All right, Rob, good stuff. As always there, Rob Barnetti covers all the energy stuff for Bloomberg Intelligence. He's based down there in Jacksonville, Florida. We are located on site, Scarlett, Phil, and I, at the New Jersey Institute of Technology. And we are fortunate to have a lot of really smart guests join us here today to talk about what they're working on. And we're glad to welcome back Jay Magoda. He is Distinguished Professor of Civil and Environmental Engineering. I stayed as far away as engineering as I possibly could. That's math and science. It's not happening.
I was a history major, so I didn't even go near that part of campus.
My number one son is an engineer, so he got that from his grandfather, I think. Doctor, thank you so much for joining us. Dr. Magoda, talk to us about the technology you're using here at NJIT to detect PFAS out there in the environment.
So actually, I'm not involved in detection.
Okay.
It's a destruction.
Destruction, even better.
So we're looking at ultrasound to destroy PFAS.
How does that work? Because one of the problems, as Scarlett and I and our audience are learning today, you got to detect it. You got to, you really got to see where it is and see how concentrated it is, and then obviously destroy it. Talk to us about your technology and how that's really working.
So our technology, what we do is we apply high frequency, high power ultrasound to concentrated PFAS solutions. And what it does is PFAS is a very unique molecule. It doesn't like to stay in water. And what we are doing is by applying ultrasound, we are creating very tiny nanobubbles. And these bubbles, inside you have water vapor, outside water. So all the PFAS seems to be getting attached to these bubbles. The chlorine, fluorine tail seems to go into the bubble and get attached. And then what we do is we continuously apply ultrasound, and that ultrasound get absorbed to these bubbles, and they become very unstable, and they implode when it implodes, it reaches temperatures around 5,000 degrees, and also pressures, very high pressures, about maybe about 250 times the right atmosphere, our regular atmosphere pressure. So, which is a very conducive environment to pyrolyze all the molecules into atoms.
So, Dr. Magoda, my understanding is that this technology is being used and tested by the U.S. military in the field. Can you tell us a little bit about how that came together?
We developed this technology back in 2019, and we worked with a company called TradeMasters, and we tried to apply some funding for NSF, and also at the same time there was an opportunity for the Air Force, and they submitted a proposal. And we worked with them as a subcontractor, and we further developed the technology, and then we apply in the Nebraska Air Force facility.
And how's that? What were some of the results back?
The results were just published in a journal paper. So if somebody's interested, maybe can contact me and get that.
I mean, was it successful?
Very successful, and we are moving forward. And there's a brand new technology we developed further enhances the ultrasound with applying argon nanobubbles, and also is being right now patented.
What do you think are the biggest challenges or potential obstacles to commercializing and scaling this technology on an industrial scale?
The willingness to spend money to destroy.
Always.
And it needs quite a lot of public push. Public need to be aware, and also the health professionals have to work very hard to convince the politicians and the policymakers that is a major threat to the humanity.
So it sounds like education is the solution there.
Yeah.
So who drives that education?
That's a good question. I have no clue.
Because I mean, here's a term. Again, I'm 62 years old. I like to think I'm pretty well read. I consume a lot of media, for better or worse. Never heard the term PFAS before. So what was I using before that? Contaminated water?
Yeah, I guess so.
Okay.
So the awareness is a very important thing, and what you're doing right now is a kind of education.
Yep.
And make people aware, and also as Arjun mentioned that it's in everybody's bloodstream right now.
Yeah. Okay. All right. Again, the question for a lot of folks
it all depends on the levels, right?
Yeah,
in your bloodstream.
When does it become problematic? All right. I guess we're all learning together. Professor Jay Magoda, he is the Distinguished Professor of Civil and Environmental Engineering here at the New Jersey Institute of Technology. Just looking at these markets here, again, kind of a muted trading day. It feels like we got the S&P up 5 points, the Dow's minus 260. Thank you, Goldman Sachs. The Nasdaq's up 72 points. That's about 0.3%. So no real direction there. The VIX just below 20. That's a little bit quiescent. Again, we were at the high 20s, close to 30 just a couple of weeks ago, or maybe 7, 8 weeks ago. Yields a little bit higher. 10-year Treasury yields 4.32. That's up 1 basis point. WTI crude oil up 6%, $5.80, $102. There you go. And Brent is also up about 6%, $101 for Brent crude oil. This is
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. We're looking at a mixed day for the U.S. stock market. Goldman Sachs weighing on the Dow. Dow Industrials now down 282 points, down by about 0.6%. Stocks have reversed earlier losses. Oil prices are rising after President Trump ordered a blockade of the Strait of Hormuz following the weekend's deadlock in U.S.-Iran peace talks. So the S&P higher, little changed, up 5 now, up by about 0.1%. NASDAQ is up 83, up by 0.4%. The VIX holding below 20. The 10-year 4.32%. Gold is down $41 the ounce to $47.09. That is a drop now of 0.9%. Crude, the big story again today. WTI up by 6.1% right now. West Texas Intermediate crude 102.43 a barrel. Brent crude 101.34. Barrel of Brent up now by just about 6.5%. ConAgra Brands has announced that its CEO Sean Connolly will be stepping down at the end of next month. He'll be replaced by consumer goods veteran John Brassi on June 1st. ConAgra shares, they're down now by 5.8%. Again, recapping here, S&P up by 5, up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pella, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney. We are broadcasting live here from New Jersey Institute of Technology in Newark, New Jersey. We'll get to some of our guests from NJIT in just a moment here. But first, we want to go to Nathan Dean. He's a Bloomberg Intelligence Senior Policy Analyst for Bloomberg Intelligence. And Nathan, one of the areas that was thought to really be a beneficiary, one of the industries from a second administration from President Donald Trump would be the financial services industry through a lighter regulatory touch. I guess the question 1 year into the president's second presidency, is that in fact coming to fruition?
So it's definitely coming, but the key word here is, the key thing to think of is that there's no magic wand. President Trump just can't wave it and say, poof, deregulate. There's a process. Now, for the investment banks, so think of the Bank of America, JP Morgan, Goldman Sachs era, that regulatory relief is ongoing, and there's 5 proposals that you need to be paying attention to. But when all 5 of those are done, you're looking at probably around $31 to $38 billion in returned capital to the largest banks. It's a little bit different story, though, for the regional banks. So if you're looking at like the PNC, Capital One, or maybe the East-West Alliance or Zions, that regulatory relief is going to be starting at the tail end of this year, but going into 2027. And that deregulatory effort, we think, will lead up to more maybe potentially M&A and maybe a little bit better organic growth. But that's not going to be completed until the end of 2027. So right now, think investment banks, think regional banks for the second half of the President Trump's administration.
What's the first step that regulators need to take when it comes to regional banks?
So it's this idea of regulatory thresholds. So right now, under the U.S. regulatory system, if you're a bank and you go above 100 billion, or if you go above 250 billion, or if you go over 700 billion, you hit a new regulatory threshold. And if you do your equity screen on the terminal, you'll see a lot of banks hanging out at that $90 billion mark because they don't want to go above 100 billion. Now, those thresholds haven't been updated since 2018. And there's this thought out here that maybe they'll update those thresholds by nominal GDP. So if you're looking at the 100 billion level, maybe it goes up to 250, and as a result, there's a lot of other banks out here that could explore M&A or do organic growth. And for like the PNCs and Capital Ones and Truists, a lot of them don't want to go past that $700 billion threshold. If that goes to 950, all of a sudden you have a lot more opportunities to grow, and you don't hit these new regulatory thresholds. I think the Fed proposes that maybe at the tail end of this year, the beginning of next year, but again, that's not going to be implemented probably till the tail end of 2027.
Nathan, I think what we all learned last year when there were some problems with some of the regional banks, like Silicon Valley Bank, for example, is that there are a lot of regional banks in this country, like 4,800, something like that. And a lot of folks are saying we really don't need that many, and maybe this is an industry that's ripe for consolidation. I know the bankers would like to, M&A bankers would like to see some of that. How do the regulators and the folks in Washington feel about that?
So it's a story of two different sides of the coin. I mean, you hear this idea that the number of U.S. banks are falling, and obviously regulators will come out and say we're not exactly comfortable with that idea. But look, the story is that under the Trump administration, M&A is a much faster and much easier process to do with. Think of Fifth Third and Comerica. That was much faster than what would have occurred under the Biden administration. So what the regulators are essentially doing is saying, look, we haven't updated a lot of this since 2018. A lot of it, the situation is different. The economic situation is different. And gone is this idea of a PNC or a Capital One ballooning up into what's called a GSIB. So think of like PNC acquiring a bank going to the same size of a Bank of America or a JP Morgan. That was very much, not approved or not sought under the Biden administration. That theory hasn't really been tested on the Trump administration, but our view is the Trump regulators would be somewhat okay with that. This idea here is that M&A is something that should be explored, there should be more of, and the Trump administration up until 2028, for the next few years, bank of M&A should be a lot easier to conduct for the sector.
Nathan, I know we're focused on the banks because the banks are reporting earnings. Goldman Sachs reported today, and of course, JP Morgan will be reporting tomorrow. But I have to get in a question to you about Congress. They've returned from a 2-week recess. There's a lot going on in the world right now. Where are we with the funding of the U.S. government?
So right now, everything's funded through the rest of September, through September 30th, minus the Department of Homeland Security. And what the Republicans are trying to pursue right now is this idea of a reconciliation bill. You can bypass the Democrats and you can bypass the Senate filibuster. Now, there's a two-pronged strategy right now. Prong one is reconciliation bill just for DHS. If that's the case, it's about $80 billion to $100 billion. It's not all that exciting for those of us in the markets, but the Republicans most likely can get that through. But if this balloons up into something much bigger, Obamacare changes, tax changes, deficit impacts, if you will, the story changes. So what we're telling our clients right now is if it stays small and protracted, easy, but unfortunately not really all that important for the sectors, it's that idea of a second reconciliation bill that's more important to watch.
All right, Nathan, thank you so much for breaking it down for us. Nathan Dean is our senior policy analyst at Bloomberg Intelligence, joining us from Washington. Always plenty for him to break down for us because their work is never done there. They're always in some mode of trying to figure things out. All right, we are at the New Jersey Institute of Technology campus in Newark, New Jersey, and we're thrilled to be able to welcome some star academics here to Bloomberg Intelligence and talk to them about what they're working on. One of those academics is Wunmi Sadiq. She's a distinguished professor of chemistry and environmental science here at the school. Professor, thank you for joining us today.
Thank you for having me.
So you are founder of the Biosensor Lab. Tell us what that focuses on and how that differs from the forever chemicals that we've been talking about so far.
Thank you very much. So the Biosmart Lab, we are looking at sustainable materials. We're creating catalysts, nano catalysts, that would help you to capture the forever chemicals. One of the major problems of forever chemicals is that they're very strong. In fact, they're so strong that the energy you need to break down the carbon and the fluorine is so high. And so we create nano materials that will weaken that bond. And eventually you would have these fruits and vegetables that we derive chemicals to help us really capture them. Once we capture them, we break them down, and you create fluoride ions that you have in your toothpaste. You have water and carbon dioxide. So unlike many technologies that you have out there where they capture and release, this actually captures and destroys.
Is this, so when you say destroying, is that what breaking down means for you?
That's basically what it is.
Okay.
As chemists created these problems to begin with. So we know the chemistry. We know exactly where this energy lies. Carbon-fluorine bond is very strong. It's one of the strongest bonds known. And so by creating catalysts that will break them down, it's similar to what you have enzymes in the stomach. The enzymes break down the food. And so we're creating this synthetic catalyst with high enough energy to break down the PFAS.
So, Professor, how do you move this technology from the science lab to something more commercial, where you can apply it to solve real-world problems?
We are being funded currently by New Jersey Department of Environmental Protection And we are working with them to look into homes. We're not looking into very large industrial applications at the moment. We're looking at point of use applications where you would almost put your catalyst, like a filter, in your home to break them down. So they're really good for everyday New Jersey, lowering the energy, lowering the cost, and improving the human health.
So talk to us about the energy, because we're all, I think, getting smarter and smarter about energy consumption as we think about AI and some of the data centers and the energy we've been told is a gating issue there. How about the gating issue? How about energy in terms of breaking down some of these forever chemicals?
So this energy here is nothing close to what you have with incineration. This is like 10 to 20 times much lower than what you would need for that kind of thing. So it's a very small energy. That's where the catalyst comes into effect. And so rather than creating the problem, trying to solve the problem, collect them and then throw the can and push that down
Right.
we actually solve the problem at the source.
We were talking a little bit earlier about government funding and, in this case, funding the U.S. government from the folks in Washington. Congress is now back in session. I'm curious to find out from you how important is government funding for the R&D that you and your lab are working on?
Government funding is key to what we're doing. Even if we get funding currently from NJDEP, it's a flow down from the federal government. And so the federal government is key to, solving this problem. We need funding, and as you know, it's been a challenge, to be able to get that and to keep it up too.
So we'll just finish that point out. What has changed in the last 12 to 14 months in terms of federal government funding for university research?
What has changed is the rate at which the processing is being done. The focus is also changing. And so sustainability is important for us, for human health and the environment. And so federal government is the key driver, if you like, for funding of research.
All right, thank you so much. Rumi Sadiq is Distinguished Professor of Chemistry and Environmental Science at NJIT, the New Jersey Institute of Technology. Thank you so much.
Thank you so much for having me.
And as we're speaking, Paul, there's a headline here coming out that Lululemon shares are down as much as 4.5%. The Texas AG has launched an investigation into the company as part of an investigation into looking at whether Lululemon has misled consumers about the safety, quality, and health impacts of its products, specifically whether Lululemon's athletic apparel, the yoga pants, for instance, contains PFAS.
Get out.
Or forever chemicals.
See, that's the first I've seen that on a Bloomberg. Maybe it's been in a Bloomberg News story before. I just haven't read it or understood
But it kind of comes full circle
Yes.
with what we're talking about here
does.
at NJIT.
It absolutely
We should
does.
note as well, Under Armour shares are also falling to a session low following this Texas AG announcement. So it's not just Lululemon shares that are lower, but also Under Armour shares as well. Once again, the Texas AG, Ken Paxton, launching a probe into the company as it looks into whether Lululemon misled consumers about the safety, quality, and health impacts of its products. This is Bloomberg Intelligence. Paul Sweeney and Scarlett Fu. We're reporting live from the New Jersey Institute of Technology.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow lower, the S&P, NASDAQ. They are both gaining. Stocks have reversed earlier losses. Oil continues to advance after President Trump has put into effect a blockade of the Strait of Hormuz following the weekend's deadlock in U.S.-Iran peace talks. So here's where we stand. Late morning, we've got the S&P up 6 now, up 0.1%. The Dow down 233, drop there of 0.5%. NASDAQ higher by 88 for the NASDAQ Composite Index, a gain now of 0.4%. The VIX below 20 with a 10-year at 4.32%. The 2-year 3.80%. Gold is down 0.7%, 47.15 the ounce, while crude 102.74 right now on WTI, up by 6.4%. Brent crude 101.59, barrel of Brent up by 6.7%. Goldman Sachs certainly weighing on the Dow right now. Goldman down 3.3%. Again, S&P 500 index higher by 0.1%. Briefly, oil stocks pushing higher along with the price of oil. ExxonMobil up 0.6%. Chevron up 1.5%. ConocoPhillips up now by 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here at New Jersey Institute of Technology in Newark and New Jersey here. We want to get to a real hands-on, real example, life example of the problem with some of these forever chemicals, PFAS, as they're referred to here. And we can do that with our next guest here, William Pennock, Assistant Professor of Civil and Environmental Engineering here at NJIT. Mr. Pennock has collaborated with NYU Langone health researchers on the study of pollution affecting Ramapo Lenape Nation members in Upper Ringwood, New Jersey, due to Ford Motor Company paint sludge that dumped decades ago. And that auto plant in Mahwah was referenced in a Bruce Springsteen song, Johnny 99.
Thank you.
More worthless trivia coming out of my brain that really
The boss knows.
Yeah, he does. So, Mr. Pennock, thanks so much for joining us here. Talk to us about what's happening up there at that. I guess, is it a closed Ford Motor plant right now?
So the Ford Motor plant is, if you saw the headlines with the demolition of the Sheraton Mahwah last summer, that's where that plant was. And Ford and its contractors dumped waste nearby the site within driving distance. So that's also across the border in New York State. But the place of concern for today is in Ringwood, New Jersey, in abandoned mines.
And what is the state of play right now? What is the situation?
So it's a long history. This is the only Superfund site that I know of that's been added to the priorities list and then deleted. In 2004, they found more contamination after they thought they'd cleaned it all up. And this is sort of like, if you remember, Interstate 80 closing last year due to the abandoned mine, and the sinkhole that resulted. This is a hard site to characterize because you've got these mines of unknown extent, groundwater pollution traveling in unknown directions, and so it is a bit of a messy problem.
So what's the work being done there to kind of figure out the scope of the problem and what to do?
So the EPA has been working on this for a long time. As mentioned, it was listed in, I believe, 83. They're currently working on finishing up their work on Operable Unit 2. And then their plan to start work on Operable Unit 3. And the way that the EPA describes it is that there's human exposure is under control. And so the people I'm working with would contend that there's still human exposure that we have to worry about. We are still finding contamination on the site where the Turtle Clan of the Ramapo Lenape live. And so they held a press conference in September this past year to address this.
And are PFAS part of what the contaminants being found at that Ford Motor site include?
Yes. So we still need to review and publish the data, but yes, PFAS has been found. It's not a surprise. There's 1,4-dioxane, lead, cadmium, benzene, and so that PFAS would be in the mix of industrial pollutants that are dumped in the late 60s and early to mid 70s is not a surprise.
So when we just talk about forever chemicals in our water, aren't these water treatment facilities that every town USA has, aren't they dealing with it?
Yes and no. I think New Jersey has been a leader in this, partly because we have pretty a high presence of contamination of our groundwater. So actually, this is a concern for well owners as well. But our plants have not been designed to remove this. So water treatment plants are designed for particularly the removal of turbidity. That's the cloudiness in water. That's sort of a proxy for microbes. We don't want to get diarrhea from our water. And as we've had new compounds that we found, we've had to ask our water treatment plants to do more. And they're not designed for this, and so there's quite a buzz in the industry to get ready for the EPA regulations that come out in 2027, mandating the removal of a few PFAS compounds.
You mentioned that well water is something that we need to think about. What does it take for drinking water treatment plants to effectively remove PFAS?
So PFAS, I think maybe some of the previous speakers would have mentioned this, but it's a surfactant. So it's got a part of it that's hydrophilic. It likes the water, it likes to be dissolved, and there's a part of it that's hydrophobic, that likes to get out of the water and likes to get onto surfaces, especially solid or air surfaces. So it's very mobile, and it's also, I think, probably has been addressed pretty indestructible. So it is not easily removed, and what is removed mostly is long chain. There are different lanes, basically defined by carbon lanes, just like you do for octanol in fuel. The shorter carbon chains are removed less well, and so we're working with a few different researchers at NGIT from some of them, and we'll hear from at least one more on the ways to remove it. I'm working with Arjun Venkatesan, who was on here earlier, on a way to help these conventional processes work. So coagulation and filtration is something that most water treatment plants have, and he developed a technique called hydrophobic ion pairing, and so we're working together to address the chemistry issues that keep PFAS from being easily removed by these what we call conventional processes.
So this sounds like a bigger problem for the water treatment plants than me just putting a little filter on my faucet. Is that right? I mean, so is this something that we can upgrade these existing water treatment plants to deal with?
Well, yes, you can think of it like a homeowner, though. So these point of use and point of entry treatment options that you mentioned, something like a reverse osmosis whole house or at your kitchen sink, you can put that on. There's also activated carbon that NSF has rated to be able to remove PFAS, so you can shop for that as a homeowner. But if you put the burden on the consumers, that means that those who have the time and the money to take care of this will take care of it, but those who don't are just going to live with the consequences. And so we do have to deal with this at the centralized level at our drinking water treatment plants.
Go ahead.
Oh, no, I was just going to say that if you look at the prices, if you look at, for instance, what it would cost to put an RO on your whole house, then you can start to appreciate what these utilities are facing as, do they have their current operating budget? How do they basically expand the capacity of the plant while still keeping customers happy?
You mentioned New Jersey is kind of on the front foot on this, a bit ahead of other states. What's the next step for New Jersey to take?
So NJDEP was ahead of the EPA in looking at PFAS and working towards regulating it. The next steps, I think there are many, but at least when you talk to people who are working in the water treatment industry, by and large, it involves activated carbon. So getting activated carbon, it's lower cost than reverse osmosis. That's like the salination, or desalination technology. It's very expensive, so you really use that for like brackish or seawater. So activated carbon is the more approachable one, but there's only a few companies that are doing it, and as you use up the activated carbon, you have to send it to be regenerated. They use the steam process, and you don't get a full return of your activated carbon media back. You lose some of it, so it's high cost. So they have to be ready for this investment, but we also have to figure out ways to make these processes more efficient so that we don't have these same expenses.
All right, Professor, thank you so much. Really appreciate it. William Pennock, he's Assistant Professor of Civil and Environmental Engineering at NJIT. We're all getting smarter about these forever chemicals, and the PFAS is kind of how the experts refer to it. So we'll keep trying to keep up on that story as well. S&P absolutely unched on the day. The Dow's off 275. The Nasdaq's up 61 points. So red and green on the screen. The VIX is sitting right at 20. 10-year Treasury yields, they're pretty steady, looking around 4.32% on your 10-year. WTI crude oil, that's the story of the day, up 6.5%. just under $103 per barrel. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
This is Bloomberg Intelligence, and we are live at the New Jersey Institute of Technology, Paul Sweeney and Scarlett Fu, and we're learning a lot about PFAS, the forever chemicals that are in our environment and, part of our everyday lives, unfortunately. And none of it is safe, but it's something that the folks at NJIT have been working very carefully on. And we're pleased to welcome Michel Boufadel. He is a distinguished professor of civil and environmental engineering here at NJIT. He's also founder of the university's Center for Natural Resources. And tell us a little bit about the focus of your work and how it is that you're dealing with contaminants, and in particular, PFAS.
The center that we founded, Center for Natural Resources, and the main idea is that we deal with contaminants in the natural setting. I've been working on oil spill, combating oil spills. So we work on the Exxon Valdez oil spill, the Deepwater Horizon, and the Gulf of America. So the nature of contamination is very dilute. I mean, whenever we think of contaminants or contamination, we imagine like, oh, it's very concentrated and it's going to cause a lot of harm. In terms of remediation, it is ideal if it's concentrated because you can go there with, the backhoe and then get it out of the ground, and then you're done with it. The main challenge is that you have contaminants that, they are spread out, and then such as PFAS, and their concentration, their levels, they are not negligible, so they can continue to cause impact. There's something known in the U.S., as you know, as Superfund sites. Yep. These are sites that contain contaminants, and they've been treating them for the last 30, 40 years. The idea that once things get into the ground, they don't get out easily.
Explain to us what electrokinetics is and how you use it in your work.
Yeah, electrokinetics is essentially the idea we electrify the soil. We put electrodes or rods in the soil. One of them is the anode, the other one's cathode, one is plus, one is minus, and then because of that, you cause the chemicals to move into the within the soil. They move between the grains of the sand, if you want to imagine. At the same time, there's some interaction between the electric current and the soil itself, so that also helps in flushing things.
Why is this a good way of purging soil of PFAS? Are there alternatives?
Well, the traditional method is really to pump, to have an injection well, and then you pump water in the ground, and then you flush things.
But it makes it more diffuse, as you were saying.
It makes it more diffuse, but you can, place the wells in a certain way to kind of funnel the contaminants to a certain location. But that's not the issue. That's not the problem. The problem when you do like this pumping, in the soil is not like a pudding. It's not uniform. It's not the same. You have like regions where it is the permeability to water flow is small. Like if you have what you call clay, like mud, imagine. So the water then, when you pump it, it will go around it. It's like, imagine there's a car broken down and then the traffic just, keeps going around it. And that is the issue. So the contaminants would be stuck there, and then no matter how much you pump, the water is going to go around it. In our technique with electrokinetics, we are forcing things at the, like micron scale, 100 micron the thickness of a hair. So you go with that much low, and then you flush things at that level, and then they will get out of these regions where the permeability or the water conductance is small.
For New Jersey, with the industrial history of the state of New Jersey, this is arguably very, very important. How about for the rest of the country? Is this a federal government policy to deal with these forever chemicals, or is this a kind of a state-by-state thing?
It depends on both. It depends sometimes on the priorities of the administration. But PFAS has always been a major concern. Primarily has been for drinking water. But as we work on contaminants in the environment. So, like as I mentioned, oil spill. We work on metals, cadmium and lead, and in water. So sometimes the impact is not only on drinking water. It is like, if you...
Do you drink tap water?
I do drink tap water.
Good question.
Yes, yeah. I do drink tap water, and lately it's like, my daughter is asking me, said, Dad, could we test the water? So I said, okay, we're going to test it. We live in New Jersey, so...
do you think bottled water has PFAS as well?
Most likely not, but these are very tough questions, because really it's going to depend on where you're getting, what is the source. In general, I would think that bottled water would have less PFAS, less. For example, there's the other issue is microplastics. For example, again, if something is already done, produced, most likely, I think the quality will be higher than something that is mass produced.
All right. Michel Boufadel, thank you so much for joining us today. Michel Boufadel is Distinguished Professor of Civil and Environmental Engineering here at NJIT. He is founder of the university's Center for Natural Resources.
All right, folks, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Goldman Crest Metals. Stay tuned for the latest market news and industry research. And we want to say thank you to our friends here at New Jersey Institute of Technology.
Thank you for hosting us.
Thank you for hosting us. We learned a lot about these forever chemicals.
Absolutely.
PFAS, and hopefully we're a lot smarter than that. We'll continue to learn here. We're going to have more coming up on Bloomberg Radio coming up right now.
is CBS News on the Hour, your home for original reporting.
I'm Steve Kathan. The U.S. puts new pressure on Iran in the struggle over the Strait of Hormuz, a U.S. Navy blockade of shipping into and out of Iran. CBS's Natalie Brand says President Trump vows to eliminate Iranian attack ships that get in the way.
He's defending this U.S. blockade on Iranian ports in the Strait of Hormuz, saying that he thinks it will be effective because Iran will not be able to sell oil. We know that the U.S. is also, according to the president, trying to find interdict vessels in international waters that have paid tolls to Iran, and that the U.S. is also beginning this operation to find mines that had been laid by Iran.
President Trump and Pope Leo are at odds over the war. CBS's Chris Livesay is traveling with the Pope.
Speaking to journalists on the papal plane to Africa, before it had even landed, he told journalists that he, quote, has no fear of the Trump administration and will continue to speak out loudly for the message of the gospel.
I'm Vicki Barker at the Foreign Desk in London. Iran's president among those weighing in on President Trump's posts blasting Pope Leo and depicting himself as Jesus healing the sick. Masoud Pezeshkian condemning what he calls the insult directed at both the pontiff and at Jesus, who is, quote, the prophet of peace and brotherhood. Criticism closer to home, too. House Minority Leader Hakeem Jeffries calling it a shameless attack. Republican Congressman Don Bacon calling it, quote, a gaudy and juvenile post, and one that divides the party.
A federal judge has dismissed Trump's $10 billion defamation lawsuit against the Wall Street Journal and Rupert Murdoch over a story on his ties to Jeffrey Epstein. Democrat Eric Swalwell could face an expulsion vote in Congress over allegations of sexual misconduct and assault. He's denied them, but has exited the race for governor in California. CBS LA's Christine Lazar.
The congressman posted on X saying, quote, I am deeply sorry for mistakes in judgment I've made in the past. I will fight these serious false allegations that have been made. The announcement comes after a former staffer accused Swalwell of raping her twice. 3 other women accused him of sexual misconduct, including sending them nude photos.
Well, CBS's Carter Evans has the latest on a pop star who ran afoul of the law last month.
Over the weekend, Britney Spears voluntarily checked herself into a rehab facility, according to a rep for the singer. It comes more than 5 weeks after Spears was arrested for allegedly driving under the influence of alcohol and drugs. In a statement, her rep referred to the incident as unfortunate and completely inexcusable.
This is CBS News. A Grammy winner's gotten a lesson on cultural traditions in the Middle East.
I can't relate. Sabrina Carpenter is apologizing for calling out a fan's zagruta, or ululation, during her performance at Coachella Friday.
Is that what you're doing? I don't like it. That's your culture, is yodeling? Is this Burning Man? What's going on? This is weird.
The explanations came quickly on TikTok.
It's a sign of joy. Something exciting's happened.
Then the demonstrations. Carpenter's posted to X, now that she knows what a zagruta is, she welcomes all cheers and yodels from here on out. The 26-year-old says her reaction was pure confusion, sarcasm, and not ill-intended. Deborah Rodriguez, CBS News.
The Super Mario Galaxy movie topped the box office in its second weekend in theaters. Second place went to Project Hail Mary. I'm Steve Kathan, CBS News.
from Washington, D.C., this is Balance of Power with Joe Matthew.
The blockade is in place. Welcome to the Monday edition as President Trump follows up on failed talks with Iran with a full naval blockade of the Strait of Hormuz. Markets are taking this largely in stride despite some concerns over the weekend. We're going to get the latest from Bloomberg's Tyler Kendall, who is live at the White House. Nathan Dean will join from Bloomberg Intelligence as Congress comes back from recess with the Department of Homeland Security, yes, still shut down. And as President Trump goes to war with the Pope, we'll get analysis from our political panel. Jeannie Shanzano and Rick Davis are with us for the full hour here. We start, as always, on Wall Street. The Strait still closed, earnings season underway. We have Charlie Pellet at the helm at World Headquarters in New York. What do you have, Charlie?
All right, well, let's begin with earnings because you mentioned what's going on with earnings. Goldman Sachs shares, they are certainly weighing on the Dow. Goldman down 3.1%. Dow Industrials down now by 220, drop there of 0.5%. S&P, little change, down a point right now, has been swinging between gains and losses. Stocks, for the most part, reversed earlier losses. Oil prices higher after President Trump ordered a blockade of the Strait of Hormuz. NASDAQ, though, continues to advance up 0.1%. NASDAQ up 34, but again, we've got the S&P swinging between gains and losses right now higher by 2 points. Key takeaway, little changed. The VIX under 20 with a 10-year, 4.33%. The 2-year, 3.81%. Gold is down $34 the ounce to $47.15, drop there of 0.7%. And crude is surging above $102 a barrel. Talking about West Texas Intermediate crude, WTI up 5.9%. Barrel of Brent 101.61 now. That is a gain of 6.7%. Certainly, investors are keeping a watchful eye on oil prices, but what about lessons from previous oil shocks? David Scott Miller is Chief Investment Officer at Catalyst Capital, and he was a guest this morning on Bloomberg Surveillance.
High oil prices for a net exporter country are not a negative, especially when you're the petrodollar country. And now it's just that much more clear that people are not going to want that moving to the yuan when they're trying to blockade Hormuz. So I don't think all of these things are as clearly negative as people might otherwise think for markets.
David Scott Miller of Catalyst interviewed on Surveillance among some of the oil majors. ExxonMobil up now by 0.9%. Chevron up 1.8%. ConocoPhillips up by 1.4%. Keeping an eye on shares of Dell and HP Inc. They are jumping on a report of acquisition speculation. Dell up 5.5%. HPQ, that's HP Inc., up now by 2.5%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, great to see you, and great to see you as well. It's been a week since we've had a chance to compare notes, and welcome to the Monday edition of Balance of Power here on Bloomberg Radio, streaming live on YouTube. Search Bloomberg Business News Live to find us on YouTube at any point throughout the day. All of our programs from D.C. and New York are streaming live on YouTube for you now, and we invite you to join us. If you're in the car, satellite radio channel 121 with a lot of news. It's 2 hours now since the blockade took effect. Did you spend time reading Truth Social while you were watching the Masters? Because the president was prolific over the weekend. I'm just looking at any number of posts here, and I'll reach for the most efficient. 13th of April, yeah, that's today. 43 minutes after midnight, the United States to blockade ships entering or exiting Iranian ports. On April 13, 10 a.m., Donald J. Trump, thank you for your attention to this matter. That follows, of course, a much longer scribe after Vice President J.D. Vance, Jared Kushner, Steve Witkoff pulled up and left town without a deal. 21 hours end to end in Pakistan. And as the president writes again on Truth Social, this was a short time ago today, Iran's Navy is laying at the bottom of the sea, completely obliterated, 158 ships. What we have not hit, he says, are their small number of what they call fast attack ships, because he says we did not consider them much of a threat. Warning, if any of those ships come anywhere close to our blockade, they will be immediately eliminated using the same system of kill that we use against the drug dealers on boats at sea. Always comes back around to Venezuela at some point, doesn't it? This following, of course, the very long post over the weekend in which he said the blockade would take place and any Iranian who fires at us or at peaceful vessels will be blown to hell. It's pretty remarkable that the markets are as calm as they are today. And of course, we've seen oil prices in this range pretty recently here. We're 102, Charlie said, $102 for WTI, up 6% right now. That would have been a sell-off in another world. But here we got the S&P 500 up 5 points, even as the president on the tarmac last evening reiterated the blockade taking effect. Here he is.
Remember, their promise was that they were going to open the Hormuz Strait. They didn't do it. They lied. As you know, at 10 o'clock tomorrow, we have a blockade going into effect. That'll be 10 o'clock tomorrow. Other nations are working so that Iran will not be able to sell oil, and that will be very effective.
Okay, the response from Iran, predictable. The Islamic Revolutionary Guard Corps responding to the blockade, saying that any military vessels attempting to approach the strait under any pretext would be considered a violation of the ceasefire. We still have a ceasefire, right? There is reporting that suggests the president might be knocking down a couple of targets in the interim, even as the ceasefire continues. The security of ports in the region is, quote, either for everyone or no one, Iran's armed forces said in a statement out today. And now we've got new reporting from Barak Ravid at Axios, who says the U.S. asked Iran to freeze uranium enrichment for 20 years. That was the ask, right? Can't get a nuclear weapon. Iran countered with a shorter single-digit period, according to the sources, and J.D. Vance is back on an airplane. It's a tough weekend for J.D. Vance. We're going to get into that with our political panel a little bit later on as the president wages war with the Pope on the heels of these talks leading to nothing. Not that they couldn't resume. That's the whole point of this, right? You can't close the strait, I'll close the strait. And in the meantime, pressure Tehran back to the table. Let's see how this all goes when we talk to Tyler Kendall. She's, of course, our Washington correspondent and live on the north lawn of the White House right now. The toast of New Canaan. I thought of you as I drove back home through Connecticut, back to D.C., Tyler, and it's great to see you. What is the administration saying about all this? We're 2 hours in, and it's almost like nothing has changed.
Well, Joe, firstly, it's nice to see you as well. And you came back to Washington in a week with perfect weather, but also in a week where it doesn't really feel like that much has changed compared to when we were going into the talks just this weekend, because at this point we still have the threat of escalation and we have direct talks that have ended without some tangible resolution to them. Now, you did mention this, that we could see these talks resume. President Trump himself said in an interview over the weekend that he ultimately thinks that Iran is going to come to the table when it comes to negotiating on their nuclear program. And we should point out some reporting from our colleagues overnight that a senior U.S. official does tell Bloomberg News that it appeared very evident to the U.S. delegation that the Iranian delegation did not understand that the U.S.'s core push of its demands was that they want to ensure that Iran is not able to obtain a nuclear weapon. So it did appear that there was some mismatched expectations, if you will, when it came to what could actually be accomplished and discussed in these talks. Now, we'll have to see what happens from here because, of course, this blockade is considered to be an escalation. And, Joe, as you well know, our own analysts at Bloomberg Economics say that if this is enforced and sustained, we are going to dramatically see the odds lowered considerably for a diplomatic solution, as well as the resumption of the flow of oil, at least in the short term.
President was at a UFC fight with Marco Rubio, which I thought was fascinating on Saturday as J.D. Vance is over in Pakistan trying to work this out. More reporting from Axios here, Tyler, and you probably saw this. The Iranians thought they were close to a deal, apparently on Sunday morning, and were caught off guard by J.D. Vance's press conference. And it raises the question, was walking out yesterday part of the strategy to maybe have a more favorable outcome at the negotiating table down the road?
Well, it could have been, Joe, because we know that this White House has maintained that there are key demands that they must see met in order for there to be a deal. President Trump has already telegraphed this multiple times, right? The idea that Iran will never be able to obtain a nuclear weapon. Also, that they need to be able to extract the already enriched uranium that is currently inside the country. Then, of course, there's been some other demands, including that we need to see a reopening when it comes to the Strait of Hormuz. Of course, that is actually part of the ceasefire agreement, the 2-week agreement, before we can even talk about a longer-term potential solution. Now, this does seem to suggest that we could see negotiations again down the road. We're still waiting for confirmation on when that could happen. Pakistan's foreign minister came out today saying that they are trying to keep the conversation ongoing, and we've seen some headlines throughout the day from different countries that have been mediating, most recently within the last hour from Oman, saying that Oman has had discussions with Iran about what ultimately needs to happen here next. But we know that Iran has also put on the table things that they want the U.S. to do, like sanctions relief, for example. But there are other things that the U.S. may not be totally on board with, like Iran's demand that the U.S. rolls back its military presence in the Middle East, or the fact that Iran still maintains that they want to have sovereignty, at least in some capacity, over the Strait of Hormuz, which we know the U.S. and allies would not accept. So at least on paper, it feels like the sides are very far apart on this, but what could ultimately emerge as a deal just remains to be seen.
Perfect encapsulation from Tyler Kendall. I'm looking at the schedule today from the White House, Tyler. Nothing public, right? Is there a chance we hear from the president, or is that unlikely, knowing he's going to be sitting down with the king and queen of the Netherlands this evening with the First Lady? What's this all about?
I had the same thought, Joe. Of course, he does have some other closed events as of now that maybe could open up at 2 p.m. and 4 p.m. Eastern, some signing time, as the White House calls it, and also a policy meeting. So we'll be keeping our eyes out on that. Also trained, and as you mentioned, he has this meeting with the Netherlands, as we know that the U.S. has, of course, been trying to pressure allies when it comes to the conflict in the Middle East. As a segue here, we had breaking on the terminal. I'm trying to find the headline just moments ago when it comes to what UK and the United Kingdom's involvement would be in any reopening of the Strait of Hormuz. And it seems that the feeling from allies is there needs to be a ceasefire in place in order for them to dispatch any sort of assets to help secure the waterway. But at this point, when you have threats from both sides, including President Trump in this post within the last couple of hours, saying that the U.S. could quickly eliminate any Iranian attack boats. You have Iran saying that any military vessel that comes in to the strait would be a violation of the ceasefire. That leaves questions on whether or not the ceasefire really will hold.
All this as the market shakes losses. We're turning positive. The S&P's up 7 now. Dow Jones trimming losses to 150 points. We could end up closing higher on a day like this. It's really something, Tyler, as we all hold our breath, try to figure out what's about to happen. That's Tyler Kendall on the North Lawn. She'll be back with us a little bit later in the program. Thank you, Tyler. As Nathan Dean steps up to the plate next, Congress is back from recess, and part of the government still closed.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index close to session highs right now, up 10 points, 68.27 where we stand, up by about 0.1%. The Dow does remain lower, weighed down by Goldman Sachs after earnings. Right now we've got the Dow lower by 123, a drop there of 0.3%. Goldman, by the way, trading lower by 2.6%. S&P up 12, up 0.2%. NASDAQ up 0.4 with the VIX below 20. The 10-year 4.32% with the 2-year 3.80%. Gold is down $23 the ounce, down 0.5%, 47.26 right now on the precious metal. West Texas Intermediate crude up 5.9%, 102.26 on WTI. Brent 101.51, up by 6.6%. Bottom line here, stocks have reversed earlier losses. Oil higher after President Trump ordered a blockade of the Strait of Hormuz following this weekend's deadlock in U.S.-Iran peace talks. Sales of previously owned U.S. homes fell in March to the lowest since June, showcasing the challenges facing the housing market. Now, among new home builders, Toll up 0.3%, Lennar down 0.2, Pulte Home up by 0.2%. And Dell and HP both higher after a report from the website Semi-Accurate said NVIDIA has been in negotiations for over a year to buy a, quote, large company, and it will reshape the PC landscape. Again, Dell up by 5.6%. Hewlett-Packard Inc., HP Inc. up by 3.8%, NVIDIA down 0.2%. Again, recapping, S&P 500 index up just about 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Balance of Power continues now. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, thank you so much. I'm keeping my eyes on Palantir today. It's not every stock that gets a buy rating, a recommendation from the President of the United States. Wasn't Tesla the last one when he said you should buy it? Palantir, he even put the ticker in the post on Truth Social, up 4% now to top $133. It's been lumped in with the whole SaaS apocalypse, but maybe the president will find a way to get out of this. I should note, speaking of the president, we're going to turn to Capitol Hill next, but a word from the White House. We just heard from Tyler that they have decided to call the pool. They're assembling the press pool right now for some reason. Getting back to our conversation, the president has no public events on the schedule today. So if he decides to walk into the briefing room or invite reporters into the Oval, you know we'll bring you there. As Congress comes back to town, Senate today, House tomorrow. You don't need me to tell you they've been gone for 2 weeks. And, well, TMZ has been very busy trying to follow them around to Chef Mickey's and all the other places they've been going. I think that might have been the last time I talked to Nathan Dean, as a matter of fact, because despite 2 weeks of deep thought, time with family, no town halls, the Department of Homeland Security is still closed. It's been 58 days, DHS closed in the middle of a war with Iran. Now, there was a big deal. Remember this? The president was going to figure it out through reconciliation, that which couldn't be passed by Congress. The House going to come back, pass that Senate bill that funds everything but ICE. Then they do the rest in reconciliation. Is that still the case? You know, people leave for 2 weeks, they come back. It's worth checking in with the senior U.S. policy analyst at Bloomberg Intelligence. Nathan Dean is back with us, and it's how we start our week, every week here on the early edition of Balance of Power, knowing as well his podcast is on this feed here for Balance of Power. Nathan gets you ready every Monday in his briefing, and he's with us right now. Good to see you, sir. 58 days. President says he wants reconciliation on his desk, I think by the 1st of June.
Yep.
I don't even want to ask you any leading questions. What is about to happen when all of these people get back in the same room?
So, you know, there is this two-pronged strategy that's coming out from Senator Lindsey Graham and also from GOP leadership, and that is prong one, reconciliation 2.0, is focused on DHS. Think of it around $80 to $100 billion. Now, for those of us in the markets, it doesn't excite us all that much. We're talking about DHS appropriations for a number of years. Again, really not much of the investing side. But prong number two, so think reconciliation 3.0, is grants for the Save America Act. And more importantly, for those of us in the markets, is this idea of $350 billion for defense, and also the Obamacare changes, the tax changes. So where we think this is going is that if Republicans can keep this straight and narrow, and this is what Senator John Thune wants, is that if it's limited just to DHS funding, we think it can get over the line. But every lobbyist, every single policymaker in this town, and the House Freedom Caucus specifically, is saying, let's not do this two-pronged approach. Let's try and get everything attached to it. Next thing you know, if that blows up into $1 trillion package, which I don't think it will be, but call it maybe $500 billion, you know, if that balloons up, then things get a little bit more difficult. And if prong one goes forward, prong two, meanwhile, has to go between September 30th and January 3rd. So either right before the election or during the lame duck, odds of that actually start decreasing.
Wow. So they want to put this all together into one big reconciliation plan. That's interesting. So let's just take these one at a time. At the moment, everyone in DHS is getting paid, correct?
That's through Senator Mark Wayne Mullen used One Big Beautiful Bill money to pay for it.
So ICE, which also has lots of money through the Big Beautiful Bill, is in pretty good shape. TSA is getting paid, Coast Guard, FEMA, they're all getting paid. So exactly what would this do to fund everything but ICE in this case? This would just basically move the money to a formal budget line as opposed to playing around with a slush fund.
Correct. And, you know, also it sort of takes away, not that the Democrats would ever sue over this, but what President Trump has done here and what the administration, there are some thoughts out there, and look, I haven't done the analysis, but there's some thought out there that, you know, look, Congress has the power of the purse here. There could potentially be a lawsuit. Now, in this case, the Democrats wouldn't go there, but, you know. By
paying people out
but there's this idea that, look, appropriations is appropriations. And they took the One Big Beautiful Bill, they're moving some money around, and look, for every money that they're spending on DHS is money that they're not using originally intended for the One Big Beautiful Bill. So I think they'd rather have, you know, they get everything just solidified, get Congress to actually pass it, and move on. But again, from those of us in the market, what we're most thinking of right now is the defense money, the $350 billion tied to defense spend. And as of right now, it looks like it's not in the plans of the GOP to move with that right now.
Really interesting, because we keep hearing that, you know, the president's the Speaker of the House, and Congress will eventually fall behind whatever the president wants to do. We know that Lindsey Graham and John Barrasso got the president's buy-in on the original plan, the narrow reconciliation that you just described, focused on ICE and CBP. Who's saying no to the president here? Is it the Freedom Caucus?
So there's a couple of things. First, the House Freedom Caucus is saying no because, look, you only get one bite of the apple. I mean, even though they're saying that there are two, the odds of being able to pass a reconciliation bill with two margin in the House of Representatives for the Republicans between September 30th and January 3rd is going to be very difficult. I mean, you already have people thinking about the midterm elections here, and this idea that if you get something that balloons up to $500 billion, $600 billion, or whatever, Obamacare changes, tax changes, we haven't even talked about deficit impacts. We have fixed income traders calling in and saying, do you think there's deficit impacts here? Budget hawks will be included, and where I'm going with this, it gets messy. So right now, if the Republicans can keep it clean, tied to DHS, then you take away a lot of this, you know, news cycle that we're talking about. But then again, there's a lot of Republicans here and a lot of lobbyists who are like, look, show me my love. And that small, narrow bill doesn't do that.
We haven't talked about the supplemental. Would that go into the second reconciliation plan? This I believe it's $100 billion that would be needed for the war. They brought that number down, all reportedly. There's no formal request yet. What are you hearing?
So, you know, right now, I think the anticipation is that it's not included in the reconciliation bill.
But look, standalone.
It would be a standalone. Okay. And look, you know, this is where they're going to have to be flexible. Things are going to have to be fluid. But if you say that there's $350 billion in reconciliation, call it another $100 billion in defense, or at least in terms of like a standalone bill, that's $450 billion to the defense industry. Most of that is tied to munitions and anti-missile and counter-drone, which favors Lockheed Martin, RTX, and Northrop Grumman. And so, you know, our view is on the standalone bill is that, look, there are going to be some very difficult questions asked by lawmakers, even on the Republican side, before they decide to approve this. So I would consider that more of a third quarter fight. Let's just see where that goes. Ultimately, they may just say, you know what, the $350 billion, if we can get that, then we may not need the extra $100 billion.
Really interesting. As we spend time with Nathan Dean, I want to tell you that we might be hearing from President Trump imminently here. I mentioned the pool was gathering, the press pool at the White House, and Fox, Nathan, is now reporting that the president is likely to speak, could speak at any moment. And this is all happening as the markets turn positive here. and start reaching higher. The S&P 500 is now up 22 points. The NASDAQ is up 130. The Dow's trimmed its loss to 65 points. I'm deeply curious to know what the market thinks it knows. And if the president speaks, we're going to go there. This could be a really interesting moment. And I should ask you while we're talking about this, Nathan, about war powers. Tim Kaine's on Sunday morning TV talking about bringing this back up again. Will this war powers vote get to the floor in the Senate?
I don't think so.
No?
I mean, look, from our perspective on the war powers, it's symbolic. I mean, it doesn't really change things. It maybe puts a little bit additional pressure on the White House, but it wouldn't pass. Okay. And even if it did, President Trump would veto it. You know, our point here is that, you know, when it comes to Iran and specifically, you know, what the markets are thinking, I think the markets saw this past weekend and said, look, we saw negotiations go for about 24 hours. We didn't see, you know, yes, we have a blockade, but we didn't see a breakdown where both sides just said, look, we're not going to come back to the table. There are still people reporting that there may be other negotiations. And so I think that's the most important thing is you see a continuation of the status quo, meaning no increase in attacks or anything like that, and this a desire to go back to the table. But we'll see. I mean, President Trump could come out in the next few minutes and say something different.
We got a deal. Who knows? Who knows what the market thinks? This is a really interesting moment. If you're just joining us on Balance of Power, you chose wisely. In the coming moments, we are expecting to hear from President Trump and what could be a very important dose of news. As I throw another log on the fire with Nathan Dean, I need to ask you about what's going to happen on 4/20. And this time, I'm not asking you about rescheduling. That's when FISA is up. FISA 702 never comes easily. And this is going to be something that we talk about a lot in the next couple of weeks. Nathan, can the speaker get this done?
I think so, but I think he's going to need President Trump's help on this. Because, look, you've got a lot of folks on the House Freedom Caucus side, a lot of folks out there due to privacy concerns that are concerned with this extension, this 18-month extension of FISA. But, you know, I do think that there are enough members of both sides of the aisle that could probably come together for an agreement. But I do think President Trump is going to have to give the speaker some political cover on this. You know, we're not telling our clients all that much. It's not that big of a deal from an investment point of view.
Right.
But obviously from, you know, just how Washington works, it's just going to eat up more time and generate a lot of headlines that's going to make the speaker's life just a little bit more uncomfortable as we get closer to April 20th.
That's right. This is another Freedom Caucus issue, right? He's going to have the Freedom Caucus in his office complaining about warrantless wiretapping. We go through this every year.
And just remember, the Freedom Caucus did cause a hiccup when, you know, the Senate jammed the House with the DHS funding and said, we're going to do what we've done 1,000 times before is jam the House. And the House came back and said, no, we're not doing it, which is why the DHS still hasn't been funded. So I would certainly point out that even though I think FISA will be extended, House Freedom Caucus is beginning to flex its muscles right now, and that flex may continue into April 20th, so stay tuned.
Really interesting. Great always to spend time with Nathan Dean. If that doesn't set the table for you, they're coming back tonight and tomorrow night. Everyone will be here by the end of the day on Tuesday, and it's time to go. Nathan, thank you, as always. Bloomberg Intelligence, he's the best of us here in our D.C. Bureau. I'm Joe Matthew. Thank you for joining us here on the Monday edition of Balance of Power. The gears are turning. The plates are shifting. We're going to stay live with you here and commercial free until we hear from the president and have a sense of what is going on in this market. Our signature panel is with us, Rick Davis and Jeannie Shanzano. In fact, Rick is here with me in Washington today, and they're going to be weighing in as well. With our eyes on Wall Street and imminent remarks from President Trump, we first want to go to Charlie Pellet. He's at World Headquarters in New York. And Charlie, we've seen quite a turn higher here on Wall Street. What do you have?
Right now, best level of the day, Joe Matthew. Let's recap, reset as we await words from President Trump. We'll have it for you live right here on Bloomberg if and when it happens. Dow Industrials down 65, down there by 0.1%. Goldman Sachs, member of the Dow, certainly weighing on the Dow after earnings. Goldman, by the way, down 2.5%. NASDAQ is advancing 125 points now, up by about 0.5%. The 10-year 4.30%. All of this with a VIX that continues to fall right now, holding below 20. We've got spot gold down $16 the ounce, 47.32 right now, down by about 0.4%. And West Texas Intermediate crude oil. Everybody's keeping an eye on crude. Well off session highs right now, up 3.8%, holding just above $100 a barrel on WTI. Barrel of Brent also right around $100, up by 5.2%. So bottom line here, U.S. stocks higher, reversing earlier losses. Oil prices are advancing after President Trump ordered ordered that blockade of the Strait of Hormuz following the weekend's deadlock in U.S.-Iran peace talks. Again, recapping, S&P up right now by 0.4%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you so much. There you have it, with a turn higher on Wall Street and imminent remarks from President Trump. The press pool at the White House has been pointed toward the Rose Garden. It's unclear if the president's going to be coming outside here or not, or if they're going into the Oval, but we're going to follow them wherever we go. The president has just posted, just in the last moment, on Truth Social, 34 ships went through the Strait of Hormuz yesterday, which is by far the highest number since this foolish closure began. President Donald J. Trump, remembering, as we discussed at the top of the hour here, the blockade put in place by the United States is now 2.5 hours old, and it does appear that the president has chosen this moment to speak about it. He had nothing public on the schedule that we began our day with, but that is apparently changing now, and when we get comments from the president, we'll apologize to our panel in advance, although we're very lucky to have Rick and Jeannie with us because they'll be able to respond to what we hear. So let's not waste time. Our panel comes together now with Bloomberg Politics contributors Rick Davis and Jeannie Shanzano. Rick is our Republican strategist, partner at Stone Court Capital. Jeannie, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Great to see you both. Rick, I'm going to start with you. Typically, you would hear from the President of the United States after implementing a blockade of the Strait of Hormuz. There was nothing planned. It does appear now that he wants to speak. 34 ships passing through. Is this good news? The market is adjusting itself into a positive session here.
Yeah, I think that any kind of progress that moves hydrocarbons through the Gulf of Hormuz is a good thing. Mm-hmm. And even though he talks about a blockade, it's a blockade on Iranian-bound crude, not Saudi crude or products coming from UAE or Qatar. So if you can increase the amount of flow, it's going to, sort of start to correct some of the problems associated with the oil trade. Mm-hmm. And just as a reminder, even though 34 ships going through the strait is a huge improvement over where it's been in the last 6 weeks, 130 normally go through every day. So it's a substantially, different scenario if we could get back to status quo ante.
We're showing you a shot of the President of the United States who has opened the door from the Oval to the Colonnade to receive McDonald's delivery. Is this true? Who's given this to him?
Yeah, I saved over $11,000.
We have a DoorDash driver at the Oval Office?
It was very surprising. Very surprising.
This is incredible.
And that doesn't include overtime in your case. This is only...
Okay, if you're with us on the radio and you can't see on YouTube, this is a DoorDash driver with a DoorDash t-shirt on. They're talking about no tax on tips. Let's put an ear on this if we can hear it.
Tax cut. It's really, we call it the Great Big Beautiful Bill. We should call it the Great Big Beautiful Tax Cut Bill because it's tremendous amounts of money. And that's overtime. That's also on Social Security, as you know.
Yes.
And it's pretty amazing.
Yes, it is.
You're really nice. Would you like to do a little news conference with these people? These are not the nicest people. They're not nice like you. You know that, right?
I'll do whatever you ask me to do, sir.
So the no tax on tips is something special, right?
It's very special.
And that's one that really pertains to you more than anything else.
Yes, sir.
It's fantastic. It's such an honor to meet you. And I think you voted for me, did you?
Maybe.
Yeah. I heard you're a great supporter. We appreciate it. I'll put this over here. And why don't we have a news conference with the press? Want to do it?
Sure.
You don't have to space safety much. I think they're looking about Hormuz Strait and various other things. Do you have any questions?
Mr. President, did you post that picture of yourself depicted as Jesus Christ?
Well, it wasn't depicted. It was me. I did post it, and I thought it was me as a doctor, and it had to do with Red Cross as a Red Cross worker there, which we support. And only the fake news could come up with that one. So I just heard about it, and I said, how did they come up with that? It's supposed to be me as a doctor making people better, and I do make people better. I make people a lot better. As an example, the 11,000, I understand your husband's going through treatment.
Yes, sir. Yes, sir.
He's going through some very serious cancer treatment, so
yes,
this goes a long way.
Yes, sir, it sure does.
President Trump is talking to the DoorDash driver and reporters now, having been asked about the photo he posted, the AI image he posted of himself as Christ the Healer.
Jared, they've all done a very good job, and I can tell you that we've been called by the other side. They'd like to make a deal very badly, very badly.
What was the sticking point over? You said it was over nuclear.
It was over nuclear, very similar, yeah, very good. I guess you're listening. It's over the fact that they will never have a nuclear weapon. Iran, you marking it down? Iran will not have a nuclear weapon. And we agreed to a lot of things, but they didn't agree to that. And I think they will agree to it. I'm almost sure of it. In fact, I am sure of it. If they don't agree, there's no deal. There'll never be a deal. Iran will not have a nuclear weapon, and we're going to get the dust back. We'll get it back either. We'll get it back from them or we'll take it.
Mr. President, as far as the naval blockade is concerned, what's the end game? Is it to force Iran back to the negotiating table? Is it to open up the strait so that gas prices ultimately come down?
Maybe everything. I mean, both of those things, certainly, and more. We can't let a country blackmail or extort the world, because that's what they're doing. They're really blackmailing the world. We're not going to let that happen. And you know, the amazing thing is, we don't, can you believe this? We don't use this trade. We don't need this trade. We have our own oil and gas, much more than we need. We have more oil and gas than Saudi Arabia. Think of this. We produce more. Saudi Arabia, and add Russia to it. Substantially more. And by next year, we'll have double that amount. So we don't need it, but the world needs it. And many ships are heading to our country right now as we speak to load up with the best. Really, I guess you could say, somebody said the best and sweetest. I don't know exactly what sweet is, but when it relates to oil, it's a good thing. But they're coming to our country right now. There are many boats coming to our country. Now, it could very well be this is going to be settled before then. We've been called this morning by the right people, the appropriate people, and they want to work a deal. They would like to work a deal.
Is it your anticipation, Mr. President, that other countries will assist in this effort to blockade Iran and those?
Yeah, other countries are going to also.
Which countries, sir?
We don't need other countries, frankly, but they've offered the services. We'll let it be known probably tomorrow.
Has the blockade started, sir?
Yeah, started 10 o'clock.
Bishop Robert Barron supports you and your policies. He praises you for defending religious freedom.
Yeah.
He now says you owe Pope Leo an apology. Will you apologize?
No, I don't, because Pope Leo said things that are wrong. He was very much against what I'm doing with regard to Iran, and you cannot have a nuclear Iran. Pope Leo would not be happy with the end result. You have hundreds of millions of people dead, and it's not going to happen. So I can't. I think he's very weak on crime and other things. So I'm not. I mean, he went public. I'm just responding to Pope Leo, and you know, his brother is a big MAGA person, and he's a great guy, Louis. And I said I like Louis better than I like the Pope. Now you have to have law and order in our country, and that's what we have now. We have the lowest crime numbers we've had in a long time, despite the fact that many criminals were allowed into our country, but we've gotten a lot of them out. We've done a great job on crime. So we have the lowest murder rate in 125 years, since 1900, the lowest murder rate. So we believe strongly in law and order, and he seemed to have a problem with that, so there's nothing to apologize for. He's wrong. The other thing is he didn't like what we're doing with respect to Iran, but Iran is wants to be a nuclear nation so they can exterminate the world. Not going to happen.
And Mr. President, on Iran, classified deal is not reached by the end of the ceasefire. Does your threat from before still stand?
Yeah, I don't want to comment on that, but it won't be pleasant for them. Let me put it that way.
Do you still claim to charge your toll to use the Strait of Hormuz, sir?
Has your timetable changed in any way in terms of ending this conflict?
No, it's going on. Right now, there's no fighting. Right now, we have a blockade. They're doing no business. I didn't like seeing boats come out if they were doing business with Iran, but if they weren't, no boats came out. So now Iran is doing absolutely no business, and we're going to keep it that way very easily. Don't forget, their Navy is gone, their Air Force is gone, their anti-aircraft is gone, their radar is gone, and their leaders are gone. That's a lot.
Do you still want to charge them?
Something from predominantly going to China, Mr. President, has Xi Jinping reached out and maybe?
No, but we have a very good relationship with China. He would like to see this ended also. He certainly wants it ended. Everyone, I want to see it ended too, but we can't give a nuclear weapon to a group of people that have caused nothing but havoc for 47 years. Look, I'm the president that's done something about it. This should have been, and many other presidents regret that they didn't. Yeah, so I'm doing something.
President, Ukraine impeachment documents that were just declassified show that Eric Charanella not only submitted false information, but that he had no direct knowledge of the alleged conversation. It was all hearsay. Do you feel vindicated by those?
Yeah, I do. They're a bunch of crooked people. You're talking about with respect to all of the things that they put against me? Yeah. Well, it's come out that in so many different ways. Thank you very much for that question. I appreciate it. But in so many different ways, the election was rigged. The 2020 election was rigged. We found that out. What you just said is just a piece of that. It's a big piece, but minor, relatively speaking, compared to what they did. They cheated on the election. They cheated on the vote. And they cheated in every way possible. And it's the only way we got an incompetent man to be a president. And he was an incompetent man. Many of the things that we're talking about, even including this would have been settled a long time ago, not now. And it should have been settled by other presidents. But the election was a rigged election. We can't let that happen to our country.
It's concealment of exculpatory information. What should happen?
Well, it's a very serious charge against them and the Democrats. They cheat. They can't get elected with their policy. So their policy is no good. They want to have, open borders. They want to have men playing in women's sports. Do you think that men should play in women's sports?
I really don't have an opinion on that.
You don't, I'll bet you do.
No, I'm here about no tax on tips.
Yeah.
Maybe know your name, please, as you deliver to the White House. Is it your understanding, Mr.
Yeah, go ahead, please.
Thank you, Mr. President. Is it your understanding that during this period of time, while the U.S. has instituted this naval blockade, that oil companies will be able to send their oil tankers through the strait, get more oil out from this area?
Yeah, I think they're going to be doing very well there, and I think they're doing very well here. You know, a lot of tankers are coming up here. They're coming in empty and out full. And we have a great capacity to take care of that business.
Ma'am, may we know your name, please? Have you delivered to the White House before?
I have not. My name is Sharon Simmons.
And are the White House good tippers? Do you know?
Wait.
Potentially. Yes, very.
Mr. President, can I ask you something
That's
about
sweet.
Cuba?
Thank you. You reminded me.
Mr. President, one on Cuba, sir. You previously said that you had no problem with countries sending fuel to Cuba after previously promising to tariff them. What happened? What changed?
Well, we're going to see with Cuba. Cuba's another story. Cuba's been a terribly run country for a long time. It's got a bad system. It's been very oppressive, as you know. And we have a lot of great Cuban Americans, all of whom just about voted for me. And they were treated very badly. In many cases, family members have been killed. They've been beaten up and mugged, and terrible things happened in Cuba. And Cuba's a failing nation. And we're going to do this, and we may stop by Cuba after we're finished with this. But Cuba is a nation that has been horribly run for many years by Castro.
You said raised up housing regulator Bill Pulte regarding those two recent referrals for Letitia James for insurance fraud. Do you know if federal prosecutors have evidence to charge?
Well, I don't know. I know she's a very corrupt person. And you're talking about the so-called Attorney General of New York. She's a very corrupt person. That's been proven now. And I know I have nothing to do with it, but they're looking at things all over the place, more than one state concerning her, and concerning people like Comey, who's a dirty cop. Comey's a dirty cop, and dirty cops are bad. Nobody likes the police more than me, the law enforcement more than me, but Comey's a totally dirty cop, and we're not gonna stand for it. Yeah.
The UFC fight that's happening at the White House this summer, the UFC typically numbers those fights consecutively, but should they label this one UFC 1776?
That's a good idea. I'll tell that to Dana White. I like that idea. I will say I've been involved with a lot of big events. I have never had an event that's had more interest in the UFC fight that we have right at the front door. Right there, they're going to start building about a 4,500 seat arena, and then in the back at the Ellipse, we're going to have maybe 100,000, 50 to 100,000 people, I guess. They're building tremendous stages, and you're going to have massive screens of the fight. And it's a very popular sport. But I have never been involved, because of the White House and everything, there's a lot of reasons for it, but we're having a fight at the White House on June 14th, and we're going to have an arena built right at the front door. And if you want, is your husband up to coming? You think? Does he like UFC?
He might.
If he's feeling good, we'll make sure you come, okay?
That would be wonderful.
That's
Thank
better
you.
than the tip I just gave you. That's a lot better. But no, if he's feeling good, right? Yeah. Is he doing okay? Is he going to be okay?
He's doing very well. He's doing very well. He actually, during the process, he wrote a book. And
Go ahead, give him the name. Maybe you'll say.
He hasn't had it published yet, but it's a book on humility, and his name is Leo, and he's just
good guy. Doing
good. He's doing great.
How long are you married?
We have been married for 6 years.
Oh, so
but we've, like most people, we've been together for over 10. So
that's very good. Well, that's right. Nice to say hello to him. He's going to be good. Okay, he's going to get better, and he's going to be good.
Yes, sir.
Good.
Yes,
well,
sir.
I want to thank you all, and I especially want to thank you for being here.
Well, I want to thank you for the no tax on tips.
Oh, that's good.
It has helped my family out immensely, and I definitely appreciate it. Thank you.
The one thing that I just in leaving, we've had more good press for a change, having to do with the fact that people are receiving more money from their tax refunds than they ever thought possible. We had a man the other day got $5,000. Another one got $7,000. They weren't expecting anything like this, and it's because of the great, big, beautiful bill. And that's why you came, and I really appreciate it. And tell your husband to get better.
I will.
And if he's feeling good, you'll come up and you'll watch that fight.
All
Okay,
right.
June
I
14th.
appreciate it.
All
Thank
right?
you.
Thank you very much.
Thank you so much. Thank you.
Any update on
Thank you.
DOJ, though,
Thank
Mr.
you.
President? You went to leave DOJ. Any update on who you went to leave DOJ? You did an
Well, I think Todd is doing a fantastic job. I will say that. He's a great lawyer. I know that because he's been with me a long time. And so far, he's doing a great job. But we have incredible people in the DOJ, getting better all the time. Thank you very much, everybody.
Thank you, sir.
And back into the Oval Office. He's bringing DoorDash Grandma in with him. Yep, there they go. She's in the Oval Office now, having brought 2 bags of McDonald's to the White House today for what appeared to be a planned event. We knew that Republicans, and beginning at the White House here with the administration, had planned a full court press to coincide with Tax Day, just 2 days from now, to talk about the benefits of, yes, the big, beautiful bill, no tax on tips. There you have it. Without a lot of information about what's going on in Iran, the president speaking just as much about the UFC fight that's going to be coming up at the White House in a couple of weeks. Rick Davis and Jeannie Shanzano are with us. They're going to be back in our second hour here on Balance of Power to react to all of this. We didn't know we had this in store today. And by the way, we don't have a sense of what was included in that McDonald's order. The president did give DoorDash Grandma a tip. I don't know if either of you, Rick and Jeannie, saw how much money that was, but he almost forgot to give it to her. He threw some cash in her hand, and I guess that she has been made whole here. I want to get into this whole conversation, but we're not going to have time until we get Kaylee here. We're going to welcome our global television audience. Hour 2 of Balance of Power will be chock full, live from Washington, on a day the President of the United States got the DoorDash Grandma to the Oval Office. Reporters never did get inside. They were out on the colonnade. Good thing it's nice out today. We're going to have much more to discuss, as I mentioned, when Kaylee joins us. Heather Conley from the Bureau, I should say, the American Enterprise Institute, formerly with the Bureau of European and Eurasian Affairs, former Deputy Assistant Secretary of State, is going to weigh in on this blockade, now 3 hours old, on Bloomberg.
Washington, D.C. This is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump says Iran called this morning. Welcome to the Monday edition, as the president tells reporters at the White House that Tehran still wants a deal, even after weekend talks failed and in fact led to a U.S. blockade of the Strait of Hormuz. I'm Joe Matthew, alongside Kaylee Lines in Washington. Thank you for joining us. Kaylee, this blockade is now 3 hours old. The president saying some 34 ships still have passed through.
Yeah, he suggested that was the tally yesterday, which would be a higher number than what we have seen over the course of the last 6 weeks, but even still remains far lower than what we were talking about in terms of the flows and vessels transiting the strait prior to this war. Interesting that he really doubled down on the issue of nuclear power for Iran. Of course, that was what he said was the sticking point in talks that were unsuccessful over the weekend. He says he now thinks Iran will agree on nuclear and that Iran's nuclear dust will be gotten back by the United States.
The highly enriched uranium that was said to be part of a deal at one point, Kaylee, we just saw one of the more unique presentations in recent White House history, even Trump White House history, as he had DoorDash grandma deliver McDonald's to the Oval Office, reminding people that tax day is this week. No tax on tips is something we're about to apparently hear a lot about.
Yeah, of course, he'll be traveling to Las Vegas, Nevada later this week to tout that very same policy as he maybe tries to shift the focus, at least domestically, back to the affordability message we were promised when we came in to 2026 before a war was launched in the Middle East. That said, on the subject of affordability, we're still looking at gas prices well over $4 a gallon on average across the country due to the Strait of Hormuz in large part. And he even said in an interview over the weekend with Fox Business that that could be higher come the midterms in November.
Which is not what Republicans want to hear, certainly frontliners who are running for re-election. No word on the McDonald's order. There were two pretty big bags, Kaylee. It wasn't for the press. They brought them into the Oval, right? And DoorDash grandma followed them.
Yeah, maybe we'll have to look for a readout on True Social.
A couple of number two meals, maybe.
Delivered meal hit for President Trump. So clearly a lot to talk about today. Interestingly, though, as we're talking about all of this, the equity market at least seems to be looking through it, even in the face of high oil prices today. So let's get the latest on financial markets now as we turn to Charlie Pellet in New York. Hey, Charlie.
Thank you very much. And here's what's going on. The Dow, the S&P, NASDAQ 100 index. Yes, the Russell 2000. They are all advancing right now. We've got the S&P up 29 now, up by about 0.4%. The Dow, as I speak, flat on the day, up 1 point, has been swinging between gains and losses. Little change, perhaps the key takeaway at this hour for the Dow. We've got NASDAQ up 0.7%. NASDAQ advancing 152, keeping it all in perspective. The S&P 500 index up 30, up by about 0.5%. A VIX below 20, the 10-year 4.30%. Gold is down $15 the ounce to $47.35 now, down 0.3%. West Texas Intermediate Crude WTI falling back below $100, up now by 2.8%. 99.29 on WTI. Barrel of Brent 99.75, up now by 4.8%. So again, recapping, U.S. stocks are pushing higher. Oil majors also advancing. ExxonMobil up by just about 0.1%. Chevron up 1.1%. ConocoPhillips up now by just about 0.6%. McDonald's shares down 0.7%. DoorDash up now by 4.1%. All of this after that DoorDash employee delivered McDonald's to the president ahead of the White House news conference. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet checking on the markets for us, including movers that matter. Who knew that DoorDash was going to get a White House shout out today? That actually seems to be happening a lot. It was Palantir that got the shout out from President Trump just a few days ago. Yeah, with the ticker included in the True Social post. And everything. We're seeing the intersection of Wall Street and politics in a whole new way. And that's, of course, what we focus on here on Balance of Power, which, of course, has largely been dominated by geopolitics in the intersection with the economy and financial markets, specifically centered around the Strait of Hormuz, where all the activity is, or perhaps, Joe, more specifically, is not. As the president said, the blockade is in place. Of course, it's been about 3 hours now, effective 10 a.m. Eastern time. No vessels carrying Iranian energy products are going to be allowed through by the U.S. Navy.
34 ships, he writes, went through the Strait of Hormuz yesterday, which is by far the highest number since this foolish closure began. That was right before the president invited reporters down the colonnade to speak outside the Oval Office. And you heard Kaylee already reflect what he was saying. We want to get to Tyler on this. She's at the White House right now. It's all about nuclear. And the president says that Iran called this morning to reiterate its desire to make a deal, knowing that J.D. Vance got on that airplane and he did not look very happy following 21 hours of talks that led to nothing, Kaylee. So let's bring in Tyler Kendall live from the North Lawn of the White House. I don't know if you're getting any McDonald's over there, Tyler, but the president clearly was just as interested in talking about his tax policy as he was Iran. The markets are higher now. There does seem to be a sense that we might be back at the negotiating table soon. Is that how we should read this?
Well, according to President Trump, and as you both mentioned, the main headline here is that he claims that Iran called this morning and wants to make a deal. But again, it does still seem, at least publicly, that the sides are very far apart when it comes to the core of the U.S.'s demands. Of course, that Iran cannot be able to obtain a nuclear weapon, and then also what happens to the already enriched nuclear material. Before we can even talk about a longer-term agreement, though, we have to talk about this 2-week ceasefire, which, of course, includes the reopening of the Strait of Hormuz. President Trump said in these remarks that the timetable has not changed, that there will not be additional fighting. But of course, we've heard an escalation of threats on both sides today. As we broke last hour, President Trump threatening that any Iranian attack ships that come near the U.S. blockade could be eliminated entirely, in his words. And then you have Iran now threatening to hit Gulf state ports, as well as that IRGC statement that we got overnight that says that if any U.S. military vessel goes into the Strait of Hormuz, that would be considered a violation of the ceasefire. But as you guys wrapped up nicely, it does appear from President Trump that these negotiations are ongoing in a sense after what we had seen from over the weekend, which was a direct talks that didn't have that resolution that we know that this White House has been hoping for.
Well, and Tyler, obviously we know whatever happens in the Strait of Hormuz has wider ramifications beyond just the Middle East, including if you are China and buying a lot of that Iranian energy product that the president wants to make sure cannot get through. This is a question that has been percolating since this blockade was initially announced. What impact will it have on Beijing, especially as we're now, just over a month out from President Trump's scheduled trip there to meet with Xi Jinping?
And President Trump said, Kaylee, that he knows that Chinese President Xi Jinping would like to see this conflict resolved, considering that we know nearly 80% of the barrels that go through the Strait of Hormuz ultimately end up going to Beijing. So it's going to be something to watch here when you pair that with the president's previous threats last week that he could impose a 50% tariff on any countries that are supplying weapons to China, though question still on exactly how the administration would evoke the IEEPA authority as suggested by the NEC director Kevin Hassett, though that's the same authority that the Supreme Court has previously struck down. But that appeared to be a message to China, perhaps to gain some leverage as they head into these trade talks next week. But it also goes to the broader issue that this White House wants to make clear that other countries need to get involved here, including, as the president said in these recent remarks, that we could perhaps expect some additional details tomorrow about which other countries may be assisting the U.S. when it comes to this blockade.
But no details on that as of today. Bloomberg's Tyler Kendall live on the North Lawn of the White House. Thank you so much. And as Tyler was walking us through some of what the president said, let's hear from him in his own words just moments ago about the Strait of Hormuz and Iran's attempt to control it.
We can't let a country blackmail or extort the world, because that's what they're doing. They're really blackmailing the world. We're not going to let that happen. And, you know, the amazing thing is we don't, can you believe this? We don't use the Strait. We don't need the Strait. We have our own oil and gas, much more than we need.
So let's get more into this now as we turn to Heather Conley, non-resident senior fellow at the American Enterprise Institute, former Deputy Assistant Secretary of State for the Bureau of Europe and Eurasian Affairs in the George W. Bush administration. She's here with us in our Washington, D.C. studio. Heather, welcome back to Bloomberg TV and radio. He says Iran is blackmailing the world by closing off the Strait of Hormuz. Therefore, we are attempting to close off the Strait of Hormuz, at least for the use of Iran. What do you think about this blockade strategically? Is it actually something that can be tactically successful?
Well, the president is right. I mean, the Iranians have used this leverage for the last 6 weeks quite effectively. And what the U.S. administration is trying to do is wrest that leverage away from Iran And what we're trying to do now is in effect blockading the entire strait to try to wrestle that leverage back. So it's understandable. Now, will it work? And that's really your question. And we just saw about an hour before the blockade went into effect, a Chinese tanker did do a U-turn. But in fact, it's sort of closing off all trade, all traffic, because people honestly don't know how this is going to work. And I think we just have to watch the brave first ship that tries to traverse the strait and see how successful they will be.
Well, this is quite a moment that we're in here. The markets are in a great mood. Interestingly, crude oil's back below $100 a barrel since the president came out and talked to reporters. Heather, he said, we've been called this morning by the right people, the appropriate people, and they want to work a deal. They would like to work out a deal. Of course, we just got back from the negotiating table in a failed 21-hour session with J.D. Vance, Jared Kushner, Steve Witkoff. Does the U.S. blockade change the dynamic enough to change the conversation at the negotiating table?
So, Joe, if I can interpret, I think what's happening is the Pakistani mediators are continuing to pass some messages. They're trying to keep some of these talks alive, and I think that's important. We need those open channels of communication. But quite frankly, we really need to understand now how Tehran is going to react to this blockade. And I said, honestly, we're waiting to see the first vessel that tries to, move and what happens. But as I said, I think this is it's just going to bottle everything up. And I can't explain to you why the markets are so positive right now, just because we are now starting to see really the last tanker that left, February 28th, is reaching port. You're going to now start to see some material impact in Asia as well from products and things like that. So I don't see a horizon right now for resolution. I see a pause. And now we just have to wait and see how Tehran responds to this blockade.
I have to wonder if at least some of the market reaction is that the idea that this is not as escalatory a step as the president could have chosen after talks failed this week. And as he was previously, of course, saying that the entire Iranian civilization was going to be killed, that he was going to take out critical civilian infrastructure. He went with a blockade instead. Is that to say, though, Heather, that this can't ultimately result in more escalation, especially as we don't know what Iran's reaction function is going to be?
Yeah, I mean, as I said, I think we are just in a pause right now. The ceasefire still held. Now, when the two destroyers went through the strait, the U.S. destroyers, Iran didn't react. The negotiations were still ongoing. I think that was an interpretation of we want to see if this can go. But really, we have to see whether this happens or not. And again, a blockade is not doing the convoy support and escorting ships. That's 15 vessels blocking things. So it's again the muscularity that it would take to really do those convoy escorts. And look, the president admitted we didn't finish all the small boats. We know that the Iranians do have underwater drone capability. We're not entirely clear what the mining situation looks like. So this is absolutely right. I mean, the least, I think, risk-taking for the U.S. military, for the Navy, but it's a stopgap measure. We'll have to see what happens next.
So what did you make of that post from the president? This came around 10:30 this morning. He talks about Iran's Navy at the bottom of the sea, which he says a lot. But he said, what we have not hit are their small number of what they call fast attack ships because we did not consider them to be much of a threat. I'm not sure why. But he says, warning, if any of these ships come anywhere close to our blockade, they will be immediately eliminated, referring to the drug boats coming out of Venezuela. If, in fact, we start seeing this type of activity, does the U.S. board a vessel like that or simply blow it up?
Again, great questions. And I certainly, the military has been concerned about the Iranian Revolutionary Guard Corps, these small boats, because they are, again, they come in fast.
Why didn't
they're
we
hard to detect.
Right off the
Well, I think that there was a lot of attacks on the Iranian coast, softening those targets. Some of them could be in hardened bunkers. There's multiple threats. There's mines. There's the small boats. There's underwater drones. There's also, again, missile capability. You need a huge package package of military support to escort those vessels. And I think, again, we've done this in 1987. We conducted an operation. It just takes an awful lot of material equipment. And again, the military can do this, but at what cost? And I think this is exactly huge question marks. And again, the brave first vessel that decides to test this proposition one way or the other will be the biggest guinea pig we will see. And the stakes are enormously high for both sides, because if Iran gives up its leverage, it's going to be much more susceptible. And of course, as the president correctly said, this is really extorting the entire global economy. So something's going to have to give here.
Just quickly, Heather, on the thing that needs to give, it seems for both sides, it's the nuclear program that Iran does or does not want to be able to develop in terms of enriching uranium. Axios had reporting that the U.S. was asking for a 20-year moratorium. Iran wanted single digits. I just wonder if you really think that this is a gap that can be bridged in weeks, not months of negotiation.
You're absolutely right. This is the hardest issue because the Iranians are not going to give the nuclear component up. Now, for the last 20 plus years, their civilian nuclear enrichment was they were as a right to as part of the Non-Proliferation Treaty. But we have no trust and confidence in that. But for the United States to completely eradicate it would mean regime change, it would mean ground invasion. And again, both are at maximalist positions right now. I thought it was interesting. The president was very clear, no nuclear, no nuclear. We were giving them a 20-year, bridge. And again, if you don't have full transparency, though, how can you trust that? So the verification would require such an intrusive regime, and the Iranians will never agree to the intrusive regime. So that's why we have not resolved this really challenging problem.
Well, this is being framed as a very not good weekend for J.D. Vance, who, of course, flew all the way over there and did not meet even with a counterpart, only to find out that there was not a deal to bring home. He certainly didn't seem very happy when he was taking reporters' questions. And then we learned that Viktor Orban is packing up his desk after 16 years in power, which is remarkable to think that J.D. Vance went all the way over there. He lost this election despite an attempted false flag operation and the support of the Trump administration. What does that tell you about the geopolitics involved here with Hungary and the U.S.?
Yeah, I mean, this election was huge, turnout massive, and the Hungarian people chose a very different path towards Europe. Viktor Orban had taken them away from Europe towards Russia, towards China, massive. I think this is just illustrating why we should not pick winners. To secure U.S. interests with any foreign government, you need to have great relationships with whoever comes into power because you are trying to advance your strategic interests. And you're right, such a senior person spending 2 days, multiple rallies. That's why we shouldn't do those things. And we, again, any American you would ask, would you want a foreign leader to come into the United States and say, this is the leader you should pick? You'd be, get out of here. And I think that was, again, rejected. They were pursuing a different path. And the Hungarian people, this was about an economy that has been stagnating for 3 years and a crony capitalism that had so transformed a positive Hungarian economy into the ground. So this was the people saying, no, it's the economy, it's how where I want to position myself. And it was a massive defeat because many in the new right look to Viktor Orban as the playbook for politics. And that playbook met economic hardship and corruption that the Hungarian people absolutely rejected.
I guess he'll still be available for CPAC, or maybe more so.
We'll see if he stays in Hungary. There's going to be some investigations into those corruption charges for sure.
Boy, a lot to talk about with Heather Conley today.
So much. So good to be with you.
So glad that it's only Monday, exactly. AEI non-resident senior fellow. Heather, thank you for all of your insights here on Balance of Power. I'm Joe Matthew alongside Kaylee Lyons, and we'll assemble our political panel next. We've got a lot to talk about as well with Jeannie Shanzano and Rick Davis, just moments after hearing from President Trump in the Rose Garden about a blockade that is now almost 3.5 hours old. This is Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day right now for the S&P 500 index. We had losses in the early going, but right now an advance of 31 points on the S&P to 68.48. That is a gain of just about 0.5%. The Dow had been lower for much of the day, up now by 37 points, up by about 0.1%, while NASDAQ is up 162 points, up by about 0.7%. The VIX below 20, the 10-year 4.30%, the 2-year 3.78%. Gold now little change, down 0.1%, 47.45 the ounce, and a further retreat for West Texas Intermediate crude. Yes, higher by 3.2%, but below $100 a barrel on WTI. Right now, 99.67 on West Texas Intermediate crude. Barrel of Brent also below $100. Brent crude 99.80, up now by 4.8%. Bitcoin at 72,350. Bitcoin up by 1.4%. We did see an underwhelming start to the earnings season. This morning we heard from Goldman Sachs. Their equity traders did beat their own previous all-time quarterly high by more than $1 billion. Fixed income, currency, and commodities traders, though, missed expectations. Goldman Sachs shares down now by 2%. All of this ahead of lots of bank earnings tomorrow morning. J.P. Morgan Chase, which reports tomorrow, up 0.4. Citigroup also reporting tomorrow, up 0.7. And Bank of America, Wells Fargo also reporting tomorrow. Right now, we've got Bank of America up 0.6. Wells Fargo up by 0.4%. Recapping stocks higher. S&P up now by 0.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, Joe and Kaylee. That is a Bloomberg Business Flash.
All right, Charlie Pellet in New York, thank you so much. As Charlie just ran us through, oil back below $100 a barrel today, even in spite of the fact that there is a blockade of the Strait of Hormuz enforced by the United States Navy, effective as of about 3.5 hours ago. Market seems to be looking through that largely, perhaps as it is looking to be encouraged by the idea that this could have been more escalatory in nature after talks between the U.S. and Iran failed in Pakistan over the weekend. The question, of course, is whether those talks are continuing or need to resume. And the president, when speaking at reporters, McDonald's bag in hand delivered from a DoorDash delivery grandma earlier, said that Iran actually called this morning that they're planning to continue talking, including over what was the sticking point in talks this weekend, the nuclear program.
Iran will not have a nuclear weapon. And we agreed to a lot of things, but they didn't agree to that. And I think they will agree to it. I'm almost sure of it. In fact, I am sure of it. If they don't agree, there's no deal. There'll never be a deal. Iran will not have a nuclear weapon, and we're going to get the dust back.
The dust, of course, referring to the highly enriched uranium that sits in canisters purportedly deep below the surface of the Earth. Now, we're watching the markets here, and it's remarkable. Kaylee, as you mentioned, crude oil back below $100 a barrel, and the markets have shaken early losses. It was all doom and gloom in the pre-market. Even Goldman Sachs upset everybody with a disappointing earnings report. We're chugging higher now, and we want to assemble our panel for their take on how they are interpreting all of this. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Jeannie is our Democratic analyst, democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is our Republican strategist and partner at Stone Court Capital. What do you make of this, Jeannie? This is a buying opportunity. Now we're 3.5 hours or so into a blockade with no clear direction toward a deal in sight. The president is talking about this casually with DoorDash grandma at his side and a bag of McDonald's, and investors decide it's time to buy. What do you make of it?
That's right. And did I hear correctly, Joe? Her husband's name is Leo, and he has a book on humility. And this is coming
well, that's right.
24 hours after Donald Trump's dust-up with the Pope Leo and talking about humility. It's all too much for my brain to handle.
Can't make this stuff up.
You can't make it up. I think perhaps the market is responding like so many of us with a sigh of relief that the president has chosen this route a blockade. And of course, the goal there is economic pressure on Iran. That is where Iran is most vulnerable. That's where they were most vulnerable before the war, and they continue to be. Because if you think about what he could have done, right? He could have gone into the island. He could have started bombing, all of the escalatory steps he could have taken. This is perhaps, I think, one of the best of the worst options, and they're all bad options that he had. You know, on the other side, when you think about it, the United States, since our founding, has long been a proponent of free navigation of the seas, of moving commerce freely, not charging tolls. And of course, it's just stunning to stop and think that we've got a president who just in the last few days has been talking about potentially striking a deal with Iran to split tolls on the Strait of Hormuz. So I think it's a little bit of a mixed bag, but I do think the blockade makes more sense than what could have happened after these talks failed over the weekend.
Well, and when we consider the blockade strategically, tactically, Rick, clearly the president's trying to make sure that Iran has less leverage for future talks. And he says, you know, those talks continued this morning. Iran called. They do want to make a deal over the nuclear program. That wasn't the case, though. For 21 hours in Pakistan, they didn't seem to be getting much closer to a deal. At least that was what we were led to believe by the Vice President, J.D. Vance. Does a blockade really materially change anything?
Yeah, it really must have irritated Donald Trump to wake up to the news on Friday that looked like Tehran had all the leverage and that they disrupted the oil trade globally in such a fashion that looked like they'd actually won out of this massive attack exercise that the president and the military did, frankly, incredibly well. So I think you see a whole weekend and today an effort by this administration to try and, one, get back the leverage, but two, to cast a different point of view in the world community to show that they're still in charge. And so the leverage they can put forth in the Gulf is to do exactly what the president has decided to do. He's blockading Iranian assets, not other assets, not GCC assets, but Iranian assets, ships that are moving Iranian crude. And some evidence that some of that is starting to work with over 30 tankers coming through the strait today, and more to go. So I can understand the optimism. There wasn't a rain of missiles descending upon Iran today, no ground troops trying to dig up uranium dust. And so, as Jeannie said, this was probably the least kinetic and the most productive commercially of the options that the president had to sustain a negotiating position. Because remember, this is all just about a negotiation now. This is not a war plan. This is not about winners and losers. It's about getting a deal.
I had to chuckle listening to Ron Johnson on Sunday morning television refer to Baghdad Bob. You can remember that far back. Rick, Baghdad Bob was speaking at that point for Saddam Hussein and talked about the infidels dying at the gates even as we were rolling through and, of course, taking whatever we wanted at the time. The Iraqi soldiers were retreating into the horizon. I'm just wondering if you read these remarks from the Islamic Revolutionary Guard the same way. There was a statement that came following J.D. Vance's news conference. Any military vessels attempting to approach the strait under any pretext will be considered a violation of the ceasefire. The region, the security of ports, either for everyone or for no one. Do you take the Iranians at their word, or are these two different conversations?
I think you have to assume everyone's positioning themselves to the best degree they can, right? And we see the sausage making process of a negotiation really playing out in incredible detail. I mean, the president loves to talk about the plan to get a deal done in addition to getting a deal done. And that complicates things a lot, because if you're the counterparty and you're sitting in Tehran and you're hearing the president say things attributed to you that you may not have said yourself, you've got to get in the game yourself in order to position it. And so this very well could be an effort by the Iranians to just try to get back into a negotiating posture that didn't result in any positive outcomes publicly in Pakistan this weekend. So, look, it's pretty clear this is not going to be something that's going to be, fixed in a couple weeks like the president thought when he entered into these negotiations. But everyone's hope is they ultimately will result in some stability in the Gulf to allow commerce to flow unfettered, not to get taxed by the Iranians, and to actually say goodbye to a nuclear program that the Iranians have had going on for quite some time. So there is an inkling of hope that you could get across the goal line, the finish line on a deal with Iran at some point, but it won't be a short-term outcome, it looks like.
Well, so I just have to wonder if they're keep going to be shuttling the Vice President of the United States back and forth to Pakistan. Jeannie, it was J.D. Vance who was given the assignment to lead this charge. And I wonder if we should view it, knowing that the first 21 hours of talks were unsuccessful, as him being named the point person, and if successful, something that could raise his political stock ahead of 2028, or potentially him ending up the fall guy if this doesn't end the way President Trump wants it to.
Yeah, I'm sure he has visions of Kamala Harris being appointed to deal with the southern border. That didn't turn out so well. And, you know, it is the stuff that vice presidents have to deal with. That said, it was an impossible task to imagine that in a weekend they could negotiate this. This was the first high-level talks between Iran and the United States in almost 50 years. It took, 2.5 years to get the JCPOA ironed out. There's enormous number of issues to discuss. These two are so far apart at this point. So, I don't think it's a big surprise. Not to mention, let's just remember the last 2 times Iran went to the negotiating table with the United States, President Trump said we were negotiating and then bombed them. So there's not a lot of trust between these two sides. And I think another thing we have to watch out for is, does Iran retaliate? And I assume they will. And if so, how? People have talked about, how do you retaliate against a blockade? You smuggle, you try to put more mines in those waters. But another big thing they have going for them is their ability with China and or Russia to engage in cyber threats and cyber attacks. And I think all of those things in this asymmetric war are on the table and a real threat to the United States as DHS remains partially shut down.
Jeannie, I need to ask about the Jesus post. The president was asked about it. We only have about a minute here. You saw this. He posted an AI image of himself as Jesus Christ, the healer. He was asked about it just now. He said, I did post it, and I thought it was me as a doctor. Had to do with the Red Cross. It's supposed to be me as a doctor, he says, making people better, and I do make people better. If you're with us on Bloomberg TV or on YouTube, there's the post. Washington Post out with a story on this, saying Trump post appearing to depict him as Jesus removed amid backlash. Less than a minute, Jeannie. What do you make of this choice?
Joe, often it's very common for us to confuse Jesus Christ with people from the Red Cross. So I feel the president's pain. I think, yes, it's a first step to remove it, but he should also apologize to Pope Leo. It's a heck of a time for him to be taking on the Pope, given that a quarter of his voters in 2024 were Catholics, and they are going to play a big role in these swing states and districts, the 26 election. That's why he took it down, but still refused to apologize for this back and forth with Pope Leo. That he should do.
Reiterating when he spoke with reporters just a short time ago that the Pope is weak on crime, in the president's words. Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors, the both of them here with us on Balance of Power. And we have more ahead as we look at oil, perhaps not reacting like you would think to a blockade of the Strait of
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are extending gains. The S&P right now just about the best level of the day as President Trump says Iran wants a deal. The S&P up 30 at 68.46. That is a gain of 0.4%. Dow Industrials up 22 now, up by about 0.1%. NASDAQ up 159, up by about 0.7%. You recall the S&P did begin the trading session lower. The VIX below 20 now with a 10-year at 4.30% and a 2-year 3.78%. Spot gold now little change, down 0.1%, 47.45 the ounce. West Texas Intermediate crude just above $99 a barrel. Earlier today had been trading above 102. Oil still higher by 2.6%. Barrel of Brent 99.33 up by 4.4%. Conagra Brands has announced that CEO Sean Connolly will be stepping down at the end of next month, and he'll be replaced by consumer goods veteran John Brassi on June 1st. Brassi, you'll recall, most recently served as the president and chief operating officer of J.M. Smucker. Conagra shares, they're down today by 4.7%. Recapping, stocks are higher. S&P just about the best level of the session, up 29 now. For the S&P, that is a gain of 0.4%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie, thank you. It's been an interesting day here in Washington. At the White House today, a McDonald's delivery and new hope for a deal with Iran. We watched all of this unfold live as the President of the United States, in fact, took delivery of McDonald's food at the Oval Office. Even he made a joke that this might appear staged. DoorDash grandma brought 2 bags of McDonald's to give the president an opportunity to talk about tax, well, no tax on tips and his tax policies from the big, beautiful bill that are colliding with tax day this week, April 15th. Of course, the real conversation with reporters who had been summoned for this off-schedule moment was really about Iran, knowing, of course, that J.D. Vance had come back empty-handed following talks that also included Jared Kushner and Steve Witkoff with the Iranians. No deal with, of course, the idea of a nuclear-free Iran being pushed back by Tehran. The president was asked about those talks and the future of a possible deal. As he received the McDonald's, here's what he said.
Well, he's done a good job, and Steve and Jared, they've all done a very good job. And I can tell you that we've been called by the other side. They'd like to make a deal very badly. We've been called this morning by the right people, the appropriate people, and they want to work a deal. They would like to work a deal.
So for more on the prospects of this phone call and of a deal being reached at some point, we turn to Bloomberg's Tyler Kendall, who is back live on the White House North Lawn for us. Tyler, do we have any more information as to who exactly the right people all are who called this morning? Is it direct contact between those who were present negotiating in Pakistan?
We're still waiting on additional details from President Trump's comments, Kaylee, though the president certainly made it seem as such, as we've gotten more headlines over at the Bloomberg terminal throughout the day that other regional mediators have been trying to keep these talks going, including Oman and, of course, most notably Pakistan, where the direct talks were held just this weekend. These comments from President Trump seem to give us our strongest signal yet that there is an opening for negotiations after the delegations departed Pakistan this weekend without getting to a resolution. And President Trump himself reiterated that the main point of contention, that sticking point, remains the future of Iran's nuclear ambitions, as well as what is going to happen to the already highly enriched nuclear material. Now, the president is saying that he feels that there could be some path forward on this, but we should also keep in mind that at least publicly, Iran has still said and taken that more hardline stance, though last night, Kaylee, the foreign minister for Iran, did say that it's natural not to expect that an agreement could be reached after a single session and that it takes time to hammer out these more complicated issues. I will point out that President Trump said as of now the timetable remains the same. The timeline, I believe, is the word that he used, referring to this 2-week ceasefire that is still in place and the idea that both sides for now are restraining on attacks on each other, despite the threats just today from both parties that we could see that escalation if a ceasefire does not hold.
Tyler, the president was asked whether other countries would assist in enforcing the blockade. He said, we don't need other countries, but yeah, they will. And when asked which countries, he said they've offered their services. We'll let it be known probably tomorrow. Do we have any insight into which countries these may be, or any of them in Europe, for instance?
Well, this has been a back and forth conversation, as you know, Joe, as President Trump has been heaping on the pressure, particularly for those European allies, those in the NATO alliance, to help secure the Strait of Hormuz. Now, the United Kingdom came out earlier today, said that they weren't going to be assisting in this effort, but we also heard from the French President Macron, who indicated that we're going to see a coalition, a meeting take place later this week, where they and partner countries will talk more of the specifics, but the underlying theme appears to be that allies aren't going to commit those military assets unless there is a ceasefire in place. The French president calling whatever mission does appear a strictly defensive mission, that they are not a party to the conflict between the U.S., Israel, and Iran. And that's going to be really critical, because we know that President Trump has ramped up his threats that we could see attacks on Iranian attack boats if they come near the U.S. blockade. So how this is all going to fit together with the White House's broader plan to ensure that there is freedom of navigation with our allies, of course, remains to be seen.
Tyler, we should also note, as you speak to us from the White House, that on the other end of Pennsylvania, lawmakers are heading back into town today after a 2-week recess. Congress will be back. We understand war powers resolutions could be coming up in both chambers this week. Obviously, we know President Trump has the ability to veto those, so should he so choose, if they were to pass at all, which isn't necessarily a given. But how should we be watching whether or not more pressure is going to be added to this entire situation by the return of lawmakers who've been spending time in their districts or Disneyland or wherever else?
Right, quite the 2 weeks to be out of Washington and not faced with questions by reporters on Capitol Hill. Kaylee, now, as you alluded to, a war powers vote would largely be symbolic. If it ultimately did pass both chambers, President Trump would veto it, and it wouldn't have that 2/3 majority to overrule that veto. What I would actually point you to is another potential vote that could happen once we reach the 60-day mark of the war. Under the War Powers Act, President Trump needed to notify Congress about potential military action, but that same law does mandate that after 60 days, Congress would have to weigh in a more formal way to authorize an ongoing operation. And we had heard last week from some Republicans, including John Curtis in Utah, who said that if this war does drag on beyond a longer period, then maybe he would like to weigh in and get Congress involved in a more formal way to the future of the war. Under the law, it says 60 days Congress has to get involved. The president could ask for an additional 30-day extension to bring it to 90 days if that's what's required to get U.S. troops safely out of the region. But that's really what I have my eye on, because after this 2 weeks is up, we are then going to be at the 1 week mark until we hit 60 days. And then, of course, as you both know, we're watching the funding fight and how perhaps appropriators could withhold fundings if they don't get additional information from the administration about how this war is going.
Tyler, thank you so much. Bloomberg's Tyler Kendall live at the White House, setting us up perfectly for our conversation with Rebecca Babin, the Senior Equity Trader, Managing Director, CIBC Private Wealth, with our eyes on the oil market. Rebecca, welcome back to Bloomberg TV and radio. You've been talking about living on borrowed barrels, and it's true. There's been a lot of oil floating around that we've been using here. Crude, you say, is not in a market that avoided disruption. We're in a market that delayed fully feeling it. So how can we justify, or maybe you cannot, crude oil back below $100 today? Even if there is a deal, it looks like it's going to be some time before it's codified. What do you make of this reaction?
Well, I think it's really interesting. And I think the paper market that we're seeing right now sell off a little bit is trading and in looking through the conflict to the resolution and barrels being back on the market and available for sale in a fairly short order. The reality of that scenario is probably a much longer timeline, even if we get those barrels moving tomorrow. We are looking at shut-ins that have taken place across the Middle East that will take weeks for the best case scenario. And for some countries like Iraq and Kuwait, will take months to get back up and running fully. Then we have the shipping scenario. A lot of the ships that have been transiting or were transiting through the Strait of Hormuz have redirected themselves. They're looking at the Atlantic Basin. They're looking to the U.S. to go to China. They have to make their way all the way back around to the Gulf and then, most importantly, decide to move through it. And I think that's the key that maybe the paper market's missing, that the physical market is getting. It's not just about the ships leaving the strait, which have potentially upticked, as we saw from a headline today, but who's coming back in to reload? And there has to be confidence that you can come back in, reload, and get back out. And I think that's where the disconnect is can we get those ships back to normalization? And what does normalization look like? The physical market where dated Brent's trading at 134 tells you that's a little bit different than where the paper market's trading right now.
Well, and to your point about the production shut-ins, we've seen, not even to talk about any infrastructure that has been damaged in the case of some LNG facilities in Qatar. Rebecca, what is your base case as to how quickly we could get back to the full production capacity we were at coming from the Middle East and these producers pre-war, assuming that there is eventually a reopening of the strait?
So that's a great question, and there's a lot of estimates floating around out there. The very optimistic estimates have about 1 month, right? And that's kind of the Saudi Arabias of the world who have great engineering ability, resources to put towards doing this. The worst case scenario, and we even saw some of the energy ministers at CERAWeek imply this when they were there a couple of weeks ago, saying this is like 2 to 4 months for us. That was Kuwait, right? And then we look at a place like Iraq where the resources and the infrastructure is more dated, and that could be 6 months potentially. Now, all of this is a continuum, right? You get some barrels back from Saudi Arabia and then it kind of filters through. But the bottom line is normalization. And we need to really consider, what is normalization? If we have a strait that is still compromised or there's uncertainty, if we were getting 20 million barrels through before, maybe that's a lower number now as the freight rates across the globe have increased. And maybe ship owners are like, you know what, it's not worth that risk. I'm going to keep this other route going that I know is a sure thing. So you got to think about what's the new normal. But I would say on average, I think the number the market's using for production coming back online is 2 months. I think it's optimistic, but I think that's where it is.
Rebecca, the president was talking to reporters a short time ago, and he referred to many ships, he said, are heading to our country right now as we speak to load up with oil, with U.S. oil. They're coming to our country. He said right now there are many boats coming. It could be, well, that this is settled before they arrive. The market liked that last line, apparently, the idea of an imminent settlement or peace deal. But what do you make of what the president is saying here? This is an international market. To what extent could the United States be selling oil to more international partners out of this?
So that's a great question. Right now, U.S. exports are around 4 million barrels a day. We have the capacity to get up to 5 million barrels a day. We produce over 13 million barrels a day in this country, but we can't export everything because you have docking constraints, you have vessel constraints. So 5 to 5.5 million barrels a day of exports is kind of where the market sees our kind of capacity at. That does give us some room off of where we are at 4 million barrels a day of exports to increase. And I expect we see that. We are going to see inventory draws in the U.S. starting this week, and it's going to accelerate over coming weeks. And our exports are probably going to go from 4 to 5 million barrels a day. To realize that, again, we're talking about an increase of 1 million barrels a day. It's a lot, but in the context of what we're losing through the strait, it's just not enough to fill a gap, right, of that size. And this just comes down to the broader picture. We are using all of these different buffers, floating storage, SPR, inventory, increase in exports, to fill in a gap that's just, we're using a shovel to fill in a hole that's being dug by an excavator, right? So it's just really hard to fill that in. Are we pulling every lever we have? Are we talking the market lower? Yes. But if you look at the physical market, again, I come back to this, and you look at where it's trading in the Middle East and in Asia, and where you're seeing demand destruction based on the scarcity of supply, you just know that you're not filling that gap fast enough in the short term.
Rebecca, we just have 30 seconds left here, but there's a question as to whether Iran, in the face of a blockade of the Strait of Hormuz, will then ask the Houthis to resume activity, disrupting the Red Sea. How much worse would that get for the energy market if we were to see that disrupted as well?
I think that would be very significant for the energy market. We have 5 million barrels a day being rerouted through the Red Sea out of Yanbu. It's been a huge release valve for the market. It's kept us from feeling that 150 in crude. And I think if we lose that, we're in really, really different picture, and it's going to be ugly.
All right, Rebecca Babin, we'll leave it there. Senior equity trader and managing director at CIBC Public Wealth, here with us on the early edition of Balance of Power. And we have much more coming up at 5 p.m.
Indeed, we'll meet you back here on the late edition of Balance of Power with $99 a barrel. We'll see where we stand later on Wall Street. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, across Bloomberg platforms, radio, TV, YouTube, Bloomberg Originals. Yes, indeed, this is Bloomberg Business Week Daily on this Monday, April 13th, 2026. Tim is off today. He did some double duty over the weekend. In fact, we're going to highlight some sound from that a little bit later on. But with me is none other than Bloomberg News equities reporter Bailey Lipschultz. And you've been watching the markets. Does this make sense, considering?
It's kind of odd. Trump speaks and the market rallies higher. Volumes are still not really that strong, but it certainly still seems like we're in an era where anything that the White House says is kind of what's going to drive the market. So excitement about potentially reaching a deal despite the blockade, kind of odd.
I'm trying to, but maybe negotiating tactics. So maybe some think it's getting closer. We should point out WTI crude, we were up as much as more than 9% earlier in the session. Now, Bailey, just about a 2.7% gain. So we're up, but we're off those highs and those session highs, I should say.
Yeah, and back slightly below $100 a barrel, which has been a big touch point for investors as well as the White House.
Yeah, right. So this is important. This is something we focus, especially, I think, on my morning read-in, somebody was talking about 150. If we get to that 150.
That was the breaking point. That was kind of the doomsday scenario a few weeks back when we were watching it march higher. But even this morning when we were on our production call was kind of, all right, we're higher, but we're not where we were 2 weeks ago.
Exactly. We have heard President Trump, he is out and about. He's making lots of comments today. And he did speak from the White House, from just outside in the portico at about 12:40 p.m. Wall Street time. Here's what he had to say about the back and forth in this war.
We can't let a country blackmail or extort the world, because that's what they're doing. They're really blackmailing the world. We're not going to let that happen.
Has the blockade started, sir?
Yeah, started 10 o'clock.
Yep, that's right. President Trump outside the Oval Office there at the White House. And he did say that blockade, the U.S. blockade in the Strait of Hormuz starting at 10 o'clock. So the blockade, Bailey, definitely one of our big themes. And I think what's interesting is you kind of had Iran with their blockade or threatening, and now we've got the U.S. It's kind of like a blockade off.
Yeah, block your blockade, because it's all a show of power, it seems. And it's just interesting. You know, is the U.S. going to be able to succeed in those efforts?
Right.
Or is it a battle that's really uphill?
Well, great thing that you brought up, because our Mark Champion, he's a Bloomberg Opinion columnist. He writes about this, and he says why the U.S. can't win in this blockade that it's imposing. We're also going to get into the significance, too, of Viktor Orban's election loss in Hungary. I think this is something that's kind of in the background, but I think we should pay attention to. We're going to be heading to the White House, too.
Heading to the White House nonstop, it feels like.
Welcome
We're
to
seeing
Monday.
a lot of exactly.
Yeah, never-ending commentary on the war. But also, you, rightfully so, in our planning call, talked about, let's not forget, we're now actually getting some concrete information from the business environment, and particularly the big banks. Goldman Sachs actually reporting today.
Yeah, under a little bit of pressure. It's going to be interesting to kind of break that down. But the big thing that when I was looking through some analyst notes were kind of high expectations. We have seen banks benefit. So as we mentioned, though, discussions around what they're actually seeing and providing a bit of real detail outside of the headline-driven environment.
Yeah, all kind of is part of our backdrop today. Also, Mike Kontopoulos, Janus Henderson Investors, head of multi-asset macro investing, connecting all of this together into the trade. So we got a lot coming in just the next 60 minutes. First up, though, let's get a check on that trade for you and those top business stories. Here is Charlie Pellet. He's back.
I'm back indeed. Here's what's going on. The Dow, the S&P, NASDAQ, all advancing. Bailey mentioned what's going on with Goldman Sachs stock declining, down 2.3%. Tomorrow, of course, JP Morgan Chase, Citigroup, Bank of America, Wells Fargo. We got you covered on all those earnings. S&P right now up 31, 68.48 where we stand. Just about the best level of the day on the S&P, up now by about 0.5%. The Dow up 39, has been swinging between gains and losses. Right now, we're looking at an advance of about 0.1%. The NASDAQ Composite Index up 156 for NASDAQ, higher now by 0.7%. The VIX below 20. We've got the 10-year yielding 4.30%. Gold down 0.4, 47.31 the ounce on the precious metal. Crude, the big story, now with a $98 handle, 98.78, still higher by 2.3%, but trading below $100 a barrel. Brent also below 100, barrel of Brent 98.90, up by 3.9%. Oil prices pairing earlier gains. ExxonMobil has now started to decline. It is down by 0.3%. Chevron holding on to an earlier gain of 1.2%. ConocoPhillips up by 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, everybody. Charlie really breaking down the top news and about that U.S. blockade covering traffic to and from Iranian points that has gone into effect. President Trump did say that the U.S. would attack any Iranian vessels that approach U.S. ships in the Strait of Hormuz as that new naval blockade of the vital waterway took effect today. Here's what the president posted on social, and there's a lot here, but I'm going to get to what I think is the big warning, and that is he talks about Iran's Navy laying at the bottom of the sea, completely obliterated 158 ships. What we have not hit are their small number of what they call fast attack ships, because we did not consider them much of a threat. Warning, if any of these ships come anywhere close to our blockade, they will be immediately eliminated using the same system of kill that we used against the drug dealers on boats at sea. So, yeah, here's that warning from the president. Meantime, we also heard from John Bolton over the weekend, Bailey.
Yeah, really interesting conversation with your normal co-host.
Nothing's normal right now. He did. He talked about President Trump's blockade making sense. He did join the weekend team of Tim Stenovec and Christina Ruffini. He talked about the U.S. war in Iran.
The only way to get true peace and security in the Middle East is to have regime change in Iran. You can negotiate all you want with these people. It's not going to change anything. And I think the failure of the Islamabad negotiations just makes the point as clearly as one can. I think the ceasefire was a mistake. Part of the problem here was caused by Donald Trump a few weeks ago lifting American sanctions on the shipment of Iranian oil. And I think he was motivated by fear of rising international oil prices, and he thought a few tankers might get the price down. I don't think that's correct, and he should reimpose the sanctions.
That was former National Security Advisor John Bolton with Bloomberg's Tim Stenovec and Christina Ruffini on Bloomberg this weekend. Carol, obviously a lot going on. An interesting column out today about how the Hormuz blockade is a, quote, throwdown the U.S. can't win. That's written by none other than Mark Champion. He is Bloomberg opinion columnist covering Europe, Russia, and the Middle East, joining us from London. Mark, President Trump saying the U.S. will eliminate Iranian fast attack ships if they come close to our blockade in the Strait of Hormuz. Why do you believe this is a game of chicken between the U.S. and Iran when it comes to the blockades of the Strait of Hormuz? And how is that one that the U.S. can't win?
Well, in essence, what you have is the U.S. saying, okay, we're going to block in order to get you back to the table, and we're going to block in order to kind of force you to reopen the strait. And you get into a question there where the Iranians have said clearly, we are not going to respond to that, except that we will start hitting, Gulf ally ports. The ports of the Gulf allies, and in response, if we need to. And the question then becomes, okay, so the U.S. has cut off, the Iranians are stopping the supply from the Gulf states. The Americans are stopping the supply of oil from Iran. What happens? Well, it not so much today, because the markets are listening to Trump saying that, the Iranians have already come to us and are asking for a deal. We'll see if that's true. I have my suspicions that it's not. But what happens then is that at some point the price of oil will go up because supply is shrinking. And then it's a question of who can last longer. The Iranians will be suffering, but they've had a windfall for the last month or so through their ability to sell oil, and sanctions, as John Bolton said, were lifted. They were eased so that they were able to sell. They didn't have to sell at a discount anymore. So they've been earning a big windfall, and they have a cushion now. So they can sit on that cushion for several weeks, or more. And even then, after that cushion expires, it's a question of, are they willing to endure more economic pain, to inflict more economic pain on their own people than is, the U.S. and other countries around the world that will be suffering inflation and potential recessions as a result of U.S. actions in the Gulf. And I just can't really see, knowing that who the Islamic Republic are and how their leaders kind of have almost been looking for this kind of showdown with the U.S. for decades, that they will fold.
And you write in your column, Mark, make no mistake, the Iranian regime is monstrous and should not be allowed to have a nuclear weapon. And you're not alone in folks that have come in and say, this has not been a friend at all of the United States in particular for many decades here. Having said that, we keep saying that for Iran, this is existential, and their willingness to fight kind of to the bitter end. Regime change is not easy. We keep hearing that over and over. And that is kind of different from where the U.S. is coming from. I mean, they could back off. The president reminds us we don't need the Strait of Hormuz. So I'm just, wondering, is that part of, too, why the U.S. can't really win using this tactic?
I think it's tough. I mean, I don't. There's a lot that I don't agree with John Bolton on. But one thing that he said, which is correct, is that this war only made sense to begin if it was going to end with regime change. Otherwise, you're simply trying to massage through force, the behavior of the Islamic Republic, and that's an incredibly difficult thing to do. It's hard enough through negotiation, but to do it by force, to kind of calibrate that and to get the right kind of reactions, it's almost impossible to do. So what you really want, to happen is regime change, so that you just have a different bunch of people in charge of whatever nuclear, stuff that they have, in charge of their ballistic missiles. This is a nation of 92 million. They are not going to completely disarm. What you want is to have a regime there that has an army and it has an armed force, it has whatever, an air force, whatever it has, and it simply isn't going to threaten its neighbors in the way that Iran has. Regime change so far has failed.
Hey, one last question before we go, and this is on something else that I know you've written. You understand Europe so well. The Viktor Orban election outcome. We're hearing his daughter and son-in-law have left. Allies have disappeared from airwaves and social media pages. There's unconfirmed reports of the movement of assets abroad amid calls for the Orban-connected elite to be brought to justice. Just got about 30, 40 seconds here. What's the significance of this loss to the region, to Russian President Vladimir Putin, to even to President Trump?
It's really big. I mean, essentially, here was the model conservative, from sort of MAGA-type conservative in Europe. He was in power for 16 years this time, 4 years on a previous term. And, he completely changed the fabric of Hungary, primarily because of a kind of quirk in the sort of institutional, makeup that allowed him to change the constitution at will and to change laws at will. That is now reversed. It's not just that he lost the opposition won with a constitutional majority, so they are now able to undo a lot of that stuff. And I think that's why you see, a lot of his allies, fleeing, because they know that the boot's now on the other foot.
All right, great stuff as always. And we always appreciate you staying up late there in London. Mark Champion, Bloomberg Opinion columnist covering Europe, Russia, and the Middle East. Highly recommend you check out his columns on the Bloomberg and at Bloomberg.com. So we are watching the war, but we're also watching, we're finally starting the earnings season.
Earnings season underway in full effect, and really interestingly, kicking us off is Goldman Sachs. Normally we get JP Morgan.
It kind of messed me up this morning. I kind of forgot about this.
The same thing happened on our team call. In breaking down Goldman's earnings, the stock down right now a little more than 2%, is Bloomberg News banking reporter Todd Gillespie here in the studio. Todd, walk us through the good, the bad. Why is the stock down more than 2%?
Yeah, Bailey. I mean, today was actually quite a funny day. I mean, Goldman Sachs reporting earnings, the first among big banks, which is, as you say, is very, very rare. And obviously at a moment where, Iran is top of the agenda, private credit is top of the agenda, AI is top of the agenda, there's just a lot of chaos to happen, regardless of who's reporting first. And for Goldman to go first and alone on the first day, David Solomon hasn't had the best day today. He's even lashed out at the research community, by the way, on the analyst call today, he said, one of the biggest misses in the headlines that came out today is that the bond trading desks and the rates traders, the FIC department, basically the FIC division of Goldman Sachs, missed expectations of analysts by $800 million. So instead of posting about 4.8 billion for the quarter, they actually posted about 4 billion for the quarter.
Big difference.
It's a big difference, and it's a drop on last year. It's a surprise drop. Not just missing analyst estimates, but actually lower than the same quarter in the previous year. And one of the things that he says is that actually, this was our 10th best FIC quarter ever. A lot of this has to do with expectations that are set in the research community. David said.
Is he right?
Well, I mean, perhaps, but I mean, you can't always blame these analysts for not knowing exactly how the trading volatility is going to pan out and what Donald Trump is going to say tomorrow and what that's going to happen to Citadel and Millennium and what they phone up their banks to want to do.
I thought management teams, though, were supposed to talk to the analyst community and it's kind of like behind closed doors be like, hey, maybe you take this number down a little bit.
They do. But I guess to be fair to everyone in this case, right, this is a quarter where we've seen intense volatility in different directions. You've seen blow-ups, big trading blow-ups, which potentially you think that's good for banks, then you think it's bad for banks the next day because some hedge fund pod has blown up and you don't really know. You don't have great visibility into that when you are dealing with so many trading firms that are private, and most of the intel that you're getting is through Bloomberg reporting most of the time.
How much is it, though, expectations? I mean, this is a stock that was up 53% last year. I mean, almost 50% the year before, right? We've seen these big banks do really, really well. So how much is it just maybe, expectations
sell the good news, right? Yeah, exactly. And I mean, you're right, Carol, to some degree, all the banks did really well last year. Someone's looking for a bit of froth to pop, to start settling again. So maybe today is the day that happened to Goldman Sachs, but we'll see the rest of the week whether that's going to happen to the other banks as well. But look, you've got JP Morgan reporting tomorrow, Citi reporting tomorrow, Morgan Stanley Wednesday. We'll see.
Well, are these banks going to be kind of addressing the elephant in the room that is private credit?
Yeah, Bailey. I mean, I think the elephant in the room for half of Bloomberg might be private credit. I think if you phone the executive teams of Goldman Sachs or Citigroup, I think a lot of them will start moaning to you and trying to hang the phone up at you.
But they have exposure.
They do have exposure. And I mean, Goldman Sachs, its own private credit fund. I mean, Goldman Sachs has its own asset management arm, which is very big, unlike most of the other big banks. And that unit itself, one of its funds, narrowly escaped a redemption cap of 5%, which would have meant all sorts of other things that Blue Owl and other firms were exposed to as well. So they're just kind of eking out here. But crucially, yes, you're right. The back leverage that a lot of these private credit firms have, a lot of these private credit firms borrow from big banks and then lend on to, potentially less reliable borrowers in the wider market. And that's where some of the blowups have been. So being able to understand and fully understand tracing that, the exposure that some of these banks have is one of the things that some of the analysts were concerned about today. The banks generally have been trying to put a lid on that kind of worry. And so far, there's that. I think on the retail side of that, David Solomon did admit today that concern is likely to continue on the retail side of things, particularly as headlines continue and potentially, as we've seen pockets of fraud in the market, in the private credit market, and, a surge in redemptions particularly on the retail side. On the institutional side, it seems to be more mellow so far.
Just really got about 25 seconds left. Goldman, tell us anything about what we're going to get tomorrow from JP Morgan and the others?
Oh, and I actually missed the great headline for Goldman, which, by the way, we had to
the $5 billion bond sale?
No. The equities record. So the equities trading record. Okay. The equities traders at Goldman Sachs posted their best 3 months ever of any bank in Wall Street history, which surpassed their last record, which was last quarter, by more than $1 billion. So it was pretty huge. So we'll see stock trading, I think, will be the theme of the week, but maybe FIC of
high bar for everybody else. Yeah, you covered it all. Thank you. Bloomberg News banking reporter Todd Gillespie here in studio. Coming up, we're going to kind of get a multi-asset view on the markets. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are pushing higher. S&P 500 index just about the best level of the day. Dow Jones Industrial Average 48,000 even, up 84 right now, up by about 0.2%. S&P up 0.5. NASDAQ up 155 for NASDAQ, a gain right now of 0.7%. The VIX below 20, a 10-year at 4.29%, with a 2-year 3.77%. Gold is down $21 the ounce to $47.28 for gold. A drop now of 0.4%. Crude, the big story today. Yes, up 2%, but below $99 a barrel now. 98.52, talking about West Texas Intermediate crude. Barrel of Brent, the global benchmark, 99.16 now, up by about 0.4%, up by 4.2% on Brent crude. So again, the Dow, the S&P, NASDAQ all higher. We're keeping an eye on shares of both Dell and HP Inc. They jumped after a report from the website Semi-Accurate that NVIDIA is seeking an acquisition that would, quote, reshape the PC landscape. Dell shares, they're up 5%. HP Inc. up now by 3.2%. NVIDIA is down 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Carol Master along with Bailey Lipschultz. Tim is off today. Now, last block, we caught up on geopolitics. We talked with our own Mark Champion about the blockade, the U.S. blockade in the Strait of Hormuz. We also got today's earnings from Goldman Sachs, which kicks off really a big week for the big banks when it comes to their quarterly updates. On that, though, Goldman Sachs CEO David Solomon weighing in on markets on this morning's earnings call with analysts and investors.
2026 began with a degree of optimism. Markets hit record highs and confidence continued to build, with most clients focused on growth, strategic activity, and capital deployment. As we've said, things rarely move in a straight line. And as the quarter progressed, the macro environment started to weigh on sentiment. Volatility increased meaningfully amid concerns around AI-driven disruption in sectors like software, heightened uncertainty in parts of private credit, and the conflict in the Middle East.
Yeah, heightened uncertainty for sure. That's Goldman Sachs CEO David Solomon on this morning's earnings call with analysts and investors. Let's stay on markets. Here in studio, Mike Kontopoulos. He's head of multi-asset macro investing at Janus Henderson Investors. The firm has about $20 billion in assets under management. And he does join us, as we said, in our New York studio. Welcome. How are you?
Great, thanks. How are you?
Doing okay. Watching it feels like some calm in the market today. We've seen oil prices, they're up, but they've backed off. We've got stocks a little bit higher, but Bailey, you mentioned light volume earlier today. I don't know, what draws your attention on a day like today?
You know, I don't think it's any one thing. I think what we're seeing is a market that's a little bit confused, very directionalist. Can't really figure out which way it wants to go. And that makes a lot of sense. I mean, there's a tremendous amount of uncertainty out there. And so I think investors are uncertain, sitting on their hands a little bit, waiting to find what the next political move is going to be, what's going to happen with oil prices, more importantly, inflation and earnings, right? We're just at the start of earnings season here. And, you know, what ultimately will all of this, uncertainty mean for Fed action and rates? So I think there's a lot to consider if you're an investor.
It's a long list, right?
It's a long list. I think, David Solomon kind of, was maybe, it was a light touch on how much uncertainty is out there and how much has changed over the last month.
That's a great point, and I think that we're going to feel what CEOs say. But do you feel like investors in general have been downplaying the level of uncertainty that we could have for a longer time?
Yeah, it seems as though certainly within U.S. markets, that's definitely the case. I think there's meaningful implications that the war has had on oil prices, on potentially margins as we go further into the year. On the flip side, if this whole thing resolves, markets could be meaningfully higher. I mean, we went into the conflict in a very good spot, as David mentioned. And so, I think investors are not probably pricing in enough volatility yet. You look at things like the MOVE index or the VIX index, and you could easily make an argument that they should be higher.
Well, the thing that I find interesting is if you look since the end of February when the first attack happened, we're down about 0.5% on the S&P 500. The Russell 2000's up 1%. Just thinking about kind of the divide that we've seen in this stock market, just driven by the political uncertainty, what areas do you see better positioned as we head into earnings season? And are you looking for certain areas to really shine as we get management teams talking?
So, here's what I think you're supposed to be doing. I think, number one, there hasn't been that much of a change yet on the macro outlook. I know that sounds crazy given all this uncertainty that we just spoke about, but earnings growth was really, really strong in Q4. We came into Q1 with a really, really strong macro backdrop. We were one of the few out there saying that inflation was probably going to be higher than the market expected because of that strength, and that would lead to tighter...
Just from growth and activity.
Just from growth and activity. I mean, things were pretty good. And it's interesting, most of our signals suggest that those haven't rolled over yet. You haven't seen estimate revision ratios plummet. You haven't seen forward-looking indicators like industrial production and PMIs plummet. I mean, are you starting to see some stress? You haven't seen employment, of course, has not plummeted, right? And you're right around the break-even rate for unemployment at the moment. And so, we haven't really seen things roll over yet. So I'm not entirely convinced that you're supposed to change the positioning that you had coming into the year. Whatever your predisposition of that was. In our case, it was broadening.
Yeah.
It was international markets. And I think you want to continue to maintain that stance because the whole thing could blow over imminently. But you certainly have to account for more volatility. And so what we've done is we've raised cash to account for that.
How much have you raised it by?
So we have about 7% in our portfolios.
What's normal for you guys?
2.
Okay,
Yeah.
so kind of a bearish stance. Do you how do you qualify that?
Yeah, I wouldn't necessarily say it's bearish.
Yeah.
Because we didn't change our tilts within our allocations. So we're still tilted, modestly cyclical in international markets. We own emerging markets ex-China. We own Japan, Europe. We own industrials in the U.S., energy and materials. Those aren't necessarily bearish positions.
Yeah.
Right? If I was really bearish, we would certainly have more cash, but we'd be in staples. We'd be in healthcare. We'd be in utilities. Actually, those sectors are not our overweights in our portfolio. So what we've done is we've retained the contours of our portfolio pre-war, but we've increased cash to account for uncertainty and to make sure we're just not over-allocated to equities. If everything blows away, we think the landscape from January and February is going to reemerge and we'll do very, very well. And if you end up falling, the cash is going to act as a buffer.
But to increase cash, you got to take something out of. Where did you take out of?
So we brought it down out of both the U.S. and international markets. So you can think we almost prorated our holdings down by about 500 basis points. Explicitly, we did it through large cap value and developed markets. But it was a general prorating of the portfolio's contours.
No, that's interesting because I think one of the big questions going forward is this was supposed to be a quick conflict. It was supposed to be over in 2 weeks. Here we are already middle of April. At what point do you start reassessing allocations? At what point does this drag on too long for you to be comfortable with some of the ex-US positioning? Because obviously the knock-on effect for regions like Asia, as the Strait of Hormuz is closed, likely would be greater.
We're certainly getting closer to that. I think we're going to learn a lot over the next 6 to 8 weeks at the longest. It could be sooner than that, 4 to 6 weeks even, as we start seeing more and more data come in, macroeconomic data, earnings data,
so we go into
data,
June.
et cetera. Yeah, I think that's probably right. I mean, you're going to have a very good handle on the impact of what's going on in Iran. How the higher oil prices are going to affect sort of the downstream earnings landscape, probably by, mid-May or so.
Well, one thing that we've obviously been tracking is the expectation around the Fed. And if you go back pre-war, we were penciling in, 2 to 3 cuts for the year. Now, maybe 1 at the middle of next year. How quickly can you reposition for Fed expectations, just given to your point, we're not really going to see the knock-on effects in economic data, at least for a little bit longer?
Well, this is where I think there is some degree of certainty out there. We felt like the inflationary impulse from strong economic growth, demographic changes, deglobalization, a whole host of things was not going to allow the Fed to really cut significantly this year. And so when the market was saying 2 or 3, we were saying 0 or 1. As the markets kind of come down to no, we say there's a probability of a hike. And so ultimately, I think, investors need to consider that, we're just not in an environment where the Fed is in any sort of position to cut interest rates. And so we've been fortunate in that we've sort of been a little bit, we came into the year neutral duration. As rates fell and went, into the 3s, we brought down duration pretty meaningfully. And we remain underweight duration and feel very, very comfortable with that. We don't think there's going to be much positioning changes on the on the fixed income side within our portfolios, unless you get a big credit spread widening event, in which case we'll go overweight credit. And right now we basically own none.
Hey, Mike, in the notes that you guys shared with us, the belief is on the Fed staying there, doesn't need to cut. If they do, it will be a mistake, and we would expect Treasury yields to go much higher. That will further hurt growth momentum in long duration assets while helping value in floating rate debt. You believe that's your position?
Yeah, I think I think that's what will happen if the Fed cuts interest rates. I think if Warsh comes and comes in very aggressive to a cutting campaign and can convince his colleagues to do so, I absolutely, that's our position, 100%. I think that's ultimately, funny enough, that would probably be the way you ultimately slow growth and get a recession. You cut interest rates, the market punishes you, the bond vigilantes come out, you go well north of 5% on the 10-year, because all of a sudden now you're juicing inflation, right, with lower interest rates, and that ultimately causes a lot of volatility. That causes a higher rate environment that ultimately slows growth and punishes markets. Now, I'm not saying that's our base case today, because I don't think there's really a reason for the Fed to cut interest rates, and I hope cooler heads and non-political minds ultimately prevail, and that they don't cut into an inflationary environment that's probably heading towards 4%.
Yeah, it's hard to see how we don't have some kind of inflationary environment, at least pressures, whether it's higher energy prices, even if it's a little, maybe not as high as we've seen with this war. But I also think about the global grab and national security interests of having so much now back in your home front. That's got to lead to price pressures. Can we talk private credit?
Yeah.
Before the war, we were talking private credit and AI concerns. What are your concerns about private credit? What's the reality in your view?
So our concerns have been pretty consistent for much of the last 2 years, which is that there have been some managers out there, and I think they've admitted to this at this point, that have really sold illiquid vehicle as being, somewhat liquid. And I think that's really where the danger lies today. I think it's also dangerous in many ways to lump all of private credit into one bucket. There are many different, forms of private credit. And within even, let's say, private credit backed by corporate loans, there are different types of managers. And so I think lumping all of private credit into one bucket is a very dangerous thing. But in some of the funds and some of the bigger players that we've seen that have run into redemption troubles, I think the obvious fears around illiquidity and ultimately investors selling what they can, not because what they want to. And that's where you could potentially get a broader, I wouldn't necessarily, it's not going to be like a global financial crisis type situation, but a broader contagion event where you start seeing public credit and public markets start to go down as investors raise liquidity in an area where they can rather than necessarily what they want to.
Yeah, it's going to be fascinating to see that. Just kind of briefly here, are there areas that you would invest in as it relates to private credit, buying the dip or sell-off in a Blue Owl or some of the other companies?
Probably not. I mean, I prefer to stay on the sidelines at the moment within private credit, but again, particularly in the corporate side. I think, you could easily make a case that, whether it's infrastructure or hard asset type private credit, there's probably some opportunities there and will be for some time. I don't think you see quite the same degree of excess in those areas of the private credit space as you do on the corporate side, essentially the leverage loan aspect of private credit, right, where you have software companies that are over levered and stuff.
5 seconds, TBD, though, really what the second half looks like. We're still got questions.
Yeah, I think TBD, but the one thing I'd say we feel very confident in is higher interest rates from here.
All right. Love it. Mike, come back soon. Mike Contopoulos, head of multi-asset macro investing at Janus Henderson Investors. When we come back, a check on the White House.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ continue to push higher. Right now, we have got the S&P 500 index just about the best level of the day, looking at a gain of 33 points, with the S&P now at 6850, up by about 0.5%. Dow Industrials, 47,991. The Dow up by 0.1%, began the day lower. NASDAQ up 162 now. For the NASDAQ Composite Index, that is a gain of 0.7%. The VIX below 20, with a 10-year at 4.30%. The 2-year, 3.78%. Gold is down $17 the ounce to $47.31 now, down 0.4%. Crude, $98.75 a barrel, falling below $100 today, up 2.2%. Brent, $98.90, up by about 3.8%. So bottom line here, stocks climbing to session highs after President Trump said Iran still wanted to make a deal following a deadlock in peace talks and a U.S. blockade of the Strait of Hormuz. Lululemon Athletica shares down 0.5%. This after the Texas Attorney General said his office is investigating for the presence of so-called forever chemicals in the yoga wear's brand's apparel. Again, we've got shares Lululemon down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. An update there on the trade. Carol Master along with Bailey Lipschultz. Bailey is in for Tim, who is out today. You know some of the headlines, right? We've got the U.S. naval blockade of Iranian ports and coastal areas. It has gone into effect. It could further inflame some tensions amid the global energy crisis. Meantime, the U.S. has said neutral ships will be subject to interception, diversion, and capture. Shipping through the Strait of Hormuz slumping back down again today, reversing some move up, a jump that we actually saw yesterday. And then we've heard from Iran, too.
Yeah, it seems like talks are advancing, the ceasefire mostly holding in. At least that's what the market is buying, with the S&P rallying after Trump spoke and then oil pulling back like we've been talking about.
Yeah, markets seem to be taking this all in stride. Meantime, Iran did say the U.S. restrictions are illegal and constitute an act of piracy and threaten the ports in the region if its own facilities are targeted. So it's like, yeah, peace, but hey, watch out. That is our world. Just around 12:40 p.m. ET, from just outside the Oval Office, President Trump spoke on the weekend peace talks in Islamabad and how it went and how his team there on the ground, which included U.S. Special Envoy to the Middle East, Steve Witkoff, and also his son-in-law, Jared Kushner, as well as his Vice President, J.D. Vance, how they did.
Well, he's done a good job, and Steve and Jared, they've all done a very good job. And I can tell you that we've been called by the other side. They'd like to make a deal very badly. We've been called this morning by the right people, the appropriate people, and they want to work a deal. They would like to work a deal.
All right, again, that was President Trump earlier outside the Oval Office, and of course talking about U.S. Special Envoy to the Middle East, Steve Witkoff, his son-in-law, Jared Kushner, and of course his Vice President, J.D. Vance. We knew we had to check in once again with our team in Washington, D.C. as we continue to hear a momentum, a flow of commentary out of the White House or out of social media. With us once again is Michelle Jamrisco. She's Bloomberg News White House and National Security Editor, again joining us from the nation's capital. Michelle, good to have you here with Bailey and myself.
Good to be here.
So let's recap. What did we get from the president? What's new? What's significant in your view? Markets just seem to be taking all of this in stride today.
Well, we're in this position again, Carol, where we're trying to decipher what each side is saying and what to believe from what each side is saying and whether that matches what's happening behind the scenes. Well, at the same time, we're watching basically for any sort of kinetic action, not that we're hoping for it, but, you know, with the threat of a U.S. naval blockade that has come into effect hours ago and is now, you know, also paired with the president's threats to interdict any vessels of any country transiting from Iranian ports or to Iranian ports in the Strait of Hormuz and coastal areas, as well as any attacks on Iranian small boats that might approach the U.S. naval blockade. All that taking into account, we have not seen any sort of action yet that would be a flashpoint and perhaps scare markets even further. But at the same time, we're trying to decipher what to make of the president's latest remarks on where the diplomatic talks are going after the failure in Islamabad over the weekend. Now, I will just point out in the clip that you played just now, President Trump is referring to a call that has happened this morning. To my knowledge, we have not gotten any confirmation from the Iranian side as to whether that in fact was the case. And of course, again, the question of who participated from the Iranian side. We know who went to the direct talks in Pakistan. We don't know if those are the people really kind of pulling the levers on what the regime might act on in the end.
Well, Michelle, how much, I'll call it static, is there in terms of who's actually participating in these conversations? And to your point, mixed messaging, whether these calls are actually taking place, whether the right people are involved in these conversations, and what that really means. Because if the question at the end of the day is, when does this conflict end? Presumably, it's pretty important who's in those meetings.
Yeah, well, Bailey, a very fair question, and one that we've had for many weeks now in some form. But what came out of the weekend, at least, was this assurance that we knew who from the Iranian side participated, the Iranian Speaker of Parliament, as well as the foreign minister getting involved. And we know, obviously, who on the U.S. side was involved in those direct talks. So at least there was some transparency over the weekend on these, unprecedented, really, for many decades, direct talks between the two countries. But now what we see in the aftermath is kind of similar rhetoric that we've heard from both sides, really, U.S. and Iran, on where these talks are headed and what the disagreements are. There is a clear divergence of opinion and view on what broke down those talks over the weekend. We've heard, and we heard it again today from President Trump, that Iran's nuclear ambitions were the main reason that the talks broke down, that they would not concede on that point, and that's a deal breaker for the U.S. However, on the Iranian side, they have said that the distrust of U.S. negotiators, U.S. coming to the table to dictate rather than negotiate, and of course some differences of opinion on things like war reparations and actually ceasing the fighting and ceasing attacks on Iran were among other disagreements that have remained for some time. So we don't know where talks are going, and I think you're seeing investors and others act on these kind of incremental developments, but not with the sort of confidence that action will follow in line with what they've said.
Michelle, does it come down to one or two main points? Is it about the enriched uranium? Is it about, I don't know, I've kind of lost track of, and maybe this gets to the mission of what this war really is about. And so what is the main sticking point? Does it come down to one or two things here?
Well, I think in broad strokes, Carol, you can say it comes down to nuclear ambitions and control of the Strait of Hormuz, but there are many things that the two countries have openly disagreed on, including, the list of demands that the Iranians have released, some weeks ago, maybe a week and a half or two ago, that did not match what the 10 and 15-point plans that the U.S. side has put forward. So there are a lot of smaller points that I think would not be agreed, but the big idea being the nuclear ambitions. There has not been a way forward on exactly how to play that, and of course a long time distrust on either side about whether or not Iran would be pursuing purely for scientific purposes, and whether or not that would put the U.S. at ease, which it won't. So that is one big thing. But obviously caught up in all of this, and what is really feeding the global energy crisis is the control of the Strait of Hormuz, which at times the U.S. has said would be something that could be worked out for the profit of everyone. Trump has kind of alluded to a sort of toll system that both the U.S. and Iran could benefit from. But at times he has said that is unacceptable, full stop. And so now we're at a blockade, essentially, that really has, the markets in this whirlwind trying to decipher what comes next and whether things will escalate before they de-escalate again.
And Michelle, we only have about 30 seconds here. One of the touch points we've talked about on the markets desk is kind of this notion of a Trump put. At some point, he will walk back what he's pushing for, with midterms on the horizon and with energy still far higher and more expensive than many people would have expected. Is there a time crunch or a limit where the White House is going to have to consider potential weakness going into the midterms, just given rates are not lower and the cost of living has only gone up in the last few weeks?
Michelle, we've only got about 25 seconds.
It's a great question, Bailey, and I think a lot of the political actors within the administration are looking toward the midterm deadline as a hard stop, but really would like things resolved much sooner than that to kind of alleviate Americans' concerns. But we've seen gas prices get worse, and the Iranians try to exploit that as well, warning that they would get much worse before the critical midterms if the Strait of Hormuz blockade continues.
Yeah, right? It just makes you ask so many questions if you think about the midterms coming up. Michelle, thank you so much, as always. Michelle Jamriska, Bloomberg News White House and National Security Editor there in the nation's capital. When we come back, a check on trading and some stocks on the move. This is Bloomberg.